last of its kind? No. This is the nature of capitalism. Get over it.
Fixed income fix. Watch Bloomberg Real Yield every Friday. Bloomberg. Everything.
Welcome back to Bloomberg Daybreak Europe. Happy Thursday, June the 27th. Just checking the date there. President Joe Biden and former President Donald Trump are preparing for the first US presidential debate ahead of November's election. Biden's campaign already sees one victory with the absence of third-party challenger Robert F. Kennedy Jr. from the stage. Let's get more then on what to expect from this presidential TV debate with Bloomberg Markets Today anchor Kriti Gupta, of course, always follows the twists and turns of US politics very closely for us. What are you going to be looking for? How could this reset or reframe this race?
I'm going to be looking for the best place to get my popcorn out at 2 a.m. in the morning because I am going to be glued to the television screen. Look, this is going to be a lot about domestic policy more than foreign policy. There's a lot going on right now in terms of the latest Supreme Court decisions, things like abortion, immigration control, gun control even, that are all going to be coming up, not to mention the convictions on both Hunter Biden and Donald Trump that you've had in the last couple of months as well. So those are going to be hot button issues. The debate is already set up to really test things like mental and physical stamina as well. Lack of kind of consultations with the debate team, but the policies that are going to be in focus in terms of the financial markets will be things like tariff policy, how hard you want to go in on China, for example, how you're going to handle the budget deficit, whether or not those are going to be things they're outwardly going to be talking about is interesting. I think for the European audience, it'll also be a question of things like where the spending comes from. Biden has come under a lot of heat for the Inflation Reduction Act and things like investing in green energy, for example, and that kind of renewable story. Trump is likely to push back on it. So much of his electorate are going to be in oil-producing states in the U.S. So he's going to be really talking about investment, yes, in the United States, but in different sectors, and that might be where they differ.
Yeah, look, Biden has certainly felt the heat on inflation, hasn't he? But then Trump proposing tariffs across the board of 10% and a massive crackdown, potentially deporting up to 1 million migrants. Well, that would be inflationary as well, which is interesting given the messaging coming from Trump. Is this then a tradable event?
This is mixed because there is this narrative of if there's kind of a safe haven story that is associated with the states, that if you start to have some of that tariff rhetoric, for example, do you just buy the dollar immediately off of the back of it? On the other hand, though, the bond market is going to be reacting a little bit differently. They're keeping their eye on the budget story and, of course, the inflationary story, but even things like immigration, tariffs, that takes a while to not only reinstate, but for that to show up in the economic data and therefore for the Federal Reserve, for example, to react then later on. So that's something that's likely to have more of a temporary effect, but the dollar positioning is where I keep an eye on, especially when it's come in line with any sort of hint on the deficit story, the spending story. Remember, January 2025, whoever is the next president of the states, is the first thing they have to address after they're inaugurated.
Pretty good. So a fantastic setup ahead of that presidential debate. The first one, of course, of this electoral cycle as we count down to November. Kriti Gupta, anchor, of course, of the Markets Today show. OK, from the politics of the US to the politics of the European Union, where leaders are meeting as they look to wrap up a deal on the bloc's top jobs. After failing to reach agreement last week, they are poised to nominate Ursula von der Leyen for a second term as president of the EU's executive arm. Let's get more then from Bloomberg's Oliver Crook. Ollie, the first EU Council meeting since the election then. What do leaders need to get this done?
Yeah, so basically what they need to deliver at this meeting, this is really the top priorities, as you mentioned, is the top jobs. Because once you've established those three top jobs within the EU, the Commission President, the Foreign Policy Chief, as well as the European Council, from there everything else kind of trickles down in terms of the other commissions, but also sort of the policy priorities. So as you say, Ursula von der Leyen likely a shoo-in for the presidency, Kaja Kallas to deal with foreign policy from the Renew Party, and then Antonio Costas to do the European Council President. Now, what they also need to do, Tom, is come out with their so-called strategic agenda. Now, this is the document, Tom, that basically lays out the outline for the European policy priorities for the next 5 years for this new government within the EU. This is going to talk about some of the very familiar topics we've covered a lot here, Tom, whether it's defense, whether it's security, whether it's Ukraine, and also competitiveness. But also, Zelensky will be here in Brussels today, so we're expecting a renewed commitment from the EU. And let's also not forget, there will be the beginning of accession talks, of joining the EU from Ukraine. Those formal negotiations and talks began this week. week. So all that to watch for these leaders this week.
Okay, there's a lot on the docket for them, isn't there? In terms of the power dynamic has shifted, hasn't it, across these EU institutions, or at least it's in the process of post-election. How is that playing out, Ollie?
Yeah, so there's, of course, the top jobs, and those are kind of the very concrete ways in which we're going to see sort of that play out. But then there's also the question about particularly Meloni and Macron. So Meloni yesterday got in front of Italian parliament and was railing against basically the EU process for appointing these top jobs. And then the next day she comes into Brussels to have those conversations. What's interesting for her is despite this very sort of strong mandate that she has in Italy, it's interesting to see how she'll be able to exert that across the EU, because she really doesn't have a voice for the top jobs, because that's done through a qualified majority that doesn't need unanimity. On the other side, you have Macron on the sort of lame duck side of things. His sort of priorities definitely will be demoted. You know, he's one of the big advocates, probably the biggest advocate for joint debt in order to build out defense here in Europe. That will sort of fly away. Then, of course, you have the election in 2 days, and both the left and the right pose huge problems for the EU. The left with massive deficit spending, and the right who basically want to subsidize a lot of their plans within France by basically cutting their contributions to the EU. So all this hangs over the discussions as well.
Okay, fantastic stuff. Bloomberg's Oliver Crook setting us up for that crucial meeting, of course, with the EU. Amidst those changing dynamics and the implications, there's plenty more coming up. Stay with us. This is Bloomberg.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television. The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything.
Deal flow is still not quite there.
Private equity has slowed a little bit in the activity.
In our pipelines, we're seeing a meaningful acceleration in deal flow.
The key concern we have is, will there be activity where the buyers and sellers meet in the middle? And that hasn't quite happened yet, but I'm hopeful it will.
For the credit markets, you still have a lot of options, whether it's a recap, a minority sale, and that's what we're seeing. So it may not be asset sale outright, but a transaction is going to occur.
Now that rates have stabilized and that cuts are on the horizon, we are seeing the pipeline pick up meaningfully, which means you should start to see more deals, more velocity, and even if the base rate comes down, it's still going to offer a pretty attractive rate.
Okay, leaders in asset management, banking and private markets weighing in on the outlook for deal activity at the Bloomberg Invest Summit. And the last speaker there talking about rates and the rate environment. Of course, interest rates still at that 5.25 to 5.5% level for the Federal Reserve. And that, of course, links into what's happening with the Japanese currency. A bit of relief so far in the session for the yen, currently at 160.36. But my goodness, relief for how long is the question. There is this impotence, it seems, within the Ministry of Finance of Japan to really do anything significant to support this currency. That, at least, is the view of many traders who continue to bet against the currency. It reached 160.87 yesterday, the weakest since 1986. It's down 12% versus the US dollar. So, will you come through in July with a BOJ with a double whammy? Mark Cranfield saying it's not base case, but the BOJ may be compelled to act, raising interest rates and maybe also adjusting their bond buying program. That is something maybe to have on your agenda, or at least in the back of your mind, as we lead up to that meeting from the BOJ in July. Before we get there, of course, the inflation data out of the US on Friday will be important as well. If you get a softer number, maybe some relief in terms of rates expectations and relief rippling across for the yen potentially. But right now, the Japanese currency, of course, modest relief in the session, but broadly, the pressure continues. Amazon, meanwhile, getting to a true $1 trillion mark, up 26% year to date, benefiting from cost cutting and also, of course, the support that's coming through from the AWS part of that business, leaning into the AI frenzy, Amazon, and being rewarded for that, breaking above $2 trillion in terms of market cap. Next hour on Bloomberg TV, the US ambassador to China. Nicholas Burns joins us live from our Shanghai studio. We'll be talking about trade, tariffs, and the Russian defense pact with North Korea, among other topics. That's at 7:15 a.m. UK time, just shy of 20 minutes away. That is all on Markets Today, which is up next. Stay with us. This is Bloomberg.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of I guess the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, Zabe Poland. He did come to me and Susan O'Malley, and they said, Abe Poland says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Good morning from London. This is Bloomberg Markets Today. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. With the cash trade just less than an hour away, here's what you need to know. Micron slumps post-market after its forecast fails to meet lofty expectations. We'll bring you the numbers from the retailer H&M shortly. UK Prime Minister Rishi Sunak and Labour's Keir Starmer get combative in their final TV debate 1 week ahead of the election. Stay with us for the highlights. Plus, a familiar face is taking the helm of the Swiss National Bank. We'll break down what to expect from the new leader and bring you the Riksbank's rate decision.
In the meantime, a quick check on these markets. Plenty to digest, plenty to wait for, but Euro Stoxx 50 futures higher by 0.1%, really flat on the FTSE 100. The currency picture is interesting. Strength this morning in the currencies, 106.94 on euro dollar, 126.37 on cable. Markets today starts right now.
Thursday the 27th, good morning. First we had the Nvidia correction, now we have the Micron miss. Is there a message when it comes to the AI story from all of this, or is it just simply something that the market can ignore, buy the dip and crack on? I just wonder what the trade will look like today. It's going to be an interesting session in terms of digesting that narrative. There's plenty of other things we need to be talking about as well. Bond markets looking interesting right now. What's happening with the politics is also going to be front and center. But let's talk first about what is happening with Micron, because we thought we had Nvidia kind of under control. We thought we understood what was going on there. It was just technical, nothing to worry about. And then we get Micron.
Yeah, and then you get Micron. And then you're asking yourself, is this the AI side of Micron, or is this the related but slightly different, stuff we've known for a long time to do with PCs and phones? And it isn't entirely clear, I don't think, from all of the numbers that we got yesterday, where the disappointment has come from, because the numbers that they presented in terms of estimates were kind of in the range that analysts were looking for, but some analysts had higher expectations.
Yeah, they were in the range, and the profit was actually better. It came in at about $1.08 per share, versus a projection of $1.02. So already that's a beat, and yet you're talking a lot about positioning. And remember, it rallied into the close and then had that 8% sell-off as well. To me, this is a contracting story. This is a government story, a fiscal spend story when it comes to the chip makers. We had Ursula Marchioni of BlackRock talking about this. Micron is one of the benefactors, $6 billion of chip grants from the U.S. government as a part of this kind of domestic making ability. But so much of its stock rally hasn't really priced that in because it's so far down the road. And I'm curious if that's what the next catalyst is for some of these chip makers.
I appreciate the detail. I know the detail matters. I'm sure it does.
You're being the big picture guy this morning.
But this has been such a tearaway train. This is such a runaway train, the AI story, that any kind of interruption to it has big ripple effects. And does the cause matter? I appreciate it probably does in the kind of the long term,
not in the short term.
But in the short term, it doesn't.
No, indeed, and it is, and Micron is linked to Nvidia. It's linked to the Nvidia AI ecosystem. Apparently, the chips operate together in some cases, along with the Nvidia processors. So that's also why the read across is perhaps more pronounced.
I love it when we have to study kind of what the various bits of these kind of machines do and how they all talk to each other, but it's important.
I went into journalism not to do engineering specifically, and here we are doing just that. No, it's a fair point, though, and so much of it we talked about in the Nvidia story has been options-driven as well in terms of the upside, and now you're seeing this little, I don't want to call it a mini correction just yet, but the fact that you are starting to see these kind of snaps in the market is important, but I'm curious how long before it shows up in the rest of the market. You haven't seen that just yet.
Let's also not do engineering when it comes to H&M. H&M clothing, I mean, it's all engineering to some degree there, isn't it, with the circular economy. H&M says June sales are expected to decrease by 6% year-on-year in local FX. That's the headline that stood out to me, along with the red headline that the operating profit is a touch above expectations. But I wonder what that June sales guidance is supposed to tell us this morning. But yeah, the operating profit number is at least a touch above estimates.
Is there a consumer confidence read in this? They like Zara, are such big players in this space. I appreciate there's weather interruptions, but they're a global company, so you can kind of factor those out as well. There are supply chain issues, which I think are important, and the gross margin looks actually fairly favourable. But is there something in here that tells me that the consumer is slowing down? Maybe at the margin. I don't think it's clear, though.
I'm curious because didn't they just have a new C-suite change as well?
Yeah, Daniel Erver coming in.
How much of that do you think is this early at least, affecting the story.
Right. Well, yes, and when you have somebody new in the seat, if this isn't their work, you wait to see what kind of changes they bring. I was reading the Bloomberg Intelligence report this morning talking about inventory space and labour, and better discipline on all of those fronts is apparently going to be a priority.
And so at 2:15 a.m. Eastern Time, we do expect to hear comments from ECB's Miller, who is giving opening remarks at a Baltic Economic Conference in Tallinn.
Of inventory, and H&M have been less good at it. If you see an improvement in that space, that's going to have a material and quite significant impact in terms of what they do and their ability to deliver on that gross margin line. But the top line looks okay, I think, would maybe be the takeaway.
OK. Let's talk about UK politics a little bit, because we're going to go into a lot of conversations about debates, and we'll look back and then we'll look forward. I did stay up. Was this a wise call? We'll know later on this morning whether I'm falling asleep at my computer. We heard from Rishi Sunak, the Prime Minister in the UK. We also heard from Sir Keir Starmer, who would like to be the Prime Minister in the UK. Let's have a quick listen to what they had to say.
And I just want to address Beverly's point.
You opposed it when I announced it. You literally opposed it.
If you listen to people in the audience across the country more often, you might not be quite so out of touch. Beverly.
Could we get a better trading deal with Europe?
You know what? You might be able to. But do you know what the price of it will be? It will be free movement of people. No, and that's what Keir Starmer's not being straight with you about.
Joining us for more is Bloomberg's EMEA News Director, Ros Matheson. I stayed up to watch the debate. Ros, it was 50-50 according to the quick YouGov poll afterwards in terms of who people thought had won. What were your key takeaways?
Well, it was interesting because this was the last chance, really, for both Rishi Sunak and Keir Starmer to reach voters ahead of the election in a week. And so we saw them laying out their stall across the country via the BBC last night. For Starmer, it was pretty much just don't do anything wrong in a way, because he's polling so much in front at the moment. His Labour Party is polling so far ahead. It was really like, in this debate, just don't let anything really go awry. He didn't really land any major blows against Sunak. In fact, Rishi Sunak was coming out quite swinging in this debate because he's got a lot to lose at this point. He really needs to get something, some kind of magic potion that's going to allow his Tories to rejuvenate in the final stretches. And so he was quite aggressive. He was basically saying over and over again, Labour, you can't trust them with your finances. It's going to mean higher taxes. It's going to mean changes to welfare. He was really saying you can't safeguard your finances with Labour. And that's a message they've been saying through the campaign. It has resonated a little bit, but again, as you can see from the outcome, didn't really move the needle enough for Sunak. The question is, can anything at this point?
Was his opponent last night Nigel Farage, or was it Keir Starmer? Is he trying to fight on the right or actually fight the left? Because it felt like he's almost accepted the fact that we do have a large majority. When it comes to the left, he's trying to maybe sort of reduce that, but nevertheless, he's trying to shore up his own base. It felt like he was trying to shore up his own base last night rather than tackling the Labour majority. And that felt to me like, having watched the highlights, because I didn't stay up, was maybe the fact that he was trying to deal with the right rather than the left.
Well, that was the thing. His message really was to those Tory voters who've been drifting away in the polling. And we can see after all these years of Tory administration, that frustration with many kind of traditional Tories at the last few years of chaos in the party. And the concern is, do they go to Labour or do they go even further to the right to Nigel Farage's Reform Party? And so the message again about, finances, you can't trust Labour. You can't trust Labour because you can get higher taxes, which many Tory voters don't like, for example, and you're going to get problems with welfare and so on. Those messages were really about pulling those voters back, and especially in the key seats, because as you say, the polling is so definite at this point. In a way, the question is, if Labour wins, by how much, and do they want to stop a supermajority? But it was really about fending off that move by some voters also to the far right.
All right, Bloomberg's EMEA News Director Ros Matheson joining us this morning to break down some of the highlights there. And we're not done on the debate front. There's plenty more coming up in the next 24 hours. Both the France and U.S. audiences will be watching their respective electoral debates. In addition to some of the data that we're getting on both sides of the Atlantic, you've got consumer confidence for Euro area for the month of June. But in the States, you have a little bit of a data dump there, from GDP to initial jobless claims, plenty for the bond market to digest. And, of course, Nike earnings after the bell. So, again, a lot to take in, but I feel like the focus will continue to be on the political story.
Right, yes, and certainly over in the United States. I mean, the big domestic policy, of course, to keep an eye on, but and the overall performance, the stamina of the individuals. But in terms of the economic policy, is it trade that we watch out for? Comments on that front?
I think the trade, the budget deficit, where the spending is actually going to be, because both presidents or former presidents, current and former, are expected to be spending in a big way that does put the deficit in peril. The question is where? Is it the green agenda? Is it the oil-specific states? Where does the money go?
Two key questions. Does tonight change anything? Does it change the direction of the debate? And if you think about the fact that it's going to be undecideds that ultimately are going to decide this, is this debate going to be about anything they want to talk about? I just wonder. Like, it feels like it's going to be very partisan, quite aggressive. Is that really what the middle wants in terms of the undecided? Is that what they want to hear about as they try and make their difficult decisions of which way they're going to go? That's the bit that I wonder about tonight.
I imagine... Sorry, go ahead.
No, I was just going to say the role of the middle in lots of the different geographies that we're watching right now, certainly in the UK and the United States. Really interesting, the extent to which they are catered for or not. Coming up on the programme, we'll be heading to a different geography. We'll be talking to the US ambassador to China, Nicholas Burns, about trade and tariffs and the Russian defence pact with North Korea. Don't miss that interview. That's coming up shortly. Plus, EU leaders are expected to nominate Ursula von der Leyen for a second term as president of the bloc's executive arm. We'll look ahead to the EU Leaders Summit later today. If you have questions, please do get in touch. If you have comments you'd like to put to our guests, IB plus BBTV Go is the function to use on the Bloomberg terminal. If you want to get in touch with us, this is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors.
So it's less than 3 minutes away now until we can expect to hear comments from ECB's Muller, again giving opening remarks at a Baltic Economic Conference in Tallinn.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
DOJ or other authorities
could face bigger challenges. Britain's next.
It was going to keep winning World Cup. This is a threat.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know the areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything.
Welcome back to Markets Today. We're about 45 minutes away from the cash equities open. Futures in the green, but only just marginally. So a little bit of a wait and see ahead of all the political risk and some of the economic data that we get on both sides of the Atlantic. But for now, I want to go over to Bloomberg's Stephen Engel, who joins us in Shanghai with a special guest. Stephen, over to you.
Yeah, good morning. Our special guest is the ambassador here in China from the United States, Ambassador Nicholas Burns. Thanks so much for coming into the Bloomberg studio here in Shanghai. Great to see you again.
Thank you, Steve.
So let's talk about the geopolitical pressures that are happening right now in this part of the world. You gave a speech to the American Chamber of Commerce yesterday talking about the major mistake, you characterized it as that, of China potentially selling technologies to Russia that could be dual use, that could end up on the battlefield in Ukraine. You and I have discussed this in the past. How much more evidence is there of that happening, and that leads to your conclusion of a major mistake? And the second part of that question is essentially how much more intense is what's happening in Ukraine, amplified by the fact that Vladimir Putin met with Kim Jong-un in Pyongyang recently?
Steve, thank you. You know, we put a red line in front of the Chinese 2 years ago, just after the Russian invasion of Ukraine, and we asked the Chinese government not to extend lethal assistance to Russia. We don't believe the government has done that. But what's happened is that the government of China has permitted a considerable number of Chinese firms to sell dual-use technology into the Russian defense industrial base, so that defense industrial base is far stronger now than it was even at the beginning of the war. We're strongly opposed to this. We think it's escalatory. And Putin has launched a brutal war against Ukraine's government and civilians, and it ought to stop. Chinese say, well, we're neutral in this war. They're not neutral. The actions of the government in allowing Chinese firms to sell these dual-use technologies is very troubling. It's damaging to the effort to end the war, and China is not exhibiting the behavior of a neutral country. So it's a very important difference we have, and we've complained to the Chinese about this at great length, at very senior levels. And as you know, we've begun to sanction individual Chinese companies involved in this. We're going to continue to do that because we have not seen any change in the position of the government of China to help the rest of the world, and certainly Europe and the United States, end this war and make sure that Putin can no longer rain terror down on Ukrainian civilians.
From your position as the ambassador in Beijing, how do you think China is reacting to that summit between Kim Jong-un and Vladimir Putin? The assumption is he's looking for support, he's looking for perhaps arms. He also went to Vietnam. How does this escalate the situation in this part of the world?
Well, the summit was troubling because, of course, Putin wants ballistic missiles and other technology from North Korea to prosecute the war in Ukraine. And of course, Putin wants to sell energy to North Korea as well. And I can't speak for the government of China, but you did see a fairly muted reaction to it. You'll have to ask them what they think of this situation. But certainly the efforts of Russia and North Korea, and in some cases China and Iran, that constitutes a major threat to the democracies of the world, and we're not happy, obviously, with what the North Koreans have done, what the Iranians have done to support the Russian war effort.
I know you cannot speak on behalf of Beijing, but do you feel that the fact that Putin has reached out to Pyongyang as well as Hanoi, perhaps on a less strategic matter, but again, this is putting this dialogue about these countries' relations with Russia out of Beijing's control? Beijing will have less say in the matter.
Well, you'll have to ask the Chinese about that, the Chinese leadership. But I can say this. You know, the United Nations Security Council had placed North Korea under sanctions on multiple occasions over the last several decades because of their illegal buildup of their nuclear weapons industry. And now we have a situation where neither the Russian Federation nor the People's Republic of China is willing to back the same resolutions that they voted for. I know something about this. When I was Undersecretary of State in the George W. Bush administration, I actually negotiated with the Russians and Chinese against what the North Koreans and the Iranians were doing. But now we have two members of the Security Council, Russia and China, failing to observe the law of the land, which are these Chapter 7 UN Security Council resolutions. That is very troubling to us because North Korea obviously is a very problematic country in the international system.
So they could use their veto power to support North Korea if there's any more UN Security Council action?
That's been their pattern in the last several months, and obviously we're opposed to this because when you're a Security Council member, you have responsibility for global stability, and neither Russia nor China is exercising that in a responsible way right now.
With the NATO summit coming up, what do you think needs to be done, or is there steps that can be done to counter the steps by China, by North Korea and Russia?
You know, one thing that we've certainly seen over the last several months and the last year is Europe acting strategically now in outright opposition to what the Chinese have done, what the PRC has done to support Russia in the war of Ukraine. For Europeans, as well as for Canadians and Americans, this is an existential war. We lived in a Cold War 4.5 decades with a divided Europe. One of the great achievements of the end of the Cold War was a free, democratic, and united Europe with no divisions in it whatsoever. Putin's now trying to divide Europe. I think the Chinese have miscalculated. I actually think the Chinese did not understand the core value that we place in our part of the world on peace and unity in Europe itself. And you've seen the EU and NATO call China a systemic rival in part because of this.
I don't think necessarily North Korea miscalculated in their...
China miscalculated.
China miscalculated. I'm saying North Korea probably did not. I mean, what are steps that could be taken if we do find North Korean armaments on the battlefield in Ukraine, as is expected?
Well, there's no question that North Korea is supplying weaponry to Russia. They've done that for a very long time. That's part of the problem. But I do think, you know, the great majority of countries in the world do not want to see the war in Ukraine continue, blame Russia for the fact that it started the war with no provocations. One of the issues that, frankly, we've talked to the government in China about is that China, since its inception 75 years ago in 1949, has said that its greatest value in the international system is the sovereignty of each member state of the United Nations and territorial integrity. Here we have an example where President Putin has crossed the brightest red line in the international system. He's trying to smash the sovereignty of Ukraine, and yet China does not support that principle. That is, I think, is a major mistake by the governing authorities in Beijing.
Let's talk about another potential flashpoint that's becoming a flashpoint, obviously, and that's the South China Sea. The United States and your boss, Antony Blinken, has talked about the ironclad commitment that they have because of the defense pact with the Philippines. There's been a more recent high-profile incident where Chinese sailors or Coast Guard officers have used axes against Philippines ships in the South China Sea, whether it's off the Second Thomas Shoal or other places. How has this escalation led to the possibility or the threat of war in the South China Sea? I don't mean to be an alarmist, but are we getting to the point where Beijing is perhaps pushing the boundaries of tolerance?
These actions by the Chinese, by the Navy and the Coast Guard of the People's Republic are dangerous, and they're escalatory, and they're irresponsible. The fact is that Second Thomas Shoal is within the Philippines' exclusive economic zone, and it is covered by the U.S.-Philippine Mutual Defense Treaty of 1951, Article 4 of that treaty. And we've made that point at a very high level to the Chinese authorities. We'll continue to make it. We're asking for restraint. We're asking for China to back off. And if China has differences, it ought to adjudicate them peacefully, but not through the use of force. And so we stand by our rock-solid commitment to the Philippines.
Do you feel Beijing perhaps is testing that boundary, the limits of United States resolve to act on the mutual defense pact that the United States has with the Philippines?
We've been very clear. We've been very consistent that we're going to meet our treaty obligations, and so we, you know, our hope and expectation is that this dispute will not lead to that kind of violence between China and the Philippines any longer. That's our great hope, and we stand by the Philippines.
How might the enhanced security trilateral agreement between Japan, South Korea, and the United States help act as a deterrent in the South China Sea?
You know, I think one of the things we've been able to do, Steve, over the last couple of years is significantly strengthen the American alliance commitments to Japan, to South Korea, to the Philippines. And of course, we've seen the advent of the trilateral dialogue between Japan, South Korea, and the United States. That is a major departure for the good, for the positive, and I think as China looks out in the world, it sees a very strong, self-confident series of defensive agreements that we have in this region designed to preserve the peace, designed to make sure that we can have peaceful commerce in the Indo-Pacific. That's our expectation, and that's our goal.
Last time you and I talked a couple of months ago, and again, I believe we talked in October or November, we did talk about Gaza, and you've had the ability to talk to the Middle East envoy from China. Are you at all encouraged by any foundation of common goals there? You've talked that you'd want more action, not only, of course, their influence on Tehran, but also, on Russia as well.
Yeah, we've been in constant contact with the government in Beijing about what's happened in Gaza, what's happened in the Red Sea, the Bab el-Mandeb, the actions of the Houthi rebels, and we've asked China to use its influence to help diffuse these crises. We have not seen that to date when it comes to Gaza. It would be very helpful if China would convince Hamas to accept the ceasefire proposals that have been put forward by both the United States and by Israel to end this crisis, to release the hostages. Hamas is responsible. Hamas has the power to make this happen, and yet China does not appear to be using its influence with Hamas, at least not publicly, to do this. And I think in the Red Sea, we've asked the Chinese to make sure that they're doing everything they can with their friends in the region to keep the shipping channels open, but we haven't seen that either. So, we have conversations between the Americans and the government in China, but we haven't seen these kinds of actions that we would have hoped to have seen.
You probably are well aware, of course, that in an election year, we've seen U.S. position towards Israel, and again, the outpouring of protests against the U.S. position as it reflects on those in the Gaza. And that has been kind of latched onto by Beijing to use it as a point of attack on the United States. Do you see shifting opinions globally on China as well as the United States because of what's happening in Gaza?
I think one of the tests for the People's Republic of China going forward, it wants to be a great power. It is, in many ways, has the attributes of military and economic power, is to be responsible so that in a great international crisis like the war in Gaza,
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The top names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. From the world of of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything.
Welcome back to Markets Today. 30 minutes from the start of today's trading session. This is a look at the markets for you. And European equity market futures do point just slightly higher. US futures, though, point slightly lower. We had a big focus on tech once again yesterday in session and then post-session with those numbers from Micron. We'll get more details on that as we go through the program. But we'll watch for the tech sector to respond to the Micron news of yesterday. Doesn't look too negative for the start of European trade for now. Let's talk about some of the big central banking stories we've been following over the past 24 hours. The Swiss National Bank Vice Chairman Martin Schlegel will succeed outgoing President Thomas Jordan for the central bank's top job. That's starting from October. Officials in Bern made the traditional choice of promoting from within, opting for continuity. For more, we're joined now by Bloomberg Switzerland Bureau Chief in Zurich, Alessandro Speciale. Alessandro, very nice to have you with us. So is that what we need to know then about Martin Schlegel? He's the continuity candidate. What more is there that we should be aware of then?
Absolutely, absolutely. It was a choice of continuity. It was the choice that was expected, the choice in line with tradition. I mean, Martin Schlegel started as an intern in the central bank's department, run at the time by Thomas Jordan, the outgoing president. And it basically tells you everything you need to do. It is a choice of continuity. He has stressed that he wants to rebuild the equity of the central bank rather than making larger payouts to the government. And we can expect a steady hand, a close focus on keeping inflation stable under 2% as per the SNB's goal, and to set aside all other interests and all other goals for central banks, for example, doing more on climate or on other issues, as has been the trend for some other central banks more recently.
Well, Alessandro, as we know, in June, they, of course, surprised with a surprise cut there. In terms of actual monetary policy communication, what might that look like?
It's very likely that at least at the beginning, it is going to be quite similar to the past. Of course, at some point, Martin Schlegel will sort of become more comfortable in his seat, but he has large shoes to fill, so we can expect continuity. In fact, the SNB has already done these 2 rate cuts, so the process and the path is already set, at least for this year, and we can expect maybe Schlegel to be even more cautious than Jordan has been in the past. At the same time, we know that the SNB likes to surprise from time to time, likes to be somewhat unreadable for the markets. Schlegel was the head of the markets department when in 2015 the SNB removed the cap on the franc. As you might remember, there was quite of an earth-shattering day in the markets. It was Jordan's decision, and Martin Schlegel is the person who made it happen as the head of the markets department at the time.
Alessandro, thank you very much indeed. Bloomberg's Swiss Bureau Chief, Alessandro Speciale, joining us on Martin Schlegel's appointment to lead that central bank. One of the big challenges, of course, that central bank will have going forward in the near term is managing the FX risk as we see political tensions in the rest of Europe gathering force, particularly when it comes to what is happening in France. That's where we turn our attention to now. Felix Feather, economist at Aberdeen, joins us now to talk about this. Felix, we've got political risk in Europe. We're trying to understand exactly what the economic impacts of that are going to be. We're already seeing significant concern in European government bond markets. As we approach the first round of the French election, how are you thinking about how different France and Europe could look like on the other side of it?
Well, we've already seen significant moves in this bond market, particularly in this widening of the spread between French government bonds and German government bonds before the results of the European Parliament elections and before that snap election was called. These were sat at about 55 basis points, briefly reached about 80, now back down in the mid to high 70s range. But this is pushing up the cost of debt in France significantly. It's not to be sniffed at. and it's reflective of both these political risk factors and some structural factors which are weighing on confidence at the minute.
How different, though, politically could the space look like after this election? The potential for chaos is probably the wrong word. Maybe it's not the wrong word. In France, at the centre of Europe, at the centre of the Eurozone. What ripple effect will that have in terms of growth expectations, in terms of broad borrowing across the continent, in terms of the ability of this recovery that we've seen thus far starting to gain a little bit of traction continuing? How pivotal a moment could this be?
I think most policymakers, and indeed myself, I'm relatively hopeful that the effects should be relatively contained to France. I don't think you see too much threat of contagion across the wider Eurozone or indeed the European Union at the minute. This is because this is not like the Euro debt crisis, where there's a significant risk of redenomination or a breakup of the Eurozone. It's more to do with France's especially expansionary fiscal position and not complying with those SGP, Stability Growth Pact, limits on deficits in particular. That deficit currently at 5.5% of GDP. That implies a glut of issuance, and it implies a higher cost of borrowing, and that's what we're seeing in current market moves.
Felix, tell us a bit about the opportunities that might be created in the French market or indeed the wider European market as a result of this. It's interesting to think about what contagion looks like here and where it leaves the rest of the European government space.
Yeah, well, we've already seen some assets recover a little bit. We already spoke about that spread just closing a little bit from its highs a few days ago. French banking stocks have gone through some volatility, but have come back a little bit now. Certainly the election, both the first round and the second round, is going to be a major event, not quite a binary event. There's multiple outcomes here. But any sort of surprise could move markets in multiple different directions. I think there's scope for markets to be surprised pleasantly by the prospect of a hung parliament, of perhaps even a sort of technocratic prime minister, without major changes to policy and practice. This is because, obviously, you still are going to have a relatively moderate French president. This isn't the Liz Truss scenario, where the entire unitary system of government is taken de jure control of by somebody who is looking to expand the deficit significantly. So there's scope for a positive surprise there. But until the potential for the real downside scenario, where you do get maybe a majority and the prospect of strong fiscal expansion is off the table, that risk is going to be priced in.
Okay, so we need to see the real downside scenario, and then maybe there's scope for positive surprise. Can I ask you about the ECB, Felix? Because the ECB and its rate cuts, it's in good company in some parts of Europe, of course, but notably the Fed not cutting yet. I'm wondering what your expectations are for how long the ECB continues along this cutting path, or whether it pauses here a little. In light of what we've heard from the Fed, what's your expectation?
I do expect a pause in July. I think that the strength of services inflation and actually a slight acceleration in wage growth is going to preclude a rate cut. The ECB are so data dependent at the minute. They're refusing to strongly commit to rate cuts. So with that data not in place for a rate cut, the logical conclusion is that you've got to stay on hold in July. Overall, I do think there is a cutting bias here, and that the rate cutting cycle should restart either in September, maybe December. October is another possibility. My base case is to see 2 more rate cuts this year. So that would be September and December, and for that sort of quarterly cadence to rate cuts to continue into next year as well. but there are significant risks around this, particularly if you see wage growth and core services inflation continue to remain hot, then a pause in September, for example, is definitely a possibility.
Well, Felix, let's bring it then full circle right back to the Fed. Of course, historically, folks have always said that the Fed is not only central banker to the states, but central banker to the rest of the world. How long can this policy divergence you're seeing in various regions sustain if the Fed stays put?
Well, President of the ECB, Christine Lagarde, certainly seems to think that the ECB has plenty of scope to diverge from the Fed. Not Fed dependent is the line. The ECB does not want markets to perceive ECB policy as constrained by Fed policy, especially in the short run. Nonetheless, we do know that there are a number of members of the Governing Council who do feel that Fed policy and EC policy should not be diverging too much over the long run. I don't think these constraints necessarily bind immediately then, but if you get to the point where in December you're still seeing the Fed still on hold, the ECB's really got to think about that interest rate differential and the effect that's going to have on things like FX, import costs, financial stability, etc. So if you do see the Fed stay on hold much longer than it's already expected, then the ECB's seriously got to think about these issues.
Felix, great to catch up. Thank you very much indeed for your time this morning. Felix Feather, economist at Aberdeen, joining us on what's happening here in Europe. I hear what he's saying about kind of the best case scenarios, potentially around this French election. Beata Manthi over at City out with a note this morning, talking about maybe that being an overly optimistic kind of assessment of the situation. I pick up halfway through the note. More likely and less market-friendly scenarios, she says, such as parliamentary gridlock or right-left-wing majorities, could see French equities derate by 5 to 20%. This means the election poses continued and meaningful risk for both the French and European equities. That, like 5 to 20.
It's quite a range.
It's quite a big range, but it's also quite a big number potentially at one side.
Well, it is. Yeah, 20 is quite a big number. It is interesting in the context of yesterday's conversation about luxury stocks and the extent to which they do or don't have anything to do with the French economy.
Yeah.
And actually our luxury guest was saying, well, they kind of do because there's French tourism and Chinese tourists coming to France. That's being picked up there. You know, that perhaps doesn't change. But anyway, the market's bigger than just the French luxury. But that's such a big part.
But is it bigger than the French luxury? I mean, the concentration risk is something we're talking about, not just for the French index, but for the stock 600 even. How many times do we say the LVMH is dragging the index down or lifting it up to the other side? I thought it was interesting that she didn't, in luxury analysts, they were saying that it doesn't have a market rate through. But is that 20% coming from banks specifically? Is there a sector breakdown?
Banks have got to be the epicenter of this. French banks have already, but there's other elements of this, utilities, etc. You think about the defence stocks. What does defence spending look like going forward? How will that change in a meaningful way? But the banks, you think about the relationship that we've seen in the past between BTPs and Italian banks and how strong that connection can be. Greek banks and Greek debt. You get a significant fallout in the bond market, which is already starting to happen. And then you read that across.
And then there is an element of 2011 and the like, isn't there? Even if it's not a rerun, and we're not talking about a Frexit, which we might have been doing in other periods. It was interesting what Felix was saying, though, that you just need to get a sense of the real downside scenario. And maybe that's what Beata is getting at here, trying to sort of set out an example of the real downside scenario. And then you either go there and stay there, or you see a positive surprise on the back of it and kind of bounce.
Yeah, and I think you talked about the rate story in the context of the banks, but there's also a rate story in the context of the broader index. How many times in various markets have we seen yields tick higher and equities sell off literally tick by tick? I'm curious how much that happens, because even when we talk about that widening spread, David Zan was on our program earlier this week talking about the fact that it's more a function of a move in German bunds than it is in the French side.
Well, that was interesting, though, because that was kind of linked to France, though, wasn't it? You know, it's sort of it's because money goes into Germany when they're nervous about France, so that was part of the reason.
That's always been the case, hasn't it? That you seek safety, and the Treasury market, I'm sure, is benefiting to a certain extent as well. But do you then get the Bundella bounce? We've debated this all week. What happens if you actually get a clear majority and a government that sounds more Maloney-like?
Plenty to digest. I believe Mark Cudmore is joining us in a second. We're going to put all these questions to him, but of course we're also going to be watching some of the stocks to watch in today's session, including the European chip sector. This comes after Micron's post-result sell-off in the United States. gains into the close, massive sell-off after. What is the European read-through? We'll dive into that next. This is Bloomberg.
Let's suppose you're on a plane and somebody realizes who you are. They say, I have $100,000. I don't know what to do with it. Where should I invest it? Where should they put their money?
So today, it's a easier decision than it was maybe 2 years ago because Treasury bills are 5%. So I would say, regardless of how much risk you want to take, you have to put a portion there. Then you would have to ask, really, an individual is the same, I think, as any institution. What is your time frame? Do you need to get access to this $100,000 in the next few weeks, the next few months, the next few years, not until you retire? And that will determine your investment decision.
So what do you think is the most common mistake investors make when they have 100,000, a million, or whatever they might have? What is the most common mistake you have observed that investors make?
I would say hubris and thinking you know more than you do, because every decision that you make has many, many layers. So as you're creating a portfolio, look at the risk as well, not just excited about the return.
And what's the best investment advice anybody's ever given to you?
Continue to learn about innovation in whatever you do, because that is where it's not exciting, that's where returns will go.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Welcome back to Markets Today, 7:47 here in London. The European futures picture, well, it looks pretty flat, doesn't it? Apart from the CAC, which might see a little bit of a bounce. US futures point a little lower. Micron could cause some jitters for tech stocks. NASDAQ futures down by 0.3%. Joining us now to talk about the markets more broadly, our Markets Live executive editor, Mark Cudmore, still with us in London, which is exciting. Mark, good morning to you. So let's look ahead. Let's talk about the markets in 2 minutes and look ahead to some of the things that we're waiting for on the data front. PCE, not today's PCE, but tomorrow's PCE. That's going to be crucial for markets.
Yeah, tomorrow's PCE is absolutely the big one. But PCE, it's always confusing because you have these two data prints that come out one day after the other. And I guess it's very easy to kind of forget which one's important, especially if you don't follow these things very closely. The Thursday one is the less important one. And it's the one we kind of actually already have most of the inputs, technically the data. And in fact, we know it should be a pretty strong print relative to the few forecasts that are there on Bloomberg. But I can see a little bit of a shock when we see that headline number today. And then tomorrow, the harder one to predict, it seems to be that the whisper number is that there has been enough in the recent data to suggest the disinflationary narrative might be reasserted by tomorrow's print. So today, a little bit of a jerk higher in yields. Tomorrow, we get excited on bonds again.
Okay, and do we get excited about the yen? We went to 160.87, I'm reliably informed, by the Bloomberg terminal, and some people get excited.
Everyone is very excited by the yen. Everyone's talking about intervention like non-stop. I think, there was a question about whether 160, because where they interviewed before, was going to be a set level. it would be unusual for them to define a level because the Bank of Japan and MOF have been very, very clear it's about pace of depreciation of the yen. So it would have been very unusual, but until we broke above 160 in dollar yen, we couldn't be certain that they weren't going to kind of worry about that level. Now that they've not held that line, it is clearly about pace depreciation. And essentially the 10 yen move, which they've outlined themselves, would suggest that intervention in the next couple of days would need to be by 164 level. And by the time we get into next week, it's higher again. So I don't think intervention is anytime soon. And until we get intervention, or until the Bank of Japan starts a sustained hiking cycle, the yen should be much weaker.
Okay, and we are looking ahead to a debate in the United States later on today. And I know that, you know, when is too early and when is too late for election positioning is something that you're thinking about at the moment.
Yeah, I think obviously some of the headlines
Also at 3 a.m. Eastern Time, we do get our Spanish retail sales seasonally adjusted year-on-year number. Forecast of 0.7% on the prior, 0.3%.
Some of the headliners Trump doesn't do as well as the priced expectations. But I think the real action for the election is still a couple of months away, fortunately.
Okay, we still have time. Then for that, Mark, thank you very much. Bloomberg Markets Live Executive Editor Mark Cudmore. Remember, you can get up-to-date analysis and insight from Mark and the rest of the Markets Live team. MLIV Go is the function on the Bloomberg terminal if you want to keep across that blog. Now let's get the stocks to watch. Joe Easton has a briefing from our equities team. Joe, good morning.
Morning, Anna. So we're starting with H&M, the clothing retailer. This one looking a little bit mixed. The gross profit numbers not too bad, but actually some of the guidance and trading commentary not actually as strong as expected. H&M saying conditions for achieving some of their longer-term targets have actually become more challenging, partly due to some weaker sales, but also rising costs as well. And importantly, June hasn't been as good as they expected. Sales actually expected to decrease 6%, partly due to the grim weather that we had at the start of June. We all know it has gotten a bit better now, so that might start improving soon. But here are the analyst ratings on this one. 10 sells, a lot of bears on this stock. It has done well over the past few years as it's a discounter, tend to do well in the cost of living crisis, but potentially the valuation a bit high. We'll wait to see where that one opens up in Stockholm shortly. Then we're moving over to another retailer. This time it's the Rolex seller, Watches of Switzerland. Now again, a bit of a mixed one. UK and Europe not looking good at all. Sales down 5%. This impacted by significant price increases, and this stock has had a couple of profit warnings over the past few years. A lot of that due to the UK. They have warned on this market, and also worries about Rolex bypassing them and going directly to consumers and selling watches. But importantly, the US sales looking really strong according to the statement today, and this is a great chart here. It shows us exactly how much they've expanded in the US over the past 5 years. Back in 2018, US sales were only 13% of the business. They're now 42%, and the US sales looking strong today. That might take the edge off the weakness in the UK that I mentioned there. Then finally, we're looking at chips once again, as you've been discussing in the show. We've got weakness in Micron. Now that stock dropped pretty sharply after the close of trading following the earnings, and also some guidance around cash flow, which analysts say is weaker than expected. But pretty much these earnings were in line. The EPS estimates bang in line with what analysts were expecting for the year ahead. But one report out of a US firm saying that this is a knee-jerk reaction to the fact that they haven't raised their guidance. And this stock rallied hard into the report. It's expected to be one of the beneficiaries of the AI craze, of course, so it has had a good run. But that weakness today might feed through into the likes of ASML, BE Semi, the machinery firms, those stocks trading higher for the year. The weaker ones, though, ST Micro, IFX, Infineon, these are the ones that sell into PC smartphones. The actual chip makers themselves, all of those could potentially be a bit weaker today. Keep an eye on chips in this trading session today, Anna.
We will certainly do so. I'll pick it up. Thanks, Joe. There's a bunch of interesting things in there that Joe was talking about, which I think are probably worth sort of picking up for just a second. I wonder if there's a NVIDIA connection to Watches of Switzerland. US market doing very strong, doing sort of very well for them. People are buying Rolexes. It used to be the crypto crowd that bought all the Rolexes. I wonder whether now the NVIDIA crowd is buying all the Rolexes.
I'm sure there's some overlap
in the United States.
There
must be some overlap.
Yeah, it must be the same folks who are behind that.
But crypto's come down a little bit, so I wonder whether one offsets the other. He was talking about H&M as well, which I think is really interesting. Our goal is of an operating margin of 10% remains, but we are seeing, but achieving this year is becoming more challenging. They talk about top line issues. issues, and I just want to take it back to the consumer again.
Yeah, that June number stood out, didn't it, as being, you know, quite a drop, just for 1 month, 6% or so in terms of the sales picture. So we'll certainly keep an eye on that. I pulled out a number of other one business called Bund in the UK. They've increased their guidance. So if we're looking for positive movers, we've also got the AIB in focus over in Ireland as well. So a few individual stock names to watch.
Yeah, but I'm curious how much of this is what the margin of the moves are going to be, right? It kind of feels like ahead of the PCE numbers and ahead of, I'm watching the debate, even though it may or may not be tradable for equities, but from terms of PCE number, it feels like that's where maybe the game changer is for the markets.
Is that a tomorrow story rather than a today story? Are you doing the GDP basket or are you doing the personal consumption basket? Anyway.
Yeah, I don't know. We're going to discuss it all. Coming up, it is the market open. We're going to talk about some of the movers Joe, Anna, and Guy just highlighted.
So just less than 5 minutes away now until we get our Spanish retail sales, seasonally adjusted year-on-year number. Forecast of 0.7% on the price, 0.3%.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
Thursday the 27th, welcome. 2 minutes to go until the start of equity trading here in Europe. European futures looking fairly flat right now, and the logic seems to be something like this. And let me put up a chart that kind of explains maybe some of what we're thinking here. European equities sold off yesterday, and then in the afternoon, the US picked up. So basically, one offsets the other. In theory, you should see, no, one doesn't offset the other. In theory, you would see a much higher open on the back of that. Blue line Europe, white line the US. However, then you get Micron. And you roll Micron into that chart, and that puts a negative back on, which probably means you're going to get a fairly flat open at the get-go this morning.
Right, and then that's...
So just less than 1 minute away now.
...is that the only sector in Europe that went higher yesterday was technology.
Yep.
And so does that leave it a little vulnerable to that micron sell-off?
Well, it's also still in the middle of rebalancing as well, right? So this idea of things that outperform one day and pull back the other is, I would say, magnified because it's the last week of
June.
Correct. A quarter and half is, and I just want to make sure I get those right. So you're going to see a lot of rebalancing, which is showing up in the currency flows as well.
Showing up in the bond market as well.
Yeah, everywhere.
You're seeing it quite significantly. But I think we are going to see a micron effect, I guess, is really my point.
And Jay was flagging some of the European read across. It is always complicated to get that European read across from those big AI stories. You know, where does that really play out? But we do see it to a lesser degree in some of those chip.
I think it's also just a sentiment story. I think it's
10 seconds.
This has been the core driver of those markets in the States for so long now that if you see a wrinkle in that narrative, then that causes maybe people to have concerns, and that has a portfolio effect.
There's also this kind of just this heavyweight thing, right? NVIDIA is a heavyweight, so sometimes you see the read-through in ASML, but you see the heavyweights here as well.
0.2%, 0.2%, lower than the forecast of 0.7%.
So we'll wait for the start of European trade then, coming in a second's time. European equity markets then, to Guy's point, not expected to go all that far, perhaps a little more upside in Europe than in the United States, but not really by much. The FTSE is open then and entirely flat. US futures are pointing a little bit lower. NASDAQ futures do reflect that micron negativity, that read across into NVIDIA then as well, perhaps there. So NASDAQ futures down by 0.3%. As we see, the FTSE is flat. The IBEX over in Spain down by 0.3%. The DAX is up 0.1%, waiting for the CAC 40 to open this morning. But we're pretty flat at the start of European trade. Another day in some kind of holding pattern.
I see Caring up quite... there we go. That'll be the reason why. Caring double upgraded to buy at Bank of America on Gucci brand heat. There you go. Gucci brand heat driving.
You're very into the fashion story this week.
I think the fashion story maybe is... I'm into the equity story surrounding the fashion story. How much I know about the fashion is probably...
fashion story leans into us occasionally. Forces our hand.
We're very fashionable people on this show. I should also point out that ASML, of course, is rallying this morning and moving, is one of your biggest index contributors naturally to the stock 600, higher by only 0.7% as well. Safran also higher by a significant amount this morning, higher by just shy of 2% this morning. Also, ASML, Safran, and Caring, all your biggest index contributors.
I do wonder whether Safran is just a pickup off the big hit it saw earlier on this week as we saw the downgrade coming through from Airbus.
So more of the rebalancing story then?
Airbus came and said basically our supply chain is causing us problems. Safran is one of the big parts of that supply chain story. It got dinged up pretty badly on the back of that. I think there's a kind of shoot first and ask questions later element to that story, which then gets kind of maybe more...
So taking a look towards the currency strength chart now, the strongest is the Australian dollar, with the weakest being the US dollar.
Motif for Europe today, and technology is kind of in the mix, but is dropping down the rankings.
And it is also worth noting Britain's FTSE 100 flat, Germany's DAX up 0.2%, and Europe's Stock 600 also flat.
Yeah, and I should just mention also very quickly on the kind of downside, we're also seeing healthcare really take a little bit of a back foot here. So ASML is your weight to the upside. Novo Nordisk is your weight to the downside. Sanofi, AstraZeneca as well, in line with some of that move. So I'm not really sure what you make of this picture that we're seeing today. How much of this is just waiting for the next catalyst? Someone more informed might be able to help us out here. Chris Wiley joins us this morning, CIO at Connor Broadley. We thank you so much for joining us. Walk us through this equity market. If we're talking about this kind of unstoppable upside in the States that we saw, yes, a 13% drop in NVIDIA shares that has bounced back very, very quickly. What is the read-through into Europe? Do we care?
Well, it's Europe, but it's global as well. What we've seen,
as we have also posted out the May 2024 report for Spanish retail sales on the feed for all those who may be interested.
Which has been a phenomenon which has come and gone over the last 12 to 18 months, and actually we saw it in 2021, and every time it happens, it's been led by the tech sector.
Yeah.
Now, why are people doing that when it looked as if earlier this year we were getting a... Yes, we are still seeing leadership from tech, but we're seeing markets advance on a broad front. We're seeing across regions and across sectors and stocks. And over the last month or so, that broad front has collapsed, and we've narrowed back into the sort of, imperial guard of maybe I'm thinking French at the moment, of IT. Yeah. And I think that actually betrays a lack of confidence. And one of the things which has added grist to that has indeed been the French political situation.
Yeah.
It's got people thinking about, you know, what does this mean for the broad economy? How confident am I about the soft landing? What we see in surveys, there's a lot of talk about belief in the soft landing, but is there the walk? And when I see people crowding into a handful of IT sort of champions, I think, well, that's not the walk. If you really believe in a soft landing, you should be buying cyclicals, and people aren't doing that. So I think that's what's happened. There's been this, and also the other factor has been hawkish Fed rhetoric in the last few weeks, which has also put people onto the back foot. But they don't want to sell the market, so what are they going to do? Oh, I'll go back to my cherished five or six IT stocks.
But isn't the cyclical story, to your point, also kind of intertwined with the luxury story, which is also then intertwined to some extent with the French politics story, and it all is tied up into a bow with the concentration risk we talk about in tech in the States, but right here in Europe, it's luxury. Is there a read-through? Is the concentration risk magnifying the vulnerability in the European market to some of that French political risk?
Yeah, I think it's another expression. If you talk about luxury stocks, it's like a European, because we don't have that many true IT leaders in Europe. We've got a few, but it's not like the States, and they're not that they're not the obvious go-tos. So it gets iterated in a different form, and I think what we're really seeing is a kind of growth quality play. And we've had Goldman's talk about granolas in Europe, which is the Europe iteration of it.
Guys, so I think what is Sensational Six?
The Sensational Six.
A granola sounds tastier.
It's acronym city, isn't it? But I think the underlying dynamic is the same, which is the walk and the talk not matching up in terms of belief in a soft landing, and people still gravitating towards the biggest stocks with the highest quality perceived growth rather than your cyclicals.
So what happens on the day that Micron misses, or Nvidia, dare I say it, misses?
That is going to be a tough day for Nvidia. Yeah. I think the really interesting question about all this is
for Nvidia or the market, because if people are hiding out, if you're porting a storm and you're hiding out in Nvidia, and then that port suddenly gets overwhelmed by bigger and bigger waves, there's nowhere to hide.
Yeah, it's the million-dollar question, really. Can we have... so when you've got very narrow market leadership, if those leaders get taken out and shot, which is what's tend to happen in the past eventually, 70s, the Nifty 50, etc., does that take down the whole market, or is it the trigger, the signal for people to rotate into other areas? Now, on Tuesday this week, it was an interesting day of price action, because that was actually happening. You had NASDAQ selling off, but other sectors rallying. Yep. You had, again, much broader participation, larger numbers of stocks rallying. A kind of immaculate, can you have an immaculate rotation? Is that question. And I think it slightly depends on how quickly it happens. And if it was a big shock from Nvidia, I think that would just ripple throughout the whole market. But if it's something more gradual and people start to anticipate it, and of course everyone's second-guessing Nvidia in that moment, maybe it can happen in a more orderly fashion, which gives people time to rotate.
Talking of shocks, let's talk about France in a bit more detail. Beata Manthi over at Citi notes out this morning talking about 5 to 20% re-rating of French equities on the back of some of their, not terrorist scenarios anymore, a left win, a right win, a hung parliament, some of these kind of difficult scenarios for the market. Does that number sound credible to you? There's a big range. What do you think happens in those kinds of scenarios?
Yeah, well, I think there are clear indications of European markets, French market in particular, being short-term oversold. And the historical precedents for this, the market normally overreacts to political developments such as this. We've been here before with France, right? It's not the first time. One of the reasons, we have 4 traffic lights in our process, and none of those are politics, because we think that politics generally washes through. If it matters, it'll show up in the 4 other drivers of markets that we use. So, let's look at this instance. And I think history doesn't repeat, but it rhymes. And actually, despite some, I'm not even going to I'm not going to comment on the social-political context and how people feel about the RN. But if you look at the economic policies, they're not necessarily that scary, actually, for markets. And if you follow the normal template, which is parties such as these, which come to power, they move from parties of protest to parties of government, they have to moderate. And they are showing every sign of doing that, in which case this knee-jerk reaction, which actually I think is also a bit of an excuse. for all the reasons I've referenced, people were looking for an excuse to actually pull back. Sentiment has been getting pretty frothy.
Yep.
So here it comes. Here's the excuse. Let's have a pullback. But if the political resolution avoids the worst case outcomes, it could be, I think a rally is totally plausible.
Back to the broader question about where markets head next, Chris, and you talked about this, will we get this immaculate rotation? Does the immaculate rotation take us to, is there a possibility that small caps benefit? I know this is a theme that you have returned to, time and again, that small caps have so far missed out, and the valuation gap between the mega caps and small is historically large, you argue, but does that change?
Yeah, no, that's always the problem with valuation arguments. Valuation anomalies can last for a very long time, and they can go against you even when you think they're extreme. So I think it really comes back to Fed policy. That's what everyone is looking at. And another reason why I think markets have struggled a bit away from the IT leaders in the last few weeks is we're seeing clear evidence of an economic deceleration in the US. That's really coming through. You just have to look at the economic surprise indices and so on. It's hiding in plain sight. Markets have clocked that, saying, OK, we are getting a deceleration, but it's come at the same time as the Fed is ratcheting up this hawkish talk and pushing out rate cuts. And the markets say, this doesn't look very nice, does it? The last thing we want is the worst of both worlds. No rate cuts and deceleration. So I'm not going to rotate into small cap if that's the backdrop. The question is, when does the Fed clock the economic deceleration and do another pivot? And I have to say, the evidence of the last few years is the Fed behaves like a bad fund manager right now, looking through the rear view mirror. Yet every time they've been behind the market, and I think that might be happening now, and in a few months' time we'll see the Fed pivot yet again and say, OK, now the economy is decelerating, maybe we can cut in September. That could be the signal for small cap.
Is that what being data dependent always looks like? Does it always mean you're looking in the rearview mirror? Maybe that's that
winds me up. When are they not data dependent? What are they setting policy on the basis of if it's not data?
It's not the data.
Okay. Is it the market fairies? What is it?
I just wanted to ask you about the UK, because you flagged that small caps could be an opportunity, as discussed, depends on what the Fed does and the like, and where the US growth story goes. But you referenced the UK as having a sort of double discount, because there's small caps undervalued in the UK for the wider global reason, but then also UK being what it has been recently, has been pretty discounted. Do you see anything changing there? Again, is there a catalyst for change?
Well, the obvious one is the election. Strangely, Britain, the second discount, you slightly avoided saying, I think I put it, the discount for being small and the discount for being British. The Brexit discount, if you like, or whatever you want to call it. So we're about to get a change of government, clearly. So political stability might suddenly be a tick in the box for the UK, where it's been the very opposite, for the last few years. So that's a good primer. The discount is there. Then we come back to the Bank of England. Can the Bank of England start cutting rates? The ECB started, as we all know. And actually, small cap in Europe has started to pick up since that rate cut. That's a wee bit complicated because service sector inflation is still very uncomfortable. But if we get that, then I think, that starts to line up. So it's there. It's one of those opportunities. You're still waiting for those signals just to confirm, but I think it's definitely there. And that for me, sort of gives me great encouragement as an asset allocator, because I'm not struggling to find things which look like opportunities to me. I'm struggling a little bit for some catalysts, but I know what they are.
We'll know them when we see them.
Yes.
Nice to see you. Chris, great. Thanks for stopping by. Really appreciate it. Chris Wiley, CIO at Connor Broadley. As we were discussing, we've already had the granola, so let's do the call six and figure out what's happening with the big heavyweight stocks here in Europe. As you can see, fairly mixed bag this morning. Novo's a little soft. LVMH up, which is interesting, actually, because I would have thought the money might be flowing out of it into Caring this morning in terms of the rotation within that space. ASML not down on Micron. Schneider Electric not down on Micron. And the safe bet in Europe, Nestle, going absolutely sideways right now. But I think Hennes is interesting this morning. That's certainly a stock that I've been looking at and what they've been saying about the economy and their own business. Let's dig into the single stock story in a little bit more detail. It's Joe Easton.
So we will take a look at H&M, Guy, absolutely slammed in the opener trading in Stockholm, down 13% this morning. The company warning of weakness in revenue and also rising costs, things like labour and materials. And June sales will be down 6% year on year, partly due to the weather, but it does re-emphasize the weakness in some of their markets. At the moment, we're seeing declines in some of the peers as well, including the Zara owner Inditex over in Spain, down almost 1%. Next, very slightly lower, and AB Foods, of course, which does own Primark, probably the biggest competitor to H&M. That one down 2.5%, a significant read across the fashion stocks getting hit this morning in European trading. We'll look at the chips moves. They weren't as big as potentially we might have expected given that drop that we saw in Micron last night. Micron, of course, fell almost 8%, seeing a little bit of weakness in some European names, BE Semi, ST Micro, Infineon, all coming down. ASML, the big chip machinery firm, actually holding pretty steady, up 0.7%. Micron actually wasn't too bad. It was pretty much in line with expectations, but expectations were elevated given the AI trade. We've got a pharma stock to bring to you over in Spain. This is Grifols. Now, Grifols getting a ratings downgrade overnight by Moody's, who warned on the company's debt load, and we're seeing that stock falling 8%. They are an indebted company that's been targeted by a short seller as well, and that stock's had a bad run, falling even further. A couple of deals to bring you this morning too. Firstly, the Irish government selling around 600 million euros worth of Allied Irish stock this morning at a discount, so we're seeing that stock coming down at 2% today. And DS Smith, take a look at that one, up 6.3%. Now, there was a takeover bid for International Paper, which has actually collapsed overnight. International Paper will now look to buy DS Smith, paving the way for that deal to go ahead. DS Smith up 6% in London. A couple of other earnings to bring you. We mentioned Watches of Switzerland in Stocks Watch. We're getting a boost there. The US market is strong. The UK and Europe still pretty weak, but the US now around 40% of sales, so that is coming up. But Currys falling further into the open of trading, now down 5%. Some weakness in the UK retailer. Their outlook for TVs and radios, that kind of thing, the electronics good, that one is coming down 5%, so not great on that one. ASR Netherlands doing a big share buyback. This is the 9 billion euro insurance company over in Amsterdam. Couple of morning calls to bring you. Kering, this is a big one, double upgraded at Bank of America, which says peak Gucci bearishness is over, and they recommend buying that one. That's up 4.9% in Paris. 450 euro price target, pretty punchy. It's only trading at 340. Bank of America likes Gucci. And finally, going the other way, we've got Anglo American. This one is downgraded to sell over at Berenberg, who says their strategy execution will need to be perfect after the BHP takeover did fade away, and that stock's falling 1.8%. Gucci higher, Anglo American lower. A lot of movers on the market today for you this morning.
All right, Joe Easton from our equities team walking us through those early market moves. We thank you so much. Coming up on the program, H&M plunges after profit misses in the second quarter. We're going to dive into the details on why next. Stick with us. This is Bloomberg.
The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything.
At 3:30 a.m. Eastern Time, we do get to the Swedish Riksbank rate decision. Forecast is for no change on the prior 3.75%.
We're just coming up to 20 minutes past 8 here in London, so 20 minutes into the European trading session. The FTSE 100 is pretty flat. Elsewhere, we're seeing some gains, in particular in Germany, actually, up by 0.4% on the DAX this morning. Let's talk about one stock that is really underperforming, H&M in the clothing retail space. Shares have slumped this morning after the retailer reported weaker than expected profit for the second quarter. The Swedish retailer is blaming poor sales at the start of June due to bad weather. Let's get more on this story with Bloomberg's consumer goods reporter Dasha Afansieva, who's with us this morning. Dasha, good morning to you. So how was the quarter for H&M? Take us through what we learned this morning.
So actual sales were roughly in line with expectations, and there was a beat on gross margin. But the real problem area here is for the quarter was the operating margin, which for the first half of the year is around 8%. And considering that the new chief executive, Daniel Erver, wants it to be 10% for the year, he's going to have to make a lot of improvements. And, they've already closed down some stores. They closed down about 80 stores compared to last year. And he is getting costs under control, but it seems those are at the gross margin level as opposed to his actual overheads. And there was also a bit of weakness in Asia, Oceania and Africa. It was flat in local currencies and actually down in the Swedish krona.
I remember the weather was bad, but I don't remember it being that bad. And I'm wondering why I haven't heard of this from other retailers.
Well, absolutely. And I think the stock is probably down today because he's talking about the current quarter and warning about sales being down 6% in June. Inditex for May, we don't know about their June yet, but it had strong outlook for May, so it does kind of raise questions. And they said it's getting better towards the end of the month, which is where we're at. And they're also looking at, they're also saying that the conditions, they're sticking to their targets of particularly this 10% operating margin target and also doubling its sales to 2030. They're sticking with that, and those two things are very interlinked because in order to reach the operating margin improvement, you need the sales growth.
You need a lot more sales.
You need a lot more sales, but they are also warning that conditions are a lot tougher, and it's sort of like, well, if conditions are a lot tougher, then what extra do you have to do in order to get there if you're keeping the same targets?
So how does this relate or not relate to the C-suite changes for the company?
Yeah, I mean, the new chief executive has only been here since January. That was quite a surprise for everyone. And he's really trying to prove that the turnaround is working, that his targets are working, that his message today was, despite all of this and despite then, the share price fell, his message was, this is the best quarter we've had for years, and it's working, and the collections, the spring and summer collections, are proving popular. But of course, we don't actually know the latest inventory numbers, and that's a key issue. And if he's guiding that actually there'll be more promotions in the second half of the year and that the environment is getting tougher, you can kind of see why markets are a bit worried. And that's all against the backdrop of trying to to compete with internet-only companies like Shein, which of course is going to be listing in London and is going to be a source of competition also from the investor side as well as the consumers.
All right, Bloomberg's consumer goods reporter Dasha Afanasieva, we thank you so much for breaking that story down. Those shares down by about 13-14% this morning. And sticking with another major decliner in the last 24 hours, let's go to the story of Micron, declining in after-hours trading in the States after its forecast disappointed investors who are seeking a bigger payoff from artificial intelligence mania. Now, the chipmaker's outlook roughly in line with estimates, profit even coming in a little bit higher. The company punished for not outperforming elevated expectations. Let's get more on the story. Bloomberg's Daybreak Europe anchor Tom McKenzie will be joining us to walk us all through this. Tom, there was a massive gain into the market close and a massive sell-off after. What did you take away from the Micron story?
Chrissy, look, I think you're absolutely right to reflect on the fact that the earnings for the quarter that they reported on came in line. In fact, as you say, profits and revenue actually came in with a modest beat. It was the outlook that was a concern, but it's also worth reflecting on the fact that they raised their outlook to a range of between $7.4 billion and $7.8 billion US for fourth quarter sales. At the top end, that's actually above the average estimate. The problem is that some estimates, some of the outliers, had seen potential sales in the fourth quarter of $8 billion. So again, it's about that gap between expectations and delivery when it comes to this AI theme. A couple of challenges for Micron. One, yes, they have benefited from the demand around AI because they're high.
So just less than 5 minutes away now until we get the Swedish Riksbank rate decision. Forecast is for no change on the prior 3.75%.
As a result of this. But they are not the NVIDIA of the memory chip segment. They can be interchanged with competitors, so they're vulnerable on that front. They actually need to build out capacity. They're spending about $8 billion US on that front. But that's leading concerns that maybe there will be a glut of these chips in the future. But again, the company is saying that the demand is still outstripping supply. But again, they're interchangeable. They're spending heavily on capacity. Does that lead to a glut going forward? And they're still facing a challenge from smartphones and PCs.
Tom, the issue here seems to be that the market was just simply expecting a beat and a raise. And that seems to be the normal now. To your point, that is maybe something that is less deliverable when it comes to Micron than it is with NVIDIA. But are expectations of just breakneck growth so embedded now in expectations that you are going to miss at some point? And is that really the takeaway here, that at some point NVIDIA is going to miss as well?
The takeaway is certainly that you don't necessarily paint all these companies with the same brush. You have to distinguish between the upside and the opportunities for Micron versus NVIDIA. NVIDIA still has 90% approximately of the market share around AI accelerators. They still have the chip that is the most efficient and most powerful. AMD, Intel working on competing, but still that gap exists. Micron, though, is interchangeable, and that is a risk if things start to slow.
Tom, thanks so much. Bloomberg's Tom McKenzie, Daybreak Europe anchor, of course, with the latest on the tech stories. We'll continue to monitor any read across we're seeing from that tech theme into Europe. We'll think about the trading day ahead as well. More coming up. This is Bloomberg.
Every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. You know, go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight
So
on
just
these
less than 1 minute
dynamic
away now.
leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural
10 seconds.
in the market. Private credit particularly exploded when the banks took a step back.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment
No
news
change,
breaks,
no change.
24
Rate remains
hours a
unchanged
day.
at 3.75% as
Content
expected.
changes everything.
And noting some downside in the Swedish krona following that.
The European trading day seeing a little bit of mixed action on the surface when it comes to the index level. But when you look at the currency picture, you are going to see perhaps a little bit more moves. 106.94 on euro dollar. We are just now getting the Sweden Riksbank result, leaving their policy rate at 3.75%. The estimate there was 3.75 as well. So the concern was, do they start to see some sort of movement in either direction? You're not seeing much of a reaction when it comes to the Swedish krona against the euro. That's really all I have to say on this.
Okay, there's a few more things to add in here. They are lowering their forecasting in terms of inflation. They now see 2024 consumer price inflation at 2% versus 2.3% previously. So they're downgrading that estimate. So that leads on to the other policy statement that they're announcing this morning, that they can now see the policy rate being cut 2 or 3 times more this year.
Which is interesting, because I think the expectation previously was 2 times.
Yeah.
So 2 or 3 is a bit more dovish.
This feels significantly more dovish,
Yeah.
I think, in terms of what they're saying in terms of their inflation expectations, which is unsurprising why we're getting the reaction with a stronger euro this morning on the back of this. I find this interesting in as much as I would have anticipated, given the caution we see at the ECB right now in terms of how it sees policy developing, that maybe the Riksbank would follow that narrative, and it doesn't. It feels like it's being much more clear-sighted in terms of what it thinks it can achieve this year in terms of rate cuts and where it thinks its inflation path likely lies.
You know, this is interesting, though, relative to the Nordbank, and the reason I compared the two is not only just regionally, but in terms of some of the risks and the expectations going into it. Look at the market reaction in terms of that strength. When you start to see some of these other central banks in Europe, actually, it kind of creates a little bit of a buffer for the euro at a time when we're talking about geopolitical weakness and political weakness as well in terms of the central banking story. But that all has an impact on the rates picture, and therefore not only and deal flow as well. How much in terms of things like issuance do people actually care about, and what does that mean then for things like buyout exits? We asked a slew of people at the very helm of that story at our Bloomberg Invest conference in New York. Take a listen to what they had to say.
The deal flow is still not quite there.
Private equity has slowed a little bit in the activity.
In our pipelines, we're seeing a meaningful acceleration in deal flow.
The key concern we have is, will there be activity where the buyers and sellers meet in the middle? And that hasn't quite happened yet, but I'm hopeful it will.
For the credit markets, you still have a lot of options, whether it's a recap, a minority sale, and that's what we're seeing. Yeah. So it may not be asset sale outright, but a transaction is going to occur.
Now that rates have stabilized and that cuts are on the horizon, we are seeing the pipeline pick up meaningfully, which means you should start to see more deals, more velocity, and even if the base rate comes down, it's still going to offer a pretty attractive rate.
Let's get a little bit more on this story. Joining us now, Stephanie Drescher, Chief Client and Product Development Officer over at Apollo, joining us right here on set. Good morning. Pleasure to have you on the program. Talk to us about deal flow here. There's a little bit of a backlog in the private markets at the moment in terms of some of those buyout exits. Do you have a time horizon? Do you have any sort of outlook on when we could see capital markets activity really pick up?
Look, I think it's all about navigating and choosing kind of the right companies in the market environment. At the end of the day, for our approach to this market and frankly over cycles, it's ensuring that the purchase price entry point really matters and can influence the outcome. And frankly, it gives you more flexibility in how you adjust and less reliance on the exact timing of the exit. So we can be patient in terms of navigating the market environment. We're certainly picking our spots and finding those moments to exit, and I believe actually that on a relative basis, we've actually been quite strong in those distributions of late. But the purchase price matters.
Well, speaking of the purchase price, there are, of course, we were talking about this in the public markets, where there's such a rally and such strength when you look at the technology space, specifically around AI as well. That is having ripple effects into the private markets, where software deal premiums are significantly higher than the rest of the market. Is that priced to perfection, do you think, or is there some room to let go there?
So, look, we're very focused on the overall valuation equation in the markets generally. And actually, when we think about public versus private, it's part of the reason that we believe that private market exposure in portfolios is incredibly important over time, but certainly in today's market. In fact, when you look specifically at the public market valuations coupled with the concentration, where the performance is coming from, to your point, we're seeing that over 90% of the returns, let's say in the S&P, are coming from fewer than 10 companies, likely 3, to your point. Where when you take a step back, nearly 90% of the companies that generate revenue over 100 are actually private. So the percentage of private companies out there dwarfs the public at a time where even the number of public companies have actually been cut in half since the mid-90s. So I think it's concentration coupled with valuation in the public markets that is kind of driving the focus on the diversification one can achieve through private exposure.
Can I ask you about geographical diversification then and allocation to Europe? Because I know you've recently been at a fund forum in Monaco, perhaps picking up some thoughts from investors either from France or about France and what impact that's having on sentiment towards this region. Is that something that was dominating the conversation?
You know, it was certainly a part of the conversation. I wouldn't say dominating, but look, it's a time to be prudent given the potential volatility that comes from the political and geopolitical backdrop. And I think people are certainly mindful as we head into July and looking and watching closely. And I think from a manager selection perspective, it also puts the focus on those, and we hold ourselves in this camp, that can navigate economic and political cycles over time, recognizing that potential volatility.
Do private markets protect me from the volatility around the politics that we're going to see, though? You've got what is happening in Europe. You've got what's about to happen in the United States. We've got the debate coming up a little bit later. Is that a way of dealing with some of that volatility that we're likely to see coming from the politics?
Yeah. Look, we do anticipate on a global basis that, and certainly in the U.S., as you referenced as well, that volatility will remain high. And in the private market, certainly as we approach it, first off, we ensure from an underwriting perspective upfront that we anticipate volatility over time. But as you think about the opportunities that can present themselves, given the volatility in markets, we want to ensure that ultimately we're working on behalf of our clients to navigate that and to deliver the excess return that sometimes can ultimately be created by that volatility.
In public markets, diversification has become synonymous with underperformance.
Yeah.
Is that true in private markets, you were just talking about the kind of the breadth of the companies that exist out there. Is the same story true in private markets as it is in public markets? Because it's really clear in public markets.
Yeah. So I would say no.
Yep.
When we think about portfolios and kind of the overall portfolio construction, a topic from the conference was how to think about diversification between public and private.
Yep.
And recognition that increasingly public exposure, which was historically thought of as safe because it was liquid,
Yep.
and private markets historically thought of as risky because it was less liquid. Increasingly, the conversation was about how both public and private can be safe and risky depending on the manager. But introducing the private exposure and adding that element of diversification, we believe, provides that excess return and certainly ultimately is an advantage to the investor by adding that incremental exposure.
So there's diversification in deal flow, and then there's diversification in players as well. Just in the last 10 years, that relationship between private capital and the banks is really fascinating. Not to mention, even retail entrants starting to get in on this juicy yield, which that's a whole other story. Talk to us about that kind of gap in financing, essentially. When the banks pulled back post-GFC, private capital stepped up. How much of that is a problem, given it's fairly illiquid relative to, say, an IPO market, for example?
Yeah. So you're right. I mean, stepping back, there are two sources in the credit markets in terms of lending and financing. You have the banks, and you have kind of what I'll call the investor marketplace. And those are managers. It's also mutual funds and sovereigns and pensions, insurers. And clearly, given the regulation, whether it's Basel or others around the world, the regulators were shrinking balance sheet.
Yeah.
And so the natural and logical outcome of that is less lending activity from the banks and more from the investor marketplace.
But is that risky?
So
Jamie Dimon says it's risky.
Our view is that it's healthy because it does provide the incremental capital needed to fuel economies and ultimately does it in a way that's deleveraging. So we believe it's healthy.
The private markets space is becoming more and more crowded. Are returns going to get harder? Is it going to get harder to outperform in private than it was even a few years ago as more and more people put capital to work in this space? What are my returns going to look like? And are they going to become, am I going to have to fight harder to get them?
Look, I think there's manager selection has always been important, and I would expect diversion of returns based on managers in the private markets, which goes back to ensuring that you're with someone who can, in fact, navigate cycles and think through not only kind of the entry point, but also how they ultimately deliver that alpha and value creation. So it matters.
Stephanie, thank you very much. Thanks for joining us. Good to speak to you. Stephanie Drescher, Chief Client and Product Development Officer at Apollo, here to talk private markets. Let's go to a UBS story that's given us a red headline whilst we were having that conversation. And this is to do with the wealth management business, the wealth strategy over at UBS. UBS is creating a new wealth unit and they're reorganizing their global wealth management arm. It's the first major move by new leaders in that department, Rob Karofsky and Iqbal Khan, who you see on the screen, I understand. They're pursuing a long-standing aim of bringing more investment services to ultra-rich clients. That seems to be the guiding force behind this reorganisation as this business reshapes itself, no doubt, post the absorption of Credit Suisse. Coming up, EU leaders are expected to nominate Ursula von der Leyen for a second term as president of the bloc's executive arm. More on that as we look at the EU leaders summit. Still to come. This is Bloomberg.
you announced recently, I believe, is that you're going to do something called the Steve Jobs Archive. And what is that designed to do?
We are trying to honor and elevate individuals through the inspiration of Steve and his life. But I think much more importantly, we are trying to find the best way to communicate to others his ethos and his sense of enormous human possibility, so that people can encounter the archive and feel inspired to do something even greater in their own lives, or to stretch what they think is a boundary or something that they didn't contemplate for themselves. So we are still in the collection and development mode. We're building out programs. I think you'll see in the future, you'll see some scholarships and fellowships. You may see some publications. But it's much more about forward-looking and inspiring people to think about how they can be part of positive movement.
This is Bloomberg.
And I just want to address this point.
You opposed it when I announced it. You literally opposed it.
If you listen to people in the audience across the country more often, you might not be quite so out of touch. Beverly.
Could we get a better trading deal with Europe?
You might be able to. But do you know what the price of it will be? It will be free movement of people. And that's what Keir Starmer's not being straight with you about.
Got a little spiky last night, didn't it? UK Prime Minister Rishi Sunak and the leader of the Labour Party, Keir Starmer. I wonder how long Keir Starmer thought about that line to deliver it at the right moment. He was perceived last time as being a little slow, maybe off the mark, in pushing back against Rishi Sunak. That seemed to change a little bit last night. A little bit more pugnacious, a little bit more punchy from Keir Starmer. Let's talk more about what we learnt last night. Bloomberg's managing editor, the EMEA news desk, Adam Blenford, joining us now on set. What was the takeaway?
The takeaway was really that Rishi Sunak also came out quite a bit more pugnacious, a little bit more punchy. He was pretty crisp and effective at delivering some of his attack lines, but as you said, Starmer parried them pretty nicely. The end result, perhaps, though, that the Conservatives and Rishi Sunak's party has been significantly behind in opinion polls for the whole duration of this campaign, and they really needed a kind of a knockout blow. They really needed to be on prime-time television last night, finding a way to make the case and landing that argument very convincingly that Labour were not the party that voters should go for next week. And realistically, the snap poll results at the end of that, a couple of which we saw, did not suggest that Sunak made that case.
Yes, it was 50-50, wasn't it? A pretty even split in terms of who came out on top, according to what some of those polls. Who did you get a sense that these leaders were talking to? Guy was making the point last hour, which I think is valid, that it sounded like Sunak was preaching to the Tory base, really, talking about not surrendering, in his words, on a number of issues to the Labour Party. Starmer maybe talking to a broader audience than just maybe the traditional Labour base.
I think that's right. And in some ways, Rishi Sunak's talking to what perhaps used to be the Tory base, or he has seen also part of the coalition that eventually elected Boris Johnson 5 years ago, which was formerly a Brexit voting base and people who've traditionally voted Conservative. A lot of them have, according to surveys, been looking like they're heading towards voting for the Reform Party, and that shapes quite a bit of Sunak's narrative, where he's talking tough on migration issues and equally on Brexit, that idea of freedom of movement. Starmer, it's interesting that he got a particularly kind of warm reception when he focuses on this idea of service. He talks about the idea of trying to fix the country. He always stresses his family heritage, his the more humble upbringings from which he's come.
Toolmaker, got to mention.
Toolmaker, I wasn't going to go there, but he often does. Tick. And so he talks with a degree of earnestness about trying to sort of right the wrongs of the country or fix some of the problems that the UK faces. And so that's a partly different approach from some of Sunak's a bit of tub thumping occasionally.
All right, Bloomberg's managing editor for the EMEA News Desk, Adam Blenford, walking us through some of those debate details here in the UK. There's plenty more debates to come, though. Let's talk about what else we're going to watch out for today. The U.S. and France both have debates tonight. France, I want to say tonight, the U.S. at 2 a.m. if you are staying up and waking up for it. We will, of course, have full coverage for what
your Wednesday or your Thursday? Sorry, Thursday or your Friday, Chrissy?
Oh,
I'm going to wake up early.
I am planning to. I'm planning on waking up at 1:30, rolling into the office at 2, watching the debate.
At some point, just checking.
We will find out. I will report live and let you guys know.
BBC.
But yes, there will be the debate, and then it will be on Bloomberg Television for that coverage. But it's not the only thing. We've got plenty of data on both sides of the Atlantic as well, plus those Nike earnings. We're talking about the Micron read-through. What's the Nike read-through, especially when that China exposure story? That might be more relevant to, say, a luxury story here in Europe, for example.
What's going on with the consumer?
Yeah. What's going on with the Chinese consumer?
So at 4 a.m. Eastern Time, we do get our Italian consumer confidence number, forecast of 97 on the prior 96.4. Eurozone money M3 annual growth with a forecast of 1.5% on the prior 1.3%. Italian manufacturing business confidence with a forecast of 88.6 on the prior 88.4.
What else is going to be in focus?
Yeah, trade policy. Anytime China is mentioned, any sort of foreign policy around the.
And we do also expect to hear comments from ECB's Casimir, who is holding a press conference on economic and monetary developments in Slovakia.
President Trump has been very vocal about his role or lack thereof in the war in Ukraine, very famously saying that if he were president, this war would not happen, at least the one in Ukraine. So that's going to be one thing to watch out in terms of the foreign policy, simply because Biden is talking a lot about losing a lot of the votes from the younger voter off of, again, the war happening in Gaza.
I thought it was interesting when we heard from the US ambassador to China earlier. He was saying that he thought China had miscalculated and underestimated the United States' commitment to Europe in terms of its peace and its unity. Yeah. And he is obvious that seems to fit with what we know about Biden and his priorities. But you look ahead to November and you wonder how that changes.
What is new that comes out of tonight? You think about kind of what is happening in the United States right now. Two polarized camps on either side, right and left. You've got a bit in the middle, which is actually maybe quite substantial this time round. A lot of undecided voters who don't necessarily like either candidate. Are they going to talk to who is the audience tonight? Is it that group? Or is it simply these guys are going to be talking to their bases and trying to score points off each other to support those bases? That's the bit. I hope it's the former and not the latter.
One would hope, but it will probably be the latter, simply because their policy agendas are so different. They'll be talking about things like gun control, abortion, immigration, etc. I think for a financial audience, an economic audience, the question is, what do spending priorities actually look like? Yeah. So, for example, more energy infrastructure, more defense infrastructure coming out from President Trump, for example, more green spending, for example, coming out from President Biden, and benefits that go to things like Social Security, that go into VA, etc., things like that. Those are going to be concerns for the bond market in terms of the deficit. But then even from a stock-specific story, both candidates are actually aligned on being tough on China, bringing more production and manufacturing back onto U.S. soil. We bring it back to the Micron story. $6 billion of that company is coming from chip grants coming from the Biden administration.
Okay, we will focus in on that particular debate then, and the French one, of course. We shouldn't forget, because that also for a European audience really important. Thinking of European politics, European Union leaders are meeting today as they look to wrap up a deal on the bloc's top jobs. They are poised to nominate Ursula von der Leyen for a second term as president of the EU's executive arm. Let's get now to Bloomberg's Oliver Crook, who is standing by in Brussels with more. Ollie, good morning. So first EU Council meeting since the election. What do the leaders need to get done, because they've failed to appoint people to these top jobs on one occasion?
Yeah, and it was supposed to be an easy fix last week. They said they were really going to sail through these nominations. They were going to be uncontroversial. They were going to get it done last week. Obviously, that didn't happen. We're hearing some of the same rhetoric going into the meeting today, but they really do need to cement those top jobs. And so really the top jobs are the EU Commission President, which is likely going to Ursula von der Leyen, the Foreign Affairs Chief, which is going to Kaja Kallas, likely from the Renew Party, and Antonio Costa is going to get the EU Council Presidency. These are the three top jobs. These need to be established. The reason it's important that they need to get doled out is because every other job, all the other commissions, all the other sort of favors, that trickles down from those appointments. What they also need to do is get their strategic agenda in shape, and that is basically the document that sets out the outline for the EU's priorities going forward for the next 5 years under this new government. We'll see a lot of the similar themes we've talked about over the last couple of months and really years, which is Ukraine, defense, security, competition will all be part of it. And of course, today, to sort of bring that into focus, we have Zelensky here in Brussels meeting with EU leaders. They're going to make a sort of firm commitment about the sort of continuing security pledges, formalizing that. And of course, also this week, guys, the accession talks with Ukraine. They officially began negotiations about Ukraine joining the EU. This is a very long process, but this is, of course, a very sort of symbolic and important step.
Be interesting to see whether von der Leyen can get through the EU Parliament. I think that's going to be an interesting dynamic as well. Ollie, draw a line between how people voted in the elections, the EU elections that just took place, and what the next Commission's priorities are going to look like.
Yeah, well, listen, Guy, I mean, I think it's really interesting to talk about the power dynamics and how they're evolving, right? Because Meloni doesn't technically have a vote in terms of the top jobs here, because that's really the coalition of the sort of main three parties, though she is the third most popular party. So the question is, how does she sort of exert her power within the EU? And that is
sort of less than 5 minutes away now, and to get our Italian consumer confidence number, forecast of 97 on the Prime 96.4, Eurozone Money M3 annual growth, forecast 1 spot 5%, on the prior 1 spot 3%, Italian manufacturing business confidence with a forecast of 88.6, on the prior 88.4. We do also expect to hear comments from ECB's Casimir.
To affect the top jobs, their huge bloc will potentially bear, Guy, as you were alluding to the vote within Parliament. On the other side of things, you have Macron, who's obviously running an election campaign. That is the other big elephant in the room here. His priorities will certainly be diminished, whether it's joint debt. He's been the sort of big advocate for that. But of course, let's not forget, if you get a far left or a far right government within France, both of those things are bad from the EU level. Far left, deficit spending. France is already in big trouble. On the far right, they're already running on a platform to basically cut contributions to the EU budget in order to fund some of their plans within France.
All right, Bloomberg's Oliver Crook in Brussels walking us through those dynamics. We thank you so much for doing that. The point that he makes is one in terms of how do you trade this? As we watch all of this unfold, what is the tradable story in the next 48 hours? And I'm willing to venture out and say it's actually the PCE number coming out on Friday above everything else.
Well, that's what Chris Wiley was saying to us, that they look at 4 sort of themes around markets, and politics isn't one of them. They think it plays in through these 4 levers that they watch, but they feel it comes out in the wash.
Biotom Anthony thinks 5 to 20% re-rating for French stocks. Just throw that one out there.
When does that happen, though? Does that happen in anticipation, or does that happen after?
The implication is post the election. If you get some of those scenarios playing out that are difficult for the markets to manage, those are the kinds of reactions.
It's the theme of 24, isn't it? The way that politics rubs up against markets.
Yeah, and again, it comes back to defense spending. You're not seeing the same move in those defense stocks that you're seeing in other parts of the market. Your ASMLs, your Novo Nordisks, for example. There's lots to digest. Not to mention the currency picture. We didn't even go into all those euro-dollar dynamics.
More FX for Chrissy tomorrow. That is it for markets today. The Pulse is up next. European stocks making very slight gains this morning. This is Bloomberg.
The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
DOJ or other authorities
could face bigger Britain's next.
It was going to keep reading World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting.
So just less than 1 minute away now. I will be leading with the Italian consumer confidence number.
And recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where
10
the
seconds.
trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV.
Still away to the Italian number, but seeing the Eurozone money M3 annual growth figure at 1.6%, that's 1.6% higher than the forecast of 1.5%.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London. Here's what's coming up on today's programme. Micron tumbles in after-hours trading as the memory chip giant fails to meet sky-high expectations. Despite the market volatility, Bill Gates remains bullish on AI, saying the hype is justified. We have more of our interview with the Microsoft co-founder. Plus, UK Prime Minister Rishi Sunak and Labour's Keir Starmer get combative.
98 spot 3, 98 spot 3, higher than the forecast of 97 for the Italian consumer confidence figure, as well as that Italian manufacturing business confidence, 86 spot 8, 86 spot 8, lower than the forecast of 88 spot 6.
Being met by the reality, at least for some investors, and again, the expectations stretched when it comes to the story around Micron. They did actually beat in terms of the earnings story. The outlook, though, for some causing concern, and that stock taking a hit. And the read across to the Asian semiconductor makers and European chip makers as well is there for us. We keep an eye as well on what's happening in the retail space at the lower end and the higher end, because you have an upgrade coming through for the likes of Kering, but H&M missing on profits. You can see the mix there across the map. S&P futures, meanwhile, pointing to modest losses around 0.2%. NASDAQ futures pointing lower by 61 points, and certainly Micron will be part of that story. On the consumer of the US, we have the retail story there as well, with Nike earnings out later today, but also the GDP print as well, as to whether or not that gives us more colour and more info as we look ahead to that potential Fed move later this year, with inflation, of course, coming through with PCE on Friday. European stocks across the benchmark currently flat. Cross assets, bit of selling pressure coming through on treasuries yesterday. Today, you're flat essentially on the benchmark 10-year at 4.33, as yields did tick up marginally yesterday in the session. 106 on euro dollar. A little bit of strength coming through on the single currency, up 0.1%, largely down to a little bit of softness for the dollar, given the gains that we've seen in the last few days, of course, for the greenback, well, year to date, really. $85 a barrel on Brent, currently up 0.4%. We continue, of course, to monitor the inventory story in the US as we lead up as well to the key summer driving season. Let's check in on Micron then, pre-market. And again, it was the outlook story that for some disappointed, didn't quite meet the most stretched expectations. They still have a backlog of orders and a building capacity around that, and that's part of the story for Micron. But this is the chip maker, of course, around the memory chips that work with NVIDIA's GPUs. The demand has been there. The stock is up about 65% year to date. But as you can see, pre-market, Micron down a little over 6%. NVIDIA also feeling the cold ripples of that Micron story as well, currently down 1.6%. It's been a volatile week for that maker of AI chips, of course. Let's bring in on the market's view, of course, and what is happening particularly in the tech space. JP Morgan Asset Management Chief Market Strategist.
Seeing comments coming through from ECB's Lane as well, who says officials will be agile on rates and keep an open mind.
From what's happening in the tech space this week, we've had the volatility around NVIDIA, that 3-day slump, then it rallied, now it's under pressure again. Micron coming in with an outlook that for some missed expectations. Does it suggest there's fragility around the AI theme?
Well, I think what we know relative to 2000s, because obviously everyone's comparing to the 2000s, is many of these companies are delivering fantastic profits. The reason Nvidia's done so well is largely because of the profits delivered, rather than just what we were hoping for the future.
As we have also posted out the Eurozone Money M3 annual growth report on the FJ feed for all those who might be interested.
What we did learn from the 2000s, and this is what I think we're starting to see now, is usually not everyone is a winner. And working out which are the specific companies which are going to take the market share, really be the dominant player, that's the really tricky part. So I think for us it was about, you know, acknowledging the tech story. There is definitely tailwinds to where this is going. We are believers in AI being a powerful force, but perhaps being careful about how you're actively managing some of that concentration risk. But also, I think, thinking more deeply, because of course tech versus the rest is the big question, just stepping back and thinking, well, if AI is going to be so transformative, they need consumers for the product. So looking outside of the big seven to the other 493 or elsewhere in the world and thinking about what are we hearing about how other companies are going to use AI, and that will tell us a lot about the future earnings of the big seven. So for us, it was a little bit about carefully managing the concentration risk, but taking perhaps advantage of the consumers of AI rather than focusing squarely on the producers, which I think is where the market's been so far.
That's interesting. In terms of allocation then, would you take some profit in some of those big tech names to allocate to the consumer play around AI, or is it a little early for that?
No, absolutely. I think that's the right thing to be doing. And also it is just about managing concentration risk. You know, Nvidia's 6% of the S&P. And I think one of the things that concerned me was when I look at the earnings expectations for a company like that at the end of next year, and these are people whose sole job is to analyze this company and consider where it's going, which is not my job. I'm a macro strategist. The range of those earnings expectations is so wide. So given that, I just don't want quite so much risk in one single stock. And therefore, for us, it has been about just actively managing and starting to maybe shuffle towards the beneficiaries rather than the producers.
And on that concentration risk and the lack of breadth in this market, particularly, of course, pronounced around the S&P, is there a change in narrative when the Fed finally does cut? Is that the catalyst for a broadening out of this market?
No, I don't really think it is. I mean, I think monetary policy, one of the big things we've learned over the last few years is that monetary policy is not as potent. And therefore rate hikes didn't hurt as much as we thought. And similarly, I don't think rate cuts are going to be the big story. Fiscal policy is far more potent than monetary policy, I believe, and we still have fiscal tailwinds. You know, the checkbook is still pretty much open in the US. The IRA, the Jobs Act, the CHIPS Act, you know, all these multi-year programs are still a huge stimulus through that economy, and that I think is still going to be, you know, the significant tailwind. So I think it's more about how the story broadens out from the underlying fundamentals. The Fed could help the narrative. I think people in small caps are waiting for the Fed as an indicator to move there. But no, I think we place too much weight on interest rates and how that's affecting.
Because I think for a lot of people, when you think about fiscal stimulus, you think automatically about the stimulus checks that came through for consumers and households, and the fact that we know the data suggests that's starting to dry up. But you're pointing and reminding us of the fact that we have these long-term programs backed by that spending that is not going to be derailed, at least in the short term. And you see that as being supportive for these markets. The markets, broadly, on an index level, do have momentum thanks to that.
Yeah, I think so. I mean, look, the US is still running a 6% deficit. I mean, in the whole US exceptionalism discussion, the one thing I do always remind people is, well, you know, the US is running a 6% deficit at a time of record low unemployment. That is certainly helping, I think, with how the US economy has proved resilient, how earnings have proved resilient, and neither candidate are talking about reining that in.
You see a convergence, though, between the US and Europe. What is the approximate time frame for how you have that in view, and how should portfolios adjust around that?
Yeah. So before the French election, for us it was all about the macro, because I think in Europe, we really haven't yet had our post-pandemic bounce. We came out of the pandemic into Russia invading Ukraine and an extraordinary cost of living crisis. So we still have those pent-up savings. Our consumer has been rocked. Our consumer has been lacking confidence for the last 2 years, understandably, but we're coming out of that now. So I think much of the growth, the consumer growth that the US has experienced last year, I think in Europe we're about to see some of that come through. So I do see a consumer uptick coming through. Now, at the moment, the market has taken a step back from that optimism, or at least the green shoots of the optimism.
Is that a
on
buying
Europe.
opportunity?
I think it is. I think in a couple of months' time we won't be talking about French politics at all, because I think, particularly what international investors I don't think have quite yet understood entirely is this is not 2011, 2012. None of these more populist parties are advocating leaving the euro or advocating leaving the EU. This is about migration, which is a thread that we're seeing in politics across the West. And it's also, in many parts, about a more business-friendly regulatory system. So I think that is, to me, and I think also that the need for a degree of fiscal prudence following the experience. Perhaps the UK gave a good example of how governments can't push the envelope 18 months ago, of course, with the events that happened here in the mini-budget crisis. So that's brought a degree of reality to the fiscal discussion. Most of them are talking a pretty sensible fiscal game. And therefore, I think, whatever happens as a result of the French election, the cohabitation, at the moment, working on the basis it's going to be with the right, and I don't think it's going to be...
So sectors like French banks down about 10% since that announcement by President Macron could be an opportunity.
Absolutely.
OK. When it comes to the UK, I want to draw on your experience at the Bank of England, your previous experience, of course, as an advisor to the MPC at the Bank of England. What is your view in terms of how the rate cycle unfolds? Is August, I should say, locked in for you at JP Morgan in terms of the BOE going? And how do you see that cycle of cuts coming through for the central bank?
The Bank of England seem to really want to cut. I think they are concerned that these policy rates are restrictive and this is just long and variable lags. So therefore, I think they would present it as, this isn't easing, this is us taking our foot slightly off the brake. So they need the data, however, to confirm that that's the right thing to do, and the data hasn't gone their way. We do need to see that softening in the domestic inflation rates. We need to see wage growth coming off more broadly across the indicators. We need to see service sector. I do think they'll get some of that. I still at the moment think August is the most likely, given they seem to really want to cut. Maybe it gets pushed out to November, but either way, I certainly think that the next move in the UK is down.
Very briefly, before we let you go, the MSCI China Index falling into correction territory today, down about 10% from its highs in May. Can broader EM perform without the China equity impulse coming through?
It's a great question. It's the question I think I'm asked a lot at the moment. I would say in the short term, it's a little bit more challenging. The routes in which China supports the broader complex, its commodity demand, tourism flows, make the outlook in its neighbours a little bit more challenging. However, medium, and maybe we're only talking 2, 3, 4, 5 years, some of China's woes actually are real benefits to elsewhere in the region. I've been so surprised how quickly we're seeing trade routes reshuffle, how the friendshoring narrative is playing out. And therefore, you're seeing low value-added manufacturing move South Asia, high value-added manufacturing move north, movements to Mexico. So I do think actually that some of China's weakness, and particularly in how we're seeing these trading relationships change, is going to really benefit other parts of EM.
OK, Karen Ward, thank you very much indeed. Chief Market Strategist for EMEA at JP Morgan Asset Management, with a view there on EM, adjusting supply chains, maybe how to invest around that, and a view that the BOE probably goes in August, and the tech rally has further to run, but you need to distinguish between those major AI names. Coming up, Bill Gates tells Bloomberg that AI's green benefits, the green benefits of AI, we know it's an energy consumer as well, will outweigh its emissions. We're going to have more from our interview with a billionaire climate tech investor and, of course, Microsoft co-founder. That is next. This is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lyons deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything.
Innovation has to happen everywhere. We have really thought about how do we partner with people to bring an innovation theory to different parts of the world. How can we participate and help? And so we're really grateful. We've got a new program, you might have heard about this, with Singapore, where we are partnering to do some expansion of our fellows program for the region, really to spur innovation there, drawing entrepreneurs, do what we do in all the rest of the parts of our work is try to help innovators, succeed.
And that was Roddy Guidero, the Executive Director of Breakthrough Energy, the clean tech investment firm founded by Bill Gates. Now, Michael Bloomberg, the founder and majority owner of Bloomberg News, parent Bloomberg LP, is an investor in Breakthrough Energy Ventures. Billionaire climate tech investor Bill Gates, meanwhile, has told Bloomberg that artificial intelligence will, quote, pay for itself when it comes to its associated greenhouse gas emissions, as the technology will help push forward the energy transition. Gates also weighed in on the valuations of big tech companies driven by the AI boom.
The big breakthroughs come when AI teaches you about material science. Like, okay, I can make a solar cell without using silicon, or I can grow food very efficiently, in a laboratory using fungi or some other approach. So it's as AI gets into the basic science thing that it goes beyond just kind of a super smart tuning where you save 10% here, 15% there, to helping you with that fundamental design of the green product.
And how concerned should we be about, we're here talking about energy, the extra energy demand that's going to come from the AI boom? Is it worth the extra emissions just for the power for the intellectual power that AI can bring to bear on this?
Yeah, so the additional electric demand, from electric cars as we change that over, or electric heat pumps as we change that over, or steel manufacturing, all of those dwarf even this amazing demand for data centers. Now, there's lots of ways that we're trying to make the AI computations more efficient, so we're not using as much energy. So the exact path of does it end up being, 3% of electric use or 6% of electric use, it's not going to go above 10%. So yeah, it's got to fit in, it's got to pay the price, and those tech companies are probably as sensitive to wanting to even pay a bit extra to use green energy of any electrical customers in the country. So they'll help push the green technologies forward. They're willing to pay somewhat of a premium to get in and be able to say that it's all done without greenhouse gas emission.
So you think on balance AI will, when it comes to emissions, AI will pay for itself?
Absolutely.
Now, speaking of AI, you've obviously been in this industry for a long, long time. You've seen lots of ups and downs in the tech space. Right now, we are seeing, of course, a tidal wave of money going into AI. NVIDIA, for example, recently became the world's most valuable company, albeit briefly. When you look at market caps like this, do you worry that we're seeing bubble valuations?
You know, I'm not a buyer and seller of tech stocks on like a daily basis or anything. You know, these multiples aren't as high as they were, say, during the internet bubble, and the growth is real. I mean, AI is not pets.com. This is something very, very fundamental. So I'm not. Don't take my view on any particular stock, but the growth potential. There will be some big winners in this AI space, which is why you see all the leading tech companies, including Microsoft, putting tens of billions of dollars into not just the back-end capacity, but re-engineering their applications so that you're far more productive.
Billionaire climate tech investor and Microsoft co-founder, of course, Bill Gates, speaking to Bloomberg. Coming up, EU leaders gather with the hopes of finalising the bloc's new leaders. More on those changing power dynamics next. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month.
Welcome back. European Union leaders are meeting as they look to wrap up a deal on the bloc's top jobs after failing to reach agreement last week. Let's get more then from Bloomberg's Oliver Crook, who's been following all the intricacies and horse trading around this situation. First up then, the EU Council meeting, Ollie, since the election, the first one. What do leaders need to get done at this meeting?
So as you alluded to, Tom, obviously what they need to get done here, the real deliverable is naming those 3 top jobs, where there's the EU Commission President likely to be filled by Ursula von der Leyen, the EU Council Presidency by Antonio Costa, and then also, of course, the foreign affairs policy going to be filled by the Estonian Prime Minister Kaja Kallas. So those are the 3 main jobs, and you really need to hammer down those 3 main jobs before you get anything else done within the EU, because all the other commissions, everything trickles down from those sort of 3 anchored jobs. What they also need to do is put out their strategic agenda, which is really this document that all these EU leaders need to get together on and agree on, that really sets out the policy priorities for the EU over the next 5 years. In there, you will find some of the familiar topics from Ukraine, defense, security, but of course also the question of competition. And of course, we also have Zelensky in town today, who's going to be meeting with the leaders on the week that the EU and Ukraine have begun the accession talks. That is the formal negotiations for Ukraine joining the EU. This is a very long process, but a significant one to begin formally.
So all of this on the docket for EU leaders at a time when, of course, the power dynamics are shifting. How is that impacting and how is that adjusting the institutional nature of this EU?
Yeah, Tom, I think it's really interesting to think about how Macron's weakness in France and Meloni's strength in Italy, how does that translate into kind of real power within the EU? For Meloni, she was in Italian parliament yesterday railing against the EU and their appointment process, basically saying that she'd been shut out of the top job negotiations. She doesn't technically have a seat there because it's the coalition of the big 3 that have come together to name those top jobs. But she can make a lot of trouble from the sidelines. Macron, for one, his priorities will certainly be falling down the agenda. Joint debt, that was one of the things that he was really concerned with. And also the question of whether a right or a left government comes in France. Neither of those are great for the EU.
Oliver Crook on the ground for us in Brussels and the changing political dynamics in the EU and the implications as well. Ollie, thank you very much indeed. Now, with a week until the UK election, we're going to look ahead to how that vote and that election is shaping up. This time next week, July the 4th. We'll get the details and the preview. This is Bloomberg.
In tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself, actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
Good morning and welcome to Bloomberg UK. I'm Tom McKenzie in London. Now, the UK Prime Minister Rishi Sunak and Labour leader Keir Starmer have gone head-to-head in their final TV debate before next week's election. Starmer accused Sunak of being out of touch and attacked the Conservatives' record in government, while Sunak hit back at Starmer on taxes and migration.
And higher welfare. That's what Keir Starmer will do. If you want lower taxes and lower welfare, that's what I will do.
And I just want to address Beverly's point.
You opposed it when I announced it. You literally opposed it.
If you listen to people in the audience across the country more often, you might not be quite so out of touch.
Could we get a better trading deal with Europe?
You know what? You might be able to. But do you know what the price of it will be? It will be free movement of people. No, and that's what Keir Starmer's not being straight with you about.
OK, let's bring in Bloomberg's EMEA News Director Ros Matheson and Bloomberg's Adam Blenford. Adam, I want to start with you on what the key takeaways were from this debate. There was a lot riding on this, arguably for the Prime Minister, Rishi Sunak, given the poll gap. Did the needle move? What stood out to you from this debate?
You're right, Tom. Sunak, the Prime Minister, he needed quite a convincing performance to try and overturn what's been a very stubborn and pretty wide poll deficit. You know, the whole 4 or 5 week election campaign, the Conservatives have been trailing about 20 percentage points behind Labour. So with 1 week to go before election day, really Sunak needed to land some kind of knockout blow on Starmer. He came out really quite pugnacious. He was quite punchy. His attack lines were well rehearsed. He looked like he sort of believed what he was saying, but the snap polls at the end suggested that it hadn't really made that kind of breakthrough that he was needed. One put them level pegging at 50-50. That isn't going to move the needle in the same way that he might need. And one a little later on in the evening suggested actually that Starmer won the debate.
And Ros, we are just a week away from this vote. July the 4th, we're all going to be going to the polls, at least British nationals. We'll see what the turnout is actually going to be like and whether or not that's going to be suppressed if people are really engaged in this election. Taxes came up again as an attack line for the Conservatives, for Rishi Sunak. Is that landing at all with the electorate? How potent is that as a tool in the next, 7 days that we have?
Well, as Adam was saying, you saw Sunak really come hard on taxes again in the debate last night, saying to voters, watch out, you're going to surrender your finances, your family finances to Labour, not just on taxes but also on welfare. So basically, can you trust Labour with your finances? And he said that throughout the campaign and again in the debate last night. The question is, which voters is that aimed at? Is that aimed at Labour voters? Is it aimed at the Tory voters who are a bit frustrated after the many years of Tory leadership, particularly the last few years of chaos? And is he trying to peel those voters back to the Tory base? Is he also trying to stop voters leaching to the far right, to Nigel Farage in all of this? So is that message really geared at Labour voters, more about shoring up his own base going into the vote?
How damaging, Adam, do you think the whole Gamblegate scandal has been? This is members of the Conservative Party allegedly placing bets on the timing of the election. To what extent has that been another smear on this campaign?
Well, I certainly saw some research that suggested this was the news story that had cut through the most during the 5 weeks of the campaign, bookended by Rishi Sunak leaving the D-Day commemorations early, which was a few weeks ago and was the precursor to one or two of the other TV debates. So Sunak's been battling these sort of headlines.
Looking at ECB's Casimir says that the ECB should await a September outlook to decide on rates.
As we said, he came out
With Casimir further saying we can expect one more rate cut this year.
A week or so ago, he was almost apologetic. There was a question and answer session, not a head-to-head, but he was almost looking like the weight of the world was on his shoulders. Yesterday it was a slightly different Rishi Sunak, but as Ros was saying, he's trying to appeal to a type of voter, and Keir Starmer, who would be the Prime Minister next week if Labour wins the election, was projecting a really quite different tone and talking about quite different things.
OK, and we'll get on to the other parties shortly, but I just want to get to the polling, Ros, with you, because we always have to provide the caveat. Yes, the polls have consistently showed about a 20-point lead for the Labour Party, but they are just polls. The vote will happen, of course, on July the 4th. We were speaking to Anand Menon, a keen watcher, of course, an expert on the UK political scene. He said even if you had the worst polling results, it would still be a significant victory for the Labour Party. But he did also say that there's about by some estimates, 5 million undecided voters still. Is there a concern for Labour that people will sit out this election and maybe the undecideds could turn to the Conservative Party? Maybe they're not telling the pollsters what they really feel.
Well, there is that question generally about polling, about how much people tell you in the minute in the poll and how much what they actually do when they go to vote on the day. But also, you mentioned turnout, and that's going to be crucial. We can see the messaging coming from Labor is let's not be too complacent. Now, the polling does show they're on course for victory, possibly even a super majority. But, you know, they don't want Labor voters sitting at home and saying, I don't need to go and vote because this is locked in. And equally, Sunak needs the Tory voters to come out and vote for him and not to vote for Nigel Farage at the same time. And so you can see really it's going to be a question about motivating people to come out and vote. And that's really what Labor seems to be concerned about, is this polling shows such a large margin for victory. Does that deter people in the end from bothering on the day?
Adam, for a lot of our viewers based here in the City of London, there will be a competition within their constituencies between the Lib Dems and the Conservatives. The Lib Dems trying to make a play for Southern England. Talk to us about the messaging there and what the Lib Dem picture could look like.
Absolutely. This is one of the intricacies, both of the UK electoral system, where it's a winner-takes-all system in any given constituency. You just have to get the most votes and you win the seat. But the Liberal Democrats, of course, were in government with the Conservatives from 2010 to 2015, and then were kind of wiped out electorally as a result. They've gradually rebuilt themselves as a very centrist party, perhaps even more to the centre than the soft left Labour. And they are challenging the Conservatives in many of those traditionally Conservative strongholds, where it's very difficult for the Conservatives to tread the line between appealing to the Nigel Farages of the world that Ros was talking about, taking a tough line on immigration, while also appealing to what was traditionally known as sort of the One Nation Tories, the shires of middle and rural England, people with small c Conservative values who have traditionally voted for the Conservatives, but were not in. It's not been part of the mainstream conversation for a lot of this campaign. But Brexit, for example, divided the Conservative Party down the middle between those in southern southwest England who didn't necessarily back Brexit and some elsewhere who voted for them who did.
OK, so we watch to see how the story evolves for the Lib Dems. The Green Party, and Guy Johnson spoke to the head of the Green Party, and both Labour and the Conservatives have been critiqued, of course, by the IFS around their manifestos and not being transparent. The IFS would say around revenue raise that's needed. And, of course, Labour has said they're not going to be raising some of the main tax pillars or pulling those levers. The Greens, though, say they would raise taxes. Take a listen.
So we would seek to raise taxes on those with the broadest shoulders to increase the funding on day-to-day spending. And then in terms of the investment that's needed in the transition to a green economy, the capital investments in things like public transport, insulating our homes, renewable energy, we would be willing to do some borrowing for that, because that's about borrowing for investing in the future. And the economic opportunities that come with that are huge for all of us, and actually the costs of not acting on the climate crisis are much bigger than the costs of acting.
So the Green Party co-leader speaking to Guy Johnson there. Ros, I'll bring you in on this. If the Green Party have a decent election, is there a picture that we could see unfolding where they play a role in pressuring any future Labour government, if indeed that's what we get, into a higher tax regime? What kind of role do you see the Greens playing?
Well, it's interesting because there actually hasn't been a lot of conversation about the Greens really in this election. It's been the Tories, Labor, Lib Dem, and also, of course, Nigel Farage. But the Greens are really out on a limb on this one because the Tories have been very clear that they're walking back a lot of their promises around net zero. They're pushing timeframes back and so on. And even Labor is being very careful about that because the messaging really that is resonating with voters is right now they know people are doing it tough. There's a cost of living crisis, they say, in the UK, and people are worried about the very short term. And so if you go to voters and talk about the long term and the need to think about that, right now that's less of a priority. And so the Greens are kind of pushing against that door a bit with their campaigning. However, they are sticking to their guns on it, and they're saying we realise we would need to raise taxes to do it. So interestingly, if Labor does get in, you can see the Greens playing a role, as you say, holding Labor to account a bit on that, because Keir Starmer's been, pushed on the tax issue. No, I'm not going to raise taxes. No, taxes won't go up. The Greens might say that they need to do that to some extent to adhere to some of these net zero, pledges, and that's really a core issue for Labor.
So from the threat to the right then, to the Conservative Party, Adam, and you talked about Nigel Farage, the leader now of Reform UK. Where does Reform stand at this point as we count down to next week?
Reform has
Starting here, the Japanese government says the economy is in moderate recovery, although it appears to be pausing recently, maintaining the same view for 5 months. That's according to the monthly report.
Has been dragged.
The Japanese government also warns on risks of elevated interest rates in the West affecting the weak yen.
Taxes, which is why the Greens that you were just talking about there are finding themselves as this sort of lone voice on this. And immigration, Farage and Reform have prioritised the issue of immigration, which has become a touchstone for the Conservatives. All through the last year or so, Sunak has been standing and making speeches with the slogan "Stop the Boats," trying to stop the small boat arrivals across the English Channel and talking up the Rwanda deportation scheme, which hasn't yet really managed to send anybody out of the UK. So Reform is in some way setting the conversation. The Conservatives are in their camp. The question about Reform is, can they turn that into electoral success? Nigel Farage is trying to stand, I think it's for the 8th time as an MP, hasn't managed to be elected before. He's got a good chance. Clacton, where he's standing, has previously elected an MP from the precursor of the Reform Party. So he's got a chance. It will be very interesting. The Greens and Reform are both penalised by the electoral system, which, if they get 10 to 15% of the vote, won't return them many MPs, and that's the limitation for them.
The post versus
that's the issue for them in terms of pressure. Yeah.
Adam, thank you very much indeed. Bloomberg's Ros Matheson, of course, and Adam Blenford breaking down where we stand in terms of the run-up, of course, to that vote here in the UK on July the 4th. Thank you both for the analysis. We're going to be speaking, by the way, to author and journalist Will Hutton in the next few minutes, getting his view on the election and what he believes it will take to, quote, rebuild Britain. That conversation is next. This is Bloomberg.
Every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice, saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. Go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
Always is on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome back. Now, Brexit and economic growth, just some of the contentious issues in the general election, which, of course, is now just 1 week away. For more on this, let's bring in Will Hutton, journalist and the author of This Time, No Mistakes, How to Remake Britain. You can see the book there on your screen. Will, thank you very much for joining us. In the first 100 days of the next administration, whoever's in government, what should the policy priorities be, Will?
Investment. Britain's got a productivity crisis. It's got a growth crisis. It's got a living standards crisis. And we've got to lift levels of investment decisively. And I think in the first 100 days, you will see measures to start that long road back. So for me, there's three institutions that Labour will inherit, which can be turbocharged and without raising taxes to kind of try and lift the growth rate. One is the Pension Protection Fund, which could be doubled, trebled in size, and it could provide lines of investment for, crucially, the UK Infrastructure Bank, which could lend very much more than it's currently doing, and the British Business Bank. And of course, you've got the Catapult network of innovation centres, which are kind of undernourished and underfunded and they need really turbo boosting. You go for those four things, and you can start to get growth moving, in my judgment. And I think they will go big time for infrastructure. And I think one of the first things you'll see in the first 100 days will be the establishment of this kind of infrastructure commission. So, that's kind of one area I'm looking for. A second area is plainly energy, net zero. I think they will start to bring the legislation forward for Great British Energy and begin thinking about how they're going to kind of decarbonise the grid and decarbonise our economy at a more rapid rate. And they'll have to do something on NHS waiting lists. So, in the first 100 days, I'm looking for action on all those three things, culminating in a budget in September in which I think there'll be increased borrowing for public investment. So there you are. That's my kind of start at 10.
Will, on the front of your book, you have a quote from Keir Starmer, potentially our next Prime Minister, saying, "A brilliant book, read it if you haven't already." I put the potential there. We know what the polls are suggesting, but it, of course, is not a done deal until the votes come through. So we're not going to make too many assumptions. But there has been a critique of this Labour Party that they have not been bold enough, whether on issues like pushing through with the wealth tax or getting closer to the EU. But you outline a pretty bold picture there, Will. You have your ear to the ground. You talk to members of the Labour Party. Do you expect more boldness? Is there a concern that they're not going to push through on some of these issues to really get to that growth? 2.5% is what Keir Starmer suggested. That seems pretty fanciful at this stage.
I think they will get 2.5% growth, and I think they will pull levers pretty aggressively to get there. Yeah, I mean, Keir Starmer was very enthusiastic about my book at the launch of the book. He has read it, and tells me he wants to take the ideas forward in it. So make that what you will. I think that of course, they're constrained. I mean, they've ruled out all these tax increases in the three big taxes. I would expect them to increase capital gains tax, have a major overhaul of capital gains tax. I'd expect them to have an overhaul of inheritance tax, and I would expect them to have a review of the system of residential property taxation in the UK, looking to get kind of more money from all those three areas. But they can do a lot without raising taxes. one of Rishi Sunak's kind of bequests.
Yeah.
One of his bequests to. Sorry. Yeah.
Well, no, I was going to ask, because those are some of the levers in terms of raising revenue, but you also suggest in your book that you should look at more borrowing, more public borrowing. That surely will collides with market reality. We saw that with Liz Truss.
Well, I think there's two things about that. I mean, the FT carried a story last week showing how asset managers and asset owners would be prepared to kind of buy British debt if it was understood it was to support public investment. And two, as Napoleon said, give me lucky generals. I mean, at the moment, if you look at, if you're an international investor, you want to hold French debt, German debt, Italian debt, Spanish debt, or British debt. And so there comes a, we're going to look a bit of a safe haven, I think, as political turmoil breaks over France. So I think, and there is scope. The key is that you've got a tax base to support servicing your debt, and secondly, you are actually spending money on public investment. I mean, infrastructure, R&D, training, leveling up. These are transport links, the port system, which is kind of falling apart. I mean, everyone understands the need for infrastructure investment. And actually, Britain has got quite an interesting institutional framework to do it. The UK Infrastructure Bank, which has only lent £3 billion over the last 3 years, could lend £10 billion a year. And it wouldn't lend on its own behalf. It would guarantee the lending of other people. So it would all be off balance sheet and wouldn't score as public debt.
Well, what is the role of the City of London in this diagnosis around the need for more investment?
Big time. I mean, I think that, the big insurance companies have been dancing around kind of creating kind of a pooled private sector wealth fund to match the public sector wealth fund. Nothing has happened so far, despite the Mansion House declaration of last July. And Jeremy Hunt wasn't very vigorous Chancellor Jeremy Hunt wasn't very vigorous in pushing this. There's a lot of receptivity for that. If you ask around, you will find that the kind of leaders of the big four insurance companies, some of the big asset management houses are really interested in actually creating pooled private sector investment vehicles to match a public sector wealth fund, and the two would act kind of in a symbiotic relationship, rather as happens actually to a degree in Canada. So, you've got that play to stimulate investment, and you are talking.
And so at 5 a.m. Eastern Time, we do get the Bank of England Financial Stability Report, as well as our Italian PPI numbers. Italian PPI year-on-year on the prime minus 5.9%, and month-on-month on the prime minus 0.9%.
If you really allowed it to kind of treble in size, so it's £100 billion fund, it's been very smart in the way it's invested. It could support the British Business Bank and the UK Infrastructure Bank even more without raising any taxes. You have got the institutions to support growth.
Apart from maybe capital gains tax. So that was interesting. Will Hutton, really fascinating, the diagnosis of some of the issues facing this UK economy and what may be to expect in her first 100 days, if indeed you get a Labour administration. Journalist and, of course, an author of This Time, No Mistakes, How to Remake Britain. Plenty more coming up. Stay with us. This is Bloomberg.
The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stradwatts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything. Day's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
Bloomberg understands that Australian bank and asset manager Macquarie made about $1.2 billion by selling off a 48% stake in Thames Water before 2018. The heavily indebted British water company is currently on the verge of collapse. Bloomberg's Rachel Morrison has the details. Rachel, what do we know?
Well, what's really interesting about this story is we sort of know for the first time that Macquarie investors made a 2.5 times return on their original investment in Thames Water. And really, the people who bought from them now have that investment classified as worthless. So it's a really interesting sort of deep dive into what was happening at the time at Thames Water, and a kind of story that tells us how we got to partly where we are today with Thames Water in big trouble.
Okay, Rachel Morrison, thank you very much indeed on the update there in terms of Macquarie pushing through with some profit, at least from 2018, in terms of Thames Water, as we continue to watch.
So just less than 5 minutes away now until we get our Italian PPI numbers. Year on year on the Prime, minus 5.9%, and month on month on the Prime, minus 0.9%. We do also see Italy to sell up to 3.5 billion euros of 3.85% 2034 bonds, and for Italy to sell up to 3.5 billion euros of 3.35% 2029 bonds.
Bloomberg Brief is next.
So that is the 10-year bid to cover on the prior 1.45, with the 10-year yield on the prior 3.97%, and the 5-year bid to cover on the prior 1.48, with the 5-year yield on the prior 3.54%.
Julie Swinehart is supremely skilled at navigating the rapids of real estate. That's important because real estate development is the next frontier in the business of sports. Fenway Sports Group has a blockbuster project in the works.
We have 5 acres to play with here. And when all is said and done, we expect 2 million square feet across residential, commercial, retail.
Given the track record of Messrs. Henry, Werner, and Gordon, the Fenway Corners plan comes with high hopes of success. That doesn't mean it will be an easy lift, especially right now. What have you learned with the dynamic move of the interest rates? Do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
Julie Swinehart took me on a walking tour into the future.
This is going to become the true entrance to Fenway Park. And that's part of the attractiveness of this project, is the age-old recipe of increasing dwell times, bringing fans to the park, bringing in businesses, maintaining what's here and preserving some of the historic nature of what you see around you, but making it even more accessible, making it more fan-friendly.
The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
So just less than 1 minute away now, I will be leading with the Italian PPI year-on-year number.
Conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? One of y'all's in trouble.
Ten seconds.
Good morning from our global headquarters in New York. I'm Manus Crenny with Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
Day 2 of unease in the global bond market as investors await the latest U.S. GDP and jobless data. And an AI letdown. Micron drags chip stocks lower after its forecast failed to meet lofty expectations. And Searchlight's Oliver Harmon joins us later this hour on the looming maturity of debt. Good morning, Manus. Great to be back with you.
Danny, very good morning. Great to have you back with us. Is it time to turn around? Is it time to pause, rotate, and defend? That is the question that is coming into some people's minds. Piper Sanders say the engine warning lights are on. Now, look, you can hardly call a bit of a drop this morning in NVIDIA a serious warning light, but it's down 1 1/8%. Jensen Huang defends the moat at the AGM. Yes, Micron is where the pain.
So looking at Italian PPI year-on-year at minus 5.9%, that's minus 5.9%, and the Italian PPI month-on-month at minus 0.9%, that's minus 0.9%.
That's where the warning lights are there. UBS says it's time to right-size your tech exposure. So both those stocks taking a little bit of a chip, excuse the pun, out of the futures this morning. When it comes to the bond market, the 5-year auction did fine. The bid-to-cover ratio wasn't so bad, but it is still 1 standard deviation below.
And we do also see here the 3-month Euribor falling 2.7 basis points.
Where we are. Overall, we're back to flat. Yes, the global bond tail is wagging in Australia and in Japan. You've got hotter inflation in Japan.
As well as that, according to the EU Commission here, we do see Eurozone economic sentiment at 95.9 in June.
And change. Dollar yen, it made that 38-year high for dollar, low for yen, reigniting the debate about when we will get a rate hike from Japan. Adam Posen was with us yesterday, Danny, talking about managing the decline of the yen and to fight back with rates. Use the rates and use that market, not throwing peanuts at the intervention gallery. Good morning, Danny.
Good morning, man. Got to be honest, I'm really distracted by the bottom of the screen right now. Micron down 6% on an earnings that simply met forecasts instead of beating them. Perhaps it is a warning sign for these AI stocks where you've had very full positioning and a nervous market, maybe weaker hands. But this is the thing, as you mentioned, it's really only met forecasts because of its traditional business. About 2 quarters ago, the same exact set of results for Micron, where it was the PCs that disappointed and the stock sell off precipitously and we forgot about it. And the AI rally ensued. So we'll see if we have that short-term memory yet again this time.
Yeah, but we were in an evangelist dream in terms of AI, 6 months ago, a year ago. There's a couple of notes have come into the box saying, is this an AI canary in the coal mine? They are meeting demand now. And this is what Sophie Lund said yesterday from Hargreaves Lansdown, which is, it is not the now that we're worried about, it's 2025. And as you said, when we sat down and we were debating the Micron situation, Danny was much more aggressive on the downside of the note that I have from Radio Free. But it was, the demand is there right now. It's what happens going into 2025. And there are serious doubts about that.
Right. To be fair, the only issue I had with what you were talking about was that someone called NVIDIA cheap. I just don't see how you could call it
very, very upset at 3 a.m. this morning.
It trades 48 times sales. I just don't see how anyone can call it cheap.
Year 2000, history rhymes. It doesn't necessarily repeat itself at times. It's good to have you back. Now I've got somebody to argue with.
No longer arguments with yourself. That's good. That's healthier.
I do that with the team in the break. Okay, good to have you back on set. Let's get back to basics because we're talking about investors and what they're expecting. It is about the latest GDP numbers, the jobless claims, the data, the new home inventories. They stood at the highest level in over a decade since the bursting of the housing bubble. Another market at risk that could drag on the U.S. economy in the second half of the year. This comes as the numbers for the GDP hit the tape at 8:30 a.m. Our guest this morning is Abigail Watch, U.S. economist for UBS. Good to have you with us. You're also concerned about a slowdown going into the second half. What scale of slowdown, and does that play through to the disinflation narrative? Good morning, Abigail.
Good morning. Thank you so much for having me join today. Yeah, as you say, I think we're tracking currently for the first half of 2024. We're currently tracking that GDP will come in below 2%. And if we think about the kind of boomy kind of 3.1% growth that we saw in the US economy through 2023, we think that is a fairly marked slowing. And going into the second half of the year, we're also expecting the economy to continue to slow. We think that over the course of the year, the economy will expand below 1.5%. So we think this is a fair slowing. There's a couple of drivers there. The first is that we think consumption will begin to slow. We also think that fiscal stimulus was a big part of the story in 2023, and we think it will be less of a boost for growth through this year. And then finally, we think business investment will remain relatively subdued. In particular, we think that there's some scope that policy uncertainty around the election in the third quarter could hold back some investment from the business sector as well.
So Abigail, I mean, there have been some Fed officials that have started to kind of sound like you. Mary Daly is perhaps one who said that, maybe Lisa Cook too. Yet Michelle Bowman now for 2 days in a row has beat the hawkish drum. Yesterday she was speaking in London at a closed-door event and reiterated the line that it wasn't time to cut rates, that inflation was still a problem. Given you see a slowdown, are you concerned that Fed officials are setting their policy to yesterday's data and risk a policy mistake by not cutting soon enough?
Yeah, so it is interesting. We have heard kind of fairly mixed comments from various FOMC members since the June meeting. Generally, at the June press conference, Chair Powell reiterated the strength of the economy and the kind of strength of the labor market in particular. And one of the things that kind of surprised us about the June meeting was that some of the language in this statement didn't acknowledge some of the slowing that we've seen. You know, Q1 GDP came in at 1.3%. We're expecting that to revise up a touch to 1.4%. In the data later today, but ultimately we do think you are seeing that slowing, and it is a fair question the extent to which that is kind of feeding into the narrative from the FOMC.
Well, one narrative that we're going to debate probably for the whole 60 minutes tomorrow morning when we go forward 24 hours is the debate between President Biden and former President Trump. Now, we had Adam Posen with us yesterday. He talked about the risk, the material risk of a shift of immigrants out of the country, anywhere between 1.3 to 7.5 million immigrants removed from the system over the next 3 years, and the prospect of much more aggressive tariff regime. We don't know what will be delivered. Tonight, we're going to hopefully get a little bit more intimation about where Trump stands on some of these things. But that prospect delivers stagflation, unabated stagflation. Is that a mounting worry for the UBS economics team?
Yeah, Yeah, so in our economic outlook that we published last year in November, we acknowledged, the risks around the election. We see kind of three key areas of policy that, we're watching closely. The first would be fiscal policy, the expiration of a great number of provisions for individual income tax policies, expiring at the end of 2025. The second would be around that immigration element. The increase in immigration through 2023 was a big part of the labour market rebalancing that we've seen, and the ability for us to continue to see kind of waning wage pressures and some of that kind of disinflation and that inflation progress through 2023. So obviously that's one of the other elements that we'll be looking out for. And then I think as well on tariffs, obviously that is another element of the policy that we'll be looking out for. And in particular, I guess, thinking about some of the possible kind of inflationary impacts and the impacts on the growth inflation mix in the US economy as a result of those.
Abigail, you put that all together, and it is a 2025 that is just wholly unknown. You look already what's happening around the world. Inflation surprises from both Australia and Canada in just this week alone. Do you think that's instructive at all for thinking about 2025, that the threat of moving down in inflation, of getting rates back to normal, will have this bumpy road where we need to rethink things?
So our expectations on the inflation side are that we continue to see that inflation progress. I mean, we did see obviously a better inflation report on last week in May's CPI release. The headline was certainly more encouraging. Obviously, the rent component of the index was still a little bit stickier than we'd perhaps like, but our expectation is that we do see progress on inflation continuing, and a big part of that is our expectation that we think the economy will continue to slow. And as we see that slowing and the continued kind of slowing in the labour market and the loosening in the labour market, we do think that will lead to kind of core PC inflation coming in at around 2.1% by the end of 2025. So that's our base case assumption in terms of the outlook for inflation.
Okay, Abigail, really appreciate your thoughts this morning. Great to get them. Abigail Watt of UBS. Okay, Manus, let's get to some of the other top stories that are trending on the terminal this morning. An era of big paychecks for China's financial elite is ending. The nation's largest financial conglomerates have asked senior staff to forgo deferred bonuses, and some employees are also being pressured to return excess pay from previous years.
SoftBank's Vision Fund
Seeing the Italian bond auction numbers here, so Italian 10-year cover at the Italian 10-year yield at 4.01%, Italian 5-year bid to cover at 1.42%, and the Italian 5-year yield at 3.55%.
Has distinguished itself from other AI chatbots by providing more real-time information.
Shares of H&M getting crushed this morning. They are plunging. The fast fashion retailer reported disappointing earnings and a slump in June sales. New CEO Daniel Ever is under pressure to accelerate H&M's turnaround with intensifying competition from Zara owner Inditex and China Shein. Manus, those shares down 13%.
Yeah, when will Shein come with their IPO? Coming up in the show, Micron extends its post-earnings decline after failing to meet those sky-high expectations. We look at the impact on the broader industry.
And later this hour, we're going to be speaking to Oliver Harman on his outlook for deals in the second half of the year here on Bloomberg Brief.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Fixed Income Fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Watching Bloomberg Brief, Danny Berger and Manish Krandy in New York. Micron failed to meet Wall Street's sky-high expectations for the chip maker. The sell-off down more than 5.5%, but it did rally 67% this year heading into the earnings report. Investors had been expecting a bigger payoff from the AI mania that has swept markets. Joining us now is Bloomberg's Henry Wren. Henry, it is remarkable to see a stock punished for merely meeting expectations. So did we just run up too far in the preceding days and year into these earnings?
Yeah, indeed. As you pointed out, that the stock has already risen by 67% into earnings. So this post-earnings expectations has been probably too high. So the stock reaction is probably not totally unexpected. As we see, the company beat consensus estimates in terms of this quarter's sales guidance at the midpoint, but it fails to beat the most bullish estimates, and that has been seen as a letdown by the bulls. The point of weakness is probably doesn't come from the new demand, so AI data center, but most likely from the more traditional markets, so being PCs and smartphones.
So this is when the market really begins to worry about their capex. It's going to be in the mid 30% range if you've got the traditional business, which are the pillars that support the innovation. Is there any way, and Danny and I are at loggerheads over this, as to whether the Micron reading on AI can give us any kind of a broader read on the supply chain or on the state of play in AI? Certainly not if you listened to Jensen Huang yesterday at the AGM, but give us your take.
Yeah, indeed. So Micron's post-earnings reaction definitely serves as a cautionary tale for other AI chip stocks, which has probably run a bit too high in terms of the stock price, but as well as analyst expectations. And that's exactly what we've been seeing in pre-market trading for now. NVIDIA has been trading lower, Qualcomm as well as the NASDAQ futures. But in terms of the supply chain, it could be another story that we've been seeing. European chip equipment makers have been trading higher, especially for ASML, ASMI, and others in Europe. And these companies are the providers of cutting-edge chip equipment that are essential when it comes to making those memory chips, those high bandwidth memory that will go into the AI chip, AI computing for NVIDIA, for others. So these are the stocks to watch, and they have been trading higher in Europe.
Let me play devil's advocate here, Henry. Couldn't I just say what we're seeing from Micron is simply about their PC business? It's a slowdown in its traditional core business, and it shouldn't have any impact for NVIDIA.
So for now, actually we've been seeing is the traditional markets, including the PC and smartphones, they have been going through a painful downturn in 2023, and they have been stabilizing for now, but they are still, when it comes to recovery, that has been slow, and that has been dragging the memory chip demand. But for the AI demand, that has still been showing no signs of slowdown. So in terms of the AI read across, in terms of the AI supply chain, that's still bullish signals, although that you can argue that they don't beat the most bullish expectations, but still that's ahead of expectations at the midpoint. So there's actually not so much bearish signals that you can read through if you are an NVIDIA investor.
Okay, well, we're on tenterhooks to see how the rest of the day goes, but certainly Micron has taken a bruising at the start of trade in the pre-market. Henry, thank you very much. Henry Wren on the very latest tech rumbles. Now, another company with lofty expectations, it's SpaceX's tender offer. It's said to value Elon Musk's company at a record $210 billion. Now, this is the world's second most valuable startup, and it was last valued at $180 billion. That was in December. The world has moved on. Matt Bloxham is with us. I mean, look, It's an Elon Musk company. It had a valuation the same as Verizon and General Electric. That was back in December. That valuation has increased. What has materially changed? Is it faith in Elon Musk, which I say probably is more questioned in the past 6 months, or is it the business model of SpaceX?
I think it's more the business model of SpaceX, to be honest. And I think, since that December valuation, the company's gone from strength to strength. That they have a number of strings to their bow. They've kind of got the launch business, and then they've got the Starlink satellite business. We've seen that the Starlink satellite business is hugely important, both from a kind of commercial perspective, but from a geopolitical perspective too. And the launch business is by far and away the leading launch business in the world, and they've got these incredibly good contracts with NASA. We've seen some of their competitors fumble a bit. There's these ongoing issues with Boeing Starliner that's currently docked on the International Space Station. SpaceX's equivalent, Crew Dragon, has been going ahead relatively smoothly, and obviously as we're seeing on the screen, they're now moving into their Starship launches, which got off to a bit of a tricky start, but the last launch in June was pretty successful, and they're planning another one in July. So I think as a business, it's in a really strong position in the space segment, and I think people's interest in space is just growing over time.
What about its Starlink business, Matt? How has that been contributing to the revenue of SpaceX and its growth that we've seen with its valuation?
Yeah, it's a good question. Obviously, the amount of information we actually get about the revenue mix is limited. Certainly, we're hearing lots of kind of encouraging noises from SpaceX itself and from the industry about adoption of Starlink, and certainly in terms of kind of forward projection. I mean, I think in rough terms, I think people think SpaceX generated about $9 billion of revenue last year. A few billion of that coming from the launch business. I think going forward, the current expectations suggesting around $15 billion of revenue for SpaceX in 2024, with most of that growth coming from the Starlink business. And certainly Elon Musk, when he talks about the future growth opportunity for SpaceX, he definitely puts the emphasis on that Starlink business as being the big growth engine. Clearly they can grow more in the launch business, but there's a clearer cap on how much more they can get out of the launch business. So Starlink is really central to the mid to long-term growth expectations for this company.
Matt, thank you so much for that. That is Bloomberg Intelligence's Matt Bloxham. Okay, coming up, your Rolexes may be getting pricier. Manus is currently
Noted here, Bank of Japan's Deputy Governor Uchida said that the weak yen is an upward factor for prices, closely monitoring in conducting monetary policy.
Get out of here. We'll have more on not Manus's watch, but Rolexes.
And that does bring us to just less than 10 minutes away now until at 5:30. We do see the Bank of England release their Financial Stability Report and FPC summary. As well as that, we do also expect to hear comments from RBA's Hauser speaking.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics and math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
DOJ or other authorities.
Could face bigger challenges next.
Fed was going to keep rating
World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television.
It's Bloomberg Brief. It's a bit of a shock. She's Danny Berger, and I'm Manish Krani. Reunited. Let's get you up to speed with your front pages. This is what we've got for you that are making headlines around the world. The FT, we lead with that. The French far-right leader, Jordan Bardella, vows a cultural battle against Islamicism. Also demands that the EU budget rebate. He says that he's confident of winning an outright majority in the legislative elections.
Which, of course, would lead to cohabitation. Next up on the AP.
That's us.
That's us, yeah, cohabitating. Trump and Biden are going to be facing off for the first time since the 2020 debate. You have the situation, Manus, where both candidates are trying to shape the narrative, get ahead of this. I love this. Anne-Marie sent this along. Most viewers, per a CBS poll, want to learn about plans and policies. Good luck to them.
I mean, that kind of frightens me that, you know, there's a belief that watching these debates, you're really going to get an insight into policy. It's a favorite theme of our viewers. We know that. You just need to go to sorry, not RichGo. You need to go to PoshGo on your terminal, and you find out what Rolexes are for sale. But the top-selling Rolex seller in the UK says there is pressure, although things have settled a little bit, is what they would say. We're talking, of course, about watches of Switzerland, and there's the famous Pepsi. Now, the question is, Danny,
So just less than 5 minutes away now until we get the release of the Bank of England's Financial Stability Report, as well as comments from RBA's Hauser to be expected.
Then you want a Pepsi. You want a Pepsi because, as Manus flagged to me this morning, Pepsi's actually been gaining in value, while the Batman, which was that other black and blue one, has been falling in value.
Yeah, your Pepsi's up by 4%, your Batman is down by 10%, and if you're vintage like me, you go for something else and something.
And so, just to clarify, that is Andrew Hauser giving a speech as Deputy Governor at the A50 Australian Economic Forum in Sydney.
Only by 4% in the UK, but it's something. So
still, the monster part of their business for Watches of Switzerland is the second-hand market, and that's where you go on the list. You've got to have spent a certain amount of money in a Rolex shop before they will actually allow.
Are you speaking from experience?
Let's put it this way: I'm not on the list. Let's just put it that way. I'm vicariously living on other people's lists in Rolex shops around the world.
Rolexes are out anyway, so you don't need one. It's cool to have like a plastic swatch or something.
Vintage is in.
Vintage
We'll be
is in.
back.
You heard it here first.
operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
So it's less than 1 minute away now till we get the Bank of England Financial Stability Report.
From our global headquarters in New York, I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
It's day 2 of the unease in the global bond market. Investors await the latest US GDP and jobless claims data. An AI letdown. Micron drags chip stocks lower after its forecast failed to meet those lofty expectations. And Searchlight's Oliver Harman joins us around the desk. We talk looming maturity wall of debt.
10
Before we get to
seconds.
that, Manus, let's quickly whip through these markets because it is a market shaken a little bit by Micron. S&P 500 futures down 0.1%. Micron merely meets expectations, and for this market, that is enough to punish it, down more than 6% in the pre-market trade. But can it bounce back?
So seeing here a text release from RBA's Hauser and the Bank of England report. Bank of England warns on private equity risk management, says more private equity-backed firms are struggling, saying that leverage is increasing among hedge funds. Bank of England also maintains counter-cyclical buffer at 2%, with Bank of England saying that households are resilient but many remain under pressure. Further saying private equity exposed to tighter financing conditions, saying desk-based bank stress tests to be published by the end of 2024.
According to Adam Posen, and that was an interesting
Bank
conversation.
of England saying that market valuations of UK banks are improving, but still lag behind those in the United States.
Just sort of reflecting on what we chatted about through this morning, the Micron piece is probably a little bit more ominous.
Bank of England also says that banks to be stress tested using Bank of England models, with results again due in Q4 2024.
Angst on a show at 5:30 a.m. That's what makes a bid and an offer.
Yeah, exactly.
They also say that global financial risk environment is broadly unchanged from Q1. Further saying adjustment to higher interest rates are not complete and that market prices are vulnerable to sharp correction.
Let's turn there where Searchlight Capital founding partner Oliver Hartman.
Also saying that UK businesses are broadly resilient to the current economic outlook. And so moving on to Hauser's comments here, he says that a welcoming environment for foreign investment and relatively low national debt. Further saying Australia has an adaptable pro-growth institutions and independent central bank, saying that resources include critical minerals, large potential solar capacity globally. Also saying Australia has unusually diverse range of resource endowments. Though Hauser does not mention an outlook for monetary policy in his speech.
Well, I mean, potentially there's hundreds of billions of debt that's coming up for refinancing over the next 3 years. A lot of that is, we know there were so many acquisitions made in the 2017, 18,
So taking a look into more comments from the Bank of England who say that the mortgage arrears expected to remain well below previous peaks.
We're able to take on a lot of leverage to drive equity returns. And of course, it always feels scary when you're sitting as an equity holder and there's a lot of debt coming due, and you say, wow, maybe I bought this company for 10 times EBITDA, and maybe I borrowed 6 times EBITDA to fund it and put in 4 times of equity, and now I can only afford to borrow 4 times. So it's kind of scary. What do you do? And I think that's related to the corporate world, but also to people's personal lives, whether it's a credit card debt or a mortgage.
So true. Okay, so when we get to that point, right, and everyone's dealing with this kind of scary atmosphere, we've been talking a lot about how the idea of there's this mismatch between buyers and sellers, that buyers want something lower, sellers aren't willing to sell at those levels.
Yeah.
Is this what brings the gap down?
It does help bring it down a little bit because you have to act. So if you're staring at that example that I just gave and you can only afford to maybe borrow 4 times, what are you going to do? You're going to have to take action. And either you're going to sell assets. So, we are starting to see some deals where companies are selling assets and they use the proceeds to reduce their debt and then they can refinance the remainder. Or you raise equity. Obviously, you can always raise equity through an IPO. We know that's challenging. So there's other equity offerings that are possible, which we can talk about. And last, there's also going to drive some mergers because it might make sense to merge with a competitor, take the combined synergies of the combined company, and then refinance the combined debt at a more attractive basis.
Well, what is gaining traction at the moment? And I'm going to bring you some headlines from the Bank of England. We can talk about these. These are literally just crossing the Bloomberg terminal as we speak right now, which is that more private equities are struggling. The Bank of England warns that private equity exposed to tighter financing, as Danny has said. So again, this is their report that they produced. They talk about the stability report. It's the financial stability report. Would you agree that we are in a struggling mode and that we may see some king's crowns fall in that struggle? Are we going to see some?
Yeah, each deal is individual, right? So each firm is going to have deals falling into lots of different categories. And of course, there's the companies who are struggling to refinance their debt because they're underperforming their initial business plan. And those companies will have a harder time. They will obviously have to restructure, and the underlying equity owners will probably have to take some form of a haircut.
Right.
We've actually done some really interesting deals recently in good businesses that are still facing the refinancing wall because they need cash flow to reinvest in their business to grow. So in that example that I gave, you might be able to actually refinance at 6, be able to afford refinancing at 6 times, but you don't want to because your business is growing and you want to reinvest your cash flow in the business. And those can be really interesting opportunities where you're helping a business right-size its capital structure and effectively maintain the flexibility to keep growing, either organically or through M&A.
I mean, it is interesting, this kind of confluence of factors, because on one hand, you have maybe some companies that are exposed to these tighter financial conditions and are kind of struggling, yet there is a lot of money in private debt right now chasing assets. And you get this weird thing happening where some of these companies are doing strange restructurings. Vista Partners was one of them that did it recently, and still money is willing to be put to go to work. So with a lot of money and a deteriorating kind of atmosphere, do you see sort of bad behaviors picking up, this lender-on-lender violence, or maybe more risky things, taking out more leverage? Is it sort of fueling some of the risk-taking that maybe shouldn't be happening?
Well, I'm not sure it's risk-taking, but people will certainly get creative in terms of how they can capitalize their businesses, and there's going to be ways of doing it, within the existing credit stack, and coming up with clever ways to potentially put more capital into the balance sheet that actually might be less favorable to existing lenders. There's always going to be smart lawyers and private equity technicians who figure out interesting loopholes to create more capital.
But again, just to drive home the point, I wonder within that if that's a troubling turn, that you're starting to see these lenders pushing people down the capital stack and willing to go above them. And again, this sort of lender-on-lender violence, as it's called.
Yeah, I think, look, it's a market. I think it's a clear market. The market clears at certain places. I think there will be some behavior that's challenged in courts, but there's also some of it that's just an evolution of the markets, and people adjust and adapt. And future credit agreements will be amended to adjust those things. I want to come back to a big opportunity that we're seeing, which is really in preferred equity. So one of the interesting things that we've been doing is in these growth companies, let's say they do have 6 turns of debt, can only afford 4, we've been putting in 2 turns of preferred equity. We think those are really interesting risk-adjusted securities because on the one hand, the company is right-sized. It has a more affordable stack of debt and it can continue to grow. And we get a very nice low to mid-teens type core return on our preferred equity. Plus we have usually some equity upside through warrants, options, other abilities to participate in future upside. And we're downside protected because we only have 4 turns of debt above us.
So you're protected all the way, but what about the investors which are looking for exits and they're simply not there at the moment? I just wondered, is that imaginative structure of financing that you're creating and putting in there, which keeps the businesses alive, but does it extend the IPO much further into the long grass? The traditional exit, is that what you're doing? You're giving yourself time and breathing space to face a better market in a better day.
Exactly. That's definitely true. We are starting to see, obviously the IPO market has been driven by just sexy mega cap large tech opportunities, right? Which is not applicable.
And so we have posted out the June 2024 Financial Stability Report and Financial Policy Summary and Record from the Bank of England on the FJ feed for all those who might be interested.
Approaches from strategic buyers for our assets. I think they often might be smelling an opportunity that private equity is motivated to sell, and maybe there's a deal to be struck.
Are you motivated to sell? Are these bids? Where are these bids coming through? Which sectors?
Well, we recently struck one with a trade buyer last fall that was a good, very strong, 2.5 times return for us in little over 2 years. So some of these are good, attractive returns that you're generating, especially if the strategic buyer thinks you have an attractive asset that's going to enhance their business and create synergy value for them, so they can afford to pay you. So we're not taking discounts on these deals.
Right.
But you have to own good assets. It all comes down to owning, good businesses at the end of the day.
Just quickly, Oliver, I mean, and this sort of applies to what Manus is talking about there being a lack of IPOs and only the sexy mega cap companies, as you say, are getting bids. Is a lot of this market underloved and prime for you to come into public markets to take private?
Yes. Take privates have been a massive opportunity for us as a firm, but I think for private equity more broadly. We've done, just in the last 9 months, we've completed 2 in the UK and we have 1 underway in the US. There's a lot of companies with less than, call it, 3-4 billion of market cap that are just ignored by the market. There's not enough institutional interest in them. Then the banks stop writing research. Then there's even less interest.
Just seeing here S&P saying ratings on China reflect the country's policy settings that will likely maintain robust economic growth and strong external metrics.
Management often feels in those businesses they'd actually rather be driven by private equity ownership because we take a 5-year view.
And China ratings are firmed at A+, A1. Outlook is stable.
Giving out equity to the employees. There's a few other people. But is that a big part of it?
Yes, there's compensation benefits to it, and also less disclosure on the compensation, which is a positive thing in some instances.
You want to tell us who you're looking at?
Oh, I can't talk about that. I can't talk about that.
I thought we'd just go in for the last kind of...
Yeah, no, I can't do that.
Fair enough.
I would get in a lot of trouble if I did that.
Okay, well, we'll put you out of your misery. Oliver, thank you so much for joining. We really appreciate your time this morning. That is Oliver Harman of Searchlight Capital Partners. Okay, let's stick with private equity and credit specifically for a while longer. I spoke with Carlyle's Mark Jenkins and Goldman's Christina Minnis on how they're navigating through various macro risks and how that impacts their investment strategies. Take a listen to our conversation at the Bloomberg Invest Conference.
34 years ago, I didn't pay any attention to it. I mean, I think 34 years ago, you focused on the micro level. I think after the great financial crisis, we said, wow, we should focus on macro and micro. And I think after we came out of the pandemic, the Russian invasion of Ukraine, we said, geez, geopolitics is actually pretty important. And, just to give you an example, if you look at container shipments today, all right, with the the conflict in the Middle East, if you will, what's basically happening is the Houthis are basically shutting down that area, which accounts for 15% of global trade. 80% of shipments that went through the Suez Canal are re-diverting. It's adding an extra 15 days to deliveries, and you can figure out what that cost is. So we came out of this very global environment, which we realized how fragile it was through the pandemic, and that it was overly complicated by global conflict, right? Like another great example is, if you remember in the Ukraine, when Russia first invaded, basically there were these clips, plastic clips that were made that were to hold together in the automotive process wires. And guess what? They're probably cheaper to make in the Ukraine than they were in Germany. And so that's where all of them were made. And once they stopped being made, guess what? You need that clip. You can't make a car. And that just showed how fragile the environment.
And Christina's just continued. Now we have to deal with political volatility in France. That has had quite the impact on bond markets. So how much does it come across your desk day to day?
You know, it's interesting. It's much more acute than it ever was. When the situation in France evolved, you know, in the last week or so, you know, the markets reacted very aggressively. Now the markets have settled down here in the U.S., but talking to my colleagues in London, any company that has exposure right now in France is very concerned, right? And so, you know, I think we would never have paid much attention to the French elections, but now we're paying close attention. And so I think it's just one more element of volatility we have to pay attention to. And to Mark's point, we recently underwrote a situation where 40% of the company's production came basically out of China. And 5 years ago, we would have thought about it. We would have thought about the risks and probably moved forward. That's a pretty significant risk issue to handle, and how you price that and how you're going to package that for investors. So it's 100% front and center in a way that it hasn't been.
That was Carlyle's Mark Jenkins and Goldman's Christina Minnis speaking to me at the Bloomberg Invest Conference. We'll have more on the world of finance coming up here on Bloomberg Brief.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal. The Deal. That deal. The Deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
It's Bloomberg Brief. I'm Manish Rani alongside Danny Berger here in New York. Jefferies' profits soared in the second quarter. The investment banking revenue momentum continued. Debt underwriting more than doubled. President Brian Friedman said this: "We are well beyond the green shoots, and we would suggest a broader recovery in capital markets activity, and M&A is underway." Ring a bell. Sonali Basak, day 3. She's recovered from Bloomberg Invest in New York. Great 2-day
gathering. So well done to you.
Thank you.
And the whole team. Danny and I were there for parts of it. We've just seen Danny. Talk to us about Jefferies. I mean, this is like, come on, second half, bring in the bonus time at Jefferies.
And Rich Handler is saying second half of 2024, second half of 2025, a lot of optimism. I've got to say, speaking of Bloomberg Invest, very interestingly, a lot of people don't feel the same way. PJT's Paul Taubman said people might wait until next year until they do larger deals. The reason you might see a different tone over at Jefferies is because that leaning into private equity sponsors in a much bigger way, and also to kind of mid-sized deals. Importantly, a lot of the drive higher in investment banking fees came from underwriting, which is also more particular to Jefferies than it would be to a lot of more pure play M&A focused advisory. Of course, debt markets have been booming with the anticipation of at least one interest rate cut. And so you're seeing that feed through the underwriting results in particular. And we'll see for M&A, but they are certainly optimistic.
So we have a couple different banking threads to pick apart, Shonali. Another one of them is UBS. The team at Bloomberg, they obtained a memo basically saying we're reorganizing our wealth division. Well, what are they doing?
Well, a couple things. One thing that's really interesting is they're bringing over Michael Camacho from JP Morgan, longtime leader in their asset management business, a longtime leader in commodities businesses over at JP Morgan. And so they're bringing in fresh talent in addition to what they saw over from the Credit Suisse deal that they're elevating people from as well. Remember, this is only roughly a month after they really elevated and created a new leadership structure around Rob Karofsky, who is a longtime Deutsche Bank and Morgan Stanley executive before joining UBS. And since joining UBS has only been rising, he and Iqbal Khan are in the succession plan when you think about Sergio Armati. And their plan here, Rob Karofsky now leads the U.S. business, Iqbal Khan moving over to Asia, is to build up that wealth management business so they can invest more, also client assets and alternatives, the hot moment of the day, of course, and lend to those wealthy individuals more. Listen, UBS has been pushing into this world even harder for a very long time to try to really serve those wealthy clients in different ways. But I've got to say, what's interesting about this restructure at this time, or this reorganization, is that it comes at a time where you also have Goldman Sachs, Morgan Stanley doubling down on alternatives for their clients too. And so it meets the need of the moment.
So we had financial stress tests, and I think JP Morgan's line was, this is better than we even thought it was going to be. I mean, this is about how you run your business, how much capital you need to run your business. Speaking of UBS, of course, they're under a lot of pressure from their regulator to add more capital. That's the risk for them. And here we are in America. This playing field is becoming again, and this is going back to Armati. Armati, for the past 15 years, has basically said this playing field is not even, and here we are. Is the good old USA tipping the scales again in terms of the stress tests and capital.
And says the bank that if you look at the Federal Reserve's chart here, Deutsche Bank and UBS, actually in the divisions that they have here, the drop in CET1 was actually much more severe than you saw at the big U.S. banks for their U.S. divisions. So when you look at the U.S. divisions, what was interesting here, yes, of course they all passed with flying colors, but the drop in the CET1 ratio was more than before. And that comes at a time where they're looking at the Basel III endgame, thinking about those capital requirements. And so a lot of concerns under the surface, questions about payouts as well, given some of these banks, Goldman, Morgan Stanley, the drop was above the median.
Shonali, thank you so much for coming in after a busy 2 days for you. Shonali Bassick, who leads our finance coverage. Okay, another stock that we are watching this morning, it is Nike. Apparel giant is set to report earnings after the market close. For more, let's get over to Bloomberg's Dasha Afanasieva, who joins us. Dasha, it's been kind of a confused picture for the retail and consumer-facing companies. For every weakness in an H&M, there's a pool that also says things are weak, but then, there's a FedEx where results are strong. It is confused. So what kind of clarity can Nike give us?
I agree with that. Yes, it's absolutely confused, and it's these kind of legacy players that, like Nike, that maybe looked relatively really good because they were constantly compared to Adidas, which was doing so poorly, and now that Adidas is stepping up its game, Nike is under pressure, and then there are these other competitors like On and Hoka. And I think now the chief executive, John Donahoe, is really under pressure to explain how is he going to bring back growth, to bring back top-line sales growth. So investors are looking for new product launches, for new strategies, for more cost cutting. They've already been cutting some jobs in some of its offices, and I think people are expecting more detail on that. There's also a demand for some more detail on its China push. Bloomberg reported earlier that it's looking to sell things like cashmere ponchos and lambskin bras and $1,000 Air Jordans in China, because that's a very competitive market that historically has sometimes shunned Western brands, and that market is really important to fight for.
Yeah, well, certainly the $1,000 sneakers in China, it's going to be a question as to whether that's really going to drive them back to that 20% of their overall revenue coming from China. It's dropped significantly. Dasha, thank you so much for being with us this morning on the Nike Story. Coming up on this show, it is the first presidential debate between President Biden and former President Trump. We'll debate that context on Bloomberg.
The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything.
This is Bloomberg.
Let's get you set up for your trading day on this Thursday. U.S. GDP and initial jobless claims will come at 8:30 a.m. Eastern. And then we've got another bond auction. The Treasury is going to be selling $44 billion worth of 7-year notes at 1 p.m. Then President Biden and former President Trump face off in their first presidential debate. That's at 9 p.m. Manish, I'm really interested to see how this works with the mics being muted, no live studio audience. It should be interesting, to say the least.
Let's see if there's any fireworks. And of course, we've seen a couple of different previews on that. The audience hoping to get some direction on policy. Some stocks to watch. Micron, we've touched on it several times. Extending the drop. The forecast missing the lofty expectations on the traditional side of the business, not so much on the AI. Levi reported sales that slightly missed expectations. Profit beat expectations, but the company reaffirmed its full
year guidance. The stock down 14%. WBA up 2.5%. Walgreens earnings before the bell. Consumer spending will be in focus. But of course, it is all about tech, Danny, and the flow of money. And we've got something nice from Goldman's on that.
That's right. Goldman just out with this, that hedge funds have been aggressively selling tech. They sold the most in this month on record going back to data since 2017. So the momentum feels like it's starting to turn now, Manus.
Yeah, but the weighting of tech has been like at a really historical high. Fast money, sharp money goes to the gate first.
Looking at your portfolio of businesses, it is about resilience, it's about pressure, it's about women. Like, so how does that come together how does it manifest in the deals that you're doing now?
Yeah, it's one of the things that I became increasingly passionate about after I retired, was acknowledging the fact that focus and this performance mindset was a huge asset that I had gained and that I had worked on and perfected for over 20 years. And now working through brands and founders, I just recently announced a collaboration with the Aman Hotel Group where I bring in the best talents in sports recovery and performance mindset in retreats and offering it there to their clientele. Our first one is actually in Phuket in February. So working through what that means, I mean, if you see the stats of Fortune 500 female CEOs, 80% of those women have played sport competitively through their life journey. And all those skill sets that they've built, to me, they were part of this first chapter, right? But how do they now apply to everything else I'm doing? And I'm so curious and interested in how I can bring that to the audience now and make it more mainstream and accessible.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close, weekdays at 3 p.m. only on Bloomberg Television. Context changes everything.
There's a bit of fog here when you think about the 2025 outlook that the election is creating.
As we talk to people, they do think that Trump is more market-friendly than Biden.
If you have a second Biden administration, I think you know what you're getting in terms of policy.
Both candidates are going to run on more spending. This is going to be a bond market issue. The range of outcomes in the election is vast, and we have to be super humble about what's going to happen.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
I've genuinely forgotten how to do this. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance. Equity futures negative by 0.1% on the S&P 500. The main event, it is debate night in Atlanta, Georgia, 9 p.m. Eastern Time. The President of the United States, Joe Biden, facing off with the former President, Donald Trump, the first debate of this election race.
At a time when people are wondering whether something pivotal could really shift the odds, there is a sense right now they are neck and neck, at least according to the polls. The latest one showing that Trump is edging ahead. What could potentially move the needle? If there is some sort of flub, could that reset even the top of the ticket, which is something we heard last week?
And the next debate is not till September. So if there's any sort of gaffe or any sort of big moment that could hurt one of these individuals, it's going to be replayed and replayed. When you start looking at some of the polling, though, who's actually tuning in tonight? Who do they need to get to? It's those double haters and those individuals that have not made up their mind. And Jonathan, CBS YouGov says there's only about 1 in 5 voters planning to actually watch the debate to look at some of their plans and policies to decide who to vote for. Because these
Can
are
we just
two
talk about the debate before we get into the policy? It's June 27th. It's June 27th, and we're talking about the first debate of this election cycle. The conventions haven't even happened. Why is this happening so early?
Exactly. It's the first presidential debate ever in history, which is why there's so many firsts about this debate that makes it so interesting to watch. It's happening now. Remember a few months ago, we were sitting around this table wondering, would these two individuals ever even spar again? And here they are this evening. But again, it's a long months till September when they meet again. So whatever happens tonight, this is why it feels so high stakes. Besides the substance, the style is also going to be important.
A lot of market participants very focused on the US dollar. A little bit later on this morning, we'll catch up with Deutsche Bank's Alan Ruskin. This is what Deutsche Bank's got to say on the US dollar: stronger for longer. Here's the quote: "Our forecast is highly dependent on the US election and the extent to which an aggressive protectionist trade policy is pursued. If this is the case, we'd like to revise our euro-dollar call to parity." That's how big some of these calls are for 2025.
I actually highlighted that, bolded it, and put it in green in my notes, because to me, this is really the interesting stakes of this. If there is a more protectionist, higher tariffs kind of policy, how much does that lead to dollar strength and, frankly, ongoing American exceptionalism, at least in markets? This is sort of counterintuitive. Some people saying it will hurt the economy, it will bring up inflation, it will slow growth. But guess what? It's going to hurt everybody else so much worse. And that is certainly what a lot of people are trying to see, whether to bake that in.
If you are the BOJ, cover your ears a little bit later tonight. Dollar yen 160.48. There's one single name in the pre-market we need to talk about as well. It's Micron. It was all about NVIDIA in the last week. Micron's down by about 6% in the pre-market, Bramo, missing some very, very high expectations. Citi coming out and calling the guidance, quote, conservative.
Okay. Let's just put the actual numbers on this. The guidance was that fourth quarter sales would be $7.4 billion to $7.8 billion. The average analyst estimate was about $7.6 billion, so it's in range. To me, what this highlights is basically there are sky-high expectations for companies that have been associated with AI. They have baked in long runways and this idea of huge profitability, and if these companies can't deliver, they are going to get penalized massively. The shares of Micron had rallied 67% ahead of this earnings report. How many other Microns are there? Stocks that have become AI darlings without the numbers to really prove it.
This one getting punished, down by almost 6% in the pre-market. The broader scores look like this. Let's kick it off with the S&P 500, negative by 0.15%. In the bond market, the 10-year 433.33. The euro just south of 107 at 106.97, and crude just north of 81 at $81 and about 32 cents. Coming up this hour, fantastic lineup for you. We'll catch up with Chris Marangi of Gabelli Funds ahead of tonight's presidential debate. Deutsche Bank's Alan Ruskin on why the US dollar will remain stronger for longer, and Maya McGuinness of the Committee for a Responsible Federal Budget. That one's still elusive. We begin this hour with our top story. All eyes on Atlanta tonight. President Biden and Donald Trump going head-to-head in the first presidential debate of the election campaign. Chris Marangi of Gabelli Funds writing this: the tough part about this election is it's not entirely clear which candidate is truly better for the market. Chris is with us around the table. Chris, good morning to you.
Good morning.
Two focal points for you coming into this election. One is election dynamics and two is policy. Can we start with the former, then we'll get to the latter? What do you mean by election dynamics?
Well, there's a whole dynamics of actually running this election and having an elected president on November 6th and one that's inaugurated in January. Obviously, we've been here before. We've seen these dynamics play out, and the institutions have survived. But it's, you know, there's going to be some stress around it, and we'll see how the consumer and the economy reacts to that.
Was January 6th, 2021 sort of a case study for that?
Possibly, sure. I mean, you know, and obviously you've got Bush, Gore, and other instances. We live in a different world, and I think the good news is, if you can call it that, is that we've got experience in this new world.
If that is a concern in these election dynamics, that means likely a lot of volatility for the markets. How do you prepare for that?
Yeah, I think the market has been a little complacent, actually. We haven't talked about this election enough. I think mostly about the fundamental policy divergences between the two candidates. Now, one could argue that part of the run for the Mag 6 and NVIDIA in particular, people just hiding in those names because they have such great secular dynamics and balance sheets that you don't have to worry about the election. But obviously, at this point, when we're making an investment decision, we're thinking about, well, what would this company's fortunes look like under a Trump versus a Biden administration?
Do you have a clear model for that? I mean, can we really say that we understand the policy from either of them fully?
Well, it goes back to the quote that you started with, which is, I don't know which candidate is truly better for the U.S. economy and for the market. We all remember, 2016, obviously, and the run that the market had upon Trump's election, and I think that's going to be going through most people's heads as we see the results of this election. So the knee jerk, I think, would be for the market to go higher on a Trump win. But there are other elements there, including perhaps a greater inflationary policies, tariffs, et cetera, which we have to first of all gauge how serious he is about those policies and what the impact is on a variety of stocks.
So is this just sort of watch and CYA, or is this actually do something now to prepare for?
I think it's find good companies with strong balance sheets,
like NVIDIA.
Sure. Well, it's why why we're favoring what we call sort of defensive quality names. I talk about utilities, I talk about some industrials with recurring revenue, et cetera. I don't think you want to be taking a whole lot of risk ahead of this election.
I can think of a country with some strong companies, really good balance sheets, France, for instance, and those companies can drown in messy French politics. Is there something about that that's uniquely French? In the UK, is it uniquely British? In Mexico, is it uniquely Mexican? Are there things that we can get away with in America that other countries can't?
There is certainly something to American exceptionalism, but I think each of those cases is a little bit of a warning. I think we own a number of stocks in Mexico. We still like Mexico as an investment place. But we were caught a little bit off guard. I mean, everybody expected Claudia Sheinbaum to win. I don't think anybody expected to win to the extent that she did. But look what happened to the peso. So, that is a little bit of a fear, is that suddenly the market wakes up in November and decides they need to change the outlook.
Just to be clear, have you held on to those positions in Mexico?
We've added to them.
You've added to them?
Yeah, I think Sheinbaum will actually be a little bit more moderate than AMLO has been. And, they look even more attractive today, given what's happened to the peso.
Can you share with us what those investments are?
So one of them is Grupo Televisa, which is a media name that actually has almost half of its value denominated in U.S. dollars, with their stake in Univision, which is a U.S. company, obviously Spanish language broadcaster, that's going to be a huge beneficiary of this election.
Would you do the same thing in the UK, in France, off the back of some of that? If you saw in France adverse developments politically that drive markets in the wrong direction, would you add positions there as well?
The core of Europe, I think, is a value trap. I'm sorry, John, but
I'm not taking it personally. Don't worry, Chris.
I'd love to view it as a safe haven, as a place where we can get away from these U.S. dynamics, but I think they're worse in the core.
They're worse. So this kind of goes back to our initial question around the dollar. We were talking about Alan Ruskin and the conversation we're going to be having with him, that basically a lot of Trump policies are going to end up really favoring the dollar regardless. How much does it sort of lead you back to U.S. companies regardless, because as dysfunctional as it might be with either Trump or Biden?
So RBA's Al Hauser saying outlook remains uncertain, and that has not changed. And the CPI number yesterday picked up a little bit.
People are getting a little bit over their skis with how different both of the candidates will be for the market.
Yeah, listen, obviously there are a lot of other factors to consider, including, is this a Republican trifecta?
Saying it may be taking a little longer for policy to feed through.
In his first term was he was very sensitive to the market and would back off certain policy measures when the market appeared not to like them. So, that's why I say it's a little part of why I say it's a little unclear as to how this plays out. But yeah, listen, I think this election in many ways goes to our strengths, which is we have a home bias in the U.S., which is not always good, but I think it's probably a pretty good place to be.
So you started out talking about how everyone's probably hiding out in NVIDIA, in part because they don't want to get away.
Not us, but yeah.
Of course not. No,
I was just saying labor market has been performing remarkably well.
Hide out in names that you know ahead of some
and under the baseline scenario, 1 year ahead GNPA ratio for NBFS CS estimates to be 3.5%.
Investment group came out with the statistics that I thought was just shocking, that today or yesterday, the S&P 500 rose on negative breath for the 5th straight day. That would tie the longest streak going back to 1999. Does this give you pause that should there be conviction on some level, you're going to see a sell-off in the names that have been the ballasts for this market and drag down the entire index regardless of whether you see strength in the economy and, frankly, consistency in policy?
It's why we recommend clients not necessarily own the index or have some diversification beyond just owning an S&P index fund, because that will, I think, happen. What goes up will come down, and there will be mean reversion. I don't know when that will be. But it's been obviously frustrating for those of us who are not overweight the Mag 6. We own some of them on the value side. Our growth team owns all of them. Yeah, there are some bargains, obviously, in those other 494 names. And in small cap in particular, which I've been on here talking about, there is, I don't want to talk about being a barbell, but we have some risk on the small cap side, which would benefit in a soft landing or rate cutting scenario, more levered, more cyclical. But then, we're sticking to some defensive larger cap names.
When you look at what you should be in ahead of November, do you have a base case on the outcome of not just the president, but also Congress?
Well, I have Chris Morangi's base case, which is that it will be a Republican trifecta. I think that's those are where the odds look right now.
In that sense, we did see a lot of the market basically unnerved around a lot of debates when it comes to the debt ceiling. If you think it's a Republican trifecta, does those sort of issues in Washington basically get a lot easier because House Republicans will, of course, want to just basically get on board with what President Trump wants to do?
I think one thing is for certain, and that we're not going to see fiscal sanity with either candidate, with either president. We're not even going to go there. Obviously, patching the Trump tax cuts will be easier with a Republican trifecta, and we'll have less friction on that front. Whether that's a good or bad thing is another question.
Yeah, my sense is blue wave or red wave. If we get either of those, this Treasury market sells off and yields rise.
I would agree with that. The question is, if you get some sort of joint effort or joint sweep, how much is it worse under one than another? And I've seen opposite expectations from both. So again, you can pick all of the election outcomes correctly and still not understand the policy and market ramifications.
We'll have this conversation for the next 5 months. Chris, looking forward to doing it with you. Thank you, sir. Chris Morangi there of Gabelli Funds. Equity futures right now on the S&P 500 recovered just a little bit. We're negative by 0.1%. With an update on stories elsewhere this morning, here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. UK Prime Minister Rishi Sunak and Labour leader Keir Starmer have gone head-to-head in their final TV debate before next week's election. Economic proposals have featured heavily during the BBC event. Starmer accused Sunak of being out of touch and attacked the Conservatives' record in government. Sunak hit back at Starmer on taxes and migration. Wall Street's biggest banks passed the Fed's annual stress test, paving the way for higher shareholder payouts. All of the 31 lenders assessed staying above their minimum capital requirements during a hypothetical recession. JP Morgan said the test results are rosier than their own projection. Amazon has joined an elite group of companies. The tech giant reached a $2 trillion market valuation for the first time ever yesterday. The AI rally has pushed the company deeper into new records. Even so, Goldman data just out suggests that hedge funds are selling tech aggressively, with June's net selling of the sector on track to be the largest on record, with the bank's data going back to 2017. And that's your brief, John.
Hey, Danny, thank you. We'll catch up with Danny in about 30 minutes' time. Up next on the program, it all starts tonight.
During the previous administration, my predecessor made promises which he broke more than kept.
Now under crooked Joe Biden, the world is in flames.
My predecessor failed the most basic presidential duty.
I just want to debate this guy.
It's this on repeat all the way until early November. That conversation up next. This is Bloomberg.
heavy of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure. Don't miss Bloomberg's interview with the
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything.
Live from New York City this morning. Good morning. Quiet start. We're down by about 0.1% on the S&P 500. In the bond market, some stability for you. 1 to 10-year, 432.55. Under surveillance this morning. It all starts tonight.
During the previous administration, my predecessor made promises which he broke more than kept.
Now under crooked Joe Biden, the worst president in the history of our country, the world is in flames.
President, my predecessor, failed the most basic presidential duty.
He's not getting the job done for America. He is incompetent, ladies and gentlemen.
I'm a grown man running against a 6-year-old.
I just want to debate this guy.
So here's the latest. President Biden and Donald Trump taking the stage for the CNN presidential debate at 9 p.m. Eastern tonight. James Lucia, the Capital Alpha, seeing 3 likely outcomes. A boring snooze fest, the start of a longer-term story, or a catastrophic error by one candidate that could decide the race. James joins us now for more. James, good morning to you. Out of those 3 likely outcomes, what's your money on?
My money's on the snooze fest, frankly. Presidential debates tend to be 90 minutes of pure boredom, waiting for someone to make a catastrophic mistake. And that's what we'll be looking for tonight.
When it comes to catastrophic mistakes, potentially, that we could see this evening, James, do you think, what are the vulnerabilities for both of these candidates?
Well, I think there's absolutely nothing Donald Trump can say at this point that would shock the public. He's already proposed having UFC fighting competitions for undocumented migrants. He can say anything he wants as long as he says it in a genial way with a smile. It's all about Trump's temperament here. Whereas I don't think anyone's really listening to what Joe Biden says. They want to make sure that Joe Biden does not freeze at any one moment. And really about losing temper versus freezing up on camera.
What do you make of their individual debate prep styles? They're very different this time around.
You can't see a more spectacular comparison. At Camp David, the Biden administration has built in an airplane hangar an actual mock-up of the debate stage they'll be on. Biden has taken off the entire week to stay at Camp David, to rest up, to get his exercise, to dedicate all of his energy to 1 hour and 30 minutes of focus. Whereas Trump has been doing his usual thing, going out and talking to people and just staying loosened up. It's sort of the hyper-controlled, hyper-prepped, hyper-study model versus Donald Trump's just let it go.
Lobbyist House is saying it would be a bad mistake to set policy on one number. We won't make it. And a whole series of data is coming between now and the next policy meeting.
Just letting things rip. And either way it could work. Frankly, I would bet on letting things rip in this circumstance, as long as Trump does it in a genial way, an affable way, a charming way. He could have a very good evening.
But isn't that going to be harder in this debate, given the fact that the second your allotted time is up, the mics go dead and you're muted?
That could work both ways. In the first debate in 2020, then President Donald Trump had just been diagnosed with COVID, and you could see his anxiety coming through. He felt that he had to destroy Biden on screen, and he really went over the top. Having the mics turned off would mean that Trump could not interrupt Biden or badger Biden. On the other hand, it could work both ways. I mean, having the mics turned off means that Trump will have to keep under control. It means that Biden also, needs to maintain his own focus through his own a lot of times.
You know, I'm just struck as you're talking, James. We spent the first 15 minutes of the show talking about how it does feel like a toss-up. This does seem consequential, and yet, regardless of the consequences, it is very difficult to predict the policy ramifications of that. James, when you talk to clients, what are you advising them to listen to? What are you looking for as an actual consequence for both policy and thus in markets?
Well, frankly, a lot of it does come to the election outcome, because if we have a narrow election outcome, even if you have a Republican trifecta, as you mentioned a few minutes ago, narrow margins doesn't necessarily mean that you're going to be able to make big changes. Either president will have to deal with the congressional majority that he has. So while people are predicting the eschaton, I think, in fact, we're looking at probably a narrower range of outcomes, because both potential candidates would have a very difficult hand of cards to play if they become president.
We were speaking with a number of strategists over the past couple of weeks who indicated that there is this possibility still, especially because of how early this debate is being taken place, that if there is some catastrophic error, particularly by Joe Biden, that he could potentially be replaced at the top of the ticket. Do you adhere to that kind of thinking?
I don't, because I think it's too late. The scenario here is inherently credible, that Barack Obama, Nancy Pelosi, John Clyburn, the great and good, the eldest of the Democratic Party, would go to Joe and say, Joe, it's, you've done great service to the Republic, but now it's time for you to move on. You still run in, though, to the Kamala Harris problem, which is that I don't think there is any viable alternative to Kamala Harris for the Democrats. It's not going to be a white guy. It's not going to be Gavin Newsom. No matter how tall he is, no matter how good his hair is, you still can't overcome the optics of displacing a black female with a white male candidate. If it's a Gretchen Whitmer candidacy with Josh Shapiro as vice president, maybe you could do it, but the fact is, I think the odds are very, very low. It would take a truly spectacular moment for Joe Biden to try to replace him before the convention. And the convention itself, we haven't had a real political convention that actually chooses candidates since probably the 1920s. Really, it's a very dicey maneuver to say to your assembled delegates that, guess what? We're going to ask you to recall your reptilian DNA, to go back to the way you used to operate 100 years ago and choose or ratify a candidate. So I think it's basically Joe Biden or Joe Biden.
James, I understand the odds are very low for that, but the fact that we are having this conversation and that a lot of people are coming on this program, Greg Valliere having these conversations, does that mean the damage is already done for the Biden campaign?
I think it is largely baked in, and you can see it in this sense of massive preparation. Again, going back to the New York Times, the Maggie Haberman story in the New York Times about them building a mock stage for Joe to practice on. It does show, I think, that the damage has been done. And frankly, that's why we have a very unique election here, where the incumbent president, who normally has an overwhelming advantage, does not in this case. Incumbent presidents in the second quarter of the year usually have a huge financial advantage over their opponents, and they use it to great effect. Joe Biden dumped $30 million of negative advertising on Donald Trump in the second quarter. Since Trump's conviction, he has dropped another $50 million of negative advertising on Donald Trump, and it's had virtually no effect. The election is almost tied. And instead of arguing on policy, Joe Biden's advisors are working with the president to find him ways to needle Donald Trump, to provoke some sort of outburst, to get the angry Trump instead of the jolly Trump. And so it's literally, as the great Dan Henninger, a good friend of mine, put it, we're having a debate about who has the most powerful office in the world. And it's all about which of these two elder gentlemen has the biggest problems with his own mental health.
James, we'll get you with the promo for our coverage a little bit later. Snooze Fest coming up, 9 p.m. Eastern Times. James Lucia there of Capital Alpha Partners. Really echoing, I think, the way a lot of people feel about this election in this country this year.
90 minutes of pure boredom waiting for someone to make a catastrophic error.
Yeah.
Kind of feels like what we've been talking about on repeat, this idea that it feels like either way unclear unless something catastrophic happens. He was deadpanning there some of the most, inflammatory comments. That is how everyone feels about one of the most unpopular races I could possibly imagine.
At the end there, James was talking about all this money the Biden campaign is using right now to go after the fact that Trump is convicted. He was convicted guilty in this Manhattan trial. The New York Times Siena poll says more than 2/3 of voters said that outcome made no difference to their vote. This was supposed to be potentially one of the vulnerabilities they wanted to harp on when it came to the former president.
It makes it so difficult to try and predict 2025. I often think about this, how difficult, how different the Biden presidency would have been if the Democrats didn't win the Georgia runoffs in early 2021. How different things would have been for this president.
And to push that forward to the debates, whether they try to cater to the middle or whether they try to cater to the extremes of their parties.
Coming up on this program, we'll catch up with Alan Ruskin of Deutsche Bank on why the US dollar will remain stronger for longer. That conversation just around the corner from New York. Good morning.
Names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself, actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Find the energy
Live from New York City this morning. Good morning, good morning. Your equity market negative by 0.1% on the S&P 500. The equity market more broadly looks like this. The NASDAQ only down by about 0.1%. Likewise on the Russell. Your big move in the pre-market, we'll get to this in a moment. Micron is down about 5% in early trading. We'll turn that page to that story in just a second. Let's turn a page and switch at the board and get to the bond market. The 2-year, 10-year, 30-year looks like this. Your 10-year is stable at 432.74. The 2-year 474.72. Monitoring your supply, your debt auctions. Bramo. Yesterday, what did we get, the 5-year?
Yeah, yesterday was a 5-year. Today at 1 p.m. we get $44 billion of 7-year notes. Yesterday's 5-year auction went all right. The 2-year auction before that went all right. Today, question will be 7-year notes tend to be a little bit messier at a time where you are seeing this creeping higher in yields globally on the heels of a couple of bigger than expected inflation rates.
So far, so good. Look out for that a little bit later this afternoon. Let's get to foreign exchange. We want to talk about dollar-yen. When you hear it, Japanese officials say things like rapid, one-sided moves. The weakest level going all the way back to 1986 in yesterday's session. Lisa, dollar-yen 160.43.
We were talking about how remember talking about intervention at 140. And then 150, and then 155, and now we're at 160. And the question is, are you going to throw good money after bad into this market to prop it up when ultimately that's not going to work? It really has to come in the form of some kind of rate hike by the Bank of Japan. Is that on tap next month? And that's what an increasing number of people are really gaming out.
Do you think there are some concerns about Treasury holdings at some of these central banks? About what could happen if they have to defend their currency a little bit more?
That essentially if they have to liquidate in mass Treasury holdings and potentially anything else, how much does that have an upward pressure on U.S. bond yields and frankly just sort of a knock-on effect globally? At this point, what is the willingness, though, by the Japanese authorities to do that, given that it's had a negligible impact on the actual currency in any lasting form? But you're right, there is this fear that maybe there could be some sort of market knock-on, which maybe is the reason why Janet Yellen was saying, we don't like this. Come on, you gotta warn us in advance.
That started at the IMF World Bank meetings a little bit earlier this year. The Japanese yen showing a bit of strength here, 160.43 on dollar yen. Under surveillance this morning, President Biden going head-to-head with Donald Trump tonight in what will be the earliest presidential debate in U.S. history. Biden spending the week at Camp David preparing, while Trump's been on the campaign trail. Anne-Marie, you can often learn something from how someone's campaigning, where they're campaigning, and who they're targeting. What can we learn from what Donald Trump's doing?
Well, what he's doing is he's going out, and even on some of these rallies he's been to, he's riffing off the audience. Should I be tough? Should I be nice? How should I go into this? And that's actually something he's not going to have this evening, which some analysts are saying potentially that hurts Trump. Trump does like to get that energy from the audience. But what he's doing is out and about campaigning ahead of this. Biden has been hunkered down. He has been at Camp David. He has someone filling in as Trump, bashing him, and doing all these things that potentially they should be planning for. So very different styles ahead of this debate, but both are prepping, just maybe in different ways.
You know, when James Lucier was talking, it struck me, how seriously do we take the presidency at this point? How much do people try to say it's actually not that important that one man cannot single-handedly do all that much, given the infrastructure of the governing body, given the fact that you've got the Congress and the power that might be inflicted? That might be the angst underneath the market right now. This lack of clarity under just how much power, how much clout one person atop the Republic can really change all the policies that we have in terms of tariffs, et cetera. That's one of the anxieties, I think, really underpinning the lack of market response to some of the iterations that we see in this campaign season.
And to John's point earlier, though, before we get to any of these policies we can hear from these individuals, it's really going to be about style tonight. People want to see, is there going to be a gaffe? Is there going to be a stumble? Political this morning has it this, call it the highest stakes hate watch of any modern presidential campaign. But more than 70% of Americans plan to tune in. So it's those people who are undecided that they maybe have a chance of trying to flip.
Yeah, I draw the comparison to sport analysis. This is going to feel like half-time in a football game and not half-time of a political debate with serious, serious implications for the country and how the economy's managed. It's going to be about performance, style, energy. Are they focused?
Yeah. He's looking a little angry. I don't know. He's looking a little tired.
That's the state of things right now in U.S. politics.
That's the reason why I go to how seriously do we take this office? I mean, given what James Lucier was talking about, how much are people going to actually look at that and say, what's the knock-on effect of policy? Is that even going to be in the discourse tomorrow morning?
We'll catch up with Henrietta Trace in the next hour. Look out for that conversation. Elsewhere, shares of Micron falling in the pre-market. The chipmaker's outlook failing to satisfy investors, even as revenue jumped 82% in the last quarter. The sell-off highlighting the challenges companies face meeting sky-high high AI expectations. That stock is down about 5%. Difficult really to get a read on how much of this was just disappointing very high expectations around AI and whether the more traditional parts of the business sort of underwhelmed a bit here.
Well said. Mike Wilson of Morgan Stanley saying that the sort of AI momentum trade, the enthusiasm, isn't necessarily creating a bubble in the likes of NVIDIA, but is carrying along some stocks that might not deserve to be carried along. And you wonder how many stocks have seen their share prices increase dramatically, not because they actually are offering the goods, but because they are riding the wave of sentiment that has lifted a lot of names very dramatically. And that's what I think the fear is underpinning Micron.
That move is not dragging down this market. Equity futures negative by about 0.1% on the S&P. I want to talk about foreign exchange. A gauge of the US dollar hovering near an 8-month high after a slew of economic data might drop at about 8:30 and change this story. We'll get jobless claims and durable goods, as well as a third read on first quarter GDP. Alan Ruskin at Deutsche Bank's been writing this with the team. The dollar will remain stronger for longer. The big dollar cycle can barely be called a cycle. Alan joins us around a table. Alan, good morning. It's good to see you. Yeah. This is quite a call. Stronger for longer, and you've got quite a call in there around euro dollar based on the outcome of this election, what may or may not happen around trade policy. Can you frame that for us? How important is the next 12 months going to be?
I think it is going to be very important. I think, you have the dollar looking like it's going to outperform almost regardless of the election. So, I think we could certainly see euro dollar remaining in the sort of 105, 110 range for a while. We could see the yen remaining weak. A lot of this has to do with weakness elsewhere. It's not really always a dollar positive story as much as a comparison where the US shines. But the election, when that kicks into gear, and you start to think in terms of, okay, are we going to get delivered sort of 50% plus tariffs for China? Are we going to get tariffs directed at Europe, at Mexico? All of that sort of changes the dynamic and potentially in a positive way for the dollar. And then the geopolitics as well, the commitment to NATO, the commitment to Taiwan. Those are the two big elements that I think will shape the dollar going forward.
That's what's curious about this call. That policy won't hurt the US dollar. It will help it. There's this line in the note that you and the team put out yesterday with George Saravelos that our 2025 euro dollar forecast is highly dependent on the US election and the extent to which an aggressive protectionist trade policy is pursued. If this is the case, we would likely revise our euro dollar forecast closer to parity. Why won't it hurt the dollar? What is behind that story?
Yeah, I mean, initially it's going to be a kind of classic supply-side shock. So it's typically inflationary. The market, I think, will ultimately swing to the left side of the smile, in essence, which has historically been risk-off. Equities tend to go down. Carry trades tend to have a much harder time of things, and the dollar tends to benefit in that environment. It would also likely prompt some sort of Fed response as well. So that's part and parcel of this, which is, again, the Fed will remain tighter for longer. In essence, the dollar will then remain higher for longer.
Alan, though, aren't both these candidates protectionist?
Yes, but I think there's orders of magnitude here, and the orders of magnitude are quite significant in this regard. So I think Biden has played his cards in a sense, and I think the market's view is he represents continuity. So we know what we're getting here. And I think Trump is talking a whole nother level of protectionism, particularly as it relates to China. But I think he's also willing to push back on traditional allies like Europe. And I think that, that's different. And he's already shown in the past he's prepared to put a link between, say, immigration and tariffs with a country like Mexico as well. So when you're talking about all these major trading partners, if you add them all up, and they're all potentially going to be weaker, then by default, on the other side, the dollar tends to be stronger.
Is there any inflation kind of forecast embedded in that basically some of these policies could be inflationary, keeping rates higher, also giving a lift to the dollar? Is that something that's sort of underpinning some of this thesis?
Oh, no, absolutely. I think, look, if we do see tariffs of the order of, 50% plus directed to China, it's going to come back in the form of higher inflation. And I think in that regard, you're sort of second-guessing what the second-order effects are, because I think there will be pushback to that, and therefore you don't get tariffs of that sort of order.
Eastbeast Kazakh says that market rate bets are a pretty acceptable scenario.
It sets in train a stickier inflation environment going forward.
It's the late June when people are coming out with game theory around the mental workings of some of these presidential candidates, saying that Donald Trump, if he were to become president and he were to issue some of these tariffs, the market pushed back dramatically, he would change course. Do you adhere to that essentially there's a market put on a lot of these policies? I'm not just talking about the classic Liz Truss type moment in the Treasury market, but also in stocks if they get a whiff of protectionism really hurting their business models.
Yeah, I do think the market has enormous influence here. So I think the story there is you don't get 50% tariffs, maybe you go back to something of order of magnitude we used to, 10% tariffs. But I don't think we're going to push away all the way back against protectionism. I think that seems to be too much part of the, Trump thoughts in terms of a second administration.
Let's get to one currency pair, specifically dollar yen. I want to talk about dollar yen with you. 160.44. We're talking about levels we haven't seen since 1986. What are your thoughts on how the Japanese authorities are going to basically approach this issue? How big is this issue for them, given their failure over the last month at least to really stem some of the losses in their currency?
Well, I don't think it's such a disaster, really, because, I think there's a self-corrective mechanism here as well.
What is it?
Well, I think if the yen weakens sufficiently, inflation does take off sufficiently, and they do actually tighten in a way. But I think what you are seeing is little by little, they are letting yields go up. So the back end of the curve has gone up. I think what's interesting is how little the yen has responded. You've actually seen a very substantial compression of yield in favor of the yen. If you just took the 10-year yield spread, dollar yen should probably be trading around 140 at this point in time. So I feel sorry for them, but I think what they're needing to do here is sort of break the momentum. And once the momentum breaks, then you've got yields already on your side, really. But, at this point in time, there's an awful lot of momentum against them.
It begs the question, given the rate differentials narrowed that much, and we haven't seen the response in the FX market, why haven't we? What do you think explains that?
Yeah, I mean, the psychology gets quite perverse. So initially it's, well, dollar yen can't go up on good news, so it must be going down, or the yen must be going down, yeah? So you have that sort of psychology, or the BOJ is clearly just not effective. But eventually, right, it sometimes takes quite a long time. I've seen times where, back in 2001, 2002, the dollar just continued plowing ahead as the Fed was cutting rates. And, it just had a lot of momentum. And it broke eventually. So I think you will see a break, but it's pretty hard in terms of forecasting timing.
A final question, and it's a big final question. It's going to be a long one, so forgive me for going on a little bit here. I've been doing this for a long time. For as long as I've been doing it, I've been interviewing you. I know this is your last day today at Deutsche Bank and you're going to be retiring. I just want to say thank you because you've always been so kind to me, specifically in my early years when I didn't really know what I was doing or what I was talking about. And you helped me along the way. I really educated me on foreign exchange as well. Can we talk to you about your history in the market, 4 decades, and just leave us with a little bit of Alan Ruskin wisdom, please? What's your big takeaway in your career over the last 4 decades?
Whew, that's a big question. I think that certainly in terms of foreign exchange, it's always been exciting. I think we're going through a lull now, a period of, I get questions of, are the heyday of foreign exchange past? And I absolutely don't think so. There's just always something that comes up that is interesting. The world is interesting. You can't predict some of the real economic effects. Global politics looks far from stable. And, so I think there's always, something interesting going on. And we've, to some extent, moved a little bit away from, developed currencies to the EM, now to frontier currencies. So there's always this evolvement. We can find volatility. And I think the markets are going to remain interesting as long as we have floating exchange rates.
Well, you've been a gentleman for a long time, and this community's been lucky to have you. Alan Ruskin at Deutsche Bank. Alan, thank you. Appreciate it. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Let's get to Danny Berger. Hey, Danny.
Hey, John. Bolivian President Luis Arce has sworn in a new army commander. Hours earlier, troops led by the general's predecessor had stormed the presidential palace in an attempted coup. Bolivian troops crashed a tank into the building in a bid to overturn Arce's socialist government. His administration has struggled with an economic crisis amid dwindling natural gas exports, a shortage of dollars, and a currency peg that has effectively collapsed. A Boeing whistleblower alleges that he was retaliated against after raising concerns about a subcontractor's work. The mechanic who worked on the 787 Dreamliner claimed to have observed substandard manufacturing practices. He says that he was fired after reporting the issue. Boeing whistleblower reports have surged since January's mid-air blowout aboard an Alaska Airlines 737. The round of 16 matchups at the Euros are set. Georgia's shock win over Portugal secured their passage to the round of 16, where they meet Spain. Meanwhile, Belgium's 0-0 draw with Ukraine means that they face a daunting clash against tournament favorites France in the next round. The round of 16 kicks off Saturday with Italy's match against Switzerland. And that's your brief. John.
Looking forward to it. Danny, thank you. More from Danny in about 30 minutes' time. Up next on this program, America's looming debt crisis.
The situation is bad, and it's probably going to get worse. The Congressional Budget Office assumptions are actually pretty optimistic. They don't have a recession in their forecast over the next 10 years, so that flatters the deficit.
That conversation up next, live from New York City this morning. Good morning.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month.
Live from New York City, good morning to you all. Equity futures on the S&P 500 recovering. We're negative by about 0.1%. No drama here on this board. In the bond market, yields just about unchanged, 432.74. Under surveillance this morning, America's looming debt crisis.
The situation is bad, and it's probably going to get worse. The Congressional Budget Office assumptions are actually pretty optimistic. They don't have a recession in their forecast over the next 10 years. They assume that the tax cuts that were enacted in 2017 expire, so that flatters the deficit. So things are probably going to be even worse.
So here's the latest. The U.S. debt level set to be one topic at tonight's CNN presidential debate. A recent Congressional Budget Office report warning U.S. federal debt will jump from 99% of GDP this year to 122% in 2034. Maya McGuinness of the Committee for a Responsible Federal Budget writing this: 2025 will be a consequential year for fiscal policy. Neither candidate has offered plans for addressing the important fiscal deadlines they will face within the first year of the next term. Maya, I'm pleased to say, is with us now for more. Maya, great to catch up with you. Can we start there? The important deadlines that they will have to face, whoever it is, within the next 12 months.
Yeah, 2025 is going to be an absolutely crucial year when it comes to fiscal policy. So as soon as we're swearing in the next president, the debt ceiling is going to be returning. So that will start in January, but we will have a number of months where there are extraordinary measures. But we know that's something the next president is going to have to deal with. That's been a struggle in the past. Opportunity to save a lot of money, opportunity to add a lot of debt. We've seen both. But they also have the huge expiration of the Trump tax cuts, and extending those, which is something both candidates have said they want to do in one form or another, could cost upwards of $4, even $5 trillion. You may see people trying to expand them. We've heard about that as well. We also have the end of the spending caps that were part of the Fiscal Responsibility Act. And so we'll have to figure out what we're doing there. And I'm pretty certain that whoever's president is going to have made a number of promises for more things they're going to do, more borrowing. So it is going to be a year where there's the potential for additions of trillions of dollars being added to the debt, just at a time where the Congressional Budget Office has been warning us we are in deep trouble right now and we do have to change course. We're not hearing very much about how we would change course.
Maya, there are a lot of people who are listening, including probably some politicians who would shrug off the idea that spending increases and tax cuts in and of themselves will increase the deficit. They would argue there are certain tax cuts that would expand the economy and that there are certain spending plans that would also expand the economy pretty significantly. Where is the truth in that, and where is the fiction?
At 7 a.m. Eastern Time, we do see the release of the Turkish weekly repo rate, forecast of no change on the prior 50%. At the same time, we also get the Canadian Business Barometer on the prior 56.37.
To offset those costs. Frankly, none of it's true when it comes to policies, tax cuts, or spending increases paying for themselves. The Trump tax cuts appear to have paid for about 20% of their cost. And if you look forward, it looks like from the estimates that are out there, it would cover even less because there have been a lot of ways that there have been workarounds within those tax cuts, and they've ended up draining more from the revenue sources than we might have anticipated. Spending side, it's probably even more difficult to offset the costs. Those aren't the only myths we hear. We hear people saying, don't worry, print money. Right? I hope that inflation is a reminder that that is a very serious misstep. And there are regularly times when people say, look, the deficit doesn't matter. But what we are seeing is that the deficit and our huge debt levels right now has led to slower economic growth, higher inflation, higher interest rates, not being as prepared for the next emergency, recession, or otherwise, and probably at this point is a real drag and threat to our national security. So this underpinning of a weak fiscal foundation is hurting the entire rest of the country, and yet you still have politicians, because it's good politics, making promises not to fix it and not to pay for the new things they want, trying to come up with fairy tales for why they shouldn't have to.
Maya, you talk about borrowing costs, and some people would say the Fed can fix that. They could just cut rates, and they can cut rates pretty dramatically to offset the deficit, and it could actually de facto decrease the deficit dramatically, at least the borrowing costs that the U.S. will have to pay. How much do you understand different yield levels as being sustainable and completely unsustainable in the near term? Is there sort of a pivot point within the yield space where you say this is going to have alarm bells?
That is a great question, because the big question in all this is, what is the timing of when markets would say, we're not tolerating this? When might there be a Treasury market that didn't go well? When might there be a situation where rates start to not respond? All I can say, we don't know the timing, of course. All we know is that the fiscal policies of this country are making monetary policy for our monetary policymakers much more challenging, because when they're trying to control a situation of inflation, we've got fiscal policymakers who are borrowing more, pushing inflation up more, and making the ramifications of changes in rates, if you want to control that inflation, even more threatening to our fiscal position.
Maya, this evening's debate is so interesting because it's basically two incumbents, and they're going to be asked about their record. Who is worse for the federal deficit, Trump or Biden?
Yeah, we have recently just looked at a record, what they did in terms of the borrowing that they approved while they were in office. All the numbers that we look at are over the coming 10 years. And admittedly, no president owns their economy or the fiscal situation. And COVID was a huge sort of unexpected thing that affected both presidents. But what we saw was that with COVID, President Trump added as much as $8.4 trillion to the debt over 10 years. Without COVID, it was about $4.8 trillion. That is an astronomical amount of money, particularly that so much of it was put in place when the economy was incredibly strong. So far, and President Biden's term is not over, and there's still a chance that he's going to add more to it. But he added $4.3 trillion without counting COVID, and his COVID wasn't bipartisan the way the President Trump's was. Those numbers would be $2.2 trillion. There's a huge takeaway here. And that is that neither of these presidents, when the economy was strong and needed less borrowing, not more, neither of them have heeded that warning. They both have engaged in borrowing when there was no economic reason to do so. And that raises real warning signs for what would happen when either of them were in office in 2025, which, as we just covered, is a huge year for fiscal policies.
The other big problem, of course, is entitlements. That's the biggest chunk of this budget and defense. When it comes to entitlements, have you heard anything from either party that they're looking at shoring this up?
I was going to say, yeah, I've heard they don't plan to fix it, which is just the biggest, frankly, pander that you could have. Both of them are trying to scare American seniors that the other party would do something to harm their benefits and reassure people that they won't do anything to fix the program by calling it protecting it. To be clear, Social Security and Medicare are both facing insolvency. If we don't make changes in roughly a decade, there will be across the board automatic cuts for providers and retirees. This is a terrible policy. And what we need to hear from the candidates is how they would shore up those programs, whether it's looking at retirement ages, means testing, raising revenues. They're hard choices. That's what the budget is, but that's also what leadership is. And we need to hear from them how they would fix entitlements. Beware of anyone promising not to touch the program, because that is what threatens seniors.
So just less than 5 minutes away now to get our Turkish weekly repo rate forecast for no change on the prior 50%. At the same time, we also get the Canadian Business Barometer on the prior 56.37.
The fact we've been doing this with unemployment south of 4% for the best part of 2 years is pretty shocking.
Especially because we haven't been tested by a recession. That ultimately is the real question. If you can't get a fiscal response to some sort of financial downturn, what happens in terms of inflation and the Fed's ability to respond?
And how difficult next year is going to be. There's going to be a debt ceiling fight immediately come January 2025. And then, as Senator Warner's calling it, it's basically tax Armageddon next year. There is going to be a massive fight. Regardless who wins, there's going to be some level of these tax cuts continuing, but a massive fight about the corporate tax rate, SALT, and the likes.
If you get a blue wave or a red wave, the first place I'll be looking is the Treasury market, without a doubt. Coming up in the next hour of Bloomberg Surveillance, TPW's Jake Pawlowski, Henrietta Trey's of Veda Partners, Deputy Assistant to the President, Amos Hochstein, and Joanne Feeney of Advisors Capital Management. All of that and more from New York. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television.
October of 2019, you surprised the business world by stepping down as the CEO of SAP, a very, very large company whose value had more than doubled during your co-CEO position and CEO position. And you took a position with a much smaller, less known company, ServiceNow. Usually people, when they leave a job, they go to a bigger company. Why did you go to a smaller company?
Well, I saw the future and where it was going. First of all, I want to say I had a great run at SAP, and it was a pleasure taking them from 39 billion to 163 and really inspiring lots of people and customers, and it was a wonderful experience. But after 17 years, nearly 10 as CEO, I was ready to do something different. And when I saw ServiceNow in the marketplace, I knew what it was, and I knew what it could do. And I knew with my background, I was a pretty good cultural fit for what ServiceNow needed to scale it.
So let me ask you, what does ServiceNow really do? Tell me in simple English language that everybody can understand. What do they actually do?
40% of the CEOs say today, if I don't digitize my operations, my company will no longer be viable in less than a decade. So we were the IT backbone for companies all over the world. How do they manage their assets, run their operations, secure their operations, all things digital having to do with IT.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the...
So just less than 1 minute away now, I will be leading with the Turkish weekly repo rate.
The UK decides. On July 4th, Amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
10 seconds.
It's hard to get too bearish in the markets at this time. You just have to be invested.
It's not just the Mag 7, by the way, that's high-quality growth. There are some really good high-quality growth stocks outside of tech.
The concentrated nature of market at this point is a feature, not a
No change, no change. Rate remains unchanged at 50% as expected. Seeing the Canadian Business Barometer out at 56.3. That's 56.3.
Find somebody who's not bullish. You haven't been penalized for being wrong.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance begins right now, live from New York City this morning. Good morning for our audience worldwide. It is debate time in the United States of America in Atlanta, Georgia at 9 p.m. Eastern Time, facing off the sitting President Joe Biden and the former President Donald Trump. This promo comes to you from James Lucia of Capital Alpha. Quite a conversation an hour ago, right? Let me go through it. 3 likely outcomes, he says: a boring snooze fest, the start of a longer-term story, or a catastrophic error by one candidate that could decide the race.
My favorite part, as he said, is probably 90 minutes of pure boredom waiting for someone to make a catastrophic error. That kind of sums up how a lot of people are going to feel about the next 5 months.
It's because everyone's going to be looking at the debate tonight for style, less so in substance. And it's so interesting because these are basically two incumbents. We know what they stand for, but people want to see their style. How does Trump come out? Is he going to be badgering Biden, which in the past didn't work for him on some debates? And does Biden come out looking robust like he did at the State of the Union? Does he come out looking tired? People are concerned about his age.
We have to talk about the timing of this repeatedly. It is coming so early in the year. It is coming before the conventions even take place. And there's a reason it's coming this early. The sitting president wanted this to happen. There are concerns about his age. There are concerns about his energy. And if you look at where some of the polls are, specifically in swing states, he's not doing so well and hasn't been for a long, long time. The hope is if you get engagement, that things start to turn in his favor. That's his hope. And they want to get that engagement quite early on.
And they also want to make sure that those whispers about potentially could it not be a candidate Biden, that those whispers are put to death. And maybe they can do that this evening. But Jonathan, I'm glad you brought up the polls. Bruising polls for the sitting president from Quinnipiac yesterday, from the New York Times Siena. And what I found so interesting about the New York Times Siena poll was that the two vulnerabilities for both these individuals, for Trump, it's not really a vulnerability. That's the conviction. People are ignoring that. But for Biden, what continues to come up about the concerns of his age at 81 years old.
All I could say is a lot of people are probably listening to this and saying blah, blah, blah. And then they're going to watch the debate purely for entertainment and then go blah, blah, blah. Is there going to be something that changes? What do you do with that in the markets? People don't want to make a prediction because you can't predict who's going to win and you can't predict what the outcome in markets is going to be after such win.
Chris Barangi said it of Gabelli Funds in the last hour. It's really difficult this time around because it's unclear which one is going to be the best one for markets. And I'd go back to 2016. We all remember what happened then. A lot of people thought that President Trump would be bad for markets, and it turned out they were dead wrong.
What I find interesting about this time around is that people have been hiding out in the big tech names, in NVIDIA, in Microsoft, in order to get sort of independent of these risks that they can't control. Regardless of the outcome, do we get a rotation out of those names as more certainty in policy comes back and people don't want to be in the most crowded areas? There are a lot of interesting aspects under the market that will potentially unravel as a result to the lack of clarity that so many people have on this key event.
We'll discuss some of those names a little bit later. One name in the pre-market we can discuss is Micron. Micron's down about 5.6% in the pre-market. I'm going to say disappointing high expectations, but you know, you look at the numbers, Bramo, they weren't that bad, but we've seen this movie a few times over the last few months.
Especially in the AI space, there is a fear, and Mike Wilson of Morgan Stanley highlighted it well, that there are some companies that have gotten wrapped up in the momentum that we've seen around AI that don't deserve to be. If you don't have the numbers to back up astronomic growth similar to NVIDIA, how much do names get punished? We're finding out.
That name down 5.65% In early trading, the broader market looks a little something like this. Let's start with the S&P 500. Equities coming off the back of 2 days of gains, pulling back just a little bit. We're down 0.1% on the S&P. Yields unchanged on a 10-year, 432.55. And in foreign exchange, just about reclaiming 107 on euro dollar, 107.03. Coming up this hour, we'll catch up with Jay Pawlowski of TPW, looking ahead to the first presidential debate. Henrietta Trey's of Vader Partners on growing bets Trump will win a second term. And Deputy Assistant to the President, Amos Hochstein, on energy risk in the Middle East. That conversation about 25 minutes away. Let's begin with our top story, the presidential rematch taking shape. President Joe Biden and former President Donald Trump set to debate tonight in the earliest meeting in U.S. history. Jay Pawlowski of TPW saying this: we find Trump's economic plans to be a potential disaster with a possible crash landing for a very overbought U.S. dollar. Thus, we look forward to the debate where some of this will presumably be surfaced. Jay joins us now for more. Jay, it's fantastic to catch up with you, sir. This is a very, very different view on the US dollar to the view we had from Alan Ruskin about 20 minutes ago. Let's start the conversation like this. I'll share that quote from Deutsche Bank with you, and you tell us why you think about this a little bit differently. The dollar's going to remain stronger for longer. They say this about euro dollar. In a low for long pattern below 110 over the next 2 years, the 2025 euro dollar forecast highly dependent on the US election and the extent to which an aggressive protectionist trade policy is pursued. If this is the case, we would likely revise our euro dollar forecast closer to parity. They think some of the trade dimensions, Jay, that maybe you're kind of alluding to would actually produce a stronger US dollar and not a weaker one. Jay, why do you have a different view?
Yeah, John, well, that's what makes a market for sure. And there's definitely different views on this. And we do have a distinct counter-consensus point of view here. And it's actually interesting because we think Biden is going to win in a landslide, and that's been our view since the start of the year. But we also hold the contrary thought that if Trump wins, it could be the catalyst for a dollar crash. And so let's start with the dollar. The dollar has been in a trading range, according to Marty Pring, who's one of the top technicians, for 18 months. That suggests that it's going to break out at some point, and it's going to have a big move. If it breaks lower, as we think, from 105 today on DXY, it could go to 95 or below very quickly. That's 10% down. Why is that likely to happen? We had 16 Nobel laureates put a letter together outlining the problem with Trump's economic policy, such as it is. It's highly inflationary. It's anti-growth. It is likely to lead to stagflation. It could create a period where the Fed is in confusion because the Fed cuts in September, let's say, as the markets expect, and then Trump is elected. Markets fear inflation. He's going to continue the tax cuts. He's going to impose massive tariffs, both significantly inflationary. And so the market forces rates higher, to your earlier discussion. The Fed, therefore, looks like it may have to hike. So you could have confusion in the markets. At the same time, the dollar is it's the most over-owned asset in the world. Foreign ownership of U.S. financial assets is at an all-time high. So the rest of the world is in recovery. Europe is in recovery. Asia is in recovery. And therefore, the opportunity set to take profits in the dollar and to go elsewhere could be extremely compelling. And so we simply look at it like this. Trump has made his views clear. Nobel laureates know way more than I do, have made their view clear. It's a contrast between that outlook and a Biden second term, which for all the concerns about Biden's age, he has had a masterful policy response. The U.S. growth coming out of COVID is by far the best in the world of any developed economy with lower inflation. So the policy mix, forget the age.
Right.
The policy mix of the Biden administration has been fantastic.
Well, Jay, I want to jump in here because aside from political prognostication, there is a pretty big call here. How much conviction do you have in it? Are you basically avoiding U.S. dollar assets entirely and shifting to where instead?
Yeah, no, obviously you can talk a game, but you have to invest in a certain way. So we own U.S. assets. We are, we run a global macro model. So it's stocks, bonds, commodities. We are overweight equities, overweight commodities, significantly underweight fixed income, completely out of U.S. Treasuries. And we have views, for example, in emerging market local currency debt, which are, anti-dollar, obviously, and that has hurt us this year. That position's down, 5% year to date. But so we are, I would say, overweight non-U.S. assets. Remember, the U.S., to my earlier point, represents like 62% of ACWI, All Country World Index. That's a record high. So, we're, let's say, 50% U.S. in our equity position. We're probably a little bit less than that. So that's an underweight, but it's still a big position.
Jay, if I could just go back to what you're looking at potentially after November 5th, it's not just that you think Biden's going to win, you think it's going to be a blue sweep. What gives you that conviction, especially when many people are talking about how it's going to be very difficult for Democrats to control the Senate?
Yeah, no, that's exactly right. And again, we have a point of view, and it's a distinct point of view, and we think you can support it by looking at things like, in every swing state, the Democratic candidate for Senate is running ahead of the Republican candidate. In every race of the last couple of years, virtually every race, Democrats have done significantly better than forecast, better than the polling pre-race would suggest. So there's a level of success that Democrats have had running for office across the country over the last several years that would support the idea of much more enthusiasm than people think. In addition, there are things like abortion on the ballots in key states that we think are going to drive Democrat turnout to a significant level that is not being captured adequately. So the House is in play. In the Senate, every close race, swing state race in the Senate is leaning Democratic at the Senate level. And we think that the issues around Biden versus Trump are going to break for Biden, as arguably they are already doing, in a sense that if you look at polling a couple months ago versus today, Biden is doing better. And granted, polling now is not indicative. It's too early. But I think tonight's debate is going to be very, very interesting, as everyone on the panel here has pointed out.
Jay, I just want to finish on fixed income. Lisa talked about your market calls. How do you think bonds would respond to the outcome you're looking for?
Which one?
Treasury specifically, Jay. Treasury specifically. No, I just want to understand, if you get that blue wave, how does the Treasury market respond to that?
Well, I think President Biden's policies on the fiscal side are much more in line with kind of controlling the deficit, right? He's not going to extend the tax cuts. Anne Marie was saying earlier, 25 is a huge year because of the Trump tax cuts either have to be extended or reversed. Biden's going to reverse them. Trump is going to extend them. So I would think that the market on the fixed income side in a Biden win, depending on where the economy is at that point, it's kind of hard to say, right? The economy is going to drive it. I think probably either backs up the bond market a little bit. If Trump wins, it's going to be, I believe, a significant backup in yields, which craters the economy. And as I said, could potentially put the Fed in a box, creating significant uncertainty around the currency. And the dollar breaks lower and it gathers steam. And you have a dollar that's crashing, I think, versus talking about the yen at 160. Yen fair value is 100. It's at 160. It could go to 140 very, very easily.
Very, very different view to Alan Ruskin at Deutsche Bank from 30 minutes ago. As you say, Jay, that's what it takes to make a market. Can I just say, Jay, we've got a presidential advisor in the green room. He might be reaching out, looking to hire you. Jay Pawlowski at TPW.
I'm available.
Jay, thank you.
Thanks,
Amos Hochstein coming up in about 15 minutes' time. I imagine if Amos is watching this in the green room right now, he probably likes what he heard, right?
Absolutely. A blue wave. He's better for the economy, better for the market. He's definitely, the White House, I think, maybe
some of that stuff is pretty contrarian. Let's just put it this way. Not the stuff on President Trump, if he gets a second term, what he would do, what it would mean for inflation. I think that's fairly consensus in the economics community. But just this idea that you get a blue wave and it's constructive for fixed income, for treasuries, I think a lot of people right now, the consensus view is blue wave or red wave, that treasury market sells off come November.
And you have different views on who would be worse potentially for the treasury market, depending on expectations for spending, et cetera. There also are very countering views on who has conviction to win. You have him saying, absolutely, it's going to be a blue sweep. And then you have Steve Eisman coming on and saying 200% chance that Donald Trump is going to get reelected.
One thing I will say, it's really hard to have conviction right now, so bless these people who do, when we have so many months left ahead of us and a black swan event could happen, a number of events. But also, Jay is talking about how Biden is doing better in the polls. He just had 2 bruising polls, and one of them, although he's saying that abortion is going to be a big issue and they're trying to campaign on this, the economy and inflation remain number 1. Also, even some Democratic voters are starting to say immigration's a top concern. And when you look at those 2 issues, on the whole, they trust Trump more than Biden on it. So if they're going to go out on the number 1 or number 2 issues, it's lining up behind Trump's favor.
We've got months and months of scenario analysis ahead of us. This is only the beginning. The debate starts a little bit later. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. SoftBank's Vision 2 fund is investing in Perplexity AI. It's giving it a $3 billion valuation. The deal is Masayoshi Son's latest bet on a sector that he deems crucial to securing his legacy. Perplexity is a U.S. startup, and it's trying to distinguish itself from the other AI chatbots by providing more real-time information. Amazon, meanwhile, is launching an online storefront for low-priced apparel and home goods. The company plans to start shipping goods directly to consumers from China. Amazon has sought to hold its ground with the promise of speeding shipping. It previously encouraged Chinese merchants to use logistics services that kept merchandise at U.S.-based warehouses. This is Amazon's biggest move to date to counter the rise of discount upstarts like Temu and Shein. Elon Musk's SpaceX will sell insider shares in a tender offer at a higher than expected price. The shares will be sold for $112 a piece. That values the company at close to $210 billion. That's also up $30 billion from when they last got a valuation in December. A source says the jump in value is due to significant investor demand. The valuation is a new record for an American private company. And that's your Bloomberg Brief, John.
Danny, thank you. We'll check in with Danny again in about 30 minutes. Up next on the program, the rematch begins.
Everybody knows he's a liar. But I just want to make sure. Take a look at what he's actually done. He's done very little.
You could never have done the job that we did. You don't have it in your blood.
We handed him a booming economy. He blew it.
That conversation up next, live from New York City this morning. Good morning.
Or other authorities.
Could face bigger challenges next.
It was going to keep reading World Cup.
This is a 3
as the economic picture, covering the intersections of Hollywood, Silicon Valley, and beyond.
The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Live from New York City, welcome to the program. Equity futures down 0.2% on the S&P 500. A bigger mover in the pre-market for you. Walgreens has a new range for the year. For full-year EPS, 280 to 295. Previous range, 320 to 335. They've slashed the outlook. Elisa, this is a tough retail environment. There's a report out there, too, that they're going to close a lot of stores.
Yeah, thousands of stores potentially. This was reported by the Wall Street Journal. They interviewed the CEO of Walgreens, Tim Wentworth, who said 75% of our stores drive 100% of our profitability today. What that means is others will have to take a hard look at. He also went on to say that they face a difficult operating environment, including persistent pressures on the U.S. consumer. To me, I wonder how much that's the story and how much this is a story of some of those plastic containers that you walk into and you have to get someone to come and unlock.
Unlock the toothpaste?
I'm serious. I think that doesn't that sort of hamper your desire to go into a drugstore to buy your basic goods?
Yeah, it's not exactly the nicest experience, is it? You want to pop in, you've got to call an assistant, you want to unlock the toothpaste?
Yeah, and then you have to stand there waiting with other people who are frustrated, who want to be served first. They come after a while, then you get your one thing, and then if you want something else, you don't go.
This has been going on for a while. That stock is down by a little more than 5%. More on the consumer later, 8:30 Eastern time, so 1 hour and about 10 minutes away. We'll get new data on jobless claims. Look out for that. Under surveillance this morning, the rematch begins.
Everybody knows he's a liar.
But you
I just want to make sure.
Joe, you're the liar.
Take a look at what he's actually done. He's done very little.
You could never have done the job that we did. You don't have it in your blood.
I don't understand why this president is unwilling to take on Putin.
There has been nobody tougher to Russia. Between the sanctions, nobody tougher than me on Russia.
He talks about the art of the deal. China's perfected the art of the steal. We have a higher deficit with China now than we did before.
We built the greatest.
Noting here, the Bank of Japan says it is contacting market participants to collect their views on pace, amount of a framework of tapering.
And Donald Trump returning to the debate stage for the first time in 4 years tonight at 9 p.m. Eastern on CNN. The candidates agreeing to shake up the rules this time around with no live audience, no notes, and microphones muted after their turns are over. Henrietta Trays of Vader Partners joins us now for more. Henrietta, what are you looking for out of this very early debate in 2024?
At this point, I'm hoping that people will genuinely watch it and it won't just be sort of a viral clip that goes live on TikTok. Although I suspect that the people who are going to be swayed by this, according to the latest data from Morning Consult last night, are actually the ones that are younger voters, specifically Black voters and Hispanic voters, who are saying, I'm going to watch this debate just to find out who I'm going to vote for. They're the largest undecided basket right now. And my attention is on how they feel after the election, the hours after, as clips go viral, if they do.
Henry, YouGov had similar polling. 1 in 5 voters planning to watch are actually watching to decide who they're going to vote for, and they're younger. So what does each candidate need to say to the Gen Zs out there?
That's the only question that I think really matters, Anne-Marie. The undecided voters right now are going to decide this election. Polls are off by about 9 points versus where they'll land in November. That doesn't mean they're wrong. It means that the polls are telling you about a big basket of undecideds and third-party voters who are not going to stay there. Those are disproportionately female voters who are plus 17 for Biden right now, and they are double the number of undecided male voters out in the ether. They are disproportionately younger voters. They are Black voters and Hispanic voters, and they are low education voters. And these are folks who are going to be deciding based off of what happens tonight and into September. The biggest issue that Biden has is his age with this demographic. So him performing well tonight, the way that he did at the State of the Union, could have a material impact on the polling data in the next few weeks, as the people who get off the shelf and decide how they're going to vote are predisposed to be in the Democratic basket. That's where we spend our time and what we concentrate on with our clients.
Well, the last 24 hours, we had a poll from Quinnipiac, we had a New York Times Siena poll, and Biden is down in both of them. But you've done a lot of data about how the polling is off, by how much. What are you inferring from these latest polling numbers?
Well, I think an outlier poll, as the New York Times write-up itself suggests, is really important to watch, but also important to put in context. It's not good news for Biden. Indeed, there really hasn't been much in the way of good news for Biden, except for the fact that Trump remains at his ceiling. His supporters are locked in and will not be deviating. It's Biden, though, since November of last year, who's been on the slow uptick. And that's from a whole bunch of things. Democrats coming home to Biden, believing that he really will be the nominee. I spend a lot of time with clients talking about who would replace Biden on the ticket. I mean, really smart people talking about it in every single meeting. You really can't avoid it. So any indications that Biden can do tonight to dispel the narrative that is being spewed by the Republican Party that he is not able to do the job for the next 4 years, I think would go a really long way, because that's where the resistance is. We were talking about immigration before. I mean, immigration's down 40% just since the president enacted his executive order 3 weeks ago. That's lower than it was when he took office. So the issue that Republicans have had a lot of salience around of immigration has been muted with the electorate and is now on par with abortion. You're going to go onto a debate stage in an environment like this where the Gen Z vote is the one that's up for grabs. You should talk about abortion all day, every day.
Are we going to hear anything, Henrietta, about policy? I mean, is that really going to be even relevant to this debate?
I sincerely doubt it. I really would be surprised. I'm sure there'll be conversations about things like the economy. There'll be taglines. President Biden has a plan for extending most of the 2017 tax cuts. Former President Trump has a plan that would extend all of them. The cost is $4.6 trillion. They're going to sort of hide the ugly parts and talk about how they're going to provide tax cuts for the middle class, or in Trump's case, all classes. And I think that's probably the most extent you'll get out of real policy discussion.
There's one thing I have tons of conviction about later on this evening, 9 p.m. Eastern Time. Bramo's not watching. Henrietta Trays of Vader Partners. Henrietta, thank you. Lisa's not tuning in for this. Jay Pawlowski will be. Jay just wrote in. Just wanted to clarify something quickly. He said he thought rates would back up in either scenario, but much more in a Trump win. Much more in a Trump win versus, say, a Biden win. But ultimately shares the view, blue sweep, red sweep, you're going to see a sell-off in the Treasury market.
Which is the reason why he's entirely out of the Treasury market and going into other non-U.S. assets at the same time that he's not completely exiting certain trades in the U.S.
This conversation is going to continue. In just a moment, we'll catch up with the Deputy Assistant to the President. We'll speak to Amos Hochstein on tensions in the Middle East and the risk to the energy market. That conversation just around the corner. Live from New York, this is Bloomberg.
of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Equities negative here by 0.2% on the S&P 500. On the NASDAQ, a little bit softer as well. We're down by 0.2. Similar move on a Russell. Plenty of movers out there. We've talked about Micron already this morning. That stock is down by about 6% in the pre-market. Lots of talk in the last 30 minutes as well about Walgreens. Softer story there. That stock is down in early trading. Lisa, we're down by more than 10% in pre-market trading.
Wall Street Journal reporting that Walgreens plans to close a significant share of its 8,600 stores in the United States. This comes after it already announced last year a turnaround plan. They came out with a much lower than expected forecast range for full year adjusted earnings. And they said we continue to face a difficult operating environment, including persistent pressures on the U.S. consumer and the impact of recent marketplace dynamics, which have eroded pharmacy margins. Also, I'm wondering how much some of the anti-theft measures have made it difficult for people to want to go.
Yeah, I was going to say, when they talk about specific dynamics, are they just talking about theft?
Well, I mean, it's not just the theft itself, too, right? It's not just that idea, but also the fact that the experience of going into these stores and you see the plastic covers and you've got to get someone to come over and unlock it. Why not just order on Amazon? Down by
more than 11% in the pre-market right now. Is this just about Walgreens or is this really just about the US consumer? We'll get more data on the US consumer later. 1 hour away, jobless claims. Under surveillance this morning, top story for you, the CNN presidential debate starting at 9 p.m. Eastern tonight. It will be the earliest US presidential debate in history. President Joe Biden and former President Donald Trump facing off without a studio audience, and microphones will be muted unless it is the candidate's turn to speak. Elsewhere, the country's biggest banks passing the Federal Reserve stress test. Investors hoping the results will pave the way for higher dividends and stock buybacks, each firm staying above minimum capital requirements during a hypothetical recession. Interesting sort of takeaway from JP Morgan. Did you see that response? Basically saying that our expectations weren't as great as yours?
That basically it was less stringent what they did than their own stress test, basically posturing. It was a bit of chest pounding, saying you wanted to stress us, we stress ourselves even more, so take that, regulators.
Yeah, I'm not sure what that actually says about the regulators and the stress test to begin with, but okay. That's the latest on that front. Here's the latest on this one. Israel's Prime Minister, Benjamin Netanyahu, warning the country's military may shift its attention to Hezbollah in Lebanon, risking a wider conflict in the region. US officials maintaining ironclad support for Israel while looking to de-escalate tensions in an area crucial for trade and energy supplies. The Deputy Assistant to the President, Amos Hochstein, joins us around the table here in New York. Amos, good morning to you. It's great to see you.
Good to see you, too.
I know you have the president's ear. You've been a key voice in the Middle East conflict as well, particularly through the Gaza Strip, and now it involves Lebanon. And I know you've been part of those discussions too. Can we start there? How connected are the two issues, the tension we see in Gaza and the tension potentially on the horizon with Lebanon?
Well, first, thank you for having me. It's great to be back. Look, on October 7, after the horrific attack by Hamas, Hezbollah decided to enter the conflict on October 8th at night with an attack on Israel. Israel responded, and we've been in this low to mid-range conflict ever since of a back and forth of attacks between rocket attacks. It has resulted in a significant amount of Israelis being essentially evacuated from their homes in the north, not being able to go back there because of the fire from Hezbollah, and a equal number of Lebanese who are now evacuated from their homes in South Lebanon. So this has been a terrible low-range conflict, and while the attention has all been in Gaza for very good reason, this has been on a simmer. So clearly we have been trying to work hard with both parties to keep it at that level from escalating into a sort of larger conflict and a more intense conflict. We've been able to do that with some escalation periods and then bringing it back down a little bit. We're going to continue to try to do two things. One is to de-escalate the current conditions and then find a solution that will enable people to go back to their homes. That's the charge.
What do you think that solution looks like? What are both sides asking for?
Well, at the end of the day, we have to get Hezbollah away from the border because the status quo of October 6th is not possible anymore. So we have to take, there are a number of measures that we've been discussing with both sides that can be taken by both sides in order to be able to bring that calm back. I can't go into the details of what that would look like, but I do believe that it is possible. Now, Hezbollah has said that they are attaching their actions to what happens in Gaza. We understand that. That's the reality. And we have to work within those parameters to see what we can do as things shift. And of course, we are working very hard. The president has been working nonstop to try to get a ceasefire that allows all the hostages to come home and that would practically end this war in Gaza. That, of course, would make things a lot easier to reach a settlement. But it's not an automatic. It's not you get a ceasefire in Gaza and you get a ceasefire in Lebanon. It doesn't work that way. We have to have its own solution in Lebanon. But it is enabled considerably by a ceasefire in Gaza.
When it comes to Lebanon, the concern everyone has is what this means for the wider region, more so than what's happening in Gaza. Lloyd Austin yesterday, the defense secretary, said it could easily become a regional war with terrible consequences for the Middle East. Is that something this administration is really worried about, a regional war?
Well, I think we are worried and concerned about any escalation of violence between Israel and Lebanon, and these are conflicts that you know how they start and you don't know how they end. The most important piece right now is the effort to get the hostages back from Gaza and a ceasefire that ends the conflict over time. That is how we prevent both the current conditions and the escalation that you're referring to.
A big vulnerability for a wider regional conflict is, of course, the Red Sea. Even this morning, there's reports that a ship traveling through the Red Sea was attacked by Houthis. When you look at, you have this big portfolio of not just what's going on national security-wise in the Middle East, but the energy market. How concerned are you about a spike in energy prices because of what we're seeing in the Gulf?
Well, look, I think the Houthis, who are a proxy of Iran, have been attacking the international commercial fleets. There's really no apparent reason why we're accepting the fact that the Houthis, backed by Iran, can fire missiles into the Red Sea and affecting global shipping rates, global shipping routes, and the availability of ships themselves. So that is something that we are going to continue to do what we can to bring a stop to that. As far as the energy markets look, I think that clearly the Middle East is one of the most important energy regions, and we have to make sure that there is a free supply of energy. That has been done. There are other routes that can avoid the Red Sea, and clearly we've seen a supply non-disrupted, even if it ticks up the price of shipping rates a little bit by the fact that they have to go a longer route. But by and large, that has not affected the energy markets.
There's one story as well circulating about, you mentioned Iran, about sanctions when it comes to this administration, how tough they're being on their adversaries when it comes to energy sanctions. Many people will say there's sanctions on the books, but they're not always enforced. And there seems to be some tension between the White House and people at OFAC who are enforcing those sanctions about how, because it's an election year, this is some of the reporting the Wall Street Journal has, because it's an election year, the administration's not going to be as tough on, say, Russia or Iran because they want to keep prices low. Would you say that's accurate?
No, that is completely false. Look, we have been as tough as can be on both Russia, Iran, when it comes to a broad range of sanctions, not just energy sanctions, but including energy. Now, when you do energy sanctions, or any sanctions for that matter, you got to be smart about it. You don't want to do sanctions. When you do the sanctions, you want to make sure that the bad actor is the one that is affected. So if you do the kinds of sanctions that cause a major spike in price, what does that do? It just increases the revenues to the regime that you're trying to affect. So you have to, this is not about putting down a hammer. You gotta do this in a smart way that reduces their revenues. That's the ultimate goal here, is to reduce their revenues. Now, is there an alignment between the fact that we would like to see domestically in the United States lower prices? The president has said many times he'd like to see lower gasoline prices for consumers at home, at the pump, so we want to prevent a spike in energy prices. But there's a total alignment between what we want on the domestic side to reduce prices, which we have done. Gasoline prices are down about 20 cents over the last couple of months, and our national security goals, because when prices rise, they don't only affect American consumers, they also increase revenues to the bad regimes we're trying to affect.
So you talk about gasoline prices. Right now I'm looking at just under $3.50 a gallon on an average basis around the United States. That's down from a high of more than $5 back in June of 2022, and the average over the past 5 years is north of $3. So is this an appropriate price where it is right now?
No, we'd like to see it significantly lower than this, but we have a growing economy. We have a conflict in Russia. We have a conflict in the Middle East. And that's why the president has pursued a policy of doing two things at the same time. One is to make sure that we have enough production in the United States and that the energy markets are supplied. Second is to accelerate the energy transition. And we've done both. The passage of the IRA, the Build Act, the CHIPS Act is all about investing into the future. But he recognizes that you can't do that as a flip of a switch. And that's why, look, the United States today is at the highest level of energy production that we've ever had. So he has done everything he can to make sure that we are at maximum supplies to reduce prices and inflation, while making sure we have a pathway to not having this dependence on oil producers either at home or from adversarial countries.
How much will the Strategic Petroleum Reserve act as a buffer, potentially, with additional releases in the next couple of months in response to prices not going down on their own?
Well, look, I think the SPR is a critical tool for the United States. We've used it over the decades to address emergencies and conflicts and natural disasters. The president had an unprecedented use of the SPR with the release of over 180 million barrels because of the Russian conflict, when prices soared to over $120 a barrel and $5 of gasoline, as you said. And we will continue to use any tools we have if there is a need for it. We are going into hurricane season. We have a conflicts around the world. We have to make sure we have that tool. Since releasing from the SPR, the Department of Energy has been buying back. And as a reminder for this show, for our audience of Bloomberg, we sold at about $95. We sold 180 million barrels at about $95. We're buying it back at about 77, 78. That's a really damn good trade.
So you're a good trader for the West Wing, noted. But it's not just the $5 a gallon when the SPR came into effect. The first time the Biden administration tapped the SPR was November 23rd, 2021, and gasoline was at $3.39. Today it's at $3.50. So why not tap it today?
Well, we were at that point in time, first of all, it was a very small release. And it was coordinated together with our European allies, European and Asian allies. So it was a global action that we took. And that was around the run-up for this war. I mean, people forget that the President of the United States saw this war coming in Russia and called it in advance. So it's about the surrounding environment of what is happening in the markets, what's generating the increase in price. We would like to see this, the prices go down. We've called on the oil companies to address that. We have, they're producing more than they ever have, both in the United States and around the world. And I think they can do a little bit more to make sure that Americans are not suffering at the pump and that the effects on inflation are reduced.
Can I just say you haven't closed that trade yet? You've got to refill the SPR first.
Well, we are refilling.
You're like doing it but haven't done it. Where are we now relative to where we were? It's quite a gap, isn't it?
I disagree. We've purchased back about 40 million barrels. We were required by Congress to sell 140 million, which we worked with Congress to cancel that sale. So net, we are basically back to where we would have been had we not sold from the SPR. So, but we take that point. We have enough in the SPR to address the concerns that we may face in the future. That is something that every American should know. We have enough to address any security or natural disaster. We will continue to buy those barrels back to refill the SPR because the president believes that it's an important tool.
You said we're doing two things simultaneously. You said one is we're making sure we're fully supplied when it comes to energy. Two is to accelerate the transition. I'd argue you're doing three. You're also putting up the walls to China and Chinese EVs. Can you help me square that circle? Why shouldn't American consumers be able to buy cheap Chinese EVs and to ensure they can do the kind of things that you're talking about doing anyway?
Well, what we want to make sure is that we have energy security and economic security. And so those are always challenges that you have to look at. We'd like to see a lot of lower prices. We put sanctions on Russia and Iran because that's the right national security call. The way that the Chinese have acted in the market, it is not a free market. And we have to make sure that we are securing the American economy for the future. And if you allow somebody to come into your market, flood it with below-cost products, then ultimately you'll lose your economy. And we've seen it with product after product. And I think people who watch this show who care about financial markets should be very worried about that and look around the world. Every place they've gone in, they've done the same thing. They dump on the market. They eliminate the local competition and the local markets. Look what happened in the solar industry 15 years ago. And then they dominate. And those prices are not going to stay low forever, just until they kick you out. And then they're going to raise those prices. So if you want to have a strong American economy, we have to take the kind of strong action the president has been taking.
There is, though, a conflict here. And to John's point, if people could get much cheaper electric vehicles, the transition might happen faster. The fact that they are more expensive and that it might be a slower transition. How much more do you expect the United States to depend on fossil fuels? How much longer as a result to prolong the transition in the name of national security?
It's not just about national security. I don't want to have a boom in EVs that is also on the backs of slave labor, child labor, coal power plants that are energizing a EV car manufacturing. We want to have a transition to a green economy, a clean economy that actually has the standards and the values of the United States. There's a livable wage that workers should have. Hiring children and certain minority communities just because you can and pay them nothing and then say, I have a cheap product. That's not what we're going to build the clean energy economy on. I think the innovation is in the United States. We have the workers and the skills in the United States, and we should build as much as we can. And the fact is that our partners agree. If you look at what we're discussing in the G7, that is what everybody wants. They want to be able to have a clean economy that is competitive, and that we should have this around the world. Countries should have their own manufacturing bases, but they should be done based on a free economy. What the Chinese are doing is not a free economy. It is based on loans, 0% loans from the central bank that says, and we have company CEOs coming out, whether it's in chips, in AI, or in EVs, who say, I don't plan to make a profit for several years. Well, you don't take a genius to say, here's a wad of cash, go build a business, don't worry about a return. I think what you discuss around this table every day is getting returns. That's not a free market. So yes, we want to have a clean energy economy. We're going to accelerate it by doing it in a fair way that produces more jobs. And look, manufacturing is back in America. And that's because we have these infusion of the laws that we passed, again, the IRA, the Inflation Reduction Act, as well as the BUILD Act and the CHIPS Act. That is how you do it, making it competitive and better.
It's been too long. Need to do this again soon.
Anytime.
It's good to see you. Thank you, sir. Amos Hochstein there, the Deputy Assistant to the President. Equity futures right now just about unchanged, but there's a big story in the pre-market. It's Walgreens. We're down by close to 15%. Let's get you some of the stories elsewhere with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Yeah, so 14.5% for the drop in Walgreens this morning, John. The company lowered its earning outlook for the rest of the year, and doing so pointed to worse than expected consumer environment. It also plans to close more stores in the U.S. According to the Journal, Walgreens is reviewing about a quarter of its stores that aren't profitable and could shut a, quote, meaningful percent of them in the next few years. On the other side of things, Amazon has joined an elite group of companies. The tech giant has reached a $2 trillion market valuation for the first time in trading yesterday. The AI rally has pushed the company deeper into record territory. Even so, Goldman data out this morning suggests that hedge funds are selling tech aggressively. June's net selling of the sector is on track to be the largest on record, with the bank's data going back to 2017. Now, another Boeing whistleblower has come forward. It's a subcontractor mechanic who worked on the 787 Dreamliner and claims that he was retaliated against for raising concerns about work that he saw on the plane. According to a statement through attorneys, the whistleblower said that he saw, quote, substandard manufacturing and maintenance practices on a crucial part of the jet's nose for maintaining cabin pressure. Boeing responded, saying the claims were reported and investigated, and it is not involved in the personnel decisions of subcontractors. And that's your brief. John.
Danny, thank you. Up next on the program, looking beyond big tech.
Because of maybe the AI narrative in particular, we've seen people perceive certain boats as lifeboats when in fact they got holes in them. The boat that's tilting back and forth, people are running to different sides of the boat can actually remain fairly stable.
I think I understood that from Mike Wilson of Morgan Stanley.
You can explain it for the next 5 minutes.
With you guys yesterday.
Yeah.
You can explain the commercial break to me. All right, that's next on the program. You're watching Bloomberg Surveillance.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close, weekdays at 3 p.m. only on Bloomberg Television. Context changes everything.
No drama here. We're down about 0.1% on the benchmark on the S&P 500, just a little bit softer. Under surveillance this morning, looking beyond big tech.
Because of maybe the AI narrative in particular, we've seen people perceive certain boats as lifeboats when in fact they got holes in them. The boat that's tilting back and forth, people are running to different sides of the boat can actually remain fairly stable. It's not just the Mag 7, by the way, that's high quality growth. There are some really good high quality growth stocks outside of tech and comm services that have been performing well.
Here's the latest disappointing earnings forecast for chipmaker Micron weighing on Nvidia and the AI-fueled rally. Joanne Feeney of Advisors Capital Management looking beyond the big tech, writing this. The anticipation of lower interest rates and better earnings prospects appear to have driven the market higher. The build-out of artificial intelligence infrastructure by the likes of Microsoft and others are a big part of that, but the increase in earnings growth occurred across sectors beyond technology. Joanne joins us now for more. Joanne, I want to go to one name straight away, and it's in retail, and thanks for being with us, by the way. I want to go to Walgreens. In the pre-market, getting absolutely hammered. We're down by something like 15%, down by 14.81% right now. And this is what they're saying. New range for the year. Cut that big time, 280 to 295. They had seen 320 to 335. Lisa's been talking about the reports of store closures as well. Joanne, we're trying to work out if this is a sign of what's happening with the broader consumer, or is this just a sign of a retailer struggling before its own reasons?
Yeah, John, I think it's Walgreens having its own issues. And the reason for that is Walgreens had adopted a business model of trying to build clinics in their locations to, help add a new business line, drive more traffic, to help the retail side. We had owned Walgreens for a while. We sold it last year because one of the things we noticed in the wake of COVID was the shortage of skilled medical staff, whether it's physician's assistants, nurse practitioners. And so we expected that it was going to be really hard for Walgreens to be able to staff such a new line of business locations. And then you saw the pharmacy workers themselves going on strike. So it was going to be made pretty clear to us this is going to be a challenging business model. And so we're not surprised. We sold it last year, and we just think it's going to continue to be challenged.
We're seeing CVS shares down in sympathy, so this isn't just a Walgreens story, at least when it comes to the market. How much is this just simply because of the medical side of things and what you're talking about with respect to shortages? And how much does this speak to the changes also post-pandemic with some of these stores to prevent theft, with the fact that basically Amazon had an upper hand and this just turbocharged it?
Yeah, your comments earlier, Lisa, about the frustration you have going in, anybody has going into one of these shops and trying to buy whatever. It's just, it removes that convenience that those shops were supposed to afford. And that is a real problem. And they might need to be more judicious in where they deploy such theft prevention devices. I mean, we're here in suburban New Jersey. I don't think there's a lot of that kind of theft going on. I don't know. But, I walk into my local Walgreens or CVS and have to get through those barriers. It's a pain in the neck. So I think they need to really rethink the cost of this to their traffic.
So, Joanne, Walgreens aside, how do I want to get exposure right now to the consumer? What's the best play?
Well, right now the consumer remains strong, and we've all been hearing about the demise of the consumer for a couple of years now. It just hasn't happened, and the reason is because basically people are employed. People are employed and nominal wages are going up. But that said, we have seen weakening in the labor market, right? We are seeing those high interest rates translate to higher costs of buying a car and rental costs being high. So parts of the consumer spectrum are really challenged right now. So one of the plays we like is to go where the consumer goes to save money, and that's a place like TJ Maxx. And so that's one that's a core holding for us. We think that's going to be a good place to be. But then also look at housing. There are shortages that are going to persist for a long time, and playing shortages as an investor is actually probably a pretty good bet. And so looking at a Lennar or a Williams-Sonoma, which is also tied to that new house trade. And the first-time buyers are still out there. They can't find a place to live, and companies like Lennar are offering them ways to take down the costs of buying that new house.
I can tell you some hands were going up around the studio as you were talking. Joanne, thank you. Joanne Feeney there of Advisors Capital Management. Much more on the consumer later on this morning. 8:30 Eastern Time. Jobless claims, that's just around the corner. The estimate in our survey, 235. The previous read, 238. Coming up in the next hour, we'll catch up with Tony Rodriguez of Nuveen, Bloomberg's Mandeep Singh, and David Gura, and Ed Hyman of Evercore. Looking ahead to all that data 34 minutes away. The third hour of Bloomberg Surveillance, up next.
You have to distill down what is the purpose of what you do, what is the purpose of your company, and make that very clear, and repeat it and repeat it and repeat it. And it's very clear what our purpose is to make money for the Norwegian population.
So why did you accept the job? You had a great life. I mean, you had a hedge fund that was doing very well. You were earning lots of money.
Well, I had a great life. I had a great life, but I still have a great life, and a really good life. No, I was very keen on that job because one, I think it's one of the most important positions in asset management, right? I love asset management. In terms of the opportunity to develop that organization further, there were great opportunities, and I love organizational development. And then to do something nice for the country. I mean, these three things came together in the same job.
Why do you love asset management? Because you can influence and change the future, or is it being cleverer than anyone else?
Asset management is the most interesting job in the world, perhaps after being a journalist. Why is that? Well, everything you eat, drink, drive, all these kind of things is made by a company. You need to understand psychology in terms of the companies. You need to understand the corporate culture of companies. And then these things change all the time, right? You have the macroeconomies changing, interest rates are changing, currencies are changing. And the data points are just changing all the time. You just couldn't invent a more fascinating game even if you tried.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd put everything I had into it.
I get asked more about our relationship than I do my wife and I. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
Secured overnight financing rate 5.34% for June the 26th versus 5.33% for June the 25th.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
When we look at this soft landing scenario, we're very positive as we go into the second half of the year.
We still have the view that the Fed will be able to cut this year, 2 cuts likely this year.
The Fed's waiting because growth is strong. That's not a bad thing for the markets.
In this complex environment, the patient approach that the Fed is delivering is the right one.
Weaker economy, better inflation news. The Fed cuts. Stronger economy, not so good inflation news. The Fed stays on hold. And the reality is the data has been pretty mixed.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
The third hour of Bloomberg Surveillance begins right now, live from New York City this morning. Good morning, good morning. 90 minutes away from the opening bell with equity futures doing okay. No drama. If you want some drama, pick out this name. It's Walgreens in the pre-market, down by 14%. Double-digit declines, slashing the outlook for the year ahead, and a talk of some mass store closures, Lisa, to follow.
In the Wall Street Journal reporting that Walgreens is planning to close a, quote, significant share of their 8,600 stores in the United States, saying they continue to face a difficult environment. 2 things, we were talking about challenges with hiring for that key healthcare push. And then there's a question of just how convenient are these convenience stores in an inconvenient way, in an inconvenient moment of preventing theft.
So there's 2 threads to this story, potentially. We could have a conversation about the consumer and talk about jobless claims, which drop in about 28 minutes' time. Or we could talk about theft and link that to a debate that's going to take place a little bit later on this evening at 9 p.m. Eastern Time in Atlanta, Georgia. And that's going to come up repeatedly, you'd imagine, in this election campaign over the next 5 or 6 months.
What Trump is just going to try to hammer home this evening is he's going to ask this question: are you better now than you were 4 years ago? Do you think that, 1, things are more expensive? Do you feel like you're making more money and you have a better ability to pay for things? And 2, do you feel safer? This is going to be something major that the Trump campaign wants to hammer home. I really loved what Henrietta Trey said, though, how important it is going to be for these individuals to speak to the youth, the Gen Z, these individuals that Maybe they're first-time voters. They haven't made up their mind. But are they going to sit there and watch 90 minutes? Or are they going to wait for the clips to be circulated on TikTok? And that's why the style of this debate is as important as the substance.
You know, I think it's interesting that we can't even really put the right narrative on this story because it could be many different things. Walgreens wants to blame the consumer weakness in a challenging consumer environment. We're talking about some pretty secular trends that might have to also do with how penalized some of these retail theft rings have been. There is a broader question, though, about cherry picking. And yesterday, Neil Dutta accused me of cherry picking data. We all are cherry picking anecdotes and data.
I thought you were friends again. What's happened here?
Well, you know,
they're not friends. You missed it.
Well, I mean, you know, he just basically is saying the Fed should get on with it. We don't have to rehash the whole thing. We can do that later. Go ahead, boy. You can watch it back. But the issue is, how do you get a clear narrative at a time where it's not just me? A lot of people are cherry picking because what other aspects do you have to pick from right now?
It felt very much like, to Neil Dutta, Lisa was kind of like, you can't sit with us. You're not part of the table. But when it comes to the, well, it did yesterday.
Like
John
Mean
missed
Girls.
it. A bit like Mean Girls. We're all wearing pink, so it was pretty appropriate.
Hold on. He could have come to the studio. We absolutely welcome him. Neil, please come to the studio. We would love to have you back. Carry on, Emery.
Well, when it comes to the cherry picking, what I thought was so interesting as well from a prior guest talking about Walgreens is potentially these stores need to care more about the foot traffic than the theft. How many times have you maybe gone into a Walgreens, really needed something like a deodorant quickly, and you're waiting for the attendant to come, and then you're just like, I'm cutting my losses, I'm gonna be late for my train, I'm gonna be late for the dinner I'm going to, and you move on.
Tell us more, Anne-Marie.
No, but then you move on, and how actually the theft issue is becoming more important to a place like Walgreens.
I just want to know what happened to this show in my absence. Try and figure that out after the programme. Let's get to jobless claims. Jobless claims about 25 minutes away. The data looks like this in our survey, 235,000. That's the estimate. The previous number, 238. That's the big number for you a little bit later this morning. Equity futures going into that negative by 0.2% on the S&P. Yield just unchanged on a 10-year at 432.74. And euro dollar in and around 107 all morning, 106.97 now. Positive by 0.15% on that currency pair. Coming up this hour, we'll catch up with Nuveen's Tony Rodriguez looking ahead to November after tonight's presidential debate. Mandeep Singh of Bloomberg Intelligence as Micron fails to meet some lofty expectations. And of course, Ed Hyman weighing in on the US economy and that economic data that drops this hour. We begin with our top story, the mother of all debates. Nuveen's Tony Rodriguez saying this: the debate is likely immaterial to the investment outlook. The election, however, has the potential to be material. A single party sweep would lead to the greatest potential for volatility. Either winner will face significant fiscal and geopolitical challenges. Tony is with us around the table. Tony, good morning to you.
Good morning.
Let's get into that, what that wave, blue or red, could mean to this Treasury market.
Sure, and I think that, you know, historically when you look at it, obviously the markets really do like gridlock, and that's what you have when you have some split government. So a sweep to us, given that right now you can't really look at either party and say that there's any fiscal responsibility that exists in Washington, D.C. So really the prospects of maybe further fiscal blowout type of policy is a big risk for the markets. And when you think about tariff policy as well, again, right now there are some parameters that people are held within because of split government. To the extent you get a sweep, you have the ability to suddenly implement some what would be considered pretty significant tariff differences from where we are today. That can be inflationary, it can hurt global growth, it'll have implications on the FX side. So we think the volatility will be high if you get that kind of sweep. Probably obviously the least volatility would come from a continuation of where we are today. We have policies that have been in place for 4 years. That continues. I think the markets basically can get some comfort out of that. Any big shift, though, look out.
Does the American bond market speak French?
It might, but there is a difference, a big difference.
You know
with
what
the
I'm getting
reserve.
into
I
here,
do know what you're
ultimately.
getting into, absolutely. So we don't think we're going to go in that direction that quickly, but we could get there eventually, because right now there's no prospect for the deficits to come down. So when that moment happens, like you might argue it just did with France, is we think down the road, but it's something to be careful about for sure.
Je parle français, and I want to talk about the auctions, because that actually is going to matter if the U.S. can look like the French market, considering the fact that no one has come on here and said that the fiscal backdrop for the United States is responsible in any measure. We do have an auction today of 7-year notes. Are you still buying, even though you have this trepidation that there could be that moment where suddenly the bond market pushes back?
Yeah, so it actually doesn't matter if I am buying because there are plenty of buyers. So we've had 2s, 3s, 5s, 10s, 20s, 30s, tips all this month. Only one of those auctions had a tail to it. So there's a lot of demand. Some of that is around flight to safety because there are some uncertainties out there around monetary policy, fiscal policies. You've seen these election results in India, for example, that surprised the market, in Mexico that surprised the market. So the dollar has a lot of demand for it. You know, we look a lot at, for example, dollar yen and what Japanese
So, as noting here, Germany's Finance Minister Linda says that Germany must remain the anchor of fiscal stability in the EU.
Typically hedge like 2/3 of their US dollar bond holdings. They're only hedged under 45% now. So, again, high cost of hedging.
And also noting here, Coinbase announces lawsuits against SEC, FDIC in Freedom of Information Act dispute.
Okay, so you went there, and we've had basically Alan Ruskin's swan song of his 4-decade career. He's talking about how it's a dollar-strong market for the foreseeable future. And then we had Jay Pulaski saying the dollar is going to crash, especially if Donald Trump gets elected. He's getting out of treasuries altogether. He's expecting weak dollar. Where do you stand on this?
So we do think that the dollar is going to remain strong over the balance of this year, because right now you look at where policy is set up, and the start of the year we were thinking whatever the market was pricing 6, 7, 8 cuts. The BOJ would be aggressive with tightening. Neither of those has happened. The BOJ is having some difficulty being hawkish enough for the markets. The Fed is trying to be somewhat dovish, but it's clearly not as dovish as it had been. That's all pro-dollar. And at the same time, the U.S. economy is outperforming. So we don't see that changing dramatically. We do think the U.S. economy growth will moderate. Inflation is going to remain sticky. So that's still kind of a very slow, patient Fed. That's supportive of the dollar. The underlying growth rates of macroeconomies, U.S. is still going to perform and behave pretty well. So that's a pretty positive dollar story. But we do think the dollar is overbought. So the, 1 year outlook would be for a weaker dollar than we are now. It would be for the yen to strengthen a bit. The yen at these levels that are, 40 years, when he started his career, that's what it was at this level last. We don't think that's sustainable in the long term.
But do you hold this view regardless of who wins the election?
Well, again, if you get the sweep, and particularly from the tariff side, so if you get kind of a sweep that ends up implementing some of these talked about policies of, 10% tariffs across the board or 50 plus, 60 plus with China, that's going to be dollar positive because A, it's a little bit inflationary for the U.S., so the Fed's not going to be able to respond with cuts at all. And B, it is really a kind of tax on global trade, slow down to global growth, which means flight to safety, flight to the dollar. So in that case, that'll prolong, we think, the dollar strength.
Given how material the consequences could be from this election in November, and given that we're talking about very fine margins in just a handful of states, how do you put together a view on 2025, sitting here in the middle of 2024?
Yeah. So I think one of the main things about it is that you can't have tremendously high conviction in your view. So you have to position with some caution. We talk about being right now around the middle, maybe slightly higher of our risk budget. And part of that is because you want to have powder dry to be able to respond and react to whatever may come from either the election or some other geopolitical event or some repricing in the markets because it's a French, Liz Truss type of moment, whatever that might be. But really, that's how you do it. You kind of lay out your plan, invest somewhat more cautiously than you otherwise would because the uncertainty is pretty high.
Just detail that a little bit more. So that means sort of a little bit of cash, and then when you are willing to take risk, where are you taking those pockets of risk at the moment?
Yeah, so from a duration perspective, it's kind of neutral, maybe a little bit long. We think rates will be a little bit range bound, moving lower, but vary by a limited amount over the balance of the year. From a credit risk perspective, it's really about we're comfortable with credit risk at the higher quality segments of the market. So if you look at high yield, leveraged loans, CLOs, emerging markets, we don't want to go into the deepest end of the risk pool. Triple C's, low single B's, those are the companies that are being hurt by these higher rates, which we think will be in place for longer. So that their balance sheets, their income statements are getting hurt the most. But when you look at the higher quality double B side of the market, there you can find companies that are going to be pretty resilient through what we think is a moderating growth environment, but not a recessionary environment.
So are you preparing investors for a clipping coupon type of environment where essentially they're getting 5, maybe 6% returns and nothing more? Because to shoot for higher means potentially losing your shirt.
Yeah, we think you can shoot for a little bit higher. So we would say 5 to 7% is a place where you want to build portfolios to achieve that kind of target yield. When you start talking about achieving a 9% or more, now we think you're taking on probably risks that are a little bit unwise at the moment. So 5 to 7%, which means that cash is competitive for the moment. But the minute we get that first cut, the second cut from the Fed later this year, early next, all of a sudden, that comes along with a little bit of a decline in longer-term rates. You're going to see these portfolios that are non-cash yielding 6%, 7%, generating returns that are in that 6 to 8% area, and that's a pretty significant outperformance to cash, and probably competitive with equities, even though we're up 15% on the year. It seems like that always happens. We're underestimating the equity market. But it should be competitive with what you get in non-fixed income asset classes as well.
Spoken like a true bond manager. Tony, thank you. Tony Rodriguez of Nuveen. Tony, appreciate it. Thank you, sir. Equities right now on the S&P, negative by 0.1%. Let's give an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Jefferies out with results after the bell yesterday, and profits soared. Second quarter investment banking revenue jumped 59%. Debt underwriting more than doubled. It is a sharp shift from the dull deal activity of earlier this year and last over geopolitical concerns and high rates. Jefferies President Brian Friedman said that a broader recovery in capital markets activity and M&A is underway. Elon Musk's SpaceX will sell insider shares in a tender offer at a higher than expected price. The shares will sell for $112 a piece, valuing the company at close to $210 billion. That's $30 billion more from its valuation in December. A source says that the jump in value is owed to a significant investor demand. The valuation is also a new record for an American private company. Now, when it comes to the McPlant, U.S. consumers aren't loving it. McDonald's U.S. chief said yesterday that the plant-based burger was not a success in the test markets of San Francisco and Dallas, saying that customers aren't looking to McDonald's for a plant-based protein in the States. The company has said that plant-based food had fared better in European markets. Instead of place-based options, McDonald's is investing in its chicken offerings stateside. And that's your Bloomberg Brief. John.
Danny, thank you. Thank you very much. It's official. People don't want the plant-based burger at McDonald's. Because why would you go to McDonald's for that anyway?
I mean, honestly, it's not even that much healthier when you look at a lot of things.
The sodium?
Yeah, you look at the sodium, you look at the saturated fat, you start wondering what's the appealing. You're at McDonald's. It's not like you're going to be really going full vegan.
It's EK, full vegan.
Oh, really?
Yeah, seriously.
At McDonald's?
Yeah, McDonald's.
Is this new?
Yeah.
It's fairly new, last few months.
Full vegan
you're
in
actually
life
kidding.
or full vegan when he goes to McDonald's?
No, full vegan for life.
You're
I
joking,
don't believe
right?
it.
No,
But he's still drinking martinis.
We had a long chat over breakfast with martinis a few weeks ago, and he told me that he's gone full vegan.
Yeah, liquid diet.
Yeah, with alcohol still. Baby steps, Bramo. Baby steps. Up next, the morning calls. Mandeep Singh on Micron's disappointing AI miss. That conversation just around the corner. You're watching Bloomberg Surveillance.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that.
Don't miss Bloomberg's interview with the
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything.
Just getting tons of messages now about TK going vegan.
It's not true.
No. TK and I will do a segment about this at a later date.
Oh, yeah?
Right, serious conversation.
On a cruise boat.
Yeah, absolutely.
With a martini and some steak frites.
Okay, watch this space. Equities right now on the S&P. Negative by 0.1%. In the bond market, unchanged, 432.94 on a US 10-year. Lots to talk about with one particular name. Let's get to the morning calls with one stock in focus, Micron. First up, Citi recently lifting its price target to 175. The analyst now saying to buy shares on post-earnings weakness and expecting better results through next year. Stock is down by close to 6%. Next up, KeyBank raising its price target to 160, maintaining an overweight rating. The firm highlighting the company's stronger than expected third quarter results and noting fourth quarter guidance falling in line. And finally, UBS lowering its price target on the chip maker to 153, keeping a buy rating. The firm citing tepid guidance but ultimately sees it as noise, expecting gross margin to move higher through 2025. So what is it? News or noise? Mandeep Singh of Bloomberg Intelligence is with us around the table. Mandeep, is it noise or is it news? What's your view?
I mean, there were some clear data points around AI, and when you look at Micron, it's coming out of a trough. Compare that to NVIDIA that has seen that AI tailwind for the past 5 quarters. So memory, we know, is needed for AI as the model get bigger, and that's what, you know, they guided to. They said HBM revenue, the one correlated to AI, was $100 million this quarter. It's going to be multi-billions next year. So they have a lot of visibility to the AI side. The one other thing that Micron plays in is on the on-device side. It's the DRAM for your smartphone. So if there is a wave in terms of refreshes, Apple Intelligence taking off, that's when you will see real upside. And I think they pointed to non-AI piece being sort of tepid, hence the stock reaction. I don't think it was any sort of kind of reflection on AI being weak. Like, they're sold out for the next 5 quarters. I mean, that tells you something, how much order book they have in terms
So in
of
just less than 10 minutes time now, at the bottom of the hour, we see the release of the US GDP quarter over quarter Q1 final read. Forecast 1 spot 4%, on the prior 1 spot 3%, with a range of 1 spot 6% to 1 spot 1% expected. With this, we get the quarterly core PCE prices final for Q1 as well. Forecast 3 spot 6%, on the prior 3 spot 6%, range of 3 spot 8 to 3 spot 6% expected, and the GDP price index forecast 3% on the prior 3%. With this data as well, we also see the release of the US durable goods numbers. So these are the prelim reads as well. Forecast minus 0.5% on the prior 0.6%, with a range of 0.6% to minus 3.2% expected. Core durable goods forecast 0.2% on the prior 0.4%. And with this as well, we also get the weekly initial jobless claims number. Forecast 235k on the prior 238k, with a range of 246k to 225k. And the continued jobless claims. Forecast 1.828 million on the prior 1.828 million, with a range of 1.84 to 1.75 million expected.
It's happening, and it's going to continue for the next probably 18 months or 24 months.
Mandeep, I'm glad you brought up the AI investment, because 2 months ago exactly, the President of the United States actually went to Micron and was talking about unveiling billions of dollars from the Chips and Science Act. He might talk about that today as one of their big policy goals that they had and were able to see through. Where are we in terms of the Chips and Science money going to places like Micron that are supposed to be building these fabs? So the United States can make sure they're secure from places like what's going on in Taiwan.
Yeah, and that's where my oligopoly comment probably suggests that Micron is like a monopoly here in the US, because if you're not sourcing from outside, you go to Micron. And look, they guided to CapEx going up 60% next year. I mean, a lot of investors are freaking out. What does it do to the free cash flow? But remember, Micron is getting the handouts from the government to invest in these fabs. So that kind of offsets that CapEx increase that they're making. And so from that positioning, I think Micron is in a great position. And obviously, it's a cyclical industry. And you want to get it early in the cycle. As I said, it's coming out of a trough, whereas, NVIDIA is probably 5-6 quarters into it. So that early cycle is very important here.
One aspect of the earnings that I thought was interesting is they have a shortage of parts to meet the demand. They don't have the supplies. And they talked about potentially raising prices as a result because it is in such demand. How much are we underestimating just how much prices have to go up? How inflationary this ultimately has to be because of the rush to AI and the lack of capacity to meet the demand?
Yeah, I mean, what happened in the last cycle when every memory maker was cutting back on their CapEx was capacity increase almost flatlined. There was no capacity increase on the memory side for the past, I would say, 6 quarters. So now that they're coming out, they're talking about ramping up CapEx, but by the time the capacity comes online, it'll be another 6 to 7 quarters. So that's where the supply-demand dynamics work in their favor because the market is still, supply constrained. As is the case with NVIDIA, the market is supply constrained. That's why you see the ASP increases. And you're going to see a similar dynamic play out on the memory side because HBM demand is more than the supply. And you cannot, create a fab overnight, even if the government is handing you money.
You alluded to this, you brought up Apple and the prospect of a big smartphone upgrade wave. We've got a decent idea of what that smartphone's going to look like later this year.
I mean, look, they said their Apple Intelligence is compatible with iPhone 15 and it's not backward compatible. Okay. So you need at least 8 gigabytes of RAM. It cannot be less than that. And so the content of memory will double for sure because that iPhone 16 will have 16 gigabytes of RAM or more because that's the only way you're going to be able to run on-device AI. And the one thing with on-device AI, it's good for memory makers, it's good for TSMC, it's not so good for NVIDIA because NVIDIA is all about running things in the data center. So if you're doing things on-device, that's not so good for NVIDIA.
So are you telling me that there will be enough packed into this phone to get the people that may or may not be still walking around with iPhone 10s to upgrade?
I mean, look, at the end, it's apps for Apple. If you're able to show apps that can leverage this on-device, capabilities when it comes to the chips and the memory they are powering, then I think
so in 5 minutes time now at the bottom of the hour, we see the release of the US GDP quarter-over-quarter Q1 final read. Forecast 1.4% on the prior 1.3%, with a range of 1.6 to 1.1% expected. In this report, we get the PCE prices final read for Q1 as well. Forecast 3.6% on the prior 3.6%, with a range of 3.8 to 3.6% expected. And the GDP price index Q1 final. Forecast 3% on the prior 3%. We also see the release of the US durable goods May prelim read. Forecast minus 0.5% on the prior 0.6%, with a range of 0.6 to minus 3.2% expected.
Pushing that one, then maybe I have to upgrade again.
Oh, so basically, are you pushing
US core durable goods forecast 0.2% on the prior 0.4%. And as well, in more US data as we get the weekly jobless claims numbers as well. Initial jobless claims forecast 235k on the prior 238k. Range is 246 to 225k expected. And continued jobless claims forecast 1.828 million on the prior 1.828 million. Range noted at 1.84 to 1.75 million.
The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series. Every Thursday in June at noon Eastern.
1 minute remaining. I'll be leading with the US GDP quarter-over-quarter final.
Inclusion this Pride Month. The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything.
10 seconds.
Equity futures right now negative by 0.1%, 60 minutes away from the opening bell. We're down 0.2 on the NASDAQ 100. In just a moment, we'll get a ton of data for you, including another read on first quarter GDP and jobless claims. All eyes on jobless claims from my perspective, just to see if that breakout over the last couple of weeks sticks or even breaks out.
Still waiting
even
on
more.
GDP.
The estimate in our survey, 235. The previous read, 238.
One spot 4%, one spot 4% as expected. Durable goods 0.1%, 0.1%, which is higher than forecast, minus 0.5%. Initial jobless claims at 233k, 233k, lower than forecast, 235k. Looking to the markets, bit of whipsawing with some weakness in the S&P and some strength in the dollar overall. GDP price index at 3.1%, 3.1%, that's higher than forecast, 3%. The core PCE prices final also higher at 3.7%, 3.7%, again higher than expected, 3.6%. Core durable goods at minus 0.1%, minus 0.1%, lower than forecast, 0.2%. Continued jobless claims, 1.839 million, 1.839 million, which is higher than forecast, 1.828 million. Wholesale inventories month over month, 0.6%, 0.6%, higher than forecast, 0.1%. Advanced good trade balance, a deficit of 100.62 billion, 100.62 billion, which is lower than the expected deficit of 96 billion. And retail inventories ex auto advanced, a flat read of 0%, that's 0%.
The initial jobless claims revisions.
Again, as data digest, just seeing some strength in the S&P 500 and a weakness in the dollar here. So just to summarize, jobless claims coming in lower than expected, with the GDP quarter over quarter coming in as expected, still higher than the previous read. Durable goods higher than expected as well, but also 10 basis points positive deviations on both of the inflation reads and the GDP reports, with the price index at 3.1% and the PCE at 3.7%. Noting US Treasury yields are falling after that US data. Again, Treasury yields edging lower following mixed data.
By analysts who noted that since the first quarter, we have seen some revisions to the numbers, and so this probably doesn't have any forecasting ability for tomorrow's PCE numbers.
So we have posted out the US GDP Q1 full report and the durable goods May report on the feed for anyone interested.
Economic slowdown right now. Would you say we're seeing one?
I'd say we're seeing one.
Just making note of the prior revisions here, the jobless claims numbers. Initial claims, the prior was revised up to 239k from 238k. And continuing claims, the prior was revised down to 1.821 million from 1.828 million.
Waiting on all of these numbers till you got back.
Thank you, sir. Thank you.
Well, I am wondering.
Thanks for doing the schedule that way. I appreciate it.
We tried to accommodate the vacation schedule. There was a heated discussion yesterday about cherry picking data. And the person who was talking about this was Neil Dutta, and he said, really, there are two things that matter, and that's the unemployment numbers and what we're seeing with inflation. And for the Federal Reserve, they're seeing unemployment go up, and they're seeing inflation come down. So why not just get on with it and cut rates? Why is it not just that simple?
They want to be sure what they're seeing is going to continue and isn't a one-off or a 2-month off kind of thing. They need convincing. They need to know that the trend is going to continue. And we have seen trends go back and forth since the pandemic in ways that we never saw before. The one thing that's always interesting, though, is everybody says the Fed is data dependent and they criticize them for that. But they forget the Fed is not just looking backwards. They're always talking to CEOs. They are always talking to small business owners. And they have many surveys that all of the presidents in the various banks put out to see what's happening right now. So they're a little bit better informed than people give them credit for.
Mike, when you talk about just the consumer appetite in some of these companies and what they say, tomorrow we do get personal income as well as personal spending at a time when we did get a downside revision to personal consumption in the first quarter read, the latest read. There was a story out on the terminal this morning saying that excess savings in the United States reached $2.1 trillion in 2021 as a result of some of the pandemic-era programs. That has completely evaporated as of several months ago, and now it's gone negative. How much does that sort of speak to a softness that we're expecting to see but haven't seen to the degree many people have been talking about?
Well, the Fed is as stumped as everybody about why lags have been longer in this economic cycle, and there are a lot of different theories, and there's probably a lot of different things that have caused this, but it finally seems to be hitting the economy. It doesn't seem to be crashing the economy. Doesn't seem to be the kind of thing where everybody's going to all of a sudden pull back. And of course, recessions are psychological events because people start to worry and then they pull back their spending. Businesses do the same. And we haven't seen that yet. And that's what the Fed is, on the one hand, keeping an eye out for, which is why employment's come back in as a major indicator for them, because they want to make sure that all of a sudden people aren't getting laid off, scares the Americans, they stop spending, etc.
Mike, stay close. Bonds reacting to this just a little bit. Yields dropping across the curve by a basis point or two. We're down 1 on the 2-year to about 473, on a 10-year down to about 432. With us around the table, one of the very best, Evercore's Ed Hyman, joins us in person. Ed, good morning to you, sir.
Good morning, John. How are you?
Fantastic and brilliant to see you. I want to pick up on what Lisa was talking about with Neil Dutter in the last 24 hours. If unemployment's starting to climb, if inflation's falling, why won't the Fed just get on with it?
Well, they will. You got to be patient. And people like Mike pretty much put me out of business. You just, the quality of...
I couldn't do that.
Well, the quality of what you do seriously is so good. But the Fed's just being patient, and you can't fault them for that. I can feel, and I have a strong view about what's happening, but I can feel that they're not making a mistake by being patient right now, waiting. I'm not for sure whether it's the unemployment claims number or another increase in the unemployment rate by 1/10, or some anecdotal, like swimming pool sales weekend or something, that suddenly say, yeah, we have to go. The thing, Mike, that we should keep in mind is that they do have a view that once they start, this is a march. They don't take a step. Once they start, they are telling you and me that they're going to have a program of rate cuts. So that's why they have a little more resistance to starting up.
It's controversial to say that they're not making a mistake by being patient. There is a growing school of thought and, frankly, a fissure in a growing number of analysts where some people say, actually, this is the tipping point. And we heard Mary Daly address this just on the margins. We're seeing a tipping point in the labor market in particular, and we're not going to be able to address it until it's too late unless you get ahead of it. What do you make of those arguments?
So I'm very sympathetic to them. I'm very sympathetic to it. So I'm not in the everything's great and, they should... But I thought what she did was very important. And that's why, John, the claims numbers are so critical. You get another increase or two, and suddenly you say, we're going there. But I think I have almost perfect knowledge of the economy today. Don't hit me. But it's not falling off a cliff, like Mike says. I talked to a couple of friends of mine this morning in Atlanta because of the debate coming up. And Atlanta, they say, it's a little bit cooler. Atlanta is a real estate-based place. I don't know if you know but real estate. And it's cooled off a little bit. But we do a set of surveys of companies, which is of CEOs, if you will, very systematic. And it was 60, 0 to 100. Now it's 50. And it was up a point last week to 50. It's not 45, which is recession-like. But I think your point is well taken. They could, be criticized for not acting a little bit more. But I can see where they want to, look over there and see around the corner, get one more data point or two more data points. But I thought the daily comments were important.
When you say you have a very good sense of where the economy is right now, I want to dig into that, because we've been talking about how difficult it is to get sort of a consistent story from all of the anecdotes that tell very different tales, depending on the socioeconomic bracket in particular. How much more fragile is the strength that we're seeing, given that it is hinged entirely to the top tier of income providers, of income earners in this country, and you are seeing real signs of softening anywhere, either in the middle or lower income brackets?
So, again, we survey about 200 companies a week. The same companies, the same person at the company. We found if we switched people, the results would go up and down on the same company for just a week. And it varies. We cover all socioeconomic strata. For example, we have a survey of wine and spirit wholesalers. And of those people, we ask them about whether they're trading up or down in terms of quality. And we do a survey of shopping guide companies. When you go to a supermarket and you get a little free flyer, this is definitely low-income shoppers. And on balance, it's okay. And there's some places that are just booming. I mean, it just sort of pins your ears back. It's so strong. But it is at the top. And so the economy is overall, and housing starts a little bit that way. The small builders are having a tough time, and the big national builders are doing much better because they can finance their own building and help the client buy a place. So it's very, but I'm not right now, I'm not stressed out that I'm missing it, which sometimes I am stressed out, but it definitely is, upstairs, downstairs.
Ed, you mentioned you were calling some people in Atlanta because of the debate.
Yeah.
So obviously, I want to ask you about if you think the Fed, I want to put this together, if you think the Fed is going to be on a marching cycle to the downside, how do they plan for 2025 to potentially cut rates when we can get more inflation depending on the policy of who's going to be in the White House?
Well, that's the, talk to Lisa. That's the issue. I have a strong view that the monetary tightening has been significant. We have rates, quantitative tightening, inverted yield curve, money supply slowed dramatically. So it's not just one thing, and that's my overarching view of what's happening. And so when I get a strong data point, I say, well, it's just an outlier. Doesn't fit with my view anyway. And when I get a soft data point, I think that's part of the trend. And so to get to your point, I really don't think inflation is going to pick back up. I think that it's slowing, it's going to keep slowing. See, like on the core PCE comes out tomorrow, it was 5.5, and it's going to be something like 2.5. So I'm, to a pretty good extent, I try and establish what the trend is. Sometimes you can, sometimes you can't. But it seems to me like the trend in inflation is slowing. It had some bumps early in the year, but on balance, it's still slowing. So I really don't think it's going to pick back up. But the Fed has to worry about that some.
But can you ignore politics?
Not my wheelhouse.
But the political economy is where a lot of policy is being made.
Yeah.
Tariffs, immigration, all of this is potentially going to affect the real economy.
Right. So, again, my North Star is that monetary tightening is the dominant force. And so, for example, life is, in economics is always more complicated than what I view it to be. So, for example, if they put on tariffs, then as you've reported here, frankly, the dollar goes up. And that negates, some of the inflationary impact. But, I don't like it at all. And that is an inflation risk. And we'll find out a little bit more tonight, where that goes. But, my team, who covers the topic we're discussing, does not believe that either candidate will have a knockout punch. I'm still going to watch it.
Can we pick up on your North Star, just to wrap it up? The tightness of monetary policy. How tight do you think monetary policy is right now, and how do you gauge that?
I'll let you know in a year. So, like I mentioned, the yield curve's been inverted. It's now been inverted for like 450 days. I mean, maybe Mike's counting, but who's counting? I mean, it's the most ever, and it's by a fair amount. We're just getting into where it's longer than average impact, but not a lot. I mean, I think the community's been too aggressive. But anyway, the yield curve is one. I'm probably older than anybody else you have on your show, but this is my 13th inversion. They've all, or 7th inversion. They've all led to a recession. And then you have the money supply, and I buy the Milton Friedman. It was 30%. Now it's like 2%, and that's a second aspect. And then they've done quantitative tightening, and the San Francisco Fed, actually come to think of it, where Mary Daly is, they haven't had a new estimate, but their latest estimate of 3 weeks ago had the proxy funds rate adjusted for QT at 6.25%. And 6.25%, I mean, inflation is not 6.25%. It maybe it's 5.25% or 4.25%, but it's not. And so, however I look at it, I think monetary tightening. But people are tired of this. I can tell my team, when you, I don't know if you have this thing, Mike or not, but sometimes you have a view and you just say it over and over again.
Yeah.
People go like,
Never. No, I'm kidding all the time.
Can I ask, are they pushing back? When you say your team, is that because they're of a certain age? Are they in their early 30s and they think that maybe that they say it's different this time and you say, no, I've seen this movie before? What does that interaction look like on the floor?
No, it's not that so much because, my team is the intergalactic investment community. I talk to people constantly, and not many, but I have a number of them that are older than I am and sharper. But I think about that as whether or not I'm over the hill.
Well, I don't think you are, Ed, and hopefully we don't wait another 12 months to do this. I'd like to do it again soon.
My pleasure.
Thank you, sir. Always appreciate your time. One of the very best, Ed Hyman of Evercore. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. It's Danny Berger. Hey, Danny.
Hey, John. Just a quick recap on the data we got moments ago. U.S. jobless claims came in shy of estimates at 233,000. The expectation was for 235,000. Continuing claims, though, rose to the highest level since the end of 2021, suggesting that it is taking unemployed people longer to find a job. We're going to get the next big read on the U.S. economy tomorrow with the core PCE deflator, the Fed's preferred inflation gauge. A quick check on shares Walgreens in the pre-market, falling nearly 19%. The company lowered its earnings outlook for the rest of the year, pointing to a worse than expected consumer environment. It also plans to close more stores in the U.S. According to the Journal, Walgreens is reviewing about a quarter of its stores that aren't profitable and could shut a, quote, meaningful percent of them in the next few years. Nike reports earnings after the closing bell today. The stock is down year to date on lagging sales, consumers who are spending less, and rising competition from the likes of Adidas, On, and Hoka. Analysts expect Nike sales grew at just 1% for the full year. That would be its worst results in more than 2 decades if you exclude the GFC in the first year of the pandemic. Nike also announced that it was cutting 2% of its workforce earlier this year, and those layoffs take effect tomorrow. And that's your Bloomberg Brief. John.
Danny, thank you. Appreciate this morning. Up next on the program, setting you up for the day ahead, including the mother of all debates. You're watching Bloomberg Surveillance.
The top names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got
intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself, actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
$40 minutes away from the opening bow with equity futures negative, just 0.1%. Here's your trading diary for the next 24 hours. Nike reporting earnings after the closing bow this afternoon. Tomorrow, we'll get the PCE deflator, personal income and spending numbers. UMich sentiment coming up as well, plus more Fed speak from Barkin, Bauman and Daly. That's all after tonight's CNN presidential debate. It's Biden and Trump facing off at 9 p.m. Eastern Time. Right down there in Atlanta, Georgia, is Bloomberg's David Gura. David joins us now for more. David, it is June 27th. Why are we doing this on June 27th?
The sitting president really wants to reinforce his message to the American people early. We'll see if we get a second debate. There is one on the schedule for September, but you point out, John, rightly, this is earlier than we've had in past cycles. Usually we get through the 2 political conventions and then we have the debates. That's one thing that's novel. Another is who's running this. You say it's the CNN presidential debate. We have a news network here calling most of the shots. Yes, the candidates have agreed to them, but in the last few cycles we've had this bipartisan presidential debate commission that's structured the debate to its liking, not had commercial breaks. This is something else entirely. So we'll see sort of how this works, this new crucible in which this debate's going to take place.
David, there's a ton of different novel provisions in this debate that we haven't seen. There's no live audience. The mics are muted. How are the camps preparing for all of these, different kind of setting than they're really used to?
Yeah, it's a stark contrast. Of course, you've had President Biden at Camp David for these last few days, going through his policy points, doing mock debates in a movie theater there, really getting ready in a kind of traditional way for this debate. And then you have former President Trump, who has, we gather, just talked to policy experts here and there and has been out on the campaign trail delivering speeches. That's in keeping with what he did the last couple of times he's run for president. He's kind of eschewed traditional debate prep and wanted to see how the audience responds to what he's saying. But that gets us to the point that you raised, Anne-Marie, which is there is going to be no audience for this debate. And that's going to be kind of strange as well. We know, certainly with former President Trump, he's somebody who feeds off of fulminating in front of an audience. He wants to hear sort of how the audience responds. Not having that in this hall, effectively just doing this in a TV studio, is going to be radically different from what he's experienced before.
When you are looking at this debate, David, what do you think the one key point each of them needs to drive home?
I think that they have to articulate a vision for the future. So with former President Trump, he's obviously very keen to talk about his past tenure, what's happened since. Grievance politics is something that we've heard a lot of. The same thing is true of President Biden. I mean, he's focused a lot on his accomplishments over the last 4 years, but I think that those who are watching this debate for the first time, however few and far between there are who are undecided about what's going to happen when they go to the polls in November, I think what they want to know is what the vision is for the future for the next 4 years, and it's incumbent on both of these candidates kind of spell that out in a very clear way that's going to be sort of an effective mechanism to sway those undecided voters.
Do you really believe that, David? I mean, honestly, do you think that that's the case? Because
skepticism from Lisa.
I mean, come on. I mean, so many people have come on this show and they've said, you know, it's going to be the tone. Do they sound energetic? Do they sound angry, or is it going to be jolly Trump? I mean, these are the things that people are looking for. Are you saying that actually you're going to be listening for policy?
Look, I will be, and I was cheered to hear Ed Hyman say that, you know, despite the fact that his team doesn't think there'll be a knockout punch, I think there's wide consensus on that. There is interest in sort of what's going to come out of this and what effect that might have. So, yes, I think that there will be discerning viewers and listeners who will be looking for that. We'll see if that breaks through. I think, to your point, Lisa, there is so much focus here on age and style and how they comport themselves and how they interact with each other. The moments when concrete policy breaks through, if it does at all, will be all the more important, because I think it's going to stand in such stark contrast to that.
David, looking forward to your coverage later on this evening. 9 p.m. Eastern Time, the debate's kicking off. Facing off the former president, Donald Trump, with the sitting president, Joe Biden.
Yeah, keep fighting the good fight there, David. I mean, I agree with him. I hope that is what happens. I hope that we do get some policy. I think the big takeaway for me today has just been basically everyone has a different view on A, who has the upper hand going into this debate, and B, what the implication is on the other side. There is little agreement. So you get the candidate right, fine. Do you get the policy right? That, I think, is going to be an interesting question as we sort of coalesce toward November.
The one place there is agreement, and Pew Research recently talked about this, Biden and Trump are the least liked pair of major party presidential candidates in at least 3 decades. Everyone is coming into this with a bias. If you look at the CBS YouGov polling, only 1 in 5 individuals that are tuning into this are actually tuning in to maybe see some of those policy differences because they still haven't decided who they're going to vote for. John, you made an excellent point. They're going to be talking to about 3 states. 10,000 people in about 3 states. That's where this election is going to be decided.
That's how thin the margins are, and the bar is so low for some people. They just want to see whether both these individuals can get through a debate without having a moment, a calamity that's going to really, really be a bad mark, black mark next to them for the rest of this campaign.
I would love to see the proportion of Wall Street investors who actually watch this debate and how they change their views accordingly. When you take a step back, we've talked a lot about how 2025 is just such a blank slate given all of the uncertainty around policy. How much do people actually trade and change their views around this? I'm actually very curious about that, aside from just, you know, who wore what better.
Special coverage coming up a little bit later. Bramo won't be watching. I will be. Many others will be too. Live on Bloomberg TV and Bloomberg Radio.
I think I'm the only one that's going to be watching.
Hang on a minute, guys. Just let me complete a sentence. Come on. 8 p.m. Eastern Time. Now carry on. Continue abusing me for the next 30 seconds.
I was just going to say, I think I'm the only one around this table that's going to watch, so.
I'll stay up. I'll probably fall asleep.
Yeah.
I'll stay up and watch a little bit of it.
I mean, I would like the viewer to weigh in. Do you want to coherent me tomorrow, or do you want me to watch the debate? I'll watch the clips afterwards.
I know you came back from your Euro holiday just for this debate.
I don't want to be in Italy anymore. This is where I want to be, right here, right now. In front of a TV screen, watching that debate a little bit later. Reaction tomorrow, PIMCO's Libby Cantrell, former World Bank President David Malpass, Mohammed Al-Aaron of Queen's College, Cambridge, and Apollo's Torsten Slok. An absolutely stacked program for you to get you to the weekend. Live from New York City, this is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities head-on. It's very important to have a diverse team because we have a very diverse landscape of customers.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So the effective Fed fund rate unchanged at 5.33% for June 26th.
And sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
This is Bloomberg.
From New York City for our viewers worldwide, I'm Matt Miller. Markets today wondering if AI really is going to be a revolution or if it's going to happen later on. The countdown to the open starts right now. Coming up, Micron results throwing some cold water on bullish AI bets. Hedge funds apparently aggressively cut back on tech. This according to the prime brokerage at Goldman Sachs. And debate night in Atlanta. President Biden and Donald Trump face off tonight to fight for America's vote. We begin, though, with the big issue, labor market data, raising hopes that the Fed may be able to cut rates this year.
We have a view that once they start, this is a march. They don't take a step. Once they start, they are telling you and me that they're going to have a program of rate cuts. So that's why they have a little more resistance to starting up.
Joining us now is Carol Schleif, BMO Family Office Chief Investment Officer. Carol, great to have you on the program. So much to talk about today. Let's start, though, with the Fed.
According to the information, OpenAI is selling more of its AI models than Microsoft is.
Concerned that the Fed may have to keep rates higher for longer in a divergence away from what's happening at the ECB and the BOE. Today, there's, again, a little more optimism, although that's based on a weaker labor market. What's your view?
Well, we definitely think the Fed should err on the side of they've already kept them higher for a lot longer than people expected, and let's start looking at some of that. You're starting to see some signs of weakness at the fringes in the labor market. It's still very healthy, but it's in a lot better balance. And we'd love to see the Fed go ahead and initiate that first cut. We don't necessarily think that then they have to cut at every single meeting after that, but they don't want to get behind the curve.
By the way, we've seen some amazingly, I guess, thin breadth, right? I mean, on Wednesday, on Tuesday, only 113 stocks gained, and that pushed the S&P to rise. Yesterday, I think it was 140 and change, and we had a gain in the S&P. Is the broadening out of, earnings and stock gains dependent on a Fed cut?
It's not dependent on a Fed cut. We actually think that broadening out we'll see the potential for that as we get earnings. We're a couple weeks away from having another earnings season. People forget how much easier the comparisons to last year are, so you should have some really good earnings coming through, and that hopefully will broaden out that rally. But for sustainability and durability, you really do need to see more participants.
All right, let's focus in on the economy right now. Bloomberg's Michael McKee standing by, Chief Economics and Policy Correspondent. We've had some data crossing in the last, let's say, 35 minutes. Mike, what did we see in terms of GDP, in terms of personal consumption? We're all focused on the consumer and the growth it provides.
Well, you mentioned the labor market. Let's start with that, because the jobless claims numbers out today don't really give the Fed a whole lot of information. They didn't change much. 233,000 down from 239,000. That leaves us in a range that we've been in for like 3-4 weeks now. The 4-week moving average, 236,000. Is that bad? Well, a year ago it was 253,000. So kind of hard to know. Durable goods orders came in a little weak. A lot of that was in equipment spending. Capital goods orders terrible. But this is a very volatile series, so we shall see. GDP revised up 1.4%, and it's kind of interesting because this durable goods orders is the opposite of GDP, in the sense that GDP consumer spending was down in GDP, but business spending was up.
Still not as good, by the way. The GDP revision still not back to the first take, right? Because
still not back to the first take. However, Atlanta Fed GDP now still has second quarter GDP rising at a fairly high rate. Jobless claims, as I mentioned, not particularly giving us a whole lot of information. Now, I'll pull it back to what you were just asking about in terms of earnings. Is this a situation where companies are afraid of recession, so they're going to start letting people go? Or are we just trimming around the edges so that as inflation comes down and the economy slows a little bit, margins can stay high? That's one of the questions the Fed is going to be asking. And we're not going to find out a whole lot until we get further data, and there is a lot of data coming up. We have the PCE inflation numbers tomorrow, of course, which are really important. But if you thought you could have July off, forget about it. On Friday of next week, we get the jobs report. Jay Powell does Humphrey Hawkins' testimony on Tuesday, July 9th, and Wednesday, July 10th. The CPI comes out on July 11th. You're going to be around that week. And then on Monday, July 15th, Jay Powell goes to the Economic Club of Washington. So there is an awful lot of data ahead. And even if other Fed officials speak between now and then, it's the data and the chairman who are going to make the difference, I'm sure.
Yeah, absolutely paying attention to PCE and non-farm payrolls, but I'm glad someone else still calls it Humphrey Hawkins. I feel like I'm in good company.
We're old enough.
Mike
we can
McKee,
do that.
Thanks very much for that. Let's get back to Carol Schleif here from BMO. It's a focus on AI that I really wanted to lead with, although the Fed seems to be the other big factor in the market. So that question out of the way, what do you think about? Micron came out with a forecast that apparently disappointed, although it seems like it was pretty much in line with the average. What's your take?
It's really important to remember that artificial intelligence has been around for a lot longer than ChatGPT has, that companies have been building their use cases. It takes a while to implement new technologies, so we're spending heavily, and there's this potential that it's harder on margins in the beginning until everybody figures out how to use it, how they're going to deploy it throughout. But we definitely think it's a secular trend that has legs, and there's many different knock-on effects. It's going to impact basically every industry. It's arguably one of the biggest secular trends, and a confluence between that and the infrastructure build-out to support it and other technologies. It's one of the biggest secular trends that we've seen, arguably, since we built out the interstates back in the 1950s and 60s and completely changed the composition of how we do business, because it will touch everything from healthcare to consumer services, business services, and the way we do it. But it takes a while for people to figure out how they're going to use it and how it's going to impact margins and employment and everything.
But Carol,
else.
in terms of investing right now, Micron came out last night with a fiscal fourth quarter sales forecast between $7.4 and $7.8 billion. The average analyst estimate was for 7.58, so a little bit less than the middle of that range, right? They came out with an EPS estimate of 108, and analysts were looking for 102. Do you have to knock the cover off the ball right now if you're an artificial intelligence related company?
It does seem like that's where we're at, that the expectations have been pushed so far, because they have been, in the last few quarters, they have been knocking the cover off the ball. And so that expectation, when you just do okay or come in line, looks like not a beat.
In terms of the consumer, Walgreens was out with a disappointing consumer environment forecast or characterization, and the shares in the pre-market are down like almost a fifth, like absolutely decimated, more than. What's your view on the consumer? Because now I think everyone's pretty sure excess savings have been worked off. You know, consumer debt is definitely at an all-time high, and they continue to add, like everything they buy, certainly in the lower quintiles, is on plastic or borrowed.
Well, it's not absolutely everything, but as long as the consumer is employed, they should do okay. But it's definitely the consumer themselves are not a monolith. As we've seen, there's an increasing fraying of those at the top still doing okay, and those in the middle and elsewhere really seeing the pressure. They're being very picky how they're spending. Some are still hopping planes to go see Taylor Swift overseas.
Good point.
You know, so there's some of the services spending that's still really strong. You've got movie releases that were out, especially family-oriented movie releases that are breaking box office records. So stuff's still happening, but they're being very discerning about how they're doing it, and they're definitely pushing back on those consumer companies saying, don't be handing me any more price increases.
So it's that nuance that I think is important, right? I tend to think in black and white binary, but you know, when I see higher-end consumers going to Walmart rather than, you know, maybe upscale
and
to
buying
Chico's.
house brands.
Exactly. They've already put in their pools, so they don't need to put in a pool anymore. They're not buying Winnebago RVs. The pandemic is definitely over, but you're still seeing them spend. I mean, luxury brands are still good investments.
Well, as long as you're seeing the labor market in balance and we haven't got layoffs, people are concerned. They're not necessarily, you know, the quits rate isn't as high as it was a year or two ago, and so people are just saying, I'm going to stay in my sphere and stay in my zone and try to spend a little less than I earn.
One of the first Wall Street adages, one of the first Wall Street cliches I learned when I was an intern at Tucker Anthony 25 years ago: buy the rumor, sell the news. We're just around the corner from earnings season. Do you buy the rumor now? June is typically a bad month. July is typically a good month for stocks. Do you load up on risk a little bit heading into earnings season?
Not well. We tend to think longer term than that, and we wouldn't necessarily write off this earnings season. We actually think, similar to the last couple, that it'll come in a little stronger than expectations are going in. But it's going to be very discerning. Investors will be as discerning as consumers are, and they're going to do what you've seen. You're going to have to beat by a lot. You're going to have to do shareholder-oriented friendly things like buybacks and dividend increases and stock splits and things like that. But they're going to take it on a case-by-case basis. So one could make the argument that it's a great market for active managers.
It's interesting because the last 15 years have not been, right?
Exactly.
I mean,
exactly.
All you had to do for the last decade and a half was buy an index fund, and you beat literally everyone else except for, I think, one, you know, PIMCO, asset allocation fund. That starts now, you think?
Well, it's definitely, I mean, one of the early adages I had in my career was summer doldrums, and I haven't seen those for a long time either. As we were referencing earlier, all the data that's coming in earnings that's coming, you're definitely going to want to be on your toes, and we definitely think people should stay invested.
Nowhere except for the VIX, right? I thought it was interesting. I was looking at that Goldman Sachs story today. Their prime brokerage says hedge funds are selling tech stocks aggressively. You know, we look back and see the most tech selling from hedge funds since the data started. We started collecting the data in 2017. NVIDIA obviously has been, it wiped off $430 billion in market cap in like 3 trading sessions. It's insane that the VIX is still down below 12 and 13. Is that, where's that complacency coming from?
I think a piece of it is you've got a lot of different players in there trying to position themselves. You've also got the end of the quarter on tomorrow. So
window
you've
dressing.
got, so window dressing going on and hoping that you get a pullback so you can turn around and reestablish those positions going into there. So the complacency, though, in watching the VIX, you know, I've taught people over the years to watch VIX, but it really has had a lot less applicability, if you will, in recent days. And it's only at those really hyper turning points like March of 2020 or the Silicon Valley bank blow up last spring, where all of a sudden everyone pays attention to VIX, and then minds and focuses elsewhere.
Right, it's only important in times of trouble, not when the S&P is just steadily marching higher
Exactly.
and higher and
So it's not giving us much guidance. When the markets are trending, it's more important to keep focused on fundamentals and what's undergirding that uptrend and if it's sustainable.
All right, some good intel there, Carol. Thank you so much for joining us. I hope I can have you back. Carol Schleif there from BMO Family Office. Joining us now with a look at some of the individual stocks. Moving ahead of the opening bell, here's Abigail Doolittle. Abby?
Well, the big decliner of the day, of course, or the one that is getting a lot of notice. Let's take a look at the shares of Micron, because at this point they are down. They're off their lows, actually, down less than 5%. And this, of course, after they put up a solid beat of the quarter that was, but relative to the fiscal fourth quarter, the guide just a little bit disappointing. But to the point you were making earlier, Matt, the midpoint is basically being met. But because there are some analysts estimating $8 billion of revenue, and they're looking at 7.4 to a range of $7.8 billion, some seeing that as a miss, especially for a stock up 67% year to date. Now, we do have some other big laggards on the day, starting off with the shares of International Paper. They are down after Suzano, the Brazilian company, is walking away from a possible, what had been a potential buy of International Paper, saying they reached their maximum buy price. They're not going any higher. International Paper, on the other hand, is saying they are still on track to buy DS Smith. Those shares down sharply. Also down significantly, Levi Strauss down 16.3%. Into today, up 40% year to date. They missed the revenue estimate just slightly. They're also leaving the fiscal year guide untouched, and apparently wholesale a little bit weak. Net investors not liking that on a stock up so much. The one that's really down at this point, though, Walgreens down 21%. Yeah, really pretty stunning there. An EPS miss of 7.4%. Revenues did beat, but they cut the outlook. Company pointing to consumer challenges. We'll be speaking more on that one on the open, Matt.
Yeah. Fascinating and massive drop, Abigail. I mean, losing a fifth of its value, at least in the pre-market. We'll see how it trades when the market's open in just 15 more minutes. Abigail Doolittle will be back with us later on the program. Coming up, Biden and Trump go head to head.
During the previous administration, my predecessor made promises which he broke more than kept.
Now under crooked Joe Biden, the world is in flames.
My predecessor failed the most basic presidential duty.
I just want to debate this guy.
We go live to Atlanta on what to expect from tonight's debate next. This is Bloomberg.
In tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
the previous administration, my predecessor made promises which he broke more than kept.
Now under crooked Joe Biden, the worst president in the history of our country, the world is in flames.
President, my predecessor, failed the most basic presidential duty.
He's not getting the job done for America. He is incompetent, ladies and gentlemen.
I'm a grown man running against a 6-year-old.
I just want to debate this guy.
After arguably years of finger-pointing between the two candidates, President Biden and former President Trump are finally facing off, we think, as of now, in the flesh in the first debate of the 2024 election. Joining us now on the ground in Atlanta is Bloomberg's David Gura, host of the Big Take podcast. David, I guess the first question is, will Donald Trump actually show up and do this? And then we'll talk about what the debate topics are going to be.
The former president is in town, so it seems likely he is going to be on stage at that TV studio tonight. You know, he has in recent weeks, of course, cast a lot of doubt on the way that this debate is going to be structured, what the rules are going to be. I will note, Matt, he and his campaign agreed to all of the rules that have been laid out by CNN and agreed to by both campaigns. But he's in town. Yes, I think it's likely that he will be on stage with Joe Biden tonight. Yeah, I mean, just last night in a barber shop, apparently, he was saying he hopes CNN gets bad ratings, which I don't understand because he's one of the stars of the program. Are they going to talk about substantive policy? Are there going to be serious discussions about taxes, about spending, immigration, abortion? I think that we're going to see a valiant effort on the part of these two moderators, on Jake Tapper and Dana Bash's part, to try to get the candidates to address some of these issues. But it's hard to see through the questions about style to get to that substance. I think that's the main issue here. There's been a lot of talk about the age of these two candidates, how they're going to comport themselves, how they're going to interact when, as you say, they're in the flesh with one another on this stage. So I think that, by and large, is what most people are going to be watching this debate for. And then the degree to which we get some glimpse or clearer sense of what the different policy prescriptions are, that's some value add, but I don't think that it's going to be sort of what's driving viewership, certainly tonight when this debate takes place, Matt. There have been times, for example, in the State of the Union speech, where President Biden has looked vigorous and strong. More often, however, he looks frail and has difficulty talking at a volume that everyone can hear. What does he have to do tonight to appeal to voters? It's funny, the bar has been set low by the Trump campaign, and I think that that's a thing that the Biden campaign has really embraced. You mentioned that State of the Union address. It was a slam dunk, a home run, whatever sports metaphor you want to use for the sitting president, in that he did that with aplomb. I think it's interesting that the Trump campaign has sort of reevaluated how low they've placed that bar in recent days, I think because they realize he has been able to clear it in the past and is likely to do so. But this is novel territory here. You have a septuagenarian, a guy who's 78, running against a guy who's 81. These are both men of some advanced age. We'll see how sort of salient that issue of age is during the course of this debate, how much it comes up literally or how much it's just something that's read into. But it certainly is one of the backdrops to the conversation, the debate that's going to happen tonight. You know, President Trump has bragged that he could shoot somebody on Fifth Avenue and, his supporters would still vote for him. We've, in a sense, seen that, right? After he was convicted of multiple felonies, he raised more money than ever before. Does he have to behave tonight? Does it matter? We have all become used to the way that he does behave as a politician, and I think that that's something that he's really going to exploit tonight. He's continued to exploit over the course of this campaign. You look at how these two candidates have prepped for this debate. Joe Biden has hunkered down at Camp David and done it in a very traditional manner. He's looked at briefing books. He's done mock debates. Donald Trump hasn't done that. He's sort of flouted that. So I think we're going to see a kind of continuation of that. There is this facet, this rule that the microphones can be muted by the moderators, and when you look back at the last two debates these candidates have had, there were all of these verbal interjections that took place. They're really kind of the signal moments, the things that we remember from those debates. Either they'll be inaudible tonight or difficult to hear if one microphone is silenced, but it's certainly going to change kind of the tenor of it. That'll be fascinating. Also, I'm interested to know who Donald Trump will choose as his running mate. I thought we might get that announcement before the debate. I suppose there's still time, right? About 10 hours, I think. CNN has got a countdown clock running already. Countdown clock, yes. they've teased this, and there will be a viewing party tonight that Kelly Loeffler, who is the former senator from Georgia, is hosting at her home in Georgia. And those 4 kind of front runners or finalists for that VP nomination are all going to be there. They're going to act as surrogates right after the debate, and then they'll be at that viewing party. So it is something that he has teased in recent days, that announcement could be coming sooner rather than later. I guess that's another thing that we'll have to wait and see if anything materializes on that front tonight as well, Matt.
David, very much looking forward to it. I'll be tuning in for your coverage tonight live out of Atlanta. You, too, our dear viewer, can tune in to Bloomberg Television. You can listen to Bloomberg Radio for all the build-up and the post-game analysis, as well as simulcast coverage of the CNN presidential debate tonight at 8 p.m. Eastern. Coming up, they're counting down to that. We're counting down to the open. Just about 7 minutes to go. We're going to give you the morning calls from the big banks. And then later, Lee Farage, State Street Global Markets head of multi-asset strategy, joins us to tell us why he's looking for fresh all-time highs in the S&P and the NASDAQ before the end of summer. This is Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Time now for our morning calls. Look at some of the analyst recommendations on Wall Street this morning. And first up is CIBC, raising BlackBerry to a sector outperform. That's right, that company still exists. It's a Canadian software security company now reporting first quarter revenues that beat estimates. Next up, KBW is raising its recommendation on Bank of New York Mellon to an outperform. KBW says the bank has firm control on its expenses and expects more profitability relative to peers. And then finally, JP Morgan is cutting its rating on U.S. Bancorp to a neutral in the wake of the annual Fed stress tests. The analyst highlights the bank had among the highest loss rates for credit cards under the test scenario. So we'll see how that goes when we get the results. Coming up, Lee Farage, State Street Global Markets head of multi-asset strategy, on why he thinks areas of inflation could actually start to move higher.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
This is the countdown to the open. I'm Matt Miller. Moments away from the start of trading, investors are going to want to gauge whether the AI revolution starts now.
So we're looking now to the market on open imbalance. S&P 500, 65 million to the buy side. NASDAQ 100, 60 million to the buy side. Dow 30, 5 million to the buy side. Mag 7, 35 million to the buy side.
On the NASDAQ, I guess cashing in on the kids' appetite for manga or anime, not quite sure what it is. And then Grindr ringing the bell on the New York Stock Exchange. We know what they do. Let's check out some of the other asset classes that we're watching. Euro dollar right now, 107. So actually not taking such a huge hit from the snap election call that Macron gave us a couple of weeks ago. You know, we've been down to 106. We were up at 108, and we're kind of hanging out right there in the middle. The 10-year at 429, so yields that were up yesterday coming down a little bit today, and crude that was down yesterday coming back up a little bit today at 81.62. One of the stocks that we're watching closely at the open is Walgreens, down hard after reporting its latest results this morning. Bloomberg's Abigail Doolittle joins us to talk about what's going on with Walgreens Boots Alliance.
Well, Matt, relative to the stock, down more than 20%, heading to its worst day ever as a publicly traded company, going all the way back to 1980. That is the degree of selling pressure, and that stands out only because the stock is down 85% from its 2015 peak. So investors clearly not happy. Now, what happened was they missed earnings by about 7.4%. It is the guide, though. The guide disappointing for a second quarter in a row. They cut it below what was expected, and this comes after last year's announced $1 billion cost cuts, working to boost free cash flow. Clearly, it hasn't taken a hold yet, the turnaround plan, so I think that that's a big reason why shares are selling off so much. Now, they are talking about making more organizational changes, including store closures. It's not clear what the others are. They're not talking about how many stores. They are saying that those store closures will happen over the next 3 years. It's interesting because on the conference call for analysts and investors, the CEO, Wentworth, committed to investing in Boots prior to now. They had, of course, been talking about the possibility of spinning out that UK piece in an IPO or exiting the business in some other way. But now, again, the CEO committing to working more with that Boots. They're trying to move away, in addition, from the retail space. Their Village MD business outperformed. But the biggest thing, in some ways, on top of all of this, they talked about a worse quote unquote worse than expected consumer. So tough going here for Walgreens Boots Alliance, down 19%, worst day ever, going back more than 30 years.
The consumer, Abigail, really in focus. We have a story out on the Bloomberg today pointing out that the $2 trillion in excess savings built up during the pandemic has been completely wiped out at this point, and credit card debt continues to go higher as interest rates stay high.
Yeah, that's not a good formula at all for people who have gone through that savings and are working through credit now in terms of excess money for whether the other day we were talking about pools and Winnebagos. That would be for the high-end consumer. But for the average American, if we don't have that spending power going into the economy, that's something to think about. About 2/3 of the economy, of course, is the consumer. So this data point here and that story on the terminal in terms of not having that savings and really having to move toward credit, something that I personally try to stay away from, but not always successfully, may again not be a good formula going forward.
Sometimes you got to find an extra couple $1,000s for those Taylor Swift tickets, right? And I guess they're going on plastic. Abigail, thanks very much for that. Levi's shares sink to a record, I should say, at the open as well. Bloomberg's Natalia Knijevic joins us for more. Did I get that right? They sink at the open to. It's the biggest drop that we've seen in Levi's.
They were down on pre-market by 18%. Now they're down by 15%. It's really interesting because sales missed just slightly. At the same time, EPS came above expectations. Maybe expectations for this earnings report were too high. The stock is up by 40% year to date. Last time when the company reported earnings, they increased guidance for EPS. This time around, they didn't change guidance, and wholesale business is down globally by 4%. And it represents about 40% of companies' revenue. Citi analysts are saying that this department, this type of business revenue segment is holding the company back. At the same time, direct-to-consumer sales are growing really quickly globally. They are up about 11%. What's really interesting is that Levi's products, only about 40% or less are for women, but this category is growing much faster than products for men. So women's department increased by 20% during the past quarter, but sales for men's products are up just by mid-single digits. And Matt, this is really important. Denim is a huge fashion trend for 2024, and not just jeans, it's top to bottom. And Levi's is saying that sales of those outfits...
Oh, the Jay Leno thing.
Exactly.
Denim shirt. And, you know, when I was a kid, Natalia, Levi's was kind of the only thing out there. I mean, if you're going to try and save money, maybe you would go with Lee or Wranglers if you're kind of on the farm. But for most people, it was 501s. And now there's so many other choices in that segment. It's so crowded.
Exactly. But I have to say, when I came to the U.S., the first purchase I've made was a pair of Levi's jeans.
Good for you. That's very American. Got some Levi's jeans, went to a Yankees game. Had some apple pie.
No? That's my next goal.
Just the jeans. Okay, we'll take you to the game. Natalia Knijevic, thank you so much for that. Micron, really, I think the big earnings story, failing to live up to lofty expectations of at least some analysts, definitely of the AI big bulls in their latest report. Bloomberg's Isabel Lee joins us for more on Micron. Isabel?
Hey, Matt, it's really all about the lofty expectations. Day in and day out, investors are looking for that big payout. And Micron is one of those, the latest, that investors aren't really happy with. We have shares falling around 6%. The company reported fourth quarter sales to be around $7.4 billion to $7.8 billion. So this is well below analyst estimates. In fact, some analysts were expecting $8 billion. We have profits, though, slightly higher than expected. It's $1.08 a share versus the $1.02 estimate. So the thing is, yes, Micron is getting a boost from the whole AI mania we're seeing, but sales are still sluggish, especially when it comes to PC and their smartphones. So those are only beginning to see the recovery from last year's historic slump. So lots of eyes are on Micron. It is, after all, the largest U.S. maker of computer chips. But still, it has been one of the biggest beneficiaries of AI. It's up around 70% year to date. But this is just a fresh reminder, Matt, of how vulnerable this AI rally is. In fact, some are calling it to be a bubble because this comes just days after NVIDIA wiped out around $500 billion in market value. But we do have the CEO reiterating that 2024 will see a recovery and 2025 will see record sales. So you see that optimism still is there, Matt.
Yeah, a very interesting roller coaster ride to follow indeed. Isabel, thanks very much. Bloomberg's Isabel Lee talking to us about Micron and the AI craze that's given up the ghost a little bit in the past few trading sessions. Will that continue today? Joining us to talk about it is Lee Farage, State Street Global Markets Head of Multi-Asset Strategy. And Lee, of course, we're going to talk about a lot of other stuff as well, not just AI. But you can't ignore what some have called the most important stock in the world. That's NVIDIA. The others that have gained on the AI craze, hardware and software, data centers, energy producers. What do you think about all of this? Is it here to stay, or is it like the dot-com bubble where we're using the internet for sure, but the stocks are just overvalued and need to retrace some of their gains?
The difference between now and the dot-com bubble is the companies now, they're making money. If you think back to the dot-com era, those companies weren't making money. They didn't make money for years. The ones that survived are now very successful and very big companies. The ones we're talking about now with AI, they're making money. They're printing money every day. So there is a big difference. Look, valuations are stretched. We know that. But it's sort of, we don't know how big this thing can be. And until we do, then I think these stocks are going to find support. Whenever you get any dips, you're going to see buyers come in because the longer-term trend is still in favor of the AI revolution.
It's a good point. A lot of people have been saying, investors were waiting for an entry, and if you loft off $430 billion from NVIDIA, that sure looks like one to me. Although we heard from Goldman Sachs that hedge funds were selling tech aggressively, retail investors were piling into the ETFs. Is it a little bit scary when the smart money is selling?
Depends which you define as the smart money.
I know.
It is, but I mean, I think, again, the valuation argument has become very strong for them in terms of, this is overvalued. They've had a very good run. But as I say, there are still some very, very successful investors that are still buying these stocks, and I think will continue to buy. So I'm not that worried about it. Even if the stock market generally comes down, I think you're going to see these AI-related stocks still outperform. Demand for their product is pretty inelastic, even in an economic slowdown. Everyone wants to be in this market. So, they've got huge cash piles, so higher for longer on rates. They're going to make money on their interest. So, they're insulated from a large degree from the economy. So I think they're going to continue to outperform.
I was listening yesterday to Masters in Business, great podcast that Barry Ritholtz does. And last year he was talking to Tom Wagner about the early 2000s when telecoms were laying down fiber for like thousands of dollars on the mile. And eventually they sold that for pennies on the dollar, right? But thank goodness that capacity was there because the internet needed it. Is that what we're seeing now, you think, in memory or some of the other picks and shovels that are needed for AI?
In terms of putting the groundwork in for what we need? Yes. Yeah. I mean, I think that's exactly what we're seeing.
Paying way too much to put the groundwork in. Are investors, a little bit exuberant here?
There will be pockets of exuberance. There will be companies that don't survive. There will be those that don't turn a profit to the degree that people expect. But then, you will have companies that the Amazons of this world and others that are hugely successful over the longer term. And it's a question, you're not going to pick all the winners.
Yep.
But you want to have a bunch of them so that if you get the winners, they're going to really offset anything you lose on, quite honestly.
Good point. We were talking about you coming on earlier and saying you think we're going to hit new records in the stock market, but you also think that inflation has some upside risk. Something we heard from Mickey Bowman as well a couple times in the past few days. How do you square that circle? I mean, if inflation has upside risk, doesn't that mean less likelihood of cuts and, more pain for the stock market?
It's a timing thing. Yeah. My call for fresh all-time highs is in the next month or two. So July and August, I think we're going to have a very quiet summer. We'll be interspersed with volatility around the French election or anything political here. But overall, what the Fed has done, they've told us they're not doing anything until September, right? So the July meeting is a dead rubber now. That's 3 months away. We have 3 rounds of data before then. The market's not going to be spooked by anything over the next month or so, I don't think. We have ample liquidity. We have investors who want to buy. That's going to mean, the drift higher in the market that we've seen for so long, there's no reason for it to come to an end during the course of July and probably August.
You're the second person on this program to call summer doldrums.
Yes.
And, I look at there's a function on the Bloomberg SEAG, which is a seasonality chart, and I look at that for the S&P 500, and I see going over the last 10 years, the last 20 years, July is a great month for stocks. Does that continue?
This month, I think it does. Yeah, as I say, there's nothing to upset the positive mood around the Fed. We're not going to change our view on the Fed before we get to September. Really, the market's going to sit between one cut, maybe two. You're seeing very narrow ranges on 2-year yields. You're seeing very narrow ranges on 10 years, and that sort of stability in the rates market is great for stocks. So yeah, I do think we're going to have a good July. Maybe not as good as some of the ones in the past, but I think
it's been. I'm looking at the screen now.
Yeah.
Last year we were up 3.1% in July. In 2022, 9.1%. The year before that, 2.3%. The year before that, 5.5%. We haven't had a down month in July since 2014.
Yeah. I mean, they're thin markets. There's less volume that goes through. But 3% this July, easily achievable. Yeah, I don't think we'll get 9, but I think 3% is easily achievable, which takes us back to new all-time highs.
What do you think about the divergence that, yesterday the dollar hit a fresh high for 2024, and the talk is of, if the Fed doesn't cut rates until, as you said, September, and a lot of people are saying even later.
I don't think they'll cut in September. I just think that we won't see anything in terms of changes in view on the Fed until the September meeting.
When do you think they're going to cut?
I'm not convinced they are this year, quite honestly, because as you mentioned before, I am of the opinion that there are upside risks to inflation in the second half of this year. I think the labour market is still tight. I know you're seeing some weakness around the edges, but look, we have a labour force problem. We have a shortage of workers. It's demographics. Baby boomers are retiring. We're not replenishing the workforce to the greater degree. So that's why we have a shortage of workers. That keeps wage inflation high. Housing market, we have an inventory problem. 50% of mortgages in the US are 3% or less 30-year fixed. The average outstanding mortgage rate is 4%. No one's moving. No. You're not going to move and get a 7.5%, 8% mortgage. Exactly. So there's no inventory, and that's supporting house prices. So this idea that we're going to see the shelter component of CPI come down in the second half of the year, I think the risk is that actually starts to move back up. If you look at it, lags house prices by about 12 months, and house prices bottomed last May and have been moving up since then. So those factors, to me, the risk is that pushes inflation higher, not lower.
And keeps the Fed standing pat. And do you see that divergence then? The ECB wants to cut. The BOE wants to cut. Do you see that divergence really offering opportunity?
I do, because if you look at the market, you look at the rates market, 1-year pricing, we're basically pricing the same amount of cuts for the Fed as we are the ECB, the Bank of Canada, slightly less for the Bank of England. So the market's got about 4 cuts in over the next year for all of them. That doesn't make any sense to me. When you look at US growth, close to 3%, you look at Europe, you look at the UK, close to 0, I can see why they're cutting. They've still got high wage inflation. They've got a demographic problem as well, but they're growing below trend. So that, by definition, creates slack in the economy. They can look ahead a couple of years and say, that's going to raise the unemployment rate, that's going to bring down inflation. The Fed isn't there yet. We're still growing above trend. And the problem with that is that means you can't cut rates. And confidently, and they keep saying being confident, that inflation will come lower to their 2% target.
Absolutely. Great conversation, Lee. Thanks so much for coming. Really appreciate it. Lee Farage there from State Street. Coming up, Micron fails to live up to some of the loftier expectations.
I was expecting things like slightly below consensus in the near term, but I expect next year to look much better than what most analysts forecast.
We'll take a closer look at the chip maker next. This is Bloomberg.
I think I was around so many powerful people my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios, and any given day it would be the head of a studio, and just often paid attention without really realizing I was paying attention. I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it because there's so many times like brought up in my mind one of the conversations that I had learned from. So I think I had a very lucky and blessed existence in that way.
Today's CFOs are reshaping the C-suite. Bloomberg Chief Future Officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. Future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television. Bloomberg world with unmatched reach and resources from more than 120 countries. The moment news breaks, 24 hours a day. Bloomberg. Contact changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloom Wealth, I'm going to take you to meet the greatest investors in the world, the people I would like to have managing my money.
Private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
I was expecting things like slightly below consensus in the near term. I expect next year to look much better than what analysts forecast for my fund. So it's just a game of being patient, one more quarters.
Micron is selling off this morning after failing to meet Wall Street's higher expectations. Some investors were expecting a bigger payoff from the AI mania that has swept the market. But it's fair to say that Micron actually met the average estimates. They forecast sales between $7.4 and $7.8 billion, and the average estimate was for $7.5. They showed earnings
in 10 minutes time now at the top of the hour. See the release of the US pending home sales change.
Why are they off 5%? Let's ask Bloomberg Technology co-host Ed Lowe. He is in San Francisco.
US pending home sales change month over month, forecast 0.5% on the prior -7.7%, and the pending homes index, the prior was 72.3.
It's really interesting because in many ways the fate of NVIDIA and ramping up the sort of deployment of new products directly correlates to Micron. Because if you think about a server, you have trays of components, and in one tray you have the GPU accelerator from NVIDIA, in the first instance the H200, and around that H200 you have 8 of Micron's HBM3E high bandwidth memory chips. And so when you think about the big picture of what's just happened, the investors are kind of looking at the numbers and saying, we thought it would be more quickly. In their defense, the CEO did actually give us more data than I've seen him ever give before in how that product is ramping up.
Former Bank of England monetary policy member says I see the Bank of England cash rate at 3.5% by the end of 2025.
Here at Bloomberg about 5 years ago as a tech reporter, a print reporter, covering Micron as a maker of DRAM, which is like a commoditized version of memory. You told me recently in the new, which is high bandwidth memory. Talk to us about the products.
So high bandwidth memory is basically DRAM in multi-layered form. Think of it as a cube. If DRAM, which is about 3 gigabytes of memory, is a thin square, you stack in the first instance 8 of them on top of each other. 8 times 3 24, you get 24 gigabytes of memory. And high bandwidth memory is really important in the AI context, because when you're training a large language model, how quickly you can access a pool of data directly correlates to how good that large language model is. In other words, the latency of calling on the data and getting a result in the training and inference side impacts performance. The design of stacking DRAM one on top of the other just makes it very quick, reduces latency, and you can get data in higher volumes instantaneously. And it's a competitive market. Micron's done really well to get in with NVIDIA and sort of partner themselves in the H200 product. SK Hynix is doing really well in that field too. In fact, the laggard is probably Samsung, but all three of them are gunning for this market, and whoever comes out on top, it's not as commoditized or cyclical as historically RAM is in the context of mobile phones or personal computers, things like that.
All right, Ed, I'm going to keep watching your show so I don't have to research this myself. Bloomberg technology co-host Ed Ludlow, he co-anchors that show with Caroline Hyde, starts at 11 a.m., a show that you don't want to miss if you care about participating in the revolution. Now, for some of the sector price action that we're watching this morning, let's get to Bloomberg's Abigail Doolittle. Abby, what do you see?
Another really interesting sector today from the standpoint that we have the S&P 500 down fractionally at this point, probably trying to higher, but most sectors are lower. Financials down 0.4%, even as all the big banks pass the Fed stress test, materials, healthcare, but small losses to the upside, though. Communication services, of course, that one of those mega cap tech sectors, energy and real estate. If we take a look at the banks after those stress tests over the last couple of days, we are seeing a bit of a decline here, down about 2%. That KBW Bank Index down 2% over the last 3 days, Matt.
All right, Abigail Doolittle, thanks very much. Coming up, we're going to give you market-moving events that you need to be watching this week. You can bet inflation is one of those. That's next in our trading diary. This is Bloomberg.
At 10 a.m. Eastern Time, get U.S. pending home sales change month over month. Forecast 0.5% on the prior, minus 7.7%. And U.S. pending homes index, prior 72.3.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
This is Bloomberg.
Here's what you need to be watching this week. We're going to get pending home sales at the top of the hour, so type EcoGo for that. Then a Treasury auction on $44 billion of 7-year notes this afternoon, plus Nike reporting earnings after the bell. Tonight brings the first debate between President Joe Biden and former President Donald Trump. And then we'll round out this week with the all-important inflation reading. The Fed's preferred gauge, PCE, comes out tomorrow. It's one that you don't want to miss. This has been the Countdown to the Open. I'm Matt Miller. This is Bloomberg.
biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? It's just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
1 minute remaining to get the U.S. pending home sales change month to month.
DOJ or other authorities.
Could face bigger challenges next.
Fed was going to keep rain World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
All right,
10
we are
seconds.
30 minutes into the U.S. trading day on this Thursday, June 27th. Here are the top stories we're following. Sky-high AI expectations send Micron shares plunging.
Minus 2.1%, minus 2.1%, which is lower than forecast 0.5%. With the index at 7.8, 70.8.
Company's $3.9 billion acquisition of Eviosys. It is the latest in a flurry of deal-making in the packaging industry. And Korean comics in the U.S. Online comics company Webtoon raises $315 million in its U.S. IPO. We'll discuss with CFO David Lee in just a bit.
Fed's Bostic says the share of goods rising 5% or more has fallen below 20%, and I want to see the absolute certain inflation will return to 2% for an initial cut that should be seen as the first in a series. That is a reason for patience. Bostic says I penciled in a 4 percentage point rate cut for 2025. The Fed is on a long-term arc, and inflation is moving in the right direction. Interest rates cut likely in the fourth quarter. Service business pricing power is eroding, and the Fed can achieve 2% inflation with a job market that remains high by historical standards. GDP and job market data point orderly deceleration in activity that will balance supply and demand and lower inflation. The market loosening but not loose, and the housing costs are a frontline conversation. Though he remains confident shelter inflation will fall back to line.
Watching is Walgreens. It's hitting its lowest level since 1997 after cutting its profit forecast for the full year. And I'm pleased to say that joining us now with more is Bloomberg's Fiona Rutherford. And this is the second time in a row that they've cut that outlook, Fiona.
Hi, yes. This is the second time that they've lowered their guidance, their fiscal year guidance. It really just shows how tough the retail landscape is right now. Less people are going into retail pharmacies for things like candy, school supplies. They just want to go into the pharmacy and come out. And so Walgreens is really having to rethink their store footprint and close stores that are no longer profitable.
And it's interesting. I mean, you just see the share reaction, and it's brutal. It seems like, at least taking a look at that Wall Street doesn't have a lot of faith in this turnaround plan, which, of course, will take years to really bear fruit.
Yeah, I mean, analysts that I've spoken to, I think they feel the plan is solid, but investors may just be impatient. They would probably prefer a quicker turnaround. And also, an analyst from Bloomberg Intelligence said to me earlier today that the excitement around the new CEO, Tim Wentworth, has probably dissipated now, and it's really starting to show the cracks in the company business model.
Yeah, and you can definitely see that, of course, in the share price right now. Currently down about 23% or so, Rebecca, or rather, Fiona. I know you have a very busy morning, so appreciate you taking a couple minutes for us. That is Bloomberg's Fiona Rutherford. And joining us now is Rebecca Patterson, to be specific. She is former Bridgewater Chief Investment Strategist, joining me on set. Great to see you in person.
You too. Good to be here.
Let's talk about the state of risk appetite at the moment, because it feels like every day I stand up there at 10 o'clock and I talk about these quiet moves in the market at the benchmark level, but still we're close to all-time highs. I mean, how much legs left does this rally have?
I think a lot of it is going to come down to what happens on inflation, so how quickly can the Fed start easing, and then what happens to the high-end consumer. And I mention the high-end consumer specifically because there has been a big bifurcation in consumption in the economy, when we know consumption is really the key to the economy, given that it drives about 2/3 of growth. The lower-end consumer basically has spent down savings, increasing reliance on credit cards, and is getting hit harder by the cost of living increase we've seen in the last few years. The higher-end consumer has the greater share of wealth thanks to equities in homes. They have more ability to spend. They have more confidence. So as long as they keep ticking along and spending, then I think we're okay. And with that soft landing view can track, that will hold up stocks. If the high-end consumer pulls back, if we start seeing that in the data, then I think we have a greater risk that the slowdown could happen more quickly. Again, the Fed could ease, but we're going to lose that support for earnings to a degree.
Yeah, it's really interesting. And I mean, it's the cold reality, as you lay out nicely, that even though, like you said, the lower income consumer is tapped out, you take a look at the high-end consumer still hanging in there, and things will probably be okay if you take a look at least at the equity world. But talk to me a little bit more about the Fed and what your expectations are there. Of course, we're, 3 months away or so from potentially the first rate cut. How much does that really matter, though, when you think about the stock market? It seems like we've been doing just fine, even with those expectations pushed out.
Right. So it's the two levers that we're talking about. It's the discount rate, right, that factors into equities, and that's going to be based on the Fed funds and how quickly they cut. And then it's going to be the earnings that are coming from the consumption and the demand. On the Fed side, I think they view the risk still today as asymmetric. If they start easing soon to help that lower-end consumer, the risk is that they overheat the economy by lifting what is an already strong higher-end consumer market, the service sector, equity prices, service spending, things like leisure and hospitality. And if they overheat the economy, inflation ticks higher again, then they have to raise rates, and that's the last thing they want to ever face. So I think as long as growth is holding up okay, and still unemployment rate, it's ticking up a little. We saw that in continuing claims this morning, highest level, I believe, since 21 now. So it is something to watch. But we still have a pretty strong labor market, so they can take their time. So I think 2 rate cuts priced in is reasonable, and my bias would be it happens later rather than sooner, barring a big fall in inflation. So I do think they're going to be cautious on that. In terms of how much it matters for the markets, again, even if the Fed is higher for longer, as long as that high-end consumer holds up, I think we can muddle through at a minimum with stocks.
Well, Rebecca, I'm really curious to hear your thoughts on actually a thesis from Rick Reeder that basically to cut inflation, the Fed should cut rates here. You think about the wealth effect that's particularly coming from cash right now. You can earn 5% just by doing nothing. And that's certainly made people feel a bit wealthier, of course, that what's going on with their money market funds is actually producing significant amounts of income. How much does that narrative hold water with you?
I mean, I have so much respect for Rick Reeder. I think he's brilliant. At the same time, I don't buy into this thesis. I think if we were to see early easing of rates, it's going to translate immediately into a wealth effect, pushing up equities, pushing up home prices, probably encouraging more spending. So I have a hard time seeing how that actually helps us kill the inflation bug, if you will.
Well, point taken there. And I was so excited to speak to you today, particularly to talk about what's going on in the currency market. Not something we often talk about on this show, but we have to talk about the yen because it has just been weakening and weakening and weakening, and it seems like nothing will stop it. So I'll just ask you that simple question. What will stop it?
a soft landing in the U.S. What Japan needs is not something the Bank of Japan or the Ministry of Finance does. It's really the dollar. The dollar is the dominant global currency, as you know. And so if we get U.S. growth moderating, so the U.S. is still doing lots of business with Japan, but inflation can come down. If we get that beautiful Goldilocks scenario, the Fed can start easing. That's going to be the best thing to pull down the dollar broadly and help the yen get off these lows. But right now, I think intervention's still a risk in Japan, not because it works. We know it doesn't. They intervened at the end of April, and we're back to where we started. But they have to do it for political reasons. The government is incredibly unpopular. They have to be very careful raising interest rates in Japan because of their debt payments on their huge debt to GDP ratio, and the economy is still fragile. So they're going to be reluctant to raise rates quickly. That would make the yen more attractive from that point of view. So the only thing the government can do to show businesses and households they're trying is intervene. It's very high profile, it sends a message, but at the end of the day, it's going to give you a better level to sell yen.
Well, you went exactly where I wanted to go, because it seems like a neat solution just on a surface level would be to just raise interest rates. But to your point, that it's not exactly an easy thing to do if you're Japan.
Well, it's not an easy thing to do for a lot of countries these days. I mean, we saw what happened in the UK in 2022 when Liz Truss tried to increase spending, and that lifted rates, caused a huge sell-off in their markets. We're seeing that in France now with the election coming up, the first round this weekend. You know, when the far-wing parties, if you will, talk about cutting taxes, increasing spending, bond yields go up, stocks go down. I think tonight with the debate here in the U.S., I'm sure we're going to get into debt and deficits. We're going to be in that same boat pretty soon. You know, debt to GDP based on the Congressional Budget Office is going to get to over 120% in the next decade. That means if we raise interest rates, our debt service payments take up more and more of our fiscal pie, which means there's less money left over for things like defense, education, research and development. People want those things, and so you have to be very careful about interest rates creeping up when you have that debt overhang. It limits your fiscal room.
Well, it'll be interesting to see if that even comes up in tonight's debate, but that's a different
We will see what comes up tonight. I don't know. We're all going to be watching it like this.
Rebecca, it's always great to see you. Really appreciate you stopping by. That, of course, is Rebecca Patterson. She is former Bridgewater Chief Investment Strategist. Now, we do want to bring you some breaking news, and that is from the Supreme Court rejecting Purdue's opioid pact with Sackler Shield. Now, this ruling, it leaves the Sackler family exposed to more lawsuit. And, of course, the case we're talking about pertains to the $6 billion settlement between members of the Sackler family and its bankrupt drug maker, Purdue Pharma. We're going to continue to keep an eye out of any headlines coming out of the Supreme Court. But for now, let's take a look at what's moving underneath these markets. We're going to do that with Bloomberg's Emily Griffeo.
Well, Katie, I'm looking at Levi Strauss shares because that stock is falling the most on record, down 18% after an earnings miss last night. The revenue came in at $1.44 billion. That was versus estimates of about $1.5 billion. They also reaffirmed their year forecast. So the jeans retailer still sees net revenue up 1% to 3%. So not too big of a miss, Katie, but underwhelming nonetheless. You look at what Wall Street is saying. Analyst Neil Saunders over at Global Data, he said that although Levi's growth looks okay, Wall Street was expecting more given the current popularity of denim. I didn't realize denim ever went out of style, but that's what he said. And the fact that Levi's was up against a very soft comp from 2023 when sales shrunk. So again, that stock down most on record.
Yeah, so denim, apparently it's popular now. It was popular before, it's still popular, but that's not helping out Levi at all. But tell me about BlackBerry, another blast from the past there.
So this company, I feel like most people know it as the cell phone retailer BlackBerry phones before everyone had iPhones, but it has now transitioned to a cybersecurity enterprise software company out of Canada. And that stock is up as much as 14% today after their earnings came in ahead of estimates. The revenue was at $144 million for the prior quarter, and that was versus estimates of $135 million. Raymond James said that BlackBerry had a solid start to the new financial year, and we also saw an upgrade over at CIBC to outperform from neutral on BlackBerry. So overall, a turnaround story for, again, like you said, this blast from the past.
So that's some good news. Let's end with some bad news, and that's, of course, what's going on in Micron shares.
Yeah, it's really incredible just how high the expectations are for so many of these chip stocks. And when they don't seem to post an earnings report that is incredible, we see the stock moving down so much. So Micron, those shares down as much as 6% after their fourth quarter sales forecast fell short of the highest estimates. They see adjusted revenue $7.4 billion to $7.8 billion. The estimate was about $7.6 billion. And the guidance actually came in above the average analyst estimate. But again, for the chip makers here, the bar is just so high. And we're actually seeing a little bit of weakness in NVIDIA shares this morning, probably just off the back of this report. You look at what Stifel had to say. While the earnings and the outlook both beat expectations for Micron, expectations heading into the print were clearly elevated. Citi has a more optimistic tone. Their analysts encourage investors to buy Micron on this weakness, saying that the upturn thesis remains intact.
All right, Emily Griffeo, really appreciate that roundup. And we do want to get back to more breaking news from the Supreme Court, the decision coming down that it's curbing the SEC's use of in-house judges in fraud cases, that it backs the right to jury trial for some SEC defendants. Joining us now with more is Bloomberg Balance of Power co-host Kaylee Lines in Washington. And this certainly seems like a blow to the SEC.
It is indeed, Katie. The SEC uses this in-house tribunal system to try hundreds of fraud cases a year, and now that power is going to be pulled back by the highest court in the land. Essentially, what the Supreme Court has decided here is that those fraud defendants do have a right to a jury trial rather than being tried by the in-house judges at the SEC, and this potentially is removing a key enforcement mechanism for the Securities and Exchange Commission under the chair, Gary Gensler. This will very much change the way in which the SEC conducts its enforcement actions and cases. And this is not the only decision that the Supreme Court has to decide within the next few days as we reach the end of the term here that could affect the SEC. Not only does the court potentially have the power, as they did today, to deal a blow to the in-house judges and the way the SEC does business in that case, we are still awaiting a verdict from the court on the Chevron doctrine. This is something that essentially gives agencies, including the likes of the SEC and the EPA, the leeway to read law that is unclear in the way the regulators choose. If they pull that back, that would significantly restrict the ability of these agencies to do so. So we're still awaiting that decision. But of course, we got the SEC curbing the in-house use of judges in SEC fraud cases today. And that's not the only one. The Supreme Court also has rejected the opioid pact with the billionaire Sackler family that was in control of Purdue Pharma. They, of course, had said that they would give up control of the company and pay a $6 billion fine. But the court finding today that improperly shields them. The Supreme Court also has blocked the EPA's good neighbor ozone rule. And I would remind you, we still have about 10 cases that the court has yet to decide, Katie. And of course, Bloomberg yesterday got its eyes on a yet-to-be-released final opinion that had the court backing emergency abortions in Idaho. So a lot of news from the High Court here in Washington today.
A lot of news and a lot more to come. I know you'll be all over it. Our thanks, of course, to Bloomberg Balance of Power co-host Kaylee Lines. Now, coming up, a package deal. Sonoco inks a deal to become the world's leading metal can manufacturer. We'll be speaking to Howard Coker. He is the company's president and CEO. Next. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything. The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything.
Looking now to the Fear and Greed Index, 47 out of 100, which indicates neutral, while the Crypto Fear and Greed Index is 40 out of 100, indicating fear. Keeping an eye on the VIX as well, which is down 1.3% at around 12.4 points.
Well, the industrial and consumer packaging giant Sonoco announced this week that it will buy can maker Eviosys for nearly $4 billion. And joining us now on the news, I'm pleased to say we have Howard Coker. He is Sonoco president and CEO. And let's talk about the logic of this deal. What does the acquisition of a European can maker add to your portfolio over at Sonoco?
Yeah, Katie, let me start. Sonoco is not a household name, but we exist in just about every household in America. So we're a 125-year-old company based here in Hartsville, South Carolina, $7 billion of turnover. And we have some very big brands from a legacy perspective, one of which is our paper can business. So Pringles is the ambassador to that. The planners, I could keep going on and on. So we did an acquisition about 3 years ago that fit hand in glove with our position on the paper can side. We are the largest producer globally of paper cans. And we did an acquisition in the food and aerosol space here in North America, and it has gone extremely well. We have the integration, the synergies, and most importantly, the market reaction has been fantastic in terms of the customers. So with that background, the opportunity came to us.
In 10 minutes time now at the bottom of the hour, we see the release of the weekly EIA natural gas change. Forecast is a build of 54 BCF on the prior build of 71 BCF.
From an innovation perspective. And then you layer on that the financial opportunities were just so compelling. And yes, it will leave us as the world's largest producer of metal food, aluminum and steel containers, as well as a very large position in the aerosol market.
Interesting. So taking that position as the biggest maker of paper cans now, of course, strengthening your position when it comes to metal cans as well. I do want to talk a little bit about the price tag because you've had some mixed reaction from Wall Street. There was a note out from Citi yesterday noting that Sonoco seems to be paying about 70% more for Eviosys than what KPS, who you're buying it from, paid for the company in 2021. So why that premium?
Premium is that KPS did a fantastic job in improving the performance of the company. So the EBITDA, the cash flow, the capital invested in the business are reflective of the current valuation. So it's a little bit of chalk and cheese there. If you look at the valuation of 3 years ago to where it sits today, it is an extremely fair valuation. And frankly, if you look at the synergy opportunity,
Germany says it may object if the ECB tries to lower French yields.
Multiple type range, and those synergies available to us almost on day one. So the bulk in the first year, and then the rest in the second year of ownership. And what's not captured is the commercial opportunities. Hard to put a value on that, but with the reception that we've received in North America, that there is a strategic, extremely interested, leaning into this business that has a reputation, a 125-year reputation of partnerships and taking care of customers. Those we think.
So looking into this further, the German Finance Minister Lindner says that it could be illegal for the European Central Bank to intervene if the French legislative election triggers a dangerous sell-off in the country's government bonds.
information, but
Linda says that a strong intervention by the ECB would raise some economic and constitutional questions. When asked about the scenario at the IFO Institute event in Munich.
We've got, first off, right, Moody's, S&P, those, we're still investment grade. That's important to us. And we have a clear path to deleveraging over the course of the next 2 years, starting with the fact that we have several pretty high value assets in our portfolio. Then we were very clear at announcement that we intend to sell some businesses that are great businesses, but just are not a good fit for us strategically, that are in better hands with other owners.
And I just want to broaden out and talk about the industry in general. Of course, you're coming forward with this acquisition, and you take a look at some of your peers, and there's really been a flurry of deal making. You take a look at International Paper, for example, buying DS Smith, and of course, International Paper itself drawing over takeover interest. I mean, what do you chalk that up to? What is going on in the packaging industry right now?
You know, I focus on what goes on within our four walls. And what is important for our team, what's important to our investors, and we look at this market. It's a $25 billion market globally. We'll have the largest position. That in and of itself is going to carry tremendous opportunities in terms of how we're able to take advantage of this large market and create growth. So. Yes, a lot going on in the space, but we're focused on Sunoco, our team members, and seeing this through as a successful acquisition, which it will be.
All right, Howard, hope to check in with you soon about this acquisition as it gets integrated. Really appreciate your time today, though. We thank Howard Coker of Sunoco. It's time now for Social Climbers, a look at the stocks making waves on social media this morning. And first up, H&M reporting a 6% slump in June sales. The fast fashion retailer blames bad weather that kept shoppers at home. And the results really mark an end to the honeymoon period for the CEO, who just took over in January. Next, changes underfoot at the House of Mouse. Disney announcing that visitors at Disney World will be able to reserve a space for shorter ride lines up to 7 days in advance. Right now, of course, attendees can only book spots the day of their visit, with many waking up at the crack
In
of
5 minutes
dawn
time now, at the bottom of the hour, we see the release of the weekly EIA natural gas change. Forecast is a build of 54 BCF on the prior build of 71 BCF.
Opening its most exclusive airport lounge this week at New York's JFK Airport. It's 3 times the size of its Sky Club lounge at nearly 40,000 square feet. Now, the Delta One lounge features spa treatments, roaming bartenders, soundproof work pods, and shower suites complete with robes and slippers. Access to the club, of course, is exclusive, and you can follow all the latest company buzz on TREN Go on your Bloomberg terminal. Meanwhile, we do want to bring you more breaking news from the Supreme Court, and that is that it will allow emergency abortions in Idaho for now. Remember, we had a preview of this decision yesterday. It was inadvertently posted on the Supreme Court's website, of course, and now we get confirmation again that the Supreme Court formalizes ruling that was inadvertently posting when it comes to emergency abortions in Idaho. Meanwhile, let's take a look at these markets right now. We've been talking about how quiet it is, and that's certainly the case if you take a look at the S&P 500, currently higher by about 0.1%. A little bit more action when it comes to the NASDAQ 100. Your big tech stocks currently higher by about 0.3%, and that rally in the bond market continuing, with 10-year Treasury yields currently lower by almost 5 basis points. We are below 430. Now, coming up, the world's largest webcomic platform is debuting today on the NASDAQ, and we'll be speaking to the Webtoon CFO, David Lee, next. This is Bloomberg.
Saturday mornings, I understand you have off.
Yeah, Saturdays is always a day where I power down. So I run at a relative high pace throughout the week, try to wrap things up, and Saturday is a quiet day for me in terms of work, and I start typically by playing tennis with my wife. The bandwidth of your reflection is just too narrow. And I generally believe that Monday mornings I'm
1 minute remaining.
I'm a better leader than I am, say, Friday afternoon. I also take all my vacations. I generally believe I'm a much better CEO right after a vacation than I am before vacation.
Ten seconds.
Well, it's one of the year's highest profile IPOs so far. The online comics platform Webtoon debuting on the NASDAQ today.
A build of 52 BCF, a build of 52 BCF, lower than the expected build of 54 BCF. Seeing some strength in natural gas prices.
Share. Let's talk about this more with David Lee. He is Webtoon COO and CFO. And David, we're going to get into the fundamentals of the business, but let's first talk about this IPO, raising $315 million. What will you use the money for?
Well, already today, we see global consumers love the stories we generate from the 24 million creators globally. We'll use this to speed up and deepen the tools we give any creator globally to be a global hit. Many of the stories that you come to see on Amazon Prime or Netflix, the top show on Netflix today, The 8 Show, is powered by our platform. And so you'll see us continue to delight more and more consumers here in the United States and the rest of the world.
So we have posted out the weekly EIA Nat Gas storage reports on the feed for anyone interested.
To inform what stories they bring to us.
And I'm always curious to talk to recent IPOs because we haven't seen a lot of them. There's been a real dearth of IPOs, and I'm wondering why now for this U.S. listing?
Well, our global flywheel took 20 years to create. And if you look at our last quarter results, we're now growing on a constant currency basis 14%. We're driving increasing adjusted EBITDA profitability. This business is poised to really grow in leaps and bounds accretively globally. We thought the world should know about it. Many of the folks here in the United States love our content, but they don't know that we're the ones behind it. So for us, this is not just about capital formation. This is about playing at the global stage and being backed by the best investors so that we can operate globally.
And you can see some of the content on the screen now. So let's go there because it might not be familiar to our audience what we're talking about when we talk about webtoons. It feels like anime and manga, which of course are Japanese in origin, have become popular and are high engagement in the US. But what specifically are we talking about when we talk about webtoons?
Well, 75% of our consumers here in North America are below the age of 25. They're the venerated Gen Z. Imagine a digital universe with every genre you can imagine, and maybe a few genres that our 24 million creators created themselves that surprise us. From this weekly flow of fresh, evergreen stories, we use data and AI to know which ones can resonate. So instead of having to use our judgment on what the world wants to see, we use the world to create content that our creators are excited to have consumers explore. So while manga is important, it's a great genre. We have countless other genres that update every week. In some ways, I think of a web comic not as a digital form of a comic. I think of it as a digital storyboard, something that's powered 100 rich film adaptations. The #1 hit on Amazon Prime in January, Marry My Husband. The current #1 hit on Netflix globally today, The 8 Show. All powered by these creators we enable to tell a story that they didn't even realize the world would love.
And I'm glad you brought up creators because that's something I've been wondering about. When it comes to the content and when it comes to the content creators on your platform, how do you keep them there?
We have a very unique business model. We can see before anyone because we're the global leader and we have this 170 million user strong base across every country and major languages that we offer, so that we can give a creator the ability to see that they're hit while they're a full-time professional, a kindergarten teacher. We have examples of graphic designers who don't realize that on our platform they have a story the world wants to see. When they have that story, we share with them as a fundamental part of the business model all of the future revenue they can have as a publisher of their own story. We've given $2.8 billion over the last 6 years to creators, and they know that we're aligned and that we're the #1 way for them to go from being an amateur to having a global voice.
Interesting. So it's not just network effects, that they actually get some compensation in some form as well. And I'm curious what the pitch to institutional investors is. If you take a look at your filings with the SEC, it's interesting. You have BlackRock, for example, purchasing up to $50 million worth of shares. But when it comes to investors outside of BlackRock, how do you explain this to them?
Well, for 30 years, I worked in other businesses, consumer tech, public companies, and transformation. And I always struggled with the idea in talking to investors how to justify being a hit-driven business, how to explain that a human judgment by one of us on a management team knows what to spend hundreds of millions of dollars on a future hit. Instead, when I talk to institutions, they love the data and AI and empowering a global base of creators. Anyone with a Wi-Fi connection on our platform could be the next hit. That source of evergreen content, I think many of us believe, is what the world needs, but what the media entertainment is looking for. It's a pretty novel approach to storytelling, and one that I think investors are really interested in exploring and supporting with us.
Well, David, before I let you go, I want to talk a little bit about the path of profitability, because you had a net loss of $145 million last year on revenue of about $1.3 billion. When will you be profitable?
Well, if you look at our last quarter, Q1 of 2024, we posted positive GAAP EBITDA, positive GAAP profit. We grew 14% on a constant currency basis, and we have the most interesting and accretive large global markets to continue to grow into. You know, our growth is accelerating here in North America, in places like Japan and Europe. So for us to continue to drive positive cash flow, which we intend to every quarter going forward, it's simply about executing in the largest market, which is, I think, why large institutional investors are beginning to recognize that the future growth is accretive with us. And it starts with our IPO today.
Well, David, congratulations on that listing. Hope to speak to you again soon. That, of course, is David Lee of Webtoon. Let's get a check on these markets about an hour into the U.S. trading day. We'll do that with Bloomberg's Abigail Doolittle.
We're looking at a small gain for the S&P 500 at this point, Katie. Before, in the pre-market, a small loss. So investors still trying to make up their minds. And over the last several days, 3 down days, 2 up days, all small. If this gain holds, it'll be an even split. Now, let's take a look at this VIX. My gosh, that complacency really strongly here at a 12 handle. But what's interesting, Katie, in October and November, the futures go sharply higher ahead of the election. So some investors there are gauging for that uncertainty. Another possible measure of uncertainty ahead of the election, using tonight's presidential debate as a proxy. Take a look at, well, bonds, they are higher, an overall Treasury ETF, or excuse me, index over the last 2 months, higher, suggesting maybe a little bit of a haven bid. There are other factors that could be at play. Now, if we do go into the movers on the day, lots going on beneath that very benign surface. You have Coinbase up 3.4%, helped out by Bitcoin trading higher, Amazon up 1%, and of course this company yesterday moving above a $2 trillion market cap. Micron, though, not so much, down 5.7%. They put up a great quarter in their fiscal third quarter, but their fiscal fourth quarter, the guidance, the midpoint hits, but there are some analysts that are above the high end of their range. So given the fact that the stock was up 67% year to date into the quarter, some investors viewing that as a little bit disappointing. Interestingly, the weakness, I believe, had to do more with their traditional business as opposed to AI, but a lot of AI hype and the volatility there, using the idea, is Micron a tell on the end of it? And then, Katie, we have not seen a move like this for Walgreens ever. This is the worst move, down 24%, going all the way back to since 1980 when this company first started as a publicly traded company. They missed earnings by 7.4%. The View, they cut it for a second time in a row. They're making organizational changes. They are keeping Boots. There had been some thought that they were going to spin out that UK unit after merging with them back in 2014. But right now they're talking about spending money on that. So investors not liking this message overall. Again, Boots, Walgreens Boots Alliance is plunging down 24%, the worst day ever over the last, well, let's call it 34 years.
Yeah, just an absolute wipeout in those shares. Really tough crowd out there. Bloomberg's Abigail Doolittle, thank you so much. Now coming up, France and the UK are gearing up for pivotal elections. Joe Sitt, he is Thor Equity's founder and chairman. He joins us next to discuss the potential opportunities and the risks for investors. This is Bloomberg.
You actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position. I mean, what's the thinking?
Yeah.
I mean, like, what's that about?
We're not forcing everybody to be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier. Right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
The world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
This is Bloomberg.
Morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
The French 10-year yield premiums are at the highest this week ahead of the TV debate.
And earlier this month, Claudia Sheinbaum achieved a decisive victory in the Mexican presidential election. And joining us now to assess her policy agenda is Joe Sitt. He is Thor Equity's founder and chairman, and of course, Wall Street Week's David Weston. And it really feels like markets, of course, are still digesting those election results.
Yeah, exactly. Not quite sure what to make of it. We'll find out. So, Joe, we're really good to have you with us. I must say, first of all, you predicted she'd win. She won. She's now president-elect. But tell us how investors are reacting to this right now. You've said that actually the dollar Mexican peso across as a barometer of this. If you look at that, the peso's not doing so well.
I think that the market today is in a state of panic because of the unknown. Always the unknown is a little bit worse than even bad known, so to speak. And you do have a couple of reasons for trepidation. You've got 30 days where AMLO, before she comes into the office, could do whatever he wants because of his control of the Congress. 2, he's looking and she's looking to change the way judges are selected. They did, I candidly feel like a phony poll where they asked the people, should we change the way it's being elected? And their answer was 70% agrees. But what they didn't say is 80% of the 70% don't even understand the question they got asked. And then last and certainly not least is right now it's a 6-year term for somebody to become president. What nobody's noticing is they changed the law to allow a check at the end of 3 years so that there's a popular vote to say, should we have another election now? And that's sort of like a hammer that AMLO will have to hold over her head. So those are the 3 things that are giving the world trepidation right now.
And so, of course, those are the risks, and you can see that translated into the currency market. But as an investor in Mexico, of course, what do you see as the opportunities when you do think about her policy priorities?
I'm excited. I think about business, I think about economics, I think about security, and all 3 I'm pumped. 1 is in terms of industrial development. That's one of the biggest demand needs. In fact, the headline I saw inside on Bloomberg was the power grid is going to be challenged. That's really a challenge we've had throughout the AMLO administration, not enough power. And she's committed to bring in the private sector to service that power needs. And she has one wild commitment. She wants to see 100 industrial parks developed within her first year of the presidency. Very pro-business. Second thing I would say is a fellow named Garcia Harfuch. He was her head of security when she was the mayor of Mexico City. And we really saw, while a lot of issues in the rest of the country, or certain parts of the rest of the country, Mexico City's been pretty smooth, pretty safe, pretty well run. And now she's just nominated him to take the federal role. So I think that's a big, big positive for the marketplace. And then last but not least, Marcelo Ebrard, who is, successful, respected from a finance, et cetera, point of view. He's going to be coming into office and taking that role. So I think 3 very, very big positives. Probably the big unknown, I know he was saying it as I was walking in and I didn't get to give him my answer, was what happens with the relationships with the United States.
Well, pick up on that specifically, because Mexico is positioned in some ways between the United States and China. And the question is that an advantage for Sheinbaum as she comes in, or is that a risk for her?
Okay, I think that she made one of her priorities, people aren't realizing it, keeping a good relationship with the United States. She realizes how important NAFTA is. And yes, while she's from the more left-leaning, so everybody thinks it's only positive if Biden stays in, it's really positive both ways. She's got the relationship there. But what everybody's forgetting is Marcelo Ebrard, who's now got the new finance position, so to speak. He was actually the fellow that put the country's greatest award over the head of Joshua Kushner for making the deal, the new revised NAFTA deal with the United States of America. So I think that she's covering all bets, whether it's a Biden presidency or a Trump presidency. She's prepared for the positive. She's prepared to make good. And I think this is a bump along the way, and it's not the only market that we're seeing bumps, Take a look at Europe.
Take a look at Europe. Yeah. Well, before we get to Europe, and I'm glad, of course, you made the point that whether it's Trump or Biden in November, that you feel pretty positive on both outcomes here. But talk to us about commercial real estate when it comes to the Mexican market, because you think about commercial real estate in the U.S. and people are still waiting for another shoe to drop. But what's the landscape look like in Mexico?
A lot of things I find globally run in cycles. The United States is starting to, outside of the office market, certain categories have run hotter. It's had success over the last decade. Europe and Mexico have been pretty beaten down. And I think that it's a market that will benefit on the way up from global macro, conflict with China, to be blunt, as well as more and more positive relationships with the United States. Who in the world has become the single biggest beneficiary of the conflict between the West and specifically the United States and China. It's Mexico. One of the things that you just brought up, David, was a great point inside. Who's the most active new business signing leases in Mexico? It's Chinese that are relocating to Mexico to get around the issue. So with that massive demand for industrial sites, industrial production shifting from China to Mexico, that creates positive momentum for the economy and for the day laborer, for the for the country's big picture labor markets in general. That positivity, that more income feeds into the system. So I think that all of the domestic side has been benefiting. That'll flow through to what I call the business to business real estate market. And then look at the other side, business to consumer, where we're extremely active. We're probably the most active luxury hotel developer in Latin America, specifically anchored in Mexico. We're seeing the business come, tremendously strong from the United States and Canada and even further south. People are loving Mexico for their vacation. People like that, that type of market where you can get away from it all, so to speak. And a weak peso probably make it even better for Americans and Westerners to go there.
Well, Joe, unfortunately, we have to leave it there. Hope to have you back soon so we can talk about France and what's going on over in Europe. That, of course, is Joe Sitt. He is Thor Equities founder and chairman. And David, who else do we have coming up?
So tomorrow we're going to keep it international. Actually, we're going to China. We're going to have Mary Lovely of the Peterson Institute, because we have that third plenum now they've announced. They're coming up with really address the economy. She's going to give us a preview of what we can expect out of China and the economy over there. That's Mary Lovely tomorrow on Wall Street Week.
All right, our thanks, of course, to Bloomberg's David Weston. This is Bloomberg.
At 11 a.m. Eastern Time, we get Kansas City Fed Composite Index forecast -4.5 on the prior -2, and Kansas City Fed Manufacturing prior -1.
Fixed Income Fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep rating World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything. The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything.
Well, President Biden and former President Donald Trump will come face to face tonight in the first presidential debate. Now, the 90-minute-long debate hosted by CNN will mark the first time either candidate has taken to the debate stage since 2020. Bloomberg's David Gura is in Atlanta, where the face-off is set to take place. And David, I actually want to talk about the format. I find it really interesting. No live audience, and of course, there's a mute button this time around. How could that change what we're expecting tonight?
Yeah, so it's going to last 90 minutes, as you say. There is this mute button. The way that it's going to work is each candidate will get 2 minutes to answer a question. There'll be a rebuttal to the rebuttal. The moderators have some prerogative to ask another question or a follow-up question on the heels of that. I think it has the chance to make it kind of really interesting in a way, because you look at Donald Trump, for instance, who we know feeds so much off of a crowd. This is such a different thing, and even the way that he's prepped for this debate, which is in line with how he's prepared for the last few debates, is to not kind of do mock versions of debates, but to do campaign rallies and, again, feed off the crowd. It's going to be a totally different environment for them. And then I think that CNN has really studied how the past two debates with these two candidates unfolded. One with Chris Wallace involved a lot of bickering. He had a really difficult time keeping the candidates on the questions that he'd asked. I think that they've watched a lot of tape, and suffice to say, they're going to try to do better at kind of making sure that they get some substance out of these two candidates.
Yeah, it will be fascinating to see if they're successful with that. And let's talk a little bit about the substance. I mean, what are we expecting the real message, the takeaway to be from tonight?
I think that both candidates, it's incumbent on them to talk about their future, the vision that they have of the future. Donald Trump likes to talk about what happened 4 years ago and before that. So I anticipate he'll be pushed on sort of his vision for the future, how clearly he can articulate that, how clearly that Joe Biden can articulate that as well. And then I think there's this dynamic that you're hitting on, I think, Katie, which is how much does substance matter versus style? There are so many questions about what these two candidates are going to look like individually and on stage together, how they're going to interact, how they're going to interact with the moderator, and how they address questions about their capacity to return to the White House for another 4 years. It has to do with age and temperament and all sorts of things. So we'll see sort of how head-on they address both those things tonight when they debate.
And David, I mean, before I let you go, how much do debates actually matter? When you think about the polling right now, Trump, of course, leading Biden, I mean, how much do debates actually move the needle?
It's a great question. I just talked to Senator Rob Portman, the former senator from Ohio, who played the role of a lot of Democrats and Republican debate preps before. And he said what's fascinating about this one is this debate is really catering to about 100,000 people in 6 or 7 states across this country. The sliver of those who haven't made up their minds and could be swayed by what happens on this debate stage is very small. And his counsel to me was watch this debate with them in mind and sort of see how these candidates appeal to that, again, very slim part of the electorate.
Well, David, good luck tonight. That, of course, is Bloomberg's David Gura.
At 11 a.m. Eastern Time, we get Kansas City Fed Composite Index, forecast -4, spot 5, on the Prime -2, and Kansas City Fed Manufacturing Prime -1.
At 8 p.m. Eastern. Now, before we let you go on this program, let's take a look at some of the stocks hitting highs and lows today. And we start with Amazon, hitting a 52-week high after reaching $2 trillion in market valuation for the first time, thanks to the AI-fueled rally. You can see adding about 1% on the day here. Let's also talk about Arista, also hitting highs. That's after Citi raised its price target to $385 on the cloud computing company, up about 4.2% today. So that's the good news. Let's get to some really bad news, and that's what's going on with Walgreens right now, hitting a 52-week low and then some after it slashed guidance thanks to a worsening retail environment. Now, the drugstore chain said it would also close significantly more stores. It also expects headwinds to persist into the next year, of course, down about 25% right now, just a real record wipeout. We'll see, of course, if that changes as the new CEO's plans start to take hold. But otherwise, it's a pretty quiet day in the market. Probably helps that Amazon, of course, is hitting that 52-week high. Now, coming up, the CFO of Block joins Bloomberg Technology with Caroline Hyde and Ed Ludlow coming up next. But that does it for Bloomberg Markets. I'm Katie Greifeld, and this is Bloomberg.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also
Kansas City Fed Composite Index coming in at -8, lower than forecast -4.5.
The CFO makes you a better CEO, and the CEO makes you a better CFO. Understanding what you build as a CEO.
And shortly expecting the results of the Kansas City Fed manufacturing.
What are the right things to build?
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
It's the US to sell $73 billion in 3-month bills on July 1st to settle on July 5th. And the US to sell $70 billion in 6-month bills on July 1st to settle on July 5th. So noting the Treasury has boosted the size of the 3-month bill auction by $3 billion.
$210 billion valuation in its latest tender offer. Details ahead.
And we go live to Santa Ana, California. That's as police raid a warehouse of suspected stolen merchandise bound for marketplaces like Amazon. All that and so much more ahead. But first we check in on these markets. And look, a little reprieve to some of the selling that we'd seen earlier in the trade is, well, the bad news is good news on the macro front. Some of that jobless claims data, some of the housing sales data, some of the industrial production data weaker. That means, does the Fed have room to cut later this year? All eyes on macro policy. We're currently just up only 13 points, though, on the NASDAQ as some big laggards that Ed is going to walk us through. I'm looking at a 10-year yield, though, getting a bid. We're seeing money move into the bond market on the back of that data, even as we see yet more supply coming from the 7-year side of things coming a little bit later. I'm looking at the dollar actually down versus the Japanese yen. Keep an eye on the yen. And we've seen such weakness. Will we see intervention coming from the BOJ? We're currently trading at 160. Move on and have a look at what's happening in the world of Bitcoin, because look, we're still at about a $61,000 handle. We have seen some significant selling going on at the moment.
And Kansas City Fed manufacturing -11, -11.
But Ed, what are you watching?
I'm going to do something a bit unusual. I'm going to go right to private markets and start with this big story around SpaceX. A valuation of $210 billion based on the latest tender. A tender is where the company basically lets employees and insiders sell their shares to investors for liquidity. But because you assign a price to the shares, you're able to establish a valuation. This is a custom chart on the Bloomberg terminal that we make using those Bloomberg News reports going back many quarters and many years, but also the latest data from PitchBook. And it's a big jump, right? $180 billion was the valuation we reported in December of last year. We're up to $210 billion. Later in the show, we're going to go to Katie Ruth, who helped break that story last night. There's so much to discuss around this company, but also the idea that if you're a massive growth stage name, why go public? The private markets are there to support you. Micron is the big earnings story. It's really interesting. Like, they gave this sales forecast that at the midpoint was kind of bang on what the street was looking for. Really high expectations. It's a story, Caro, about high bandwidth memory. High bandwidth memory gets coupled with AI accelerators like NVIDIA's H200. And if that's doing so well, why is Micron not doing so well? Because of its legacy businesses, DRAM and NAND or flash memory, and those cyclical markets and end markets that they go into. Two-day chart, but the stock's down 6% in the session right now.
I mean, what's the CEO to do when they're posting revenue growth of more than 80%? Let's dwell on it for a moment. A closer look at Micron after the release of their earnings report. And, of course, the follow-on for what NVIDIA is currently digesting too, their AGM meeting. That happened on Wednesday. Ian King is the person we turn to for it. And Ian, I mean, go to Micron first. This feels as though they just couldn't beat the highest mark out there for the estimates.
No, you're absolutely right. I mean, they are predicting that revenue will be up 90% from where it was a year ago, albeit that's a pretty easy comparison given how bad last year was. But yes, it's all about how much real demand are you getting from AI, how much of that real high margin kind of product, Ed's favorite type of memory chip, are you shifting and making money from?
I thought it was really interesting, and thank you for that, by the way. I even managed to convince you to embed the video we made about high bandwidth memory in your story, so now I owe you. He did some math for us. So he basically said, we know what sales are for high bandwidth memory in the quarter gone, the current period, and what they'll be in the next fiscal year. And you can see a really clear path that as the investment in AI infrastructure ramps, so too do sales of high bandwidth memory.
Yeah, no, absolutely. $100 million, which is relatively small for the quarter reported, going to multiple hundreds of millions, going to multiple billions next year. So when you're a company that has, about $6 billion of sales a quarter, that's a good sign, very good sign.
I mean, all of this, of course, is in comparison to what NVIDIA has been churning out, and the high bandwidth memory is what works in lockstep with their own chips. I'm currently looking at NVIDIA down 1.7%. It's been very volatile. What happened at the AGM yesterday, Ian?
Yeah, well, first of all, we're not allowed to call it an AGM, according to my American colleagues. That's an English thing.
Yeah.
Shareholders meeting, apparently. But yeah, they really just came out there and reiterated this pitch that they've given us, this new industrial revolution, this our products are becoming more and more vital to this giant change in the economy. So we really didn't get anything new. So if there was an expectation that perhaps Jensen would pop out some new numbers, maybe those were disappointed. But really it was just him kind of beating his fist against his chest and saying, look, here we are, and look how well we've done.
I feel like it was almost verbatim what they said in May, 22nd at earnings, in the deck, basically, that they published. But even so, there's just so much attention on NVIDIA right now. Bloomberg's Ian King, who leads our chip coverage, thank you so much. Let's get some more on big tech. This month's net selling in the tech sector has been the largest on record since 2017, with hedge funds aggressively selling tech stocks after the rise of NVIDIA. Bloomberg's Jess Menton joins us now for more. The markets are a funny thing. I don't want to go as far as to say fickle, because I remember you coming on the show mere months ago and talking about this FOMO trade at the beginning of the year. Now we had this net selling. Explain what the markets are doing right now.
Right. So how can you have this net selling in hedge funds? But then just last week, we had the Bank of America EPFR data showing that we had record flows going in technology stocks. So the reason is, if you look at a pie chart when it comes to flows data, actually, if you're looking at mutual funds, it's only roughly around 20% there. So you can have those record inflows into there. But that other portion, if you're looking at 70%, that composites of, say, like hedge funds, insurers, obviously pensions. So you can still have both happening, but obviously hedge funds contribute a bigger portion to that. So you can still have mutual funds having that record exposure, but hedge funds doing something else. And it's not just technology, it's specifically also more geared toward those chip stocks, Ed.
It does feel that maybe hedge funds are getting more risk averse more broadly. They're coming out of momentum.
That's right.
Is the hedge fund trying to be the canary in the coal mine here? They like, look, retail's pouring in, mutual's pouring in, we're starting to get out now.
Well, it's a great point, because normally if you look at what retail's doing, it can be a bit of a contrarian indicator to your point there, because if they're piling in, and then hedge funds, if you think of that as more of, may say, the smart type of money and how they're positioning, that does show you they are definitely moving more toward defensive areas of the market. But also a part of that is utilities, and that's also been an AI type of play, because
Usually it's typically thought of as less volatile, more diversified if you're in kind of a slower economic regime. But obviously the economy's been holding up well. In the latest Atlanta Fed GDP numbers for the second quarter are around 3%. So you are seeing hedge funds obviously pulling out when it comes to those chip and technology type shares. But even though it's more defensive, they are going to other corners that are AI plays as well, Caroline, including utility stocks.
I get the I guess, concern of how long a rally in a particular sector or name is going to last, right? But I just have to remind myself, like, of the incredible gains, either on a year-to-date basis, 12-month basis. And at some point, you have to say, like, the going's been good, but it might not last that long, Jess.
I feel like we were talking about this a year ago as well, after that was also a record first half that we were looking at for the S&P 500 and NASDAQ 100 too, and everyone was questioning then how much longer can that continue, and Gina Martin-Adams over at Bloomberg Intelligence had some really great data looking at breadth and how basically what they were looking at a year ago would show that this could continue for a while, and it has, and Gina's team actually just put out data this week showing that, you know, people, I think anytime something like this happens, people like to talk about bubble type behavior. They're definitely not seeing that. With that said, though, if you're looking at the stocks, the Philadelphia Semiconductor Index relative to the S&P 500 right now, it's actually trading at its all-time highs and even higher than above that peak in March of 2000. So sometimes when I'm talking to sources, obviously maybe things have gotten a bit ahead of themselves, but even though people were talking about NVIDIA, you know, recently entering a correction or less than, or obviously off of 10% off of that most recent high there, I mean, it was trading around $550 in the middle of January. And to look at, obviously it had that stock split. So it's been quite a tear here. So sometimes if you bring up sort of the correction sort of mentality with NVIDIA, sometimes you will obviously get some eye rolls from traders there.
Steve Eisman calling it just a blip. Jess Menton, always great to get you on. Not the hedge funds are up to. Meanwhile, coming up, talk about private markets again. SpaceX notching that $210 billion valuation in its latest tender offer. That's more than Disney's market cap, Ed. What have you got?
So, just got back from vacay, continental Europe and UK, and T-Mobile's My Carrier worked fine. But if you're a Verizon or AT&T customer, we're seeing a lot of complaints about the service not working overseas or abroad. There are service disruptions if you're a customer of those networks in different jurisdictions. Gillian Tam with the story on the Bloomberg. Verizon down 0.7%, AT&T down 0.3%, but clearly a little bit of concern that if you leave the country and those are your carriers, you might not be able to get your data or make your texts. Keep watching it. This is Bloomberg Technology.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal.
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
private markets. SoftBank's Vision Fund 2 is investing in artificial intelligence startup Perplexity AI. SoftBank will invest between $10 million and $20 million into the US startup, but that's as part of a larger $250 million funding round that triples Perplexity's valuation to $3 billion, making it one of the industry's most highly valued companies. Meanwhile, SpaceX, well, it's notching a $210 billion valuation as insiders sell shares at $112 a piece in a tender offer. That's all according to Bloomberg sources. Now, the higher-than-expected price boosts the value of Elon Musk's space and satellite company from $180 billion back in December's tender offer, making the company the second most valuable startup in the world. Joining us some more, Bloomberg's Katie Roof, and it's the most valuable in the US.
That's right. ByteDance is the most valuable in the world, but for US, SpaceX set its own record. It surpassed its own record. It's at $210 billion now, up from $180 billion in December.
Katie, there's just such intense interest in SpaceX and getting a piece of it. And I think it's worthwhile for our Bloomberg technology audience around the world, explain the mechanics of how the tender offer works, right? Why us learning from sources the share price is important in the math.
Sure, and so the tender offers, that's insiders such as employees selling their shares to other private investors. And so the tender offer is different than a secondary where people are doing one-off trades. The tender offer is more meaningful because it means the company signed off on this valuation and that they're doing a large transaction, where hundreds of millions of dollars of shares, hundreds of millions of dollars trade hands. And so this is, meaningful, for Silicon Valley, when they're looking at prices and seeing that, companies can still raise high prices right now, even if they're not AI, and it surpasses SpaceX's own record.
Bloomberg's Katie Roof. Late night but important reporting from you, and saw the headline and thought, yep, saw this coming a little bit, big one. Okay, another story we're watching, shares of Amazon right now as it plans to launch an online storefront for low-price apparel and home goods.
Fed bids for 4-week bills total $215.8 million.
Like Temu and Shein. The company's plans are outlined in slides posted to websites for third-party Chinese sellers, showing Amazon shipping goods directly to customers from China. Okay, some breaking news just moments ago. California police have raided a Southern California warehouse filled with allegedly stolen merchandise they say likely would have ended up on online marketplaces run by Amazon and other retailers. Bloomberg's Spencer Soper on the ground with law enforcement. You have been witness to that raid, Spencer. Just give us the basics of where you are and what's happened.
Yeah, so we're about 30 miles south of Los Angeles in Santa Ana, California. We're just off Interstate 5 at a warehouse behind me that's actually a retail liquidation center, which, can be legitimate businesses that get, scratched and dented merchandise and returns, and then they go about selling it. But this raid that just happened a little more than an hour ago, California Highway Patrol's Cargo Theft Division had information that there could be stolen merchandise inside. They got a search warrant, and they executed that search warrant this morning. So we had about a dozen officers swarm on the scene. They secured the facility, and what they're doing right now is going through, it looks like a hoarder house. There's like boxes from floor to ceiling of all kinds of stuff, vacuum cleaners, pet food, air fryers, all kinds of things that you can imagine. They're trying to sift through all that stuff to determine if anything's been stolen and if they can trace that back to a previous theft.
I mean, this is a big operation. They've got you on board to witness it. This clearly is important to them, Spencer. How economically important is it to companies that are losing their goods like this?
Yeah, that's a great question, and everyone's familiar with shoplifting because you see like cell phone videos of people loading up a shopping cart full of stuff and running out of the store. But this is far more serious and also more sophisticated, where they're stealing entire cargo containers, and one haul could be anywhere from a couple $100,000 to up to 20 million of cargo. So the losses get very high very quickly, and it's really been on the rise. The number of cargo thefts reported in the U.S. in the first quarter of this year were nearly 1,000, and that was up almost 50% from a year earlier, and it's just been going up with no end in sight. The the thieves are getting more sophisticated. They're impersonating legitimate trucking companies, you know, going to warehouses, picking up entire truckloads of inventory, and like they're supposed to be the ones picking it up and taking off with it, and then, you know, a delivery's never made where it's supposed to be, and that's when they discover the theft was made like days later. So it's a really big problem that inflicts a lot of damage.
Bloomberg's Spencer Soper, who is on the ground in Southern California, has just accompanied law enforcement in a raid where they seized allegedly stolen merchandise bound for Amazon. That's the first for this program, I think, and probably this network. All right, coming up on the show, we're going to be joined by Jeff Thomas, Executive Vice President of NASDAQ's corporate platforms business, for his read on the IPO landscape. Going to take a short break. Stay with us because we will be right back. This is Bloomberg Technology.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must
At 11:30 a.m. Eastern Time, the US sells $80 billion in 4-week bills, prior high yield 5.23%, and a prior bid cover of 2.93.
Grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
Time for Talking Tech. And first up, OpenAI makes a deal with Time. The maker of ChatGPT has partnered with the magazine in a multi-year agreement that would allow access to current and historic content. In return, ChatGPT user queries will link answers back to the original source on Time.com. And Time will also have access to OpenAI's tech. Plus, the US, Japan, and South Korea make a pledge for stronger tech relations. The three countries say they'll work closely on building out a more resilient supply chain in order to address weaknesses in key tech sectors like semiconductors and AI. The move comes amid rapid expansion and competition from China in the chip sector. And Webtoon Comics has raised $315 million in its US IPO, topping the marketed range. The online comics company sold 15 million shares after marketing them for $18 to $21 each. According to Bloomberg calculations, Webtoon has a market value of about $2.7 billion at that IPO price. Bloomberg spoke with COO and CFO of Webtoon, David Lee. Here's what he had to say on how they'll use that cash.
We'll use this to speed up and deepen the tools we give any creator globally to be a global hit. Many of the stories that you come to see on Amazon Prime or Netflix, the top show on Netflix today, The 8 Show, is powered by our platform. And so you'll see us continue to delight more and more consumers here in the United States and the rest of the world and invest behind our creators.
We want to talk more about listings right now and the international flavor of them. Jeff Thomas is with us, Executive Vice President of NASDAQ's corporate platforms business. we're going to be assessing the IPO landscape. And Jeff, I mean, today, a big day for Webtoon. And interestingly, South Korea-based Never is the company that sort of backs it. So we're seeing more international companies coming to the US to list?
That's right. On NASDAQ this year, we've had 64 IPOs, and nearly half of those have come from international. And so we've had Webtoon from Korea, we had Superhigh out of Asia, we had Merix out of the UK, Ferrovial out of Spain, all looking to come to the US capital markets because, frankly, they can get a better valuation, and the capital markets are wider and deeper here in the US.
That's not uniformly true, though, right? The chat around Shein is so interesting to me. They seem to be looking at London based on the political tension between the US and China. That was a headline that I think crossed while I was on vacation. I was very surprised to see it. What would the factor in that case be to your mind?
You know, I think there's always unique aspects to every deal. What we really focus on here at NASDAQ is trying to provide a great platform to support all of our companies from across the world. That includes having a great trading platform, supporting companies with our investor relations insights, and really helping them on their sustainability journeys.
Are there fewer Chinese companies, though, eyeing the US?
I'm sorry?
Are there fewer Chinese-related names eyeing the US to go public?
You know, I think we still see a lot of strong demand from around the globe. It's not just China over in Asia, but we have a lot of interest out of Southeast Asia. You know, not just Korea like where Webtoon is from, but Vietnam, Indonesia, lots of other countries over in Asia are also looking to come to the US.
Yeah, VinFast is an interesting example of a name from that region in this market. I'm trying to get a bigger picture sense of what's going on. Like, we had this pocket of listings in September of last year, and we started the year with some energy, and we're showing a graphic on the screen now of all the VC-backed names that we've been waiting for ages to give us a signal on going public. Where are we in this market broadly at this moment in time, Jeff?
We do have a very strong pipeline of VC-backed tech companies that are looking to go public over, I'd say, the next 12 to 18 months. This year, the story really has been more about private equity-backed companies, companies in the healthcare sector. We've had some great names out of biotech. We just had Lineage Logistics file publicly yesterday. That's going to be the largest cold storage REIT in the US. So a lot of the more kind of steadier growth, highly profitable companies, and I think some of the...
At 11:30 a.m. Eastern Time, the US sells $80 billion in 4-week bills, prior high yield 5.23% and a private cover of 2.93%.
Private markets, that being SpaceX. Many might think that Elon Musk would eye a Texas-based exchange, as and when that becomes a reality, Jeff. What do you think of the competition?
Well, I think, frankly, we endorse competition. I think the U.S. capital markets are unique in that we not only compete for listings in the U.S., but we also compete for all the trading volume. That's the way the SEC has set up the market structure here in the U.S. So it's highly competitive. There's actually 16 different exchanges in the U.S. There's dozens of different internalizers and dark pools across the U.S. And I think that competition is one of the things that drives such great outcomes for our listed companies. It's why we invest so much in our technology to provide a great trading platform. It's why we have to differentiate our value proposition to provide great marketing and visibility to our listed companies. And then, of course, all of the data and insights to help them understand who's buying and selling their stock every day.
And if you're a SpaceX, why go public at all when the private markets back you all the way? Jeff Thomas, Executive Vice President of NASDAQ's Corporate Platforms business. Thank you so much. Now, coming up on Bloomberg Technology, we're joined by Amrita Ahuja, CFO and COO of Block, a company named on Bloomberg's recent Ones to Watch list, to discuss the company's plans for upcoming launches and furthering their strategies for growth. Really looking forward to that conversation. From San Francisco and New York City, this is Bloomberg Technology.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see, it's all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is did you take the tumor out? And then number three, they make difficult decisions on incomplete information. Those things are realized.
At 11:30 a.m. Eastern Time, the US sells $80 billion in 4-week bills.
Passion for working with people and had some sense of self-awareness.
Shortly expecting those results, I'll lead with a high yield.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Deal flow is still not quite there.
Private equity has slowed a little bit in the activity.
In our pipelines, we're seeing a meaningful acceleration in deal flow.
The key concern we have is, will there be activity where the buyers and sellers meet in the middle? And that hasn't quite happened yet, but I'm hopeful it will.
For the credit markets, you still have a lot of options, whether it's a recap, a minority sale, and that's what we're seeing. So it may not be asset sale outright, but a transaction's going to occur.
Now that rates have stabilized and that cuts are on the horizon, we are seeing the pipeline pick up meaningfully, which means you should start to see more deals, more velocity, and even if the base rate comes down, it's still going to offer a pretty attractive rate.
Some of the top names over the last couple of days at Bloomberg Invest. And look, talking about rates stabilizing, today we actually see a bid on rates. We see perhaps yields come down even ahead of that 7-year auction we get a little bit later today. We're off by 4 basis points. Now, some of that movement into the bond market has just stemmed some of the anxiety around the technology play here on the equity market as well. We're down by only 0.1%, even though we have some big drawdowns in single names. But for now, we're stable at off about 30 points on the NASDAQ 100. That is the bigger benchmark. I'm looking at the Bitcoin currently off by about a percentage point. Crypto managing to push on higher as we see a little bit of, well, risk on sentiment. We've got it in bond market, we've got it in the crypto market. But let's look at some of the individual names in the equity market that maybe is dragging down the overall NASDAQ 100, because Micron, the key one, underperformed, down by more than 6%, as you'll see. Look, the CEO comes out, spells the fact that they're going to see record sales in 2025, says that revenue is climbing more than 80%, points to a forecast of revenue up more than 90%. Not good enough. The market wanted to see more. This is all about, of course, the high bandwidth memory coming from Micron and its AI play. I'm looking at PDD as well, off by more than 3%. Its depository receipts traded here in the US. Pinduoduo owns Temu. And Temu maybe has some more competition coming from Amazon. That's dragging it lower. I'm looking at Palo Alto Networks, though. Interesting one, Ed. We're up more than 5%. Zscaler doing well as well. Security companies, cybersecurity, a real focus today. Is that because some
5.27%, 5.27%. Bid to cover ratio 2.55, 2.55. The US sells $80 billion in 4-week bills and awards 78.95% of bids at high.
Of Bloomberg's ones to watch list in finance and markets. Fintech company Block, known for financial services like Square and Cash App, made the list, shining a light on Amrita Ahuja, Block's CFO and COO. And I'm delighted to say Amrita joins me now on set in San Francisco. In my career, I've met many, actually, joint CFOs, COOs, but it's a really interesting dual role where maybe at times you conflict with yourself because you have to manage the numbers and you have to run the operations of the business. What's that like?
Well, first of all, thank you so much for having me here, Ed. I really appreciate it. That's right. I have to hold both things, aspiration and discipline. Aspiration because the market opportunity that we're going after is vast, over a $200 billion TAM across financial services and commerce. And discipline because we want to do that with ruthless focus on unit economics and holding ourselves accountable to returns on those outcomes. And so as a COO and as a CFO, I'm very focused on both and continue to show, to demonstrate our progress towards our investment framework and financial targets of being a Rule of 40 company in 2026.
The stock is down 18% so far this year. There are multiple stories coming with Block, some of it very closely tied to Bitcoin, and we can talk in a little bit about strategy. But where would you say the company is at right now, in where you're trying to get it to?
I think that we have a tremendous opportunity ahead for growth. If you look at Q1 at an $8 billion annualized gross profit, scale, we were growing over 22% year over year. To be at that scale and to continue to demonstrate growth, we clearly are serving very important needs on behalf of our customers, whether small businesses with Square or the over 54 million monthly actives for Cash App, which are individuals. We see a significant opportunity to do more of that. We're early. We use technology and AI to underpin all of our products, and we're focused on improving our product velocity to ship more products to our customers.
You are early. And in many ways, Amrita, regulation then has to play catch up. I mean, it's not missed on many that they're trying to bring financial and technology regulation into the 21st century. That's what the last sort of Congress vote was actually on. And I'm interested as to whether you think regulation is there in the right place for you at the moment with Block, because there is lots of investigations and there's lots of people trying to get their head around the future of crypto and payments.
That's right, and we welcome regulation as it appropriately serves consumers. We work with regulators. We look to build a healthy ecosystem for our customers. It's our top priority to maintain a safe, secure platform that builds trust over time. So ultimately, that's good for Block.
Trust over time. There has been some concerns around, for example, money laundering worries, trading within sanctioned countries, which of course I know is being investigated at the moment when it comes to Cash App. How are you working with regulators in that to ensure that you are bringing the level of transparency I'm sure you have internally to those externally?
We take any of those allegations extremely seriously. We're working by investing in the appropriate areas that, again, build a healthy and safe and responsible platform for our customers, including our compliance teams, our product teams, our risk management teams. We are always open to feedback and want to create that appropriate dialogue with regulators, policymakers, and our company, along with our customers.
Amrita, when I moved to San Francisco in 2018, Jack Dorsey was probably a little bit more closely associated with what was then called Twitter. And a lot's changed since I've been here in the last 6 years. He's now at Block, and what is that like working with him, your relationship with him and the role he plays day to day in the company? And when I look at the Bitcoin news that came out recently, how much is that where he's focused?
Of course, Jack is a visionary. He's now not only running our company, but also running Square. And so I would say that the vast majority of his focus and our focus is on our two mature ecosystems with Square and with Cash App. With Bitcoin, we have a stake in the future where money can move at the speed of the internet. And we think Bitcoin is the likeliest contender to enable that vision because it is resilient. It's been battle tested. It's secure. It's transparent. It's fairly liquid. And so, what we see as we look around the world is that often the most underserved customers are the ones who have to pay the highest rates to access their money or to move money around. We think Bitcoin has the opportunity to change that. We, of course, are going to be disciplined and prudent in how we invest towards that future. Less than 3% of our OPEX goes towards Bitcoin experiments and initiatives. But it could be a potentially transformative one.
I'm really interested in the investment side of it, Amrita, because yes, you're building product and can entirely understand why you'd want to experiment for the good of the consumer. But why the balance sheet? Why continue to have 10% of gross profit going into Bitcoin products as well each month, and indeed keeping it as an investment on the balance sheet?
Yes, it's 10% of Bitcoin gross profit, which is less than 5% of our overall gross profit. So it's a fairly modest sum. And what it helps us do is actually learn. It helps us understand what it means to custody Bitcoin, what it means for our Treasury teams to be out in the market buying Bitcoin, what it means with respect to insurance. There's a lot of different things that we get to learn from this relatively modest and small investment in the scope of our much broader balance sheet.
Amrita, it's great to have some time with you. Congrats on being on the list. We appreciate your time. Amrita Ahuja of Block. Meanwhile, coming up, we're going to be joined by Shruti Gandhi, founder of Array Ventures, to talk about the really early stage investments in AI and how they're paying off for her. This is Bloomberg Technology.
Morning from our world headquarters in New York, I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television. The top names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
Time now for our VC roundup. First up, Anduril is in talks with Peter Thiel's Founders Fund and other investors to raise $1.5 billion. That's according to sources. This would be one of the year's largest funding rounds, not exclusively focused on AI, just AI enabled. Plus, Sequoia Capital is leading a $16 million investment in Dust. It's a French startup building customized AI bots for companies. Now, the startup makes software that plugs into offerings from OpenAI, Google, Anthropic, and Mistral AI, and then links up to apps like Slack. And it's not Sequoia's only AI investment on the day. Clay, an AI startup focused on sales and marketing for businesses, let's just raise $46 million from investors like Sequoia, but also Meritech and First Round Capital and others. This brings the company's valuation to $500 million, Ed.
Okay, let's keep talking about investing in AI and bring in Shruti Gandhi for more on today's VC Spotlight. She's the founder of Array Ventures, which manages $150 million in AUM. And the focus is getting into AI names at the very earliest stages. And I think this is a very well-timed and important conversation. 2 days ago, we had the Etched founder and CEO on the show, and they had this debut round, $120 million. And after he'd gone off the show, loads of people reached out to me on social media and said, great interview, but like they don't have anything to show yet. They're talking about taking on the NVIDIAs of the world, and it's a hardware play. And so that's what I want to ask you about in the first instance. Getting in at the very early stages, how do you know that that's a viable business, a viable technology, a viable plan?
Thank you, first of all, for having me on this show. Very good question. Actually, it's not that hard. Today, there is ways to invest, which is one is focus on pain points, and then there's areas to just invest because they're glamorous founders. There's also, AI is kind of distributed currently in two ways. One is model companies, and then there's applications.
Yes.
I'm sure you've heard a lot about that. There is also...
Well, just as Caroline just outlined in some of today's news stories.
Exactly. So there is a whole bunch of investors going after the model companies. And they're all it's kind of race to the bottom in some ways because they're all just getting better. But people and funds are feeling like they're missing out on getting into the best AI revolution just because it's being compared to the early days of internet today. But then there's the application layers, and then there's real pain points that companies need to solve, be it in different form of verticals and HR. It could be in CIO, CISO. Everybody needs efficiency, and today you can solve that by not raising that much money. You can solve for that early days by testing the waters, calling your friends, and figuring out what do you need to solve and how can I get started with just a few $1 million. And once you do that, then you can go raise a big amount of capital after that. But I don't think everybody needs to raise that much money if you're not a model company.
Okay, so if you're going to allocate some of your money to a company that just wants the first round to get things rolling, to answer the consumer's need, how are you deciding where's the best place to put it?
That's right. Thank you so much for asking. But I think it's what I just said. We focus on pain points. We talk about this thing called agitated workforce, which is if a founder is at a big company, agitated, they're really upset about trying to solve some big problems in AI, in data, in infrastructure, in cloud, in security. But what they cannot do is get permissions and budgets with the tight budgets today from their CIOs to go solve for that within the company because it's not mission critical at the current company. Then they go on and go say, talk to their few friends and they say, if I build this, will you buy? And their friends out there are saying yes. So if three of the five friends I talk to, they say that, that's when our founders go and build, get the conviction to build those companies.
Yeah.
Frankly, you don't need that much money early days to put a team together, especially if you have a core team of amazing engineers, to go put that team together, go solve for those problems because you've built them before. So what we invest in is pre-seed companies. So that's first check ever into a company, and you do not need that much money to go start and validate your ideas.
Your initial check size, about $1.5 million. Shruti, how long do you then stay with the company? Because as you say, there's a sudden rush, a tussle to get in at later rounds with heady valuations. Do you have a liquidity event then, or do you try and ride it out for the exit, for the M&A, for the IPO?
That's a great question. We don't think of ourselves as a one-stage investor. Usually we ride it out, but we've been very fortunate in the last few years to get liquidity events at Series B, C plus stages of the companies. So sometimes, as a prudent investor, we will sell like 1/10 of our shares or less than 1/10 of our shares in a company. We just did that and we returned our first fund, which was a 2016 vintage. So we will consider that as a case-by-case basis, just as a fiduciary responsibility to our LPs. But our goal is to never get out at the second or the third round of the investment.
Shruti, one of our audience members has written in on the Bloomberg terminal via IP and say they agree with you that AI can mean different things, but they add that for some investors, mock-ups and wireframes are not products, and for some other investors, they are. You know, that's an interesting point. Where I want to go to end is, you know, you have to find these people. If they're pre-seed, where are they coming from? And where are they coming up with their ideas?
Yeah, so it's a great question. Oftentimes people think that you just call your other VC friends and get deal flow, but not in pre-seed. Pre-seed, you're building networks at operators, at amazing companies that are coming, you know, people that have worked at for 2 to 4 years at a hot company
Might
prior
have been
to that.
laid off?
Maybe or maybe not. It doesn't matter. I think what matters is they've built this before. What matters is they know how to build this, and when they go take it on as a startup after this, they're going to go do it with very little amount of money, which is a pre-seed round. So that's where we invest, in people coming out of different, operators coming out of different companies.
Shruti, so great to have you on. Come back. Shruti Gandhi, founder of Array Ventures. Meanwhile, coming up, we're going to be joined by Bloomberg's Ryan Gallagher because we're discussing the recent cyber attack against lab services provider in the UK, Synovis. It's caused a major breach of NHS records. What are the implications? This is Bloomberg Technology.
I think I was around so many powerful people my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios. And, you know, any given day it would be the head of a studio and, you know, just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep reading World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
Talk sport. FIFA seeking to raise as much as $2 billion for the expansion of FIFA Plus. It's the free streaming service launched by the football's global governing body to offer live coverage of matches, according to people with knowledge of the matter. For more, let's bring in Felix Gillette. You like how I called it football?
Yes.
Soccer. Felix, it's a good time to be selling some sort of sports right now.
It really is. I mean, it's an expensive time if you're a buyer.
Yes.
But, you know, all these streaming services have launched these ad-supported tiers. I think the biggest movement right now in the whole home entertainment world is the fact that, you know, as they try and build out these advertising, ad-supported part of their platforms, they're going to need more live sports, right? And so every time any bit of sports rights comes up for sale, You just see the prices going up and up. You see the NBA, about to sign these huge deals. They're getting a big bump. FIFA, if they have some secondary packages, you can go out in the market, sell the rights, or distribute them yourselves. It's a great time to be selling sports rights.
Felix, tell me a bit about FIFA Plus. I mean, I have Sling, I have Paramount Plus, I watch football at the weekends on Peacock. Do I need to get myself FIFA Plus as well?
Depends on your level of addiction. I mean, you have to go pretty. You have to go pretty far down. I mean, the best soccer, the World Cup, those rights, the broadcast rights, for 2026 have been sold. You'll watch in the U.S. You'll watch them on Fox. But I think all of these leagues, you get down to the smallest slices possible, whether it's soccer, tennis, basketball, football. In some ways, I think actually the NFL has been the model for, you try and chop them up as small pieces as possible, because every slice you can find a buyer for, or you can put them on your own streaming service and, get advertisers or, sell subscribers.
Indeed. Bloomberg's Felix Gillette out of New York. Thank you. A big story out of the United Kingdom. London hospitals are facing major consequences following a cyber attack against lab service provider Synovis on June 3rd, which resulted in the release of sensitive medical records and NHS patient data. Bloomberg's Ryan Gallagher joins us with more significant, seeing some of the UK papers cover this as well, Ryan. Just explain what happened.
Yeah, so what happened was on June the 3rd, a Russian-linked criminal hacking gang that call themselves Quillim broke into Synovis's computer systems and deployed a kind of malicious software that essentially locked down Synovis's computers. And Synovis is a really important company because it provides blood testing, biopsy testing for a whole range of hospitals in Southeast London in particular. And what it meant was that these hospitals couldn't test blood for their patients. And now, into the fourth week of this incident, the hospitals have been unable to test blood at normal capacity, which has obviously caused massive problems for them.
Yeah. And then there's the horror to realize that maybe your own personal information while pregnant, your own newborn, your own diagnosis of schizophrenia might now become a more public form of information, Ryan. One's hearts go out to those that might well be affected, and many are. And I'm wondering what, therefore, the ramifications are, because it seems as though the NHS knew that there were vulnerabilities.
Yeah, I mean, the unfortunate thing is that the gang behind this attack actually on Friday last week published a huge amount of data that they stole from the computers before they locked them down at Synovis, and they've now, dumped that all online. And I had a look through some of it, and it's a huge volume of information. I seen myself 40,000 quite detailed medical records on patients from across the UK, which was the striking thing, because obviously the incident itself has primarily affected London hospitals, but what I found was that Synovis has actually been doing these tests for hospitals across the UK and Ireland. So it really is impacting, the data breach is impacting the whole UK and Ireland now, which wasn't really understood at the outset of this. So there's people across the country who are, their personal confidential medical information is potentially being put out there as a result of what's happened.
Meanwhile, the NHS England trying to talk of their cyber resilience, the amount that they've invested, but thus far, they need to keep an eye on their third parties. Ryan Gallagher, great reporting. Thank you for bringing it to us. Meanwhile, that does it for this edition of Bloomberg Technology. A lot we got in.
Yeah, incredible reporting from our colleagues in newsroom around the country, around the world, actually, in fact. Recap all that on the podcast. You know where to find it, on the Bloomberg platforms, but also on Apple, Spotify, and iHeart. One more day to go, and it's a big one this Friday. This is Bloomberg Technology.
shortly expecting the Freddie Mac mortgage rate statistics for the US.
The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything. The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
This is Bloomberg.
This is Bloomberg Equality. I'm Caroline Hyde.
And I'm Romaine Bostic. This month,
30-year fixed-rate mortgages hits the lowest level in almost 3 months, at average 6.86% as of June 27th.
And ultimately, for our collective global prosperity. We've dug deep into several key topics. That includes the corporate retreat from DEI, as well as the nuance of protecting rights across the globe. But today, we're going to turn our attention to the United States with the 2024 election in focus.
Sitting President Joe Biden, former President Donald Trump preparing to go toe-to-toe tonight in the first presidential debate taking place in the key battleground state of Georgia. Now, the matchup is set to offer voters insight into the policy priorities of the two candidates who remain divided on a number of issues. One of those priorities, reproductive rights. Earlier today, the U.S. Supreme Court announced a decision allowing emergency abortions to take place in Idaho for the time being, a decision that was inadvertently posted online yesterday. Now, over the next 30 minutes, we will discuss the range of hot-button issues, from the economy to immigration, that tie directly to societal inequities and remain top of mind for voters, for businesses, and beyond. But look, let's start with the Supreme Court ruling, Romaine.
Yeah, a very timely ruling setting up ahead of tonight's debate here, a ruling on that Idaho abortion decision, and it really highlights what you're seeing on the chart behind me. The fact that reproductive rights abortion has actually become a huge campaign issue. We know for quite some time it's been a huge issue for Republican voters, but we've actually now started to see this become the primary issue for Democratic voters as well as independents as well here. Right now, that's creeping up to more than 50% of the electorate right now, making this, Caroline, a top campaign issue.
Kaylee Lyons joins us now to discuss what the priorities will be at the debate later today. And Kaylee, for many it will be women's rights, abortion rights, and it feels as though Trump has started to be more
So the information report that Apple is exploring easily replaceable iPhone batteries.
On what his stance on abortion actually is, Caroline. His latest policy that he does seem to be sticking to is that he wants this left to the states, which is exactly what the Dobbs ruling that overturned Roe v. Wade ultimately accomplished, sending this power back to the states. That ruling, of course, happened 2 years ago this past Monday, and since then we have seen more than a dozen states either enact almost total abortion bans with very few exceptions, and even more still enact 6-week bans in the aftermath. And what we know is in 2023, the first full year since Dobbs fell, 1 in 5 women had to travel out of state to get an abortion because of those restrictive policies in many states. And what data from the Guttmacher Institute suggests is that that disproportionately affects low-income women who may not be able to afford that kind of travel. It also, according to the data, affects women of color more greatly, which makes abortion an issue that has the power to exacerbate inequality, be it racial, economic, or gender equality, because, of course, economically, the economic outcomes for women are highly dependent on when they choose to have children. And in fact, data does suggest that in those states with some of the most restrictive abortion policies, they also have some of the largest gender pay gaps. So abortion is certainly one of those social, cultural issues that is going to be at play tonight and in the election. But it also is part of this wider pushback against so-called wokeism, pushback on some of these cultural issues, including LGBTQ plus rights, which we have seen espoused, especially by those in the harder right of the Republican Party. Certainly you're seeing that in states such as Florida under Governor Ron DeSantis, but you're seeing it congressionally as well, including an entire month last summer that was dedicated to pushback against ESG policies.
Oh, yeah. That's a month that a lot of us will remember for, I don't know, at least the next few weeks, Kaylee. I am curious, as we head into the debate tonight, and we talk about the singular issues, and we know a lot of voters really go to the polls with really one big thing in mind. Reproductive rights has obviously risen to the top of the list for a lot of folks. But talk about the economy, because in the past, we used to always say it was about the economy, stupid, and it feels like it's a factor, but is it the dominant factor that it was in the past?
It still is a dominant factor, very much so, Romaine. In fact, most polls nationally show that voters either rank the economy or immigration and the border as their top issue. And it's especially an issue that affects minorities as well, and those at the lower end of the income spectrum, especially considering the bout of inflation we have seen under the Biden administration, with prices up about 20% since he took office. You could look at the words of the chairman of the Federal Reserve himself, who has said that you see the burden of high inflation falling heaviest on those who can least afford it, which does tend to be those lower income households and many minority households. And that may be a reason, according to many pollsters and strategists we speak to, that you are seeing minority voters turning away from President Biden, even though they were a huge part of the coalition that elected him into office in 2020. Just last night, new national polling from the New York Times and Siena College found that 26% of Black likely voters are indicating they would support Trump. Back in 2020, that number was only 5%. So you're seeing this very significant demographic shift potentially toward Donald Trump, away from Joe Biden, and the economy could very much be a reason why. And we expect that among the points Donald Trump plans to hit the hardest against Biden tonight, the economy is going to be at the top of that list.
Kaylee, what else should we anticipate for today? I mean, obviously it's being run in a different manner, no people in the audience, a mute button, but how divisive, how much a focus on inequality ultimately will be focused on here?
Well, it certainly will be divisive, Caroline. I think the contrast between these two candidates will be quite stark, even if it is a bit more contained and controlled than when we saw these two debate in the last cycle in 2020, given the mute button and the lack of a live audience. But we can expect them to hit their points incredibly hard. There will certainly be a lot of blows dealt. Of course, Joe Biden likely to focus on abortion rights as well as the protection of American democracy, whereas Donald Trump, as I mentioned, likely to focus extensively on the economy and also on the issue of the border. And immigration, when we're having this kind of polarization and equality conversation, is very important. In fact, the University of Southern California has a polarization index in which it found that immigration policy is actually the most polarizing in America right now. And we see that borne out by the complete lack of ability for Congress to do anything in a bipartisan manner to address immigration and border policy, which is why Joe Biden in recent weeks has taken several executive orders aimed to address that. But you have to do that in the executive branch at the moment, which makes what these executives say about that this evening all the more important.
Kaylee Lyons there. Speaking of polarization, we continue that conversation right now with a look at a 2023 Gallup poll that was highlighting some of those partisan gaps over issues like the ones that we just touched on here and expanded on over the past 2 decades. We had a chance to catch up with Rachel Kleinfeld, senior fellow over at the Carnegie Endowment for International Peace. They've done a lot of research on this issue of polarization, and their findings, they might surprise you.
Americans are actually not very polarized on policy issues. You get huge agreement in the middle on really hot-button topics like immigration or abortion, gun control, but we're very affectively polarized. That means that we hate each other, and we don't know that we have a lot of similarities in our policy beliefs.
Well, where is that coming from, though? I've heard this argument before that, when we hear about these big culture war issues and it gets amplified and we become so obsessed with it, and I've heard this argument that those opinions represent probably a small fraction of our society, yet they do seem to dominate our headlines, our media, and certainly our social media.
That's exactly right. What we have is a small chattering class, a lot of media, and some political partisans who are very incentivized to push us to become more and more polarized. And those entities sell papers, get eyeballs, get votes by polarizing people more and by telling us that we're more polarized than we are. And so there's real incentive structures working to make Americans think that they disagree more than they do. What that means is that they tend to vote for more extreme candidates than they otherwise would, and that gives the cycle a self-fulfilling quality.
So pull apart those political incentive structures and ultimately whether a different voting system changes that, or is this something that we're seeing no matter how people vote around the world?
Well, what we're seeing actually is that, for instance, in Europe, far-right parties gained in a number of countries in the recent EU elections, but they didn't take over a whole political party. They gained a small vote share that would give them a few more parliamentarians in the EU Parliament, and people had a wide variety of options to pick from if they still wanted a more typical center-right or center-left, and et cetera voting. So that ability to pick from different flavors of politician rather than just two means that although people have preferences that are moving, the whole party isn't flipping into a real polarized place. America, by having two major parties and also by having a winner-take-all system, that means you get one extra vote more than your opponent, you get the whole shebang, whether that's a state or a city or a district. Those two structures are found to be very polarizing structures and also lead to more political violence.
So what becomes the solution, if at all, particularly here in the U.S. here? Is there anything that could sort of arrest this progress and even more importantly, I guess, reverse it?
Absolutely. So there's been some great research out of Stanford. They looked at 30,000 Americans. They did all sorts of interventions to see if there were ways to decrease polarization. And a number of them proved really useful. One was just correcting misperceptions, just telling people, hey, guess what? The median Republican and the median Democratic voter actually share a lot of the same policy views. You're being politicized by other forces. Things like that make a big difference. Showing people that Democrats and Republicans can get along to do other things, to build a community garden or to act in interests that they both share, that helps a lot. Helping Americans realize just how bad it can get, what it looks like when other countries fall into dictatorship or political violence, that can help a lot. And then while Stanford didn't test it, we know from these cross-country comparisons that different voting systems help a lot. When Northern Ireland got out of its troubles, its real extreme violence, they switched to a proportional representation system because they knew that it would depolarize their country. And in America, there's a number of groups, usually led by citizens and blocked by professional party politicians, but attempted by citizens to give people just more options to vote for. So Alaska's passed voting reform, Maine's passed voting reform, and it's in the works in Nevada and other places.
Well, that gets to the point of sort of who ends up sort of helping to lead this process. Is it going to be sort of a singular figure, maybe at that federal level, or is this going to have to be much more organic from the individual communities, cities, and states?
So people who win in the current process are unlikely to want to change that process. That's just the incumbent reality. And so it tends to come from citizens, although some members of government, of course, are more open to it than others. And in cities and states that have citizen referenda, where people can put things on the ballot themselves, you're seeing a real desire to move towards systems in which people can vote for, say, a socially conservative Republican over a fiscally conservative Republican, or vice versa, or a Democrat who supports the working class and is more class-based versus a Democrat who's more socially and racially aware. And so you're starting to see a desire for, can we really express our actual feelings? And by the way, can we be enfranchised if we're part of the minority in our state that's still pretty large? California, for instance, is a Democratic state, has a huge Republican Party, numbers-wise, that's disenfranchised. And you see the same thing in major Republican states that have large Democratic groups. And those people don't end up getting to share what they really feel and don't end up feeling represented when you get the ideology of extremes taking over the candidates, so they don't represent the whole of the state. So you see a lot of citizen desire for this change.
What about corporate desire? How are companies weighing in or trying not to at this moment?
trying not to might be the main thing that they're trying to do. You know, companies really would rather do business and stay out of politics. Polarization is not good for business. It makes it hard for them to keep their staff happy. They get demands from both sides, and whoever they please, they know they'll displease the other side.
Our conversation with Rachel Kleinfeld, Senior Fellow at Carnegie Endowment for International Peace. Now, coming up, we're going to pick up where Rachel left off and discuss more on the impact of the election cycle on corporate America. Johnny Taylor is joining us, CEO of the Society of Human Resources Management. That's next. This is Bloomberg Equality.
You actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position. I mean, what's the thinking? Yeah. I mean, like, what's that about?
We're not forcing everybody to be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier. Right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
This is Bloomberg Equality. We're centering our attention on this election cycle through the lens of equality and what it means for corporate America. Now, recent analysis shows that executives are going quiet in this presidential race. Caroline.
And maybe that's where it should be, a return to the norm. Now, there's some really interesting data out from AlphaSense, just highlighting how many times in earnings statements we're seeing executives talk about election-specific issues. And it's dialing back down. Now, look, in 2020, more than 900 times on average was it being cited by executives in these earnings statements. But remember back to 2020, you had Mary Barra, we had the executives of Walmart calling out for a peaceful transition of power. We had, of course, the fallout post-George Floyd. We had much to be said about the rights of individuals. But now we're going back to the norm, and we're just looking at the analysis of AlphaSense 2024, about 300 times. Well, that's more akin to what we saw back in 2016 remains. So it does feel as though corporate America, the executives, are going quieter.
It'll be interesting to see whether that sticks. Let's get some insights out of Johnny Taylor. He's the president and CEO of the Society for Human Resources Management, and he joins us right now. And Johnny, I want to start off with that chart that Caroline had up, and you saw the big spike in the engagement, I guess, if you will, by corporate executives on these political topics during 2020. And it's very obvious, in hindsight at least, that a lot of that came because there was a lot of pressure from customers as well as from employees within those organizations. Are we not seeing that same pressure this election cycle?
No, actually, you're seeing the opposite. It's interesting when we reflect back on the 2020 race.
Everyone, frankly, felt the pressure. When I say everyone, corporate executives, CEOs in particular, felt pressure to speak on every issue, right? If you recall, between COVID and whether you masked, whether you returned to the office, George Floyd, Asian hate, there was so much going on in 2020, and employees were demanding, essentially, that their leaders speak up, speak out on issues that, frankly, oftentimes had nothing to do with their business. Well, there was one guy back in 2020 who was the CEO of, I think it was Coinbase, one CEO who made the headlines when he said, no politics at work. I'm not going to allow you to talk about it. If it doesn't have to do with work, don't talk about it. And all of the headlines described, oh gosh, a third, as many as a half of his employees quit because he dared to suggest that we not do that. Well, guess what? We're now all saying maybe he was smarter than the rest of them, because what happened is by the CEO taking a position and allowing people to discuss these things at work, we got away from work.
Right.
People, it affected retention, engagement, people's overall happiness at work was impacted because we went into a place that perhaps we shouldn't have in hindsight.
I remember that, Johnny, because my husband is a senior manager and executive over at Coinbase, and I'm interested from your perspective as to whether now we see more companies doing similar, more executives, and indeed more employees coming in saying, I don't want to show up as my political self, I just want to show up as my employee self, or is it swinging the other way?
No, that part. More and more employees are saying, like, I'm exhausted. I come to work not to continue the fight. Like, I dropped off the kid in the morning, fought with them, I fought with the spouse, etc. And then I have to come here and be bombarded with, what do you think about the politics? What do you think about what the Supreme Court did? What do you think about this, that? So employees are resoundingly telling us, we don't want you to have blanket policies that say we can't talk about anything at work, but we prefer you just bring the temperature down. Just bring it down. And the other thing that we're hearing, which is really fascinating, is more and more there's been an outcry for civility in the workplace. In fact, we started a big campaign, 1 million civil conversations, because on one hand, we've been telling people it's okay to be your authentic self at work. Well, unfortunately, some people's authentic self is not appropriate for work, and frankly, arguably not appropriate for any place. And so we said, bring the temperature down. Employees are saying, I just want to come here to work, and sure, we can talk about a few things, but when it becomes ugly,
I am curious though, Johnny, when we talk about how human resources managers have to deal with these issues, we'd be remiss in not pointing out that a lot of the efforts that companies across the board have made for inclusion and diversity in their workplaces, whether it's explicit or just implicit, that some of those issues run directly into the center of our culture wars. And I am curious as to how they're going to square that circle. Even if there isn't the same pressure in 2020, I'm sure you know there are still people kind of picking apart these training programs, these inclusivity disclaimers and other things that these companies make. How are managers supposed to address those issues when at the same time they are maybe fundamental to their corporate ethos?
Oh, they're incredibly fundamental. Our diversity is our strength. And what we've done is decided to have a different shift. There's been a pivot. The conversations are now focusing less on diversity, which by definition means difference. We focus so much on differences, now focusing on inclusion. So more and more, even at SHRM, we talk about inclusion and diversity. Not that you ignore diversity, because we need historically underrepresented groups to have opportunities, but the focus is on inclusion. I often say, as diverse as we've ever been, yet as divided as we've ever been. So what you're seeing human resources leaders and corporate leaders say is, yes, we want diversity, but we've got to ensure that everyone feels included. And that's tough, but it's the goal.
Johnny, we've got about 30 seconds. One piece of advice to bring down temperature if you're trying to manage this.
Demand civility, and there has to be serious consequences for employees who engage in incivility at work. It's not enough, though, just to demand it. We've got to show our employees how to be more civil, especially after tonight's debate.
Johnny Taylor, pushing us forward. We thank you, President and CEO of the Society for Human Resources Management, or SHRM, as you said it. Thank you so much for the piece of advice, and certainly a piece of advice that many are trying to take on board ahead of tonight's, toe-to-toe that we see with former president and sitting president Remain. Still ahead, we've got our takeaways from the season of Bloomberg Equality.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? One of y'all's in trouble.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
This is Bloomberg Equality. Look, the takeaways from this episode, from the season. I mean, civility, I thought that was such a good point ahead of tonight's toe-to-toe with the presidents.
It was a great way to end it. I mean, that was basically our last interview of this series. And I think so many of the issues that we're talking about, obviously there are some fundamental issues that need to be addressed in our society, but we know that the amplification of a lot of this is about the lack of civility. Everyone deciding, I'm right, you're wrong, and no one really wanting to see the differences in between. And we talked about this with Rachel Kleinfeld, who kind of said that the polarization we see in the society is probably a little bit more, I guess, not really the real picture as to what's really on the ground.
We don't hate each other,
We don't. Apparently, we all love each other.
We've actually all quite similar, but we're just not able to see those similarities. And look, there are things that are being amplified, whether it be in the world of social media or not. I feel like our first ever episode, all about the fact that, look, we're pulling back against DEI. Maybe that's not as proactive, not as all-encompassing as it seems when you dial into a conversation. It's actually just the chattering classes, and actually companies are still doing the work.
And it gets to this idea of nuance and middle ground, right? I mean, sometimes we swing the pendulum from one extreme to another, and we forget that for the majority of Americans, we're all just kind of looking for a comfortable middle ground where we can just, be happy and live, Caroline. That's all we really want.
And we made it global, too, the fact that we looked at what ultimately equality means around the rest of the world. And I thought it was interesting how we brought in other voting systems in other countries and how that is currently seeing, the right-wing trend that we see in Europe. But maybe that doesn't become all-encompassing to your politics.
Yeah, absolutely here. And we should point out, it's not just about the U.S. election. As you said, this is a global issue. And I think we've really reflected that in this series. And it's always a good way to sort of look at who we are, not just as a country here in America, but really as human beings across the world.
How nicely put.
Absolutely.
I wish we could do this some more, but sadly it's our last one for this particular season.
Yeah, this is it for our month, this month's special Bloomberg Equality programming. We will be back next June with hopefully a whole new rundown of some of the issues going on out there in the world. Thanks for tuning in. This is Bloomberg.
We promise to be civil.
biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? It's just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
This is Bloomberg Markets, and I'm Shonali Bassick. Let's get a check on these markets. The S&P 500 wavering on the day today, of course. Let's take a look at it here because we have had moments where we have been in the green, but we have been essentially flat here on the day. The NASDAQ 100 has been getting a little bit more of a lift on the day here, and the bond market is really where the places get really interesting. You're seeing a move downward in the 2-year yield to end the week lower on the week, about 471 on the 2-year. The 10-year also lower by about 4 basis points to 428, almost 429, but still higher than where we started the week. Some midday movers on the equity side. Walgreens shares plunging the most on record after lowering its full-year guidance for a second quarter in a row. It plans to close more stores than expected and make other organizational changes as a new CEO seeks to turn around the business. Meanwhile, Levi Strauss shares also dropping by the most on record after quarterly revenue was below estimates. Sales in the Americas were strong but fell short of expectations in Europe and Asia. The company, however, reaffirmed its full-year outlook. And outside of market moves today, big news centered today around the SEC. Earlier today, the U.S. Supreme Court curbed the regulator's ability to press complaints before in-house judges, saying defendants have the right to make a case to a federal jury. Also, Bloomberg reporting saying the SEC is also growing more concerned about the private credit valuations out there, per the commission's top enforcement official. Bloomberg's Greg Storr and John Sage are covering these stories and join me now. And starting with Greg, of course, we've had a lot of news coming out of the Supreme Court, but perhaps explain the significance of this SEC decision in particular.
Sure. What it means is that the SEC can no longer take cases when it accuses somebody of fraud and seeks damages. It can't go before one of its in-house judges. Now, the SEC had already scaled back doing that because this and some other decisions, court decisions, were sort of the handwriting on the wall. But it's going to reduce the SEC's ability to, reduce its leverage to get big settlements. And this is a ruling that is not just going to affect the SEC. It could affect a couple dozen agencies that have similar systems where they can sometimes go before administrative law judges and sometimes go into federal court. Now they're going to have to go into federal court.
Perhaps explain, Greg, the system by which other agencies would be affected by a rule like this.
Yeah, so what the Supreme Court said was that the Constitution's 7th Amendment protects a jury trial right in these situations. If it's a kind of claim that used to be brought by under so-called common law, where a private litigant would have the ability to go to court, well, then the Supreme Court said the SEC or some other agency still has to go to court if it's trying to get damages from somebody. And that same principle would likely apply, or at least arguably apply, to any agency that is accusing somebody of wrongdoing or a company of wrongdoing and trying to get damages. Those agencies now, in all likelihood, will have to go to federal court rather than relying on their in-house judges. That might be a faster, more efficient process for them.
Now, turning to you, John, when we think about the SEC in particular, obviously it's been a pretty aggressive year over at the SEC, and there's a lot of things they've looked at. They have tried to get a handle, particularly on private markets. But there has been limited successes, of course, people fighting back. What is the concern here now when it comes to private credit in particular?
Sure, and what the enforcement agency is kind of saying with the story is we're looking into multiple different avenues, but it really boils down to, at least in my take, two things: the opacity of the market and also the consolidation that's happening there, where there's so much money. The SEC is really just following the money, especially when you see some of the biggest endowments, some of the biggest pensions, even the biggest insurance companies saying, we want to invest more money in private credit. The SEC is saying, well, we should probably be looking at private credit more too.
Well, here's the big question, too. At the end of the day, is there anything the SEC can do about it?
The interesting point is that enforcement is actually saying this now, where exams was previously saying, and they put it in their annual priorities, that we're going to look into the private space, but exams examines, enforcement enforces. So this is really interesting to hear enforcement saying, we're looking at this as well.
John Sage and Greg Storr of Bloomberg News, thank you so very much for the look at the SEC here. Of course, other agencies as well, and concerns across the market. Now, coming up, some of my conversation about the next era of professional sports, the new thing in investing, with Milwaukee Brewers owner Mark Atanasio. Stick with us. This is Bloomberg.
Saturday mornings, I understand you have off.
Yeah, Saturdays is always a day where I power down. So I run at a relative high pace throughout the week, try to wrap things up, and Saturday is a quiet day for me in terms of work. And I start typically by playing tennis with my wife. We go for a swim all year round. After that, have a nice lunch, and then I'm on to a good trajectory for the weekend. And then Sunday, I try to prepare for the coming weeks. But through a weekend, I would send either no emails or very few emails, because I want to drive a culture where all get an opportunity to spend the weekend as they fancy. I think what we do is so difficult, and it takes so much creative thinking to succeed, that if you're always on, always busy, the bandwidth of your reflection is just too narrow. And I generally believe that Monday mornings I'm a better leader than I am, say, Friday afternoon. I also take all my vacations. I generally believe I'm a much better CEO right after a vacation than I am before vacation.
From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Some of my conversation with Los Angeles Lakers and Dodgers co-owner Todd Boehly earlier this week, he told me he's reorganizing or exploring how to reorganize college sports into one league with as many as 12 divisions. We're going to discuss this idea with Bloomberg's Randall Williams, who's been following, of course, the whole business of sports and investor interest in it. But it seems like increasingly private equity owners are trying to edge their way in to the Big 12, or at least some way into college sports.
Exactly. I mean, CVC is already looking to buy 20% of the Big 12. That'll be worth up to $1 billion. So everyone's trying to get into this business, but they just can't figure out how because it's so fragmented. You have NIL, you have the transfer portal, you have so many different things in state laws that schools, legislators, and private equity are trying to figure out how to get in.
Now, what are the most profound difficulties here? Because when we talked to Boehly, for example, rather than giving us a path forward and the number of dollars he would put in, he really talked about the wild, wild west when it came to NIL and other things.
Well, you just mentioned it. It's NIL and the transfer portal. In college sports right now, you know, you're only supposed to go to school for 4 years. I went to high school with someone who just did 8. And so what that means is if you have a star player, he comes out of high school, he's guaranteed a lot of NIL money, then he doesn't play. Well, guess what? He can take all that NIL money that was given to him by donors, transfer to another school, and now that school profits off him. This is assuming that he's successful. On the other hand of that is if you give an athlete a whole lot of money and he doesn't pan out, now you're giving someone something that maybe they didn't deserve or didn't earn. And so for these private equity people, they want to make sure they're putting their money in the right place so they do see a return on an investment. I don't think that we're going to see these private equity and institutional investors invest in schools and conferences that aren't going to make them any money.
Now, taking a listen really quickly here, let's all listen in for the sound from Todd Boehly, actually, from earlier this week.
I think college sports is on the precipice of major change. You know, I think if you look at what college sports should be thinking about, right, there's a couple things right now that they're struggling with. One, NIL is the wild, wild west. Right, so there's no standard, right? But in order to standardize NIL, there's going to have to be collective bargaining.
So if all this is true here, Randall, how long would it take to really find solutions?
That's the million-dollar question. I mean, the thing is, NIL was granted in 2020 or 2021, one of those 2 years, and there has been no legislation. In fact, it's become more fragmented. There's still the exact same issues that existed 3 years ago still exist. And so until there is a governing body that is able to say, hey, these are the rules, these are the legislation, then, you know, it's going to continue to be the wild, wild west because you have schools that are trying to follow state laws and NCAA laws, and the NCAA is like, follow my rules, and the states are like, we technically don't have to.
No, some of the reason I am dragging you on air to talk to me about this today is because this is clearly one of the biggest investment themes in sports out there, and one of the investment themes in private equity. But if this is so difficult to invest in, what's kind of taking the front of the line, especially when there are other big ticket questions out there like the NFL ownerships?
Well, these investments in the college sports are going to be a little bit smaller. Well, if you look at what Redbird is planning to do, that's 50 to 200 million that they're thinking about investing in schools. You talk about some of the NFL investments, a 10% stake in the NFL could cost $600, $500, $700 million. So the capital is different, and the return on investment might be different. If you invest in Georgia right now, Georgia won back-to-back national championships. They'll probably be a contender this year, and assuming Kirby Smart is there for a long time, that means that they'll probably be a contender for a long time. Someone might want to invest $200 million in them because in 5 to 10 years, that could be $1 billion.
Fascinating. Bloomberg's Randall Williams. And there's another owner here that is also looking, as Randall was saying, at smaller ticket sports as well as those big ticket sports. That is Milwaukee Brewers owner Mark Atanasio, who believes the NCAA new rules will be discussed to create a huge opportunity for professional leagues. I caught up with him yesterday after the Bloomberg Invest conference, and he had a few more leagues he's taking a look at too. Take a listen.
We look to look for change, so everything, and we'll talk about with Tom Werner, who really, the Fenway Sports led this investment in the PGA, but everything that made that a complex investment is what created the opportunity. The change in college sports now is going to create enormous opportunities for investment, and that we can't even define yet. So, you know, stepping back, looking forward over the next couple of years, that's one of the places we're going to look to gain opportunity. Otherwise, you know, right now there's nothing like a live sporting event. You know, so we're looking at everything from women's volleyball to professional sailing. Larry Ellison is setting up a league to kind of replicate what happened in F1, as well as, you know, the major sports. We are co-majority owners now in the Norwich City Football Club, and UK, they call it football. You do use your feet. Still have to be careful. In the UK, call it football. Here, you got to say soccer. And so there's a lot of, as a global sport, that's incredibly engaging. I found myself, I couldn't believe I turned off a baseball, Sunday night baseball, to watch Panama play because we just signed one of their center backs. And I didn't even know what a center back was 2 years ago.
So the college sports idea is pretty fascinating. You've seen some teams reportedly, or some private equity firms rather, reportedly be looking to spend large dollars, $1 billion, $2 billion, into, say, the Big 12. How do you think about an entry point here? And, you know, how much money would you really be willing to put forward into the college sports opportunity?
Well, you have to, you know, you have to recognize it's a changing landscape, and there's not a lot of structure to it right now. I actually have a small investment in the Big 12, in a piece of it, and you know, these leagues were not, or these conferences were not set up to, you know, manage this kind of capital.
But what's the opportunity then, and how fast can it come?
Oh, I think it's going to. Like I said, we've already made one small investment in a seed, small thing to help market and organize, you know, their commercial opportunities. So I think it's going to come very fast. And but as to what it'll be, we'll see, right?
Turning now to our stock of the hour, Nike.
So the Fed bids for 7-year notes total one spot $5 billion ahead of the release of this 7-year note sale in just over 15 minutes time now.
Past 3 years, with analysts pointing to a lack of innovation. Nike's move to cut costs and make organizational changes could drive operating margin expansion, and the success of rivals from Adidas to New Balance could further signal upward momentum. Nike has 28 buys, 13 holds, and 3 sell ratings on the Bloomberg terminal. Now coming up is our Wall Street beat. IPO volumes are off to their best first half since 2021. We're going to talk to Phil Drury, head of technology and communications investment banking at Citigroup. He joins us next. Stick with us. This is Bloomberg.
In tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as, you know, moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
this business is poised to really grow in leaps and bounds accretively globally. We thought the world should know about it. Many of the folks here in the United States love our content, but they don't know that we're the ones behind it. So for us, this is not just about capital formation. This is about playing at the global stage and being backed by the best investors so that we can operate globally.
Webtoon CFO David Lee speaking with us earlier today about why the company decided to go public now. Let's stick with IPOs in our Wall Street beat because Bloomberg is just out with its IPO first half wrap. And at a glance, it found that IPOs have gotten off to their best start since 2021 with volume set to eclipse last year's IPO issuance in the United States. And for more, we're going to bring in Phil Drury, Head of Technology Communications Investment Banking at Citigroup. And you look at these volumes and you have to ask the first question being, is it going to last?
Well, I hope it lasts, and I hope it increases. Look, whenever you say it's a great start, it's about what's the benchmark. So if the benchmark's 2022 to 2023, it's a pretty low bar for IPO volumes. If the benchmark's 2021, or even frankly 2020, we're well below the volumes that we were seeing. So our view is we'll continue to see a rise in the level of IPOs, and we think that'll pick up meaningfully in 2025 and 2026. Technology and healthcare have really driven the recent re-emergence of IPOs. I think the aftermarket performance has been viewed as mixed. But pricing has been strong when you look at relative value to where the public markets are trading. So we think with more volume, the spread of volatility and elasticity will start to come in, and we'll see more and more confidence in the IPO market.
I noticed you said 2025 and 2026.
Yeah.
That is right after the United States election cycle. How much is the election creating uncertainty for the second half of the year when it comes to equity capital markets?
It's in 10 minutes time now at the top of the hour. The US is due to sell $44 billion in 7-year notes. The prior bid to cover was 2.43. The prior high yield was 4.65%.
Fixated by the live debates. And it just takes portfolio managers away.
JP Morgan strategists ahead of this auction note that given the decline in yields and rich valuations, the auction needed a concession from Wednesday's closing levels in order to have good reception. Also noting the latest CFTC positioning data, which shows that speculators were net short 368,000 10-year note futures, a potential source of covering demand at auction.
We'll absolutely see volumes dry down.
What you said implies that the worry is about longer-term uncertainty. You don't know the policy moving forward per se, depending on a future administration. But how much is the worry around just market volatility?
Yeah, well, look, the VIX is at 13 right now, so we're at a historical low in terms of volatility. I think the concern is more cliff downside, and what I mean by that is really geopolitical risk, or what do we not see? There's enough uncertainty in the world today that we do see, and in a way, it's unfortunate that the markets have sort of become numb to a lot of the uncertainty that exists. So it's more what we don't see that can have a shock to the system.
Now, if you think about some of the private market valuations you're seeing for some of the highest flying technology companies, think SpaceX, for example, what is the conversation for you looking like under the surface? When you're talking to technology companies that are thinking about an IPO or a sale, why not just raise money privately right now?
Yeah, so the good news is private equity, private companies, they have alternatives. So there's good depth to the private market, both debt financing and also equity financing. But there are a lot of reasons why you may choose to go public. There is an enhanced level of liquidity. You're giving liquidity to employees who perhaps have stayed with illiquidity for 2 years longer than they thought because the IPO market was so quiet in 2022 to 23. It also gives you a public currency to pursue permanent capital and acquisition strategies. So every company has a different rationale to whether they want to continue private and raise capital in the private markets or whether they transition to the public markets. There's no doubt we're seeing a blurring of the lines. And look, our conversations, public markets have increased, valuations are now trading at a 10-15% premium to 10-year historical, not 2021 levels. And I think a lot of private companies decided to sit out 22 and 23, remain private, because they capitalized in 2021 when they should have done. But I think the conversation is most relevant today. Private equity is focused on DPI, and they are feeling some pressure from LPs to start to return capital.
There's certainly a real reality there. But what about also these companies that have waited to go public? When you think about that 2025, 2026 timeline that you're looking at here, how big is the universe of that kind of pipeline that has been held back the last 2 years?
Oh, it's very, very significant. I mean, very significant. But the public markets...
100s, 200s.
Yeah, I mean, those levels in terms of capital that can and should be raised. And of course, the longer you stay out, the longer you stay private, these companies have got bigger and they've scaled. And private equity has been quite active doing bolt-on acquisitions, changing the formation of these companies, which means the only real exit is the public markets. There's only so many private equity takeouts that are greater than $10 billion in size. So you need to go to the public markets, or, and we've not talked about it, Sonali, the strategic bid comes in. And we've started to see strategic corporate M&A and increasing appetite. So that gives another avenue.
Massive question around how robust this M&A market can be through the end of the year. You haven't seen mega deals. You've seen $30 billion deals here and there coming through the pipe, but there's a lot of uncertainty. You know, we talked to Paul Taubman, for example, very, very uncertain that you'll see a lot of deals through the rest of this year. How much excitement is there around large-scale technology deals right now? Is it possible in this environment?
Yeah, we will see a measured pickup in M&A activity for the remainder of 2024. It's already been a better start, just like the IPO market. It's been a better start for M&A in the beginning of 24 as well. I think with artificial intelligence, it's changing the landscape for many, many companies, not just within technology, but across all industries.
It's been 5 minutes time now at the top of the hour. The US is due to sell $44 billion in 7-year notes. The prior bid to cover was 2.43. The prior high yield was 4.65%.
To greater M&A activity. Transformational, obviously, antitrust, highly regulated environment is a challenge that CEOs and decision makers need to deal with, which means greater diligence in the early stages, higher level of confidence and certainty. I think AI increases the level of adjacencies as opposed to vertical integration, which may be easier from an M&A regulatory standpoint. But yeah, transformation is feasible. The debt financing markets are healthy. 10 years at 430, but the spreads are very, very compressed today. So we've got a healthy financing environment. We've got equity valuations that are trading well above their lows. And I think we have the catalysts that cause corporations to reflect and change.
Ever the optimist. Phil Drury, head of technology and communications investment banking over at Citigroup.
Thanks, Sonali.
Before I let you go, quick check on the markets here. Of course, we had been watching the S&P 500 flat on the day, trying to keep into the green. NASDAQ 100 keeping gains of about 0.2%. The 2-year yield, nice and low, 471. One more day left of the week. I'm Sonali Basak. That does it for Bloomberg Markets. Stick with us through the close. Certainly an interesting week in markets. This is Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future
Shortly expecting the results of the 7-year note sale, the pre-sale when issued yield due at the top of the hour. Auction results normally follow a couple of minutes after this.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
It's their first showdown in 4 years. Welcome to the fastest show in politics on this debate day in America. President Joe Biden, former President Trump, together again tonight in Atlanta. I'm Joe Matthew alongside Kaylee Lyons in Washington. And Kaylee, the stakes could not be higher for these two.
First time in history we see a current and former president debating each other, both advanced in age at 78 and 81 years old. And of course, it all going down just about 8
Pre-sale when
hours
issued
from now,
yield
beginning at
4.279% ahead of the 7-year note auction.
are unique to this debate. No live audience.
That's right.
And mics cut off when your time is up.
Things look pretty sleepy down in the studio right now. Bloomberg's David Gore is going to bring us inside the spin room in a moment. And we should remind everyone, we're going to have the debate right here for you with the analysts you trust here on Bloomberg TV and radio. Our special coverage starts at 8 p.m. Washington time.
But we have much coverage coming up this hour as we look ahead, including a conversation with Democratic Congresswoman Abigail Spanberger of Virginia, what she would like to see from the Democratic incumbent tonight. First, though, as always, let's get a check on the markets on this debate day. Charlie Pellet has a look up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee Lyons. And right now we are looking at a U.S. stock market little changed on the S&P, up just 1 point. Been that kind of a day. We got the Dow up 76 now, up by about 0.2%. NASDAQ also in the green, up 40 now, higher by 0.2%. 10-year 4.28%, the 2 years yielding 4.71%. The world's largest bond market rose after the latest batch of economic data reinforced speculation that the Fed will be able to cut rates this year to prevent a bigger U.S. slowdown. Again, the 10-year 4.28%, 2-year 4.71%. Gold up 1.2%, 23.25 the ounce. West Texas Intermediate crude up 0.7%, 81.43 for a barrel of WTI. Walgreens Boots Alliance shares are now plunging 25% after slashing its guidance due to a worsening retail environment and announced that it would significantly close more stores as the new CEO seeks to turn the business around again. Walgreens right now down 25.2%. Rival CVS lower by 3.9%. Of course, big event after the bell today.
Bid to cover ratio 2.58, 2.58. High yield 4.276%, 4.276%. So the US sells 44 billion in 7-year notes and awards 87.68% of bids at high. Primary dealers take 11.87%, direct 18.48%, and indirect 69.65%.
Is in Atlanta, in the key swing state of Georgia, which is the staging ground for a debate coming up this evening between Joe Biden and Donald Trump.
Yep, starts at 9 p.m., 90 minutes on stage together. Kaylee, to your point, no audience. We've been through this. Mics will turn off when Joe Biden or Donald Trump time is up. It's not like they're going to be shutting things off in the middle of a speech, but they'll have 2 minutes to answer questions. There'll be rules, obviously, for rebuttals, and there could be some back and forth here. A lot of the action happens after the debate in the spin room. Both Joe Biden and Donald Trump will have surrogates there, and there's a massive international media presence today in Atlanta. Among them is Bloomberg's David Gura. We want to go there right now. David is in the spin room. How's it looking so far, sir?
Fairly quiet now. It is lunchtime here, and we're waiting for the arrival of the two candidates scheduled to happen a little bit later this afternoon. As you might be able to ascertain from looking at the backdrop, it is by no means not unclear who is sponsoring this debate and running it. There is CNN everywhere on every TV in this arena that I'm standing in. But, you know, come a few hours, the floor behind me will be filled with surrogates for both of these candidates.
U.S. Treasury 7-year yields edge lower after the $44 billion auction.
Rob Portman, the former senator from Ohio, this morning, who has done a lot of work prepping candidates for debates. He worked with Mitt Romney most recently and has played a lot of Democrats in those Republican prep sessions. And we talked a bit about the microphone issue, and he brought up something interesting, which is like, yes, they will be silenced, but it's not as though Joe Biden will be unable to hear that Donald Trump is interjecting or saying something or vice versa. So I think it still stands to be something these candidates are going to have to contend with, and it might actually provide some awkward viewing if that's something that's happening where you can tell that a candidate is speaking, but you can't hear what he's saying, Joe.
Yeah, well, I think we all remember the first debate between these two in 2020 in which they were talking over each other to such an extent that you couldn't understand what either were saying. So perhaps this will be a bit of a departure from what we witnessed 4 years ago. David, of course, the lack of the live audience also a consideration here, even though Donald Trump has suggested as there will be many people who are there at the debate supporting him this evening. I'm assuming a lot of those will be in the spin room. And one of them, he suggests, is going to be his vice presidential pick. We just don't know who that is yet. So who of the contenders are expected to be there in Atlanta tonight?
J.D. Vance is supposed to be here, Tim Scott as well, the governor of North Dakota. All of those rumored to be kind of finalists for that VP job are supposed to be around here and attending a fundraising party that's going to take place coincident with the debate. And the expectation is that Donald Trump will go to that party after this. So you're right, Kaylee, he's kind of teasing the fact that this announcement could come now, tomorrow, in the next coming days, giving us that kind of level of anticipation of when might this happen. But that kind of speaks to the spectacle surrounding this event itself. And you know, here we are in this arena on Georgia Tech's campus, kind of a stone's throw away from the CNN studios where the debate is going to be taking place. So this is occupying a large swath of geography in Atlanta, and is certainly something that's kind of drawing the attention of and preoccupying people here, whether they're just kind of having to contend with the busyness of the city in this area right now, but also all the eyes that are on Atlanta, as you say, today for this debate.
Yeah, it must be fun getting around town. I'm sure. David, the rules also allow for commercials to be run in this debate, which is very unusual when you look back at commission-run debates in a general election. There are a lot of things, I suppose, that are going to be unusual tonight. But the candidates are not allowed to confer with their staff in that time. Can you tell us more about what they are allowed to do? Do they have to stay right at the podium while ads run?
Yeah, we've heard this kind of framed in this pugilistic way. It is not like a boxing match where you can go and talk to your trainer while the commercial's happening or while in between bouts. But no, they won't be able to confer with their staffs or with their advisors during the course of that. I think they can use the bathroom while this is happening. But you speak to something that I think is fascinating and bears a further look here, kind of the role, the defeated role of that presidential debate commission. For the last 3 decades, there has been this nonpartisan group that has arranged these debates, figured out how they're going to proceed, what they're going to look like, who's going to moderate them. That group all but non-existent now, at least in the context of this campaign. We have this debate today, another one scheduled to take place in September that ABC is going to sponsor if that in fact comes to pass on September the 10th. But we have moved very far away from that moment when you had this group of kind of graybeards from politics broadly who thought about how to do this without commercials and to do it without one particular network or broadcaster having responsibility for this. So as I said at the top, CNN's imprint is all over this. This is certainly a big moment for them, and the CEO of the network has said that he really admires what that first televised debate looked like back in 1960 between Kennedy and Nixon. It was pared down. It was 2 men and a moderator, and I think that's very much in the spirit of what we're going to see tonight.
All right, David Gura, Bloomberg correspondent who is live in Atlanta and will be through the duration of the events of today. Thank you so much. We got to buckle up for what is going to be a wild evening, to be sure. But as David speaks there to the idea that this debate is so different and that it's not a bipartisan commission that is conducting it, as a network at CNN, who has, in the lead up to this debate, Joe, been attacked by the Trump campaign. Certainly the moderators have, attacking the format as well, even though it was agreed to by both parties, Trump and Biden, perhaps trying to lower the bar for the former president as we go into this evening.
Yeah, and no one says the former president cannot attack the moderators, and I suspect there might be a little bit of that back and forth tonight. He certainly didn't wait for things to get more than a minute into the debate a couple of years ago. So it's going to be interesting. I think to David's point, though, if this does resemble that Nixon-Kennedy debate in the studio with no audience, then it will have a massive impact on the campaign as everyone looks back on that moment as being a deciding factor for so many voters.
Yeah, and it is for that reason that the stakes this evening are incredibly high, both for the former and incumbent president. And as we look ahead to what Joe Biden needs to accomplish for Democrats at large tonight, we want to bring in Democratic Congresswoman Abigail Spanberger of Virginia, who is joining us now live from Capitol Hill. Happy debate day, Congresswoman. Always great to see you here on Bloomberg TV and radio. When we look at what Joe Biden needs to accomplish tonight, is it so much about the policy or about how he performs and speaks about it?
I think it's about the choice between two men who are putting themselves both forward as potential presidents again. It's a question of which former or current president do we, the United States of America, the American people, want to have at the helm of our country. And so, yes, policy will be a part of it, certainly our rights and our freedoms, certainly our continued growth of the economy. But I think what it really comes down to is, do we want to return to a time where, under the former President Trump, we had attacks on communities. We had a questionable situation on the global stage. We had a president who wanted to pull away from NATO. We had a president who was willing and aggressively move forward in pulling back people's rights from voting rights to abortion rights. Or do we want to have a president like the president we have now, President Biden, who as a person is committed to the progress of this country, growing our economy, continuing to lower unemployment, continuing our long-term recovery out of COVID, which, of course, as you all well know, is the best in the developed world, protecting the rights and the freedoms of our fellow Americans, and importantly to me, as a former CIA officer and someone with a background in national security, protecting the role of American leadership on the global stage.
Well, that's a big picture view, Congresswoman. Your view from Virginia's 7th congressional district is so important because you straddle such a wide swath of ages and demographics. A lot of people say that inflation is the #1 issue in this race. That's what people are talking about. But you just gave us a 30,000-foot view that gives us a choice on the approach to democracy, on big picture themes. What do the people of Virginia then want to hear tonight?
It's about the approach of how we fix problems. Certainly across Virginia, across the 7th District, the issue of costs in the grocery store continues to be an important one that I hear about all the time. And so it's a question of whose approach, whose policies, who's committed to the American people and to working to continue to lower costs, to working to continue to decrease inflation, ensure that more people can buy a home or have an affordable rent. More people can have the ability to move between jobs because not only is unemployment low, but options and good jobs are there and available to them. And notably, people can care about multiple things at one time. And so, yes, across the board, I hear about the issues of cost. I hear about the challenges, that people are facing in our economy. And, small business owners, low unemployment's good, but there's still challenges for small business owners trying to find workers, right? There's always, even when the news is good, there's challenges for some folks. And so the question becomes, what are the issues that are most important to voters? Certainly costs among them, but also it's about approach. It's about which president, and right now we have, a current and a former, is going to do the good work, the important work of moving us forward on the issues that matter to people. And certainly, we hear a lot of talk about issues of freedom, and particularly abortion rights and access to IVF and contraception, because across my district and across Virginia, there are many people who care about more than one thing. And so certainly we need a president in this 2024 election who is focused on addressing all of the concerns that people have, recognizing those that have the greatest immediacy, certainly, but also recognizing that, yes, part of this is about approach, how someone seeks to govern and how someone seeks to lead.
Well, Congresswoman, you have brought up the issue of abortion rights a few times already in this conversation. We, of course, got news on that today from the Supreme Court, which at least for now is allowing emergency access to abortion to continue in Idaho, even if this ruling is more on procedural grounds than actually on the merits of the case. But this is now the second time, as we are at the end of this court's term, that they have ruled in favor of protecting, at least for the time being, abortion rights. How should that change Joe Biden's messaging around that issue tonight?
Well, I think it's important to understand what the ruling or this discussion is actually even about. The question is about whether EMTALA, right, a law put in place under President Reagan to ensure that someone who walks into a hospital with a life-threatening illness would be able to get the health care access that they need. The decision today is whether or not, when a woman walks into a hospital potentially facing a life-threatening complication to her pregnancy, whether it is appropriate and required or not against the law for a medical doctor to save her life. This wasn't a ruling that codifies abortion access. This isn't a ruling that does anything to advance the rights of women. This is a ruling that, say, doctors can't look at a woman and say, you must die because of our state law. And so I don't think that it should change much of Joe Biden's, President Biden's positioning in the discussion of the debate. In fact, if anything, I think it will make clear that we are one court decision away potentially from a doctor being able to look at a dying woman and saying, I'm sorry, I can't help you.
Well, it's not lost on us, Congresswoman, that Donald Trump is going to make a beeline for your state after the debate tonight. He's on his way to Chesapeake, Virginia. He'll be speaking in that Norfolk area, an awfully important area for electoral votes, with Governor Glenn Youngkin. Virginia is coming to play a fascinating role in this campaign as maybe the purplest of states. I don't know how you'd describe it, Congresswoman, but what does it tell you that
Shortly
Donald
expecting
Trump
the results of the
is
Fed
going to
reverse
Virginia
repo
to
operation?
give Glenn Youngkin a hug tomorrow?
So I think Virginia is a wonderful place and everyone should visit. So I certainly don't fault the former president to wanting to come to our great Commonwealth. But notably, more of the question is why it is that our governor, who has previously never welcomed the president and in fact left the state the last time President Trump came to Virginia, is now going to be there to, as you say, give him a hug.
Well, Congresswoman, it, though, just speaks more widely to this idea that the Trump campaign has been espousing, that polling suggests they are competitive in the state of Virginia. They actually think that they could win it. Does Joe Biden need to be spending more time there himself? Should he add a list to the swing states he has been visiting frequently since Super Tuesday?
So President Biden spends a fair amount of time in Virginia. He was in Virginia just maybe the month before last. Certainly we have an incredible team on the ground working for the Biden campaign. And, certainly
75 counterparties take $531.692 billion at the Fed reverse repo operation.
As are so many of our elected folks working in roles as surrogates. So I certainly, welcome President Biden to come to Virginia, but Virginia is not going to go for former President Trump in this election. I feel quite certain saying that.
Congresswoman, with your background in national security and intelligence and from your perch on the Intelligence Committee, I wonder your thoughts as we watch Evan Gershkovich's trial begin in Russia this week. It's a story we were talking about quite a bit earlier in the week. Yesterday was the start of that trial. What would a President Trump mean for his detention?
First, I want to just begin by recognizing the incredible sacrifices that members of the media, particularly those who travel to tell stories into countries where the media is not just disrespected, but is targeted and is arrested and is imprisoned, as we have seen in this case in Russia. I think that it would be deeply worrisome from my perspective, but I think it's one that is far more broadly held, if former President Trump were to again enter the White House for two reasons. One, he has always taken the side of Vladimir Putin over our own intelligence agencies, over our own experts. He has spoken in defense of an authoritarian regime. And notably, he at home has done a great deal to degrade, to demean, and to target the press and the media for doing the job that is theirs to do. They are supposed to be critical of us, elected leaders. You all are supposed to hold us to account. And so I think a president who seeks to be more like a Putin here at home would do very, very little to defend an American who in pursuit of telling the truth, in pursuit of reporting back, is
Congresswoman,
now...
thank you. Abigail Spanberger with The View from Virginia. This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
Good morning from our world headquarters in New York. I'm Manus Krenning.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything. The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know the areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep
Green World Cup. This is a three.
As the economic picture
Covering the intersections of Hollywood, Silicon Valley, and beyond.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 index is fluctuating right around 5480. Little changed right now ahead of tomorrow morning's release of the Fed's preferred inflation gauge, the PCE. S&P right now up by half a point. The Dow up 77, up 0.2%, while NASDAQ is up 35, a gain of 0.2%. 10-year yield 4.27%. The 2-year is now yielding 4.71%. Spot gold up $28 the ounce, up 1.2%, 23.26. And West Texas Intermediate crude up 0.6%, 81.40 for a barrel of WTI. Shares of International Paper are plunging after Brazilian pulp producer Suzano said it would end its pursuit of the American paper giant. Suzano said it was never able to draw International Paper into serious engagement and is not willing to increase its offer further. IP shares, they're down by 8.6%. Coming up after the close of trading, we hear from Nike. Nike up by 0.3%. Recapping, S&P now higher by 2 points, a little change. Balance of power continues now. Back we go to Washington, and once again your hosts, Joe Matthew and Kaylee Lyons.
All right, we're taking you from New York with Charlie Pellet to here in Washington with me and Joe, down to Atlanta today as we preview, less than 8 hours from now, the first presidential debate between Joe Biden and Donald Trump. It is an incredibly high-stakes evening for both campaigns, and it's worth noting this will be Donald Trump back in Georgia after getting indicted in that state many months ago. Joe, of course, there is not the prevailing thinking right now that he will end up going to trial in that racketeering case that was brought against him there. But of course, this is going to be an appearance by the former president after being a convicted felon in a separate criminal case in New York. The thing is, polling out within the last 24 hours suggests that that conviction doesn't matter much at all as we head into the season.
Isn't this something we've heard this anecdotally? Sienna puts numbers on it today in front of the New York Times. We talked to Don Levy about it earlier in the program. More than 2/3 of voters in this poll, first time Sienna polls since the trial ended, say the outcome of his criminal case made no difference to their vote. 2/3. In fact, some Republicans were more likely to support him. It's different than conventional wisdom might suggest. Another interesting number I'll throw at you. Quinnipiac. You wonder who the heck's going to watch this thing tonight? 7 in 10 registered voters say they will be watching, which would make this among the highest rated things to ever happen on television. Of course, we'll have it here for you on Bloomberg. Let's assemble our panel. As Kaylee said, we put together a great one for you today. Rick Davis is with us, Republican strategist. Of course, Bloomberg Politics contributor, joined by Joel Rubin, a Democratic strategist, former Deputy Assistant Secretary of State of the Obama administration. It's great to see both of you here. Rick, you've prepared candidates for debates just like this one. Obviously, they're presumptive nominees in this case. It's a little different. It's coming pretty early. But the stakes are arguably higher. If there's an audience like this Quinnipiac poll suggests, 7 in 10, we cannot underscore the impact this could have on the campaign. How are you looking at it?
Yeah, I think that this was a real gamble. I think to forego the Commission on Debates and try this, one CNN debate as a test to see whether or not people would tune in. Certainly the polling data indicates that they likely will. And we know that historically high debates are like 84 million people tuning into view. And that will be dwarfed, I'm sure, by the follow-on social media clips that people will view that happened the night before. So I think we can rest assured, based on what we know today, this is going to be something that voters are looking into because they're curious about what's going on with these two guys. 45 versus 46. Two presidents have never debated like this in a modern era. And so it's the kind of thing I think is as much a curiosity as it is a determining factor, because the reality is the country is divided very equally. And we're really talking about a few percentage points that are really up for grabs right now. And those are the folks that probably have the greatest stake in watching this debate.
Yeah, we're talking about a race divided by a few percentage points. If the latest polling is to believe New York Times, Sienna has the spread between Trump and Biden 3 points. Trump, of course, is leading. His lead is even greater with registered voters. Something else interesting, though, in this poll, Joel, is that only 72% of voters who said they voted for Biden 4 years ago approve of the job he is doing as president. This is 90% of Republicans say they view Donald Trump favorably. It does seem that Trump has had much more success in consolidating his base of support than Joe Biden at this point. How does he reassemble the 2020 coalition this time around? How can he advance that effort further tonight?
Kayleigh, this is the question that the campaign is grappling with every day, and it's the kind of discussion that I feel very confident that they're going to be able to execute in terms of making the case. Look, Joe Biden has been running the country for the last 3.5 years. Donald Trump has been in and out of court and spending a lot of time on social media and doing things to get his base fired up. He did lose, I should say, 20% on a consistent basis in the recent primary. So I'm not sure about that 90%. But President Biden, he likes to say that don't compare me to the Almighty, compare me to the alternative. And the alternative will be on full display tonight. And that's going to really remind Democrats who, we're kind of a little bit behind the motivation factor when we see our guy in the White House. It's going to remind us about what's at stake in this election. And a lot is at stake. Fundamental freedoms for women, for LGBTQ Americans, a question of competence, a question of integrity, all of these issues that motivated Democrats in 2020, they're going to come right back to the fore. And I think you're going to see a real big jump in that motivation going forward from tonight.
Rick, these two gentlemen are going to be in people's living rooms tonight, if at least this goes well. That's what they're hoping for. We keep talking about temper and flare-ups, people acting crazy. To the extent that you've spent time with candidates, experienced the nerves that preceded an event like this, how important is a sense of humor?
Oh, I think it's critical, at least just to cut the very stiff air that exists, especially right before the debate. I mean, I like to put myself, in the timetable. And tonight, both these candidates are going to sit down with a very select group of people to have dinner. It's late enough in this debate; they're going to want to eat first. And the most important thing that I've found in the past, whether it was for John McCain or George Bush or Bob Dole or any of these candidates that had big debates in their lifetime, was to break the sort of tension in the room and have some fun. I remember when Lindsey Graham showed up at a presidential debate wearing a John McCain rubber mask and, basically went on to pretend to be in the debate tonight and told John that, look, if there was anything going wrong with him, he'd be happy to step in with the rubber mask that night. And so, you just got to have somebody just change the topic a little bit to get these guys relaxed. Because as we've talked, it's a tense moment for anybody. And this is one that will be tense for both Joe Biden and Donald Trump.
So it'll be tense just as all presidential debates are, but as we've mentioned, there are many things that are making this particular presidential debate different. Not only the commission's lack of involvement, but the rules of engagement here with the cutting off of microphones, with the lack of a live audience, also with the fact that it's taking place in not only a swing state, but a state in which one of the candidates on the stage has been indicted on multiple felonies in the case related to 2020 election subversion, the racketeering case that was brought against Trump and many other defendants. Of course, what went down in Georgia has made Donald Trump a few enemies even within his own party, or at least those who aren't eager to vote for him, including the governor of Georgia, Brian Kemp, who had this to say on CNN last night.
In the Georgia primary, I didn't vote for anybody. I voted, but I didn't vote for anybody. The race was already over when the primary got here.
But you didn't vote for Donald Trump?
I didn't vote for anybody.
Why not?
Because the race is over with.
He didn't vote for anyone. Okay. But he definitely, decidedly did not vote for Donald Trump. Joel, I would love to have you weigh in on this, considering what happened in Georgia in 2020, everything in the aftermath, how we should be thinking about the state of Georgia for Trump and Biden in 2024.
Yeah, Kayleigh, I think Donald Trump's already been fingerprinted down in Georgia, so maybe he doesn't have to worry about getting hauled in again. Look, what Brian Kemp, the governor, who won convincingly against a Donald Trump endorsement or tax, I should say, he basically demonstrated the lingering resentment within Republican leadership and within many Republicans around the country towards Donald Trump's actions in that election. And look, he's not alone. Many people who closely advised and worked for Donald Trump, up to his vice president, have said he's not fit for office, have said he should never be near the Oval Office again, have said that he tried to overthrow democracy. The Secretary of Defense who served for him, Mark Esper, said that he tried to wanted to use the military to overturn the election results. So I'm glad that Brian Kemp is loyal to the American Constitution. I think that Americans will see President Biden is loyal to the American Constitution. I'm confident that the moderators will ask about whether or not Donald Trump will accept the results. And he, when asked in 2020, basically said no and implied that he was going to have the Proud Boys, the white supremacist group, take action if necessary. And this is a man, one last thing I should mention, who said that he would only be a dictator on day one. Those are the kinds of, if he wins again, those are the kinds of stakes that we're looking at. Brian Kemp didn't like it that President Trump tried to undermine the will of his voters in Georgia and steal that election, and clearly that has not been repaired.
Something tells me you'll hear that line tonight. Rick, we've only got a minute left. What do you tell your candidate about how to deal with the moderator, or in tonight's case, the moderators?
Well, they're going to have two totally different approaches tonight, right? Joe Biden is going to be very solicitous of the moderators. He's going to ask for extra, like, did I use up all my time? Can I? He's like a Boy Scout. He wants to play by the rules, and that's what we saw in the two debates before with Donald Trump. Donald Trump will abuse the moderators. He'll look for every opportunity to make the case that this is 3-on-1, and throughout the MAGA world, this debate is not a debate between him and Joe Biden, but him against Joe Biden and the two CNN moderators. And so he'll make good use of them as a foil. And I think that that's part of the temperament issue that he's got to judge, is to, just how negative is he going to come out. But, he'll definitely treat them differently than Joe Biden's going to.
All right, Rick Davis, Bloomberg politics contributor and Republican strategist, and Joel Rubin, former Deputy Assistant Secretary of State under President Obama and Democratic strategist. Thank you both so much for joining us on this debate day. Now let's get a check on world and national news. Amy Morris has that for us in the 99.1 newsroom here in Washington. Hey, Amy.
Hi, Kaylee. 4 big rulings from the Supreme Court today. The Supreme Court stripped the Securities and Exchange Commission of a major tool in fighting securities fraud, ruling that people accused by the SEC have the right to a jury trial in federal court. The court says the in-house proceedings the SEC has used violate the Constitution. The Supreme Court also rejected a nationwide settlement with OxyContin maker Purdue Pharma that would have shielded Sackler family members who owned the company from civil lawsuits over the toll of opioids, but also would have provided billions of dollars to combat the epidemic. Also, confirmation from the court that medical emergency abortions can proceed in Idaho for now. The justices reinstated a federal court order ensuring hospitals in the state can perform emergency abortions to protect the health of the mother. This after Bloomberg Law obtained a copy of the opinion yesterday. Now, more opinions are to be released tomorrow, and the court has just added Monday to its opinion calendar. The term will be extended into July. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
I think I was around so many powerful people in my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios. And, any given day it would be the head of a studio and, just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything.
This is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We got the S&P 500 index continuing to trade right around the 54.80 mark. 54.84 right now, up by about 0.1%, higher by 6 points. The Dow up 106, up 0.3%, while NASDAQ is up 63, a gain there of 0.4%. 10-year yield at 4.27% with a 2-year that's now yielding 4.71%. Spot gold up 1.2%, 23.26 the ounce, and West Texas Intermediate crude up 0.7%, 81.50 for a barrel of WTI crude. Micron Technology shares down 6.1% after earnings. It's forecast disappointed